And we're back.
Welcome.
Wednesday morning.
Wednesday morning, March 12th. Not
March
yet the
12th.
ides. You're
Not-
obsessed with the ides of each month.
Okay.
This one is what?
I'm not obsessed with the
Saturday?
Ides. The Ides of March are always the 15th. The Ides of other months, you did some research,
It's like the 13th
is the
of January.
13th. Yeah. But I always thought it was the Ides of long months was the 15th. But yeah, I think this is when you disproved me because I tried to quote that the Ides of January were the 15th, thinking that a 31-day month, the Romans would have put the Ides on the 15th, but they did it on the 13th. But March
It's
is
like
the
Greek
15th.
Easter. You don't really understand it.
I definitely don't get it. But Greek Easter, I think, is also on
Really?
non-Greek Easter. What were you gonna say?
The other Easter? Yeah,
Normal Easter?
No, now it's like a solar eclipse year. They're together.
Okay, but it's not a leap year. Is it a leap? No.
No,
We didn't have the
25.
29th.
Yeah.
Okay.
Odd year.
But yeah, Ides of March are on the 15th. Today's the 12th. We still have 2 trading days before we get to the anniversary of Caesar's assassination.
Is that what it is?
That's what it is.
Wow. Learn
Yeah.
something new every day.
That's right. Brutus and... Man, everybody forgets the other guy, but the other guy did the stabbing first. But
Really?
he gets lost because he stabs him a little.
Just a little.
He stabs him a little bit.
He didn't mean it.
And then Brutus stabs him, and then he says, "At to Brutus."
Right. But someone else got a quick one in.
But yeah, I mean, you wouldn't be saying like you as well, like you too, and you, Brutus, if someone didn't stab you first.
Man,
you know?
this is connecting a lot of dots.
Yeah.
Wow.
That's all I got.
Sorry.
For what?
Not knowing, you know.
Yeah, what kind
I'm
of
supposed to
history?
be filling in.
So like I went to pretentious high school where I learned Latin, I learned Roman and Greek history. What was the vibe? What did you guys learn?
We had people like actually real time recreating that whole instance at the Advanced Auto Park across the street. So there weren't
At
often-
Jed.
Yeah. So yeah, that was always exciting.
Wait,
Had
okay,
some
you went to
real-time
school
history.
across from an auto parts store where
Yeah.
people stabbed each other regularly.
Not regularly, just a couple times.
Okay.
More than once, but yeah, I'm watching that. It's almost F1 season. You don't care.
Don't
But
care
the-
at all.
But the Netflix documentary recapping the season before is out, so that's what I've been binging.
Wow, they got a pretty good system there.
They do, and I know you probably still won't care because it's like you in soccer. You just don't even
I
want to
can't
get
believe
it.
that
You
people
don't
are
wanna
still
get it.
watching this stuff. Like,
But
it's weird.
I will say this: the Netflix, they because I watched the whole season
So the new season came out going into the new F1 season.
of last season. But I'm
and
saying
you
I
already watched the whole thing,
Well, I watched all of the like actual in real time season of the.
which had to be really boring.
Yeah, the highlights are definitely better. But all to say that the Netflix actually does a much better job of just like 8 little storylines. Like it's very succinct. It's very easy to follow. It's all like
But
hot European
this is
guys.
your whole generation, though. Is that like it's the same for any sports? You guys don't want to watch the sports, or you are maybe like a good sports watcher, but like I get the feeling that a lot of people in your generation don't watch the F1 season or don't watch the basketball season or whatever,
But
but
like
they're
the-
like, oh yeah, like I want to watch the Netflix special about like Jason Tatum's life and like see like how crazy he is or how cool he is or whatever. And it's like, but that's not isn't
You
the
don't
point.
actually care, yeah.
Yeah, like how like strong and fast and dunky he is. you
Yeah.
know?
Netflix definitely got our generation. I'll say the worst habit is betting on sports you aren't watching. I think that's the worst.
You guys are crazy with that stuff. But whatever. I don't know. To each their own.
All right.
I'll stick with Brutus. You can stick with
But you're not even like you don't watch
Rip
history
Hamilton.
things, right?
Who's the guy?
With the mask?
But he drives the cars now. Wait, no. Who's the guy?
Lewis Hamilton.
Lewis Hamilton.
Sir Lewis Hamilton. Thank
Sir
you.
Lewis Hamilton.
He's
but
on
he's not
Ferrari
the
now.
he's not the big guy anymore.
He can still be a big guy.
Okay.
But there.
Okay. All right.
Yeah, you're right. There's.
All right. Let's get into the platform. Take a look at what's buzzing. Holy bounce back. I didn't see this, Batman. Dollar yen is making a comeback. It's really interesting with this, man. I was looking at this earlier in the week. We internally do, I don't know if I'd get in trouble for this. I don't think it's anything to get in trouble for. Internally, we do a demo competition with the people around the office.
Good fun.
The new guy that's in charge of the the competition, Ryan.
That's your boy.
He's my boy. He decided for some. It's classic like new person in power syndrome.
Gotta
where it's
do
like
something.
gotta change something, and he's
they
like,
won't.
all right, everybody, like we're like we do it every 2 weeks, and it's like, all right, we're doing a new one. It's starting today. Everybody reset your demo accounts. Instead of $10,000, $20,000. And it's like,
Welcome to the show.
and it's like, I don't know why, but sure. Just so all of the paper gains and paper losses are just double.
Because 10,000 is already like enough to.
Wasn't enough for Ryan. But anyways, he was. I of course I'm the worst at it. I'm probably the worst participant. Maybe the worst trader, but probably one of the worst participants. And so like he was like messaging the group, and then I finally saw like, oh yeah, like you have to reset it. So I reset it yesterday, and I'm looking, and I'm like, man, this dollar yen down around 147. Yes, it's a lot of it's on the potential of the interest rate gap continuing to tighten between Japan and the U.S., especially if the U.S. is going to enter a recession, which is everybody's afraid of a recession now. But you look over here, and I don't want to get too deep into it because, of course, there's risk. There's so much risk involved. You're not, when you're talking about overnight funding rates and the swap bid and offer here, it is not free money by any means. You have to have these positions on. And if you have been long dollar yen the last couple of weeks, you've been getting hammered
Right.
on the price side of stuff. So there's big risk to this. Gotta talk about that on the front end so TJ doesn't get mad. But I am looking at this. I'm like, man, this market's getting hammered. Of course, there's a Fed meeting here in March in about a week from now. Is it next week? A week from today?
Yeah, the 21st, 20th. Yeah, next week.
Yeah, a week from today. They're not even expected to cut then.
Right.
Fed Chair Powell has come out as recently as last week and said, like, yeah, we're of course monitoring everything, but like we're not super spooked right now. And that was actually the only bounce that
Our only savior.
the only bounce that we saw in the last couple of weeks. And you look at this, and now, of course, it's a Wednesday, so this is factoring in the weekend funding, so it's not usually this big. But you're talking about, the indicative, of course, the rates can change at any moment. Overnight funding for this market being between, 1-2 pips per night, and so over the weekend here, the indicative prices are 4 points to hold this pair long dollar, short yen. And I only bring it up again because I don't know if the price where this dynamic starts to come into play was 150 or 147 or 145 or 140.
Exactly.
That's the game
And that
at the
matters.
end of the day. But it was, when we got down here, it was starting to, and I bring up the demo competition because in my demo mind, my strategy was starting to kick in of like, oh, this is where it's starting to get kind of interesting.
Yeah.
That they've taken this dollar down. Let's get some more data on here. They've taken this dollar down from 158 all the way down to 148
This year.
So 1,000 points here. And I mean, on a percentage basis, a huge currency move in the first 2.5 months of the year. And you're still getting that positive overnight funding in the direction of long dollar, short yen. So yeah, it's nice to see a little bit of a bounce back here. It's been really just like a dollar drubbing across the board. I mean, this
Right.
euro dollar is coming back a little bit, but holy smokes, we're at 109 in there. But I thought this was particularly interesting, and I'm not particularly surprised to see that the yen is giving back a significant amount of ground when you factor in the fact that interest rates haven't tightened yet. The overnight funding is still very much in the U.S. dollar direction. And if U.S. equities are going to even probably like be unchanged, just stop falling,
You're right.
then this yen could, give back considerable ground.
Yeah, and this one's always interesting to look at because kind of the speed and the nature of this pair. You could see a large decline over a period of a week or shorter, get to new lows, and you really are torn between, right, it has all of these stories going in favor of a bounce back, as you just outlined, but you also have historic precedent for once it's falling and passes some of these key thresholds, psychologically at least, that can be a snowball effect as people keep getting liquidated. And this, like we saw last year, this carry trade strategy unwinding in a big way and leading just to more and more downside.
100%. And that's why I say
all the hesitation is always there.
The risk is super real because, I mean, and on the polar opposite of everything I just said is the U.S. equity market does crash. And Powell does come out.
And he can't save us.
and we see surprise cuts. And it's actually not only the anniversary of Caesar's assassination, but we are, 5 years, I think that's how years work, to the exact time of the pandemic where we had multiple surprise cuts. Of course, not hoping for, I don't hope for the U.S. stock market to move any lower, let alone a pandemic or any reason for surprise cuts. Now, of course, that could happen. And at that point, then this thing really unwinds.
Right.
But yeah, to your point, if it's turbulence, let's say, if it's short-term turbulence, which we don't know if this is right now, but we're seeing a little bit of movement in the direction of maybe this is just some short-term turbulence today, then a lot of these moves, a lot of these big, dollar losing 100 points, 200 points to the yen in a given day, I think is a lot of that liquidation effect, similar to what we've seen in crypto markets recently. There are just certain levels where people were long and they were maybe taking advantage of the carry trade from the long dollar side and I'll bounce back out to the daily chart because you'll see, this long dollar, not only from a price perspective, but from that overnight funding perspective, has been working since September of last year. And of course, you had big moves like this, but really, after catching itself at 150 here, you've been able to probably scratch most of the price action or see some appreciative price action from that side and hold that and get that overnight funding in the positive direction. But yeah, to your point, there are a lot of people that maybe were long this pair from around 150 or 152 half or 155 that when it gets down to these levels and moves through them are like, okay, I'm going to scratch my position and I'm just going to take the overnight funding that I've been gaining over the last couple of weeks or months or whatever and liquidate a huge position. And same with, Bitcoin, Ethereum, getting down to these certain prices where it's like, okay, I've been long from here and like I'm being liquidated either by a firm or I'm liquidating this position because I don't want this price risk on the table anymore. But interesting to see here a couple of days bouncing right off of that 146 half here in the dollar yen market. We'll see if they get back to 150. I mean, that's been a point. If you really zoom out over the last couple of years, and I'll actually put weekly data on the chart here and zoom in a little bit. You go back to, obviously, this is coming out of the pandemic and the U.S. equity market really heating up, especially compared to Japan and certain parts of Asia. U.S. inflation taking off, U.S. interest rates taking off. Since this time frame where we got up to 150, 150 has been a really interesting price that it's like we would get up to 155 and 160 and everyone would be like, holy smokes, is this thing about to be blown open? And then it would come back to 150 and we would come down to 145 or 140 and everyone would be like, this is unraveling. And then we'd get back to 150. So
interesting.
It's in the sights again. We'll see if we hit 150 once again for this dollar yen market.
Yeah. And just waking up today, reading the news, Japan getting involved in tariff talks. Not happy.
Gotcha.
About this whole metals tariff. Apparently, they think that Japanese metal imports are very important to the U.S., and it was a bad idea.
Gotcha. Well, we'll talk more about tariffs in just a second. Really quick on the economic calendar, we have inflation coming out of the U.S. in less than an hour, expected to be slightly lower, it looks like.
Still pretty sticky.
Still pretty sticky. This is one of those that, man, I have no clue what the reaction is going to be. In Forex markets, you would expect that if inflation is even lower than what's expected, the U.S. dollar might get really punished here. If it is actually, instead of 2.9%, it's 3%, or instead of 3.2% for the core, it's 3.3%. You might see that dollar. You might see U.S. interest rates move higher, and that dollar regain some of what it's lost recently. But then we also have, don't we have Bank of Canada today?
Yeah,
I must just not have it on my.
Yep.
Yeah, there we go.
8:45, I believe. Yep.
Yeah, they're expected to cut. And with that, let's go to our segment for today because you're going to walk us through a bunch of Canadian stuff. If we can transition over, I will bring up. How do I bring up the slides now? There we go.
Booyah.
Let's do it.
Yeah. U.S. dollar, Canadian dollar whipsaws as tariff tensions escalate once again, Frank. The story continues, and we saw it play out in a big way yesterday in this dollar CAD market, but starting to affect a lot of other markets now as regions like Europe and Japan start to get a bit antsy about what Trump is doing worldwide.
And before we get into the exact, the latest on tariffs, it's funny, you could say what you said where, oh man, yesterday we saw a huge whipsaw in dollar CAD pretty much like any week the last month and a half. Because, yeah, there's been so much, we're going to tariff the hell out of Canada. Actually, maybe not so much. Maybe we'll work out a deal. And we've seen now USD CAD skyrocket to 148 and then come all the way off to 142.
Yep.
It's made these short-term but large moves up to 144 and then back off to 143 or 142. So much whipsawing in this market, but great, short-term back and forth opportunity for those people getting on the other side of or even riding those trends.
Yeah,
I mean,
it's enough of a range.
Yeah, if USD CAD goes from 142 to 144 and you're riding that higher and then it goes to 148, hard to believe that you're holding out for man, I got to get to 150 on this one.
But people are calling for it. But yeah, we'll talk about it too. That does this still have legs? Will reactions stay the same? But yeah, the latest on tariffs. We had news overnight. Here, looking at the right, we have kind of a snapshot of all that's in place, all that's supposed to come out, because I'm getting lost on what's going on. But yeah, this is from yesterday, so that 25% on aluminum, steel went into place against the world last night. But what we've seen as it relates to this market is Canada not backing down, but trying to be our friends. Monday, they placed a tariff on electricity I think they supply electricity to 3 states right there on the border.
Which ones?
Minnesota, New York, and one other. And then Tuesday morning, Trump says, you can't do that. There's no reason for you to do that. That aluminum and steel tariff, we're going to double it for you to 50%. Says that, market reacts instantly. By the afternoon, Canada backs off slightly, and Trump backs off as well. So a lot of posturing there, but Canada doesn't want to lay down completely at all, it appears.
And you're
play.
watching the Formula One show. This is some high level drama. Forget about the Formula One. It's we will double the tariffs.
Not 10 to 20, 25 to 50. That's pretty good.
And then we will double again.
We'll keep redoubling.
Can you double past 100%?
We're going to find out, I think, in the next couple months. But yeah, let's get to the price action. We can see exactly where these moves were. Not small moves at all. We're looking at around 0.75% to the upside and then to the downside here intraday within the U.S. session right there at 10 a.m. Coming off by U.S. market close. But yeah, just huge moves hitting 145 once again. Hasn't sustained a ton of time above 145. But yeah, this is where we were at yesterday.
And just for some context, a Forex market like USD CAD moves with a volatility of probably 6 to 8% annually.
Right.
Keep in mind, whenever anybody's quoting you a volatility, like, oh, the VIX is, 24%. That's an annualized number of the expectation is S&Ps to move 24% up or down in the next year. This USD CAD market and most major USD Forex pairs move with a volatility of, like 6 to 10%. I've seen plenty of years where Eurodollar has moved with an annual volatility of 3 or 4%.
Jeez, yeah.
Okay. And so when you talk about, an almost 1% move higher and giving all of it back in the course of 5 hours, that's a massive move here, let alone the fact that I know we'll get to the historical prices in a second. 145 is some of the high. If you took out the blip to 148 in this market, the highest price in 20 years in this market. So huge moves at extremes all around these tariffs. But yeah, walk us through some more of it.
Yeah, and so it really begs the question, because you brought up with the title, we could have stamped and repeated this weeks on end, because it appears that people are reacting to this, and people have taken these threats seriously thus far. It'll be a very interesting exercise to see if traders continue to price in those policy changes as quickly. And here I just have the daily range, high and low.
That's a cool little graphic, yeah.
Yep, over year to date. And so we see that huge 400 pip. That was the first tariff announcement over the weekend. And so we had a huge gap that instantly reversed. So a bit of an outlier there. But to me, we're seeing it's pretty consistent. We're still seeing some rapid moves. And I think the timing has to do a lot of this, because we saw, if you look at the end of February, we started to calm down a little bit because there wasn't any new news until March, suspended until March. This recent news yesterday was, I'm going to slap an extra 25% on you tomorrow. Yeah. And I think you have to kind of respect that. It used to be
an end of month, start of month kind of thing where, the middle of February, it's like, okay, we're waiting until March. But this is
it picked back up.
A nice graphic, because, you would have thought if you didn't have the action in the last 2 weeks in this market, you would have thought, okay, volatility is getting crushed.
Exactly.
And we're not seeing as many big moves. But pretty consistently, you're seeing 100, 120, 150, 170 point moves across the last several weeks. But take us into the end of this, because now you have the daily chart, and you're starting to see that not only are we getting big wicks here, big moves back and forth. One, we're still really kind of tethered to 144. But two, 144 is a very expensive number historically.
Yeah, and we only have from around the election here, from last November. But as we've comparing it to a ton of other markets that have seen the Trump trade come all the way up and all the way down, or down and all the way back, depending where you're looking, this one is still higher, notably higher, 3.7% higher from November of last year. And you have cases on both sides, because you'd think that if we're in a trade war, we're going to win, and Canada will have to succeed. At some point, lay their sword down, and that could lead to completely new heights for this market as we just enter a different economic relationship.
Well, yeah, you had some bank analysts at a month and a half ago, going into that February move, calling for 150, 155, which is still very much on the table here at 144. But yeah, it would take I think some new extremes for tariffs and the kind of elephant in the room, which is Canadian economy and interest rates moving lower. But
and then you have
stuff.
You have the other side of it as well, that now this tariff against the world. U.S. might start feeling some of that pressure, and that if that affects our growth overall, that can easily bleed into this dollar CAD market.
Well, cool. Great segment, Glenn.
That's
Thanks
all you
for
got.
sharing. Coming up next is Tom, Tony, and Vanetta. Stay tuned, everybody. Thanks for watching. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday, you both. Hump day.
Hello.
Look at us looking so spring and floral and beautiful and clean and crisp.
Making my eye twitch.
My eye's twitching too. Is that something in the air? My eye's twitching.
No, it could be a sign that your body's just making more cortisol than it is like your stress hormone. So you could cause. I'm being serious. So if you have like excessive eye twitching,
I don't have excessive.
Okay, well, it could just be.
Yeah. Sure you don't. Side note. So you're gonna be growing tatas soon. with all the cortisol you're growing that you got going on.
Do you not know that's not how that hormone works? Just because I say hormone, that doesn't necessarily translate into boobs. Because men have hormones too. So, no? Okay.
Yeah.
It's actually more manifests around weight around your belly, if you want to be accurate about it. But
Ruh-roh.
Ruh-roh. Yeah, but not boobs.
Well,
it's not going to get boobs.
Well, my boobs are gonna hang down in my belly then, and it's gonna be bad.
Well, that's a you problem.
That's on you.
Yeah.
Yep.
How are you? Did you go out last night? You said you had to.
I did.
But you have an exciting development, though.
What's my development?
You said it was the best Italian food you've ever had.
I think
that's
it
an
was.
exciting development.
And you wouldn't tell us. Vanetta wouldn't let you tell us who it was. So share it with us right now.
I think I went to probably the best Italian restaurant that I've ever been to. And I've been there before, and it wasn't this good. And then I don't know what happened, but I went to Monteverde.
Oh wow! This is right here over on Madison. There, yeah. They're acclaimed. They've won awards.
Yeah, they have a Michelin star, but it was probably the best Italian food I've ever had.
Wow.
What'd you have?
Just a combination of like a lot of different, a lot of different pastas and.
Is it small plates or is it like?
There, it's. I think it's mostly sharing type meal.
Okay.
I don't.
Is that the first time you've been there?
No, my second. I've been there before about 4 or 5 years ago, and I thought it was okay. And
me too. I thought it was good. It was all right. Yeah,
I thought it was good.
Spectacular. I sat at the bar though.
I thought it was good, not great.
Okay, but if you went, it would have been like right in the pandemic. So if it was we're 5 years out. To this week is 5 years.
It's probably 5 or 6 years ago. I don't know how long.
Okay, well, if it was 4 or 5, then they were going through some things.
I don't remember exactly, but I thought it was okay. It didn't blow me away. They've completely changed like the menu and everything, and it blew me away last night. It was so good.
Wow.
Yeah, it was so good. I don't think I've ever had.
Well, what was the standout dish or bite or because it's still all very vague.
I think meatball ravioli was my standout dish.
Meatball raviolis.
Yeah, it was like a meatball inside of a ravioli, and they had. I'm telling you this right now, the best meatball I've ever tasted in my life. And their sausage was great. Their meatballs are great. Ravioli was but I mean it's
What kind of meatball is it? Do you know? Is it like lamb, veal, pork?
Didn't ask. It just said meatball. I said okay, let's go for it.
All right, let's go.
He doesn't want to know how the sausage and the meatball's made. He just wants to enjoy it.
That's right.
Yeah, you're like that guy on the internet. I'll take 14 of them.
It was. I mean, we had a lot of dishes. There was just some pork bellies, some Wagyu stuff, it was great.
Okay, all right. So Monteverde.
It was. I couldn't believe how good it was. Like last time I was there, I was like, but it's impossible to get in. So for some reason, last night they had an opening.
Well, unless you're the 6, I bet the 6 could get in.
It was a last minute opening yesterday, and so we got in, and oh my God, it was great.
Did you tell them it was your birthday? Did they sing?
Did you get a free dessert?
No, got nothing. But
no free dessert.
It's actually reasonable too. It's not crazy. And you got to go back. I'm telling you, something changed. It's
okay. I mean, I liked it. I enjoyed it. I sat at the bar, and they have like a mirror that comes down, and you can see them making the pasta in the back and stuff like that, which was kind of cool. To watch them make all the food and stuff. It was a good experience.
I didn't really see. Where's the bar? Is it in the middle of the restaurant? I can't.
Yeah.
Oh, okay.
Yep. Yeah, right in the middle of the restaurant.
But you had 20/20 vision. How do you miss a big ass bar in the middle of the restaurant?
I saw. I wasn't really paying attention because they sat. We were sitting.
Open your eyes, Squinty.
We were sitting on the side. We were sitting on the side, so I couldn't really tell.
Okay.
But I didn't really look for the bar until he mentioned it.
Well, yeah, they're not going to put you in a high traffic area. They're going to shove you through this.
No. I go in the corner.
Right? Yeah.
They put baby in the corner.
Yeah.
Away from the mirrors.
I won't eat in front of a mirror. And if they put me in front of a mirror, I make sure they change my seat.
Okay.
There's only 2 places I ever say you got to move me. If they put me in front of a mirror because I hate eating in front of a mirror, and 2, if they try to put me upstairs.
Wow.
No, never go upstairs. That's where they put the tourists.
Who is this diva? Okay.
Just never go upstairs. If they try to put you upstairs, you go, oh, my leg. Like you got to make up.
Yeah, I was gonna say now that you just turned 70, you can pull that. Oh, my leg, I can't make it up the stairs. That kind of thing. So
my leg.
You stay on the first floor.
Whatever you do, they go. Only tourists go upstairs. If they try to put you in a back room,
you come up lame.
And also, if they try to put you in a back room, that's where they serve the bad food too.
Yeah. Okay.
Right, because that's right. Because the chefs know in the back.
Yeah.
Oh, this is going to the back of the room. I can give them the bad-looking food that doesn't.
Never ever go to the back room. Never go upstairs, and never sit in front of a mirror. Other than that, you're fine.
Why won't you sit in front of a mirror? Like you just don't want to watch yourself eat?
I don't want to watch myself eat.
Oh my God, it's disgusting. Are you
It's
kidding
disgusting.
me?
Yeah. I don't want to. Yeah, I was scarred. When they put that mirror over my bed in Vegas, that scarred me. And the eating in front of a mirror scars me.
I've never recovered from that day either, Sadnoff. Man, looking at you.
Yeah, we're gonna keep it moving. Was there dessert?
Not gonna play.
No dessert.
No dessert? Oh,
No
come
dessert.
on, that's like the best part, man.
No dessert.
Ooh.
But
well, you can get your dessert. You can get your dessert on the 15th, Sadnoff. That's right. The Dairy Queen is opening up. Nikki's got the shift from 5 to 10 on Saturday.
Are we really doing
this?
Are we really doing this?
You get your dessert there. Yes, I believe we are.
Nikki or Vinny, or are they both working together now?
Vinny, I say Nikki?
Yeah.
Nikki might be moonlighting there. Yeah. He told me how his review went. He might be reviewing there at Dairy Queen. Yes.
But you're a fan of the Dairy Queen ice cream cake, though. Now
I'm a fan of the Dairy Queen non-dairy ice cream. I mean, if you know what you're getting, like I'm a fan of Dairy Queen's chocolate, even though it doesn't have any dairy in it. I'm still a fan.
the chocolate doesn't have any dairy in it, like
No.
a Wendy's Frosty.
Like Wendy's Frosty has literally zero dairy.
Right? Yeah.
Dairy Queen has enough dairy.
5%, I think.
They have enough
I think we
dairy.
looked it up. It was
Yeah, they have enough dairy that they
5%.
can call it Dairy Queen, but not that they can call it a dairy. Not that they can actually call it ice cream, or like it doesn't qualify to have dairy in it. But if you're allergic to dairy,
Yeah.
like they say they have like a couple percent, like so it's like 5%.
Sure.
But if you totally can't have dairy, then you want to go to Wendy's because that's dairy free.
Right. Sure. Interesting.
I like the things they sell like at Wrigley Field. I forgot the the ice cream they sell that actually can sit out in the sun for like a week and it doesn't even get, what's that called? Like the malt.
Oh, the
thing?
Dippin' Dots.
No, not Dippin' Dots.
Oh.
The malt one. The one they sell, the vendors sell.
Frosty?
Is it a Frosty?
Oh.
It's like a malt,
I don't know.
malt something. But they can stand out in the hot sun and hold it. It doesn't even.
Yeah. Well, Kennedy's gonna get rid of that. So.
I don't know what's in that.
That's
Yeah.
right.
What's in that?
Don't you remember the milkshakes you used to put in the microwave?
What again? What year is this? What are you talking about,
Do you remember
Grandpa?
those? The milkshakes that you used to put in the microwave?
No.
What are you talking
Never.
about?
There was somebody came out with a milkshake.
Who?
I don't know.
When? What year? What
I don't know
decade?
what year it was. I don't know what decade it was.
When in the 1900s, Grandpa?
All I know is when we used to, when we were kids, or I don't know, we were kids.
Okay.
Whenever we had a microwave, the
The microwave had been invented. So that's
microwave had been invented.
okay.
Then they made these milkshakes.
Uh-huh.
Like you bought them, they were, I don't know.
Again, who? We don't know.
I have no idea.
Okay, somebody.
They threw them in the microwave and then he took them out after a minute and it was a milkshake.
Oh, okay. If you say so, let's
I don't
get
think
you
there was
to
any
bed.
chemicals in that at all, but
No, but that's a defrost. Do you not understand the science behind why one? I'm like, I can't.
no,
I
you
can't
weren't
with the boomers
defrosting it.
do
It wasn't something that was frozen.
It wasn't.
No, it was off the shelf.
Okay, that doesn't make any sense.
I know. So
that's
look it up. There was this something you put in some kind of milkshake you put in the microwave.
So it had an endothermic reaction that made
Yes.
it colder.
Yes.
Okay, defying the laws of physics.
Just telling you.
Yeah, I think Tom is going a little cuckoo.
No, I'm
Like
not.
I understand, like if it were like frozen
No.
and then you put it in the microwave and then it became a better
No, it was not
milkshake
frozen.
consistency.
It
Okay.
was off the shelf,
Okay.
and you stick it in there, and then you have some kind of a milkshake.
Uh huh.
I'm not saying it was good.
And then War of the Worlds came on the radio. Like what happened? Like what else happened then?
I don't know, but something like that.
Yeah, they were frozen. I'm trying to read about it right now. Microwave milkshakes here. Anyone remember these things? Yeah, you put them. They were frozen.
Oh, they
were
were?
frozen. You put them in the microwave.
Because again, like I would say, you invented like a new law of thermodynamics. Like you can get Julia in here.
Yeah,
remember.
you're not Trump. You can't do that.
I don't remember them being frozen, but whatever.
Okay, well,
Okay, I don't.
knowing what I know about you now and your propensity for not refrigerating/freezing stuff, like I could get how that could be your mindset. Because now you don't put stuff in the freezer, but
I don't like to
Sadnov,
refrigerate.
one question about these milkshakes. Did they bring all the boys to the yard? Boys to the yard?
I think so.
Nice.
oh my
nice.
goodness gracious, that's bonkers. Well, Matt, how was your evening?
Trying to think. Non-eventful. It was pretty good, evidently. I
You
didn't do
got
anything
free
bad.
time now. Like you should get a hobby.
What free time do I have? Just out of
Well, no, because
curiosity.
hockey's over, right? Like at least for like a week,
Oh
right?
yeah, but it's for another week.
Yeah.
Right. Yeah.
So you
I'll come
need
back from spring break and then I'll be on daddy duty.
Yeah, you need something to do. So that's what I'm saying. You should get a hobby.
You're right.
Yeah.
You're right.
there you
You're
go.
right. I'm gonna wash Tom's car.
I need my car washed. It's dirty.
I know. I saw it the
It
other
did
day. I
look
saw
really
it.
nice after that one place where you had to wait like an hour and a half. Because I parked next to you, and it did look really nice for like a day, and then it rained.
I can't get it. My car wash is the line's like an hour and a half long. It's
Go
ridiculous.
to my place. It's on 18th and State. It's a hand car wash, and they do a really good job. And the wait's not that
No
long.
line.
Sometimes there's a line, but it's not an hour and a half. I've never waited an hour and a half there.
No, I don't wait hours.
And
Just saying.
today, for you and me, Wednesday is Ladies' Day, so we get a discount.
I like it.
Like all you got to do, you just hop out wearing like big sunglasses, and they'll give you the discount.
I don't know what's going on, but these car washes, man. I mean, they have lines basically from the minute they open to the minute they
Because
close.
literally, your car will corrode if you don't get it washed and you live here.
I don't know. The lines are ridiculous.
Oh yeah.
I think we got a new business.
Car wash.
Car wash, baby.
There you go.
Welcome to the car wash.
See, but we don't have as many like do-it-yourself car washes here as they do in like other places.
Yeah, I don't want to do it myself anyway.
You don't want to do it yourself?
Oh,
You're not a DIYer?
I'm not a DIY car washer.
Have you ever washed your car?
I mean, ever, yes, but not in the last 40 years.
Wow. Bat, do you ever wash your cars? Like yourself?
No. Sorry.
You're like,
I mean,
I'm too busy washing the garage floor and putting things away in the garage and, straightening out the garage and doing that
50
kind of
years
work
ago,
to wash
maybe?
my car.
yeah.
I can't even remember the last time I washed my own car.
No.
I've power washed things, which I do quite well.
Okay, no. You're just going to take the
I got a
peel
power
off of it.
washer.
Hey, I got some exciting news for you. A new music venue called Garcia's after Jerry Garcia is opening here in the West Loop. Tom, are you excited?
Where is the new music venue opening up?
In the West Loop.
Really? Where?
I don't have the exact address, but it's called Garcia's, and it's going to feature 3 performances by Graham's father, Phil Lesh, who's a founding member of the Grateful Dead. So they're going to have a bunch
He
of
just
concerts.
died.
Yeah,
Oh, so this guy, Graham Garcia, is opening it?
yeah,
Oh, and his father's Phil Lesh?
yeah,
Oh, that makes sense.
yeah. But they're going to have other shows there, and all of July's Fish concerts are going to take place there. But they're going to have other bands and stuff. It's 300 seats. It has 300 seats.
You're telling me
You're telling me
Fish is playing there? No way.
that's what it says in July. After parties. I'm sorry, for July's
After parties,
Fish. Yes.
yeah.
I'm so
Because
sorry.
they're going to be at the United Center.
Yes. Yes.
I would doubt they're going to be at a 300-seat thing.
Well, it's going to be a little more closer.
Have you ever seen a Fish concert?
I have not.
Have you ever seen
It's
a
a
Fish?
very Chicago band. I never saw them either.
I don't know.
They're like East Coast. I
Yeah,
thought
I
they
don't
were
know if
more
they're-
like Vermont or
I thought they were from Buffalo.
really? I
or
don't
something.
know.
I
I've
have
never
no
seen
no
them.
idea. That is not my
Yeah,
area
I don't
of
think
expertise.
they're a Chicago band.
Oh, John
I've
found
never
the
seen it.
website. John's bringing it. John's pulling up the website there. I think
Oh, yeah, no, I never heard of this
he
place.
found it. So I know that's what I'm telling you.
Oh, a little live music and a restaurant experience.
Yes.
I like it. I wonder where it is. I wonder if it opened where City Winery was or something like that.
Maybe it's gonna open officially March 21st.
Is it on
so-
Fulton?
Okay, I will look this up. Hold on.
Oh, this sounds cool. I just don't know where there's a big enough place for 300 seats.
Well, maybe we can have some 1001 West Washington. So we're at 1330 West Fulton, so it's just a couple blocks like this way on Washington.
Wow.
So 1000 West.
Okay.
So like Racine, I think, like Racine in Washington.
The old Wishbone.
Is that where that is?
I think so.
Yes, you're exactly right.
Oh,
Sal. I'm looking at
finally, look
pictures
at
of
that.
It.
I think it's the old Wishbone.
Look at
Yep.
that.
It is. I'm looking at pictures of it right now. Yes, it is. Yep.
Yeah. That's right around the corner from our
That's
old
cool.
office.
Oh, they're gonna have the Blind
Yep.
Boys of Alabama play. That's cool.
Yeah, the old Wishbone.
Wow.
Yep.
Maybe they
Yeah.
will host a future Tasty event.
Yeah, that's a kind of,
It's close.
yeah.
You can park for free at the building we haven't sold and walk over. So that'll be nice. Did you watch any sports last night?
No.
Nothing. I don't know if anyone's playing. Big Ten tournament starts today. So congratulations to my number 9 seeded Hoosiers. We're not very good. But I think Northwestern and Minnesota play today.
Micro Magic.
Is that what your wife calls you? What?
Oh, that's okay. That's allowed. Okay. All right. I see where we go.
I'm sorry. Why are you just
That
yelling?
would be a great nickname for you, Sal. Micro Magic.
Micro
That's
Magic.
pretty good.
Why? What is Micro Magic? What
It's
is
a
that?
vanilla milkshake for the microwave.
Oh,
I knew there was a microwave milkshake.
what year was this?
We haven't figured it out yet.
Okay.
We're working on
You're
it.
figuring it out.
But Micro Magic was the name.
Okay.
A vanilla flavored milkshake for the microwave.
Yeah, I like that. I like that as a nickname for you. You're not real like Magic Mike, but you could be Micro Magic.
I think you're onto something here.
Right? I might have did something. Hey,
I think that's a good nickname.
we got a great show for you today to get you through this hump day. Hope you are dealing okay still with the time change. It is still brutal, but it's Wednesday and we're getting there. At the top of the 8 o'clock hour, we got an options jive. The different types of volatility metrics on Tasty Trade. There's more than one way to measure volatility?
Yeah.
Yeah, okay. Well, we're going to get into it. Do you have a preferred favorite?
Not really.
Preference? No?
Not
Okay.
really.
Then, hey, it's because it's Wednesday. We got What's Your Assumption at 8:40, where viewers write in with an underlying and they have a directional bias. Tom and Bat do viewer submitted trades. That's going to be at 8:40. Pretty much everything is at a discount. So if you like something, 2 weeks ago at a certain price, you're going to love it here. But we're going to see what trades.
Everything's on sale.
Everything's on sale, honey. I love a sale. Everything's on sale. And then 9 o'clock, Skinny on Options Math. Breaking even through the trade. This says Jamal. What happened to Jacob?
They misspelled Jacob.
Oh, okay. I was like,
That's a Jacob piece.
okay. So it is a Jacob piece.
Yes,
That's
it's a
too
skinny.
funny.
It's a skinny today. So it's
Well, that's what it says. Again, I'm seeing with my eyes that it says that it's a skinny, but it literally says hyphen Jamal. So what am I supposed to do with that information?
all people with names that begin with J sound alike.
Okay. And then you got live from the trade desk, Big Boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. Breaking news update. I reached out to Scott. He has agreed to do some behind the scenes influencer content from Japan. Like, he's going to be going to fancy dinners. He's going to be talking to players. He's going to be just hobnobbing. He's so good at being an influencer. So he's going to hopefully send me the footage. I can't wait. I'm so excited. Also, he's going to bring me some Hello Kitty merch. So, Scott, you're the best. What are you doing? You got nothing.
I'll send you stuff this weekend. What do you want to see?
Where are you going?
I'll putz around. I'll show you things on my putz route.
No, I don't want that.
On my shuffle zone.
I don't want that. I don't want that at all.
I'm doing a bagel test this weekend.
You're doing a bagel. Oh, because you're gonna get what is there new? The H and are you going to H&H?
No.
Oh.
No, it's. I was proving to somebody between Steingold's and Gotham.
Oh, okay.
Yes, no comparison, by the way.
Gotham is your number one seed? Yeah, okay.
Not even close. And I am also going to, I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am.
I am going to make a corned beef because I'm making some Reubens on Saturday or Sunday.
Are you going to watch him go dye the river?
No.
You should. It's fun. You should at least do it once every Chicagoan should at least do it once in their life. Because the plumbers union, they come out and they're like, okay, we're the plumbers union. We're going to be on the back of the boat. It's a proprietary formula.
When do they dye the river green?
Saturday.
Oh. No. I got a lot of stuff to do Saturday, but I'll be making my corned beef Saturday.
Okay.
Are you going to put the corned beef, are you going to slice it and put it on the Blackstone
Ooh.
before you make the sandwich?
No, but I'm gonna put the rye bread on the Blackstone.
You can make smash Reubens.
No, you gotta put the corned beef too. After you slice the corned beef, put the corned beef on the.
Why?
Because it makes it hot and it crisps it up a little bit. It's great in a Reuben. When you put on your Thousand Island dressing, little sauerkraut. You got to put it. Yeah, come on.
I got everything. I got sauerkraut, Swiss cheese, Thousand.
Oh, you don't make your own Russian island or whatever the Russian dressing, Thousand Island Russian dressing.
No, I use like Ken's Light.
Ooh, yes, we love a calorie deficit queen.
Oh my god.
And then
oh my god. Oh my god.
But I'm having
transformation.
But I'm having trouble. I mean, I literally am having trouble with the rye. I got to get to Publican before they run out.
There's just over here. Go. Okay, I gotta finish the schedule. And we got Nikki back coming in 9:45 for his Johnny trades. Bless Nikki's heart. If you got a smaller account, Nikki's got trade ideas for you. And today Liz will be joined by TP on the Liz and Jenny show. And Truth or Skepticism, 1 o'clock. Tom Tosnoff, Dylan Radigan. You did have a pretty funny line yesterday when you were doing the handover, and Chris and Ilya and Dylan were on, and you're like, what is this, a Zinni ad? I didn't even know you knew what Zinni was.
Hey, I watch Bulls games.
Wow, they all have glasses. It was pretty funny.
Yeah. Well, did you see that all their glasses looked exactly the same?
Yeah, I know. It was funny. But is Dylan back in America now, he said?
I have no idea what Dylan is. I don't track Dylan.
Oh. Anyway, what are you talking about with Dylan today, though?
Let's see. Josh put together a couple of pieces. I don't know which one he picked.
Okay, that's very helpful.
Yeah, I'm not sure. He put together a bunch of stuff. I'm not sure.
Hey, well, I gotta get moving because we got some stuff coming. There's a number coming out. Let's get to the Daily Dose. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Leading story. Top story. Just in.
Today's headline.
This just in. Breaking news.
I would also like to point out, I'm drinking a big ass cup of water at your desk. I don't even care. I do what I want.
Again.
I do what I want. I do what I want. No, I'm just kidding. Good morning.
We had to fix it the last time.
It's a wonderful Wednesday. It's March the 12th. It's part of the show they call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Earnings,
Ready
Mr.
for
Bat.
the news. Ooh, Adobe and DG.
Ew, okay. Hey, getting to the first headline of the day, we're getting CPI today, and a good CPI report today may not be enough to turn this stock market carnage around. Let's talk about the expectations, what the implied move is for today, and what the importance is given the massive swings we've been having of CPI today.
I sold bond and note premium on the close. Literally, I hit the bid on the close and just covered it this morning. It was a really nice trade. So it worked. I mean, the premium came in overnight. I think that's because I honestly think it's because the VIX is down so much this morning that they just killed bond premium. I don't even think it has anything to do with bond. You know what I'm saying, Tony? I just think that
everything was elevated yesterday.
Yeah, everything was elevated, and I think they just I mean, they took almost 5 ticks out of, almost 5 ticks overnight out of the bond strangle. That's crazy. I've never seen that before.
Yeah.
And 3 ticks
Going into a number.
Have you ever seen that from last night to this morning?
No.
I've never seen that.
Good trade.
And I've never seen them take 3 or 3.5 ticks out of a no trade from the close to before the opening. Never seen that. So I think that's just going to be a vol. Today is going to be a vol destruction.
Okay.
Which nobody is going to be upset with.
What are you doing in your indice positions?
I mean, we went home flat.
Okay.
So I assume that we'll be a little short this morning if they're up, 40 handles. But I think there's going to be I don't think there's going to be stock market carnage this morning. I think there's going to be volatility carnage. Okay.
Well, that will be interesting. John, I'm going to skip the second story because we just talked about bonds there. So that two birds, one stone. But this headline says U.S. retail investors are wary of buying the dip as anxiety over the market deepens. Would you say that that's true or not?
I just have to read off one email that just came in.
This is about that damn milkshake?
No.
Okay.
No, this is good.
Okay.
So Rich, Rich who does our show in London.
Yes. Rich McDonald.
Rich McDonald. He's at some race, the Cheltenham races today.
Okay.
And
it's the biggest race meeting in the world, he said.
Biggest race meeting in the world. There are 2 names that caught his eye. At 2 p.m. this afternoon, which is in just about 30 minutes.
Hour and a half.
Gorgeous Tom is going to the Post. And then at 2:40, Beat the Bat is going to the Post.
This is your breaking news?
Yeah.
These are horses?
So
these are horses.
These are two ponies that are running. You can bet like a daily double with them if you'd like to. Get some good odds on that.
He bet the daily double $10 to win 1,000.
Again,
I'd like to bet you straight up that my horse finishes higher than your horse.
There are 40 horses. How are there 40 horses running on Beat the Bat? But anyway, you should get on your app right now, Tony, on your betting app and bet Beat the Bat.
I gotta get my son on the horn. He's got that.
Oh my God! Hey, I gotta keep it moving.
Breaking news.
But buying the dip, are these prices and these levels are there opportunities here? We have room to go. Well, then why aren't investors stepping in and buying the dip?
I mean, I think everybody already has bought the dip. I think everybody bought the dip a couple days ago.
Yeah.
Yeah. So I think people have been buying the dip. That's why they keep going lower. But
I know this is stupid that they buy here and sell here. Nobody knows anything about anything. But this has not been the typical bottom that we have had in the past.
If I've been buying the dip, then everybody's buying the dip. So sure, I think people are
because you're so public.
No, because I never really buy stuff.
Just kidding.
I never really buy stuff.
I think maybe in 10 seconds the number's gonna come out. So
yeah, we're a buyer of bonds if they hit them.
Okay.
But I don't know. 4 seconds, 5 seconds, 6 seconds.
Bonds are down 8 or 9 ticks beforehand. Even the S&Ps were up around 45. Even the S&Ps go up 76 very quickly. Bonds go up 10 handles. So I don't know if they rally about 18 ticks. NASDAQ up 300 and change. Russell up 42. The Dow up 450. Even the S&Ps up just about 90 now.
Yeah,
Let's go.
America.
But take a look at the volatility. It's ugly. You gonna
/VX. If you're looking at the J month, it's in by a full dollar here. That's about a 5% move, 4-5% move.
Oh, I was looking at the H's and down $1.60, which is a lot before the opening.
Yep.
Oh, that is a lot.
Front month vol.
Yeah, and just taking a look to see if this bond premium came in even more. Yeah, it did. It did. It came in another tick. Yep.
Yeah, another tick. Not worth the, and that's mid price. Enough. That wasn't worth the wait. I mean, you closing it ahead of time at 63 is a lot better than holding it, even if you can close it at 61 with the bonds being basically unchanged now.
Well, the expected move in bonds was like almost a point, and they moved 1 tick. So
I know, but volatility hasn't come in since the number came out.
No, I understand.
The trade.
I understand. I'm saying it was an extra tick in it.
Yeah, it was an extra tick.
S&P's up 80. That's a huge move. But I don't think, I actually don't think anybody's kind of like, I don't think it surprises anybody now. We've had 100-point moves every single day.
Right. Yeah. It's the new normal.
The question is, can they hold it today?
Right. Yeah. We will see
That
what
is
happens.
that is the $64,000.
Yeah.
I mean, something's gonna happen today. Someone's gonna say something.
Can they hold the rally?
We will see what happens. Hey, here's something interesting. Maybe they've been watching your Sosnoff Says, but city strategists are now advising customers to take profits in U.S. stocks and to start buying China shares. They say U.S. exceptionalism has paused under Trump, and investors should load up on China. What are your thoughts?
I mean,
I think you missed that boat.
I think that, yeah, I think that this was the trade,
A month ago.
Last year?
In hindsight, this was the trade, you could go back to November, September of last year.
Yeah, January, the beginning of the year. Whatever,
beginning of the year, whatever. I mean, we've been talking about this trade for a year, literally for a year.
Literally.
But we were obviously early.
Yes.
But I think that, first of all, and it's easier said than done. What does load up on Chinese stocks mean? How you're going to buy like Baba
Like
and
at a
Baidu?
buffet.
You're going to buy Baba and Baidu and
PDD? Yeah.
I mean, I'm not sure what load up on Chinese stocks. There's like
Load some FXI,
It's
probably
the
some ETFs.
Kazakhstan bonds of 2025, Thomas. You buy the
yeah,
Kazakhstan
I mean, it's
bonds. Remember that?
There's 5 stocks you can buy, basically. I mean, I agree with the premise but I think at this point you've already missed a huge rally in China and a huge sell-off in the U.S. So, I mean, the idea of loading up now, I don't know.
But if you had to get
It's
in
a
now,
typical. It's a typical headline.
what would you do?
Right now?
Yeah, like if you had to get in, right.
I'm not buying Chinese stocks here because they've already had a huge move, and I'm not selling U.S.
Right now,
stocks.
you're selling premium is what you should be doing.
Yeah, I'm
what
not
you
selling
shouldn't be
U.S.
doing.
stocks here because they're already on their butts.
Okay. Hey, in other news, small business uncertainty about the economy spikes to the second highest level since 1973. The administration's dizzying back and forth on tariffs is paralyzing America's small businesses as they grow worried about the U.S. economy's future. I mean, yes, Trump can have a party for Tesla on the front lawn and make a big commercial for Tesla. But what about America's small businesses? They are struggling. What do you think happens here?
It is probably
because it's a concern. Like businesses are concerned. They don't know where they're going to.
It is hard. Like
get their inventory, their supply chain, how they're going to pay their employees.
I mean, I'm not saying this because we have a small business, even though I don't really consider it like I'm not. It's not a moneymaker, but like just seeing what it's like to run a coffee shop.
Sure,
it's hard. I don't know how they would. I don't know how somebody trying to do that to support themselves would make money.
Right. And then it
really
seems
hard.
what is on the horizon for small businesses?
Well,
that also seems, I'm just saying it seems uncertain because like nothing's been promised to
but to be fair, it's always been tough to have a small business. Like
sure.
Small businesses are never easy. You can go back.
But in a day-to-day where you don't even know, like if the price of something that you're involved in is going to...
I understand.
Like what it's going to be.
But I don't know if there's ever been a time in history for small businesses, when everything is...
Sure.
Predictable and you can kind of schedule...
Set your watch by it.
Schedule out everything. I mean, running a small business has always been challenging. That's why the failure rate is so high.
Sure.
It's just hard.
Well, just another economic...
I mean, according to the numbers, inflation is down. Eggs are under $2, sounding off $1.80 or so per dozen.
I don't know where you're buying.
Where
eggs.
are you getting eggs that are under $1? What are you talking about?
Are you reading the prices in Singapore or something? I'm not sure where you're reading egg. Are you reading egg prices on Tom Preston's ranch?
Egg futures.
Okay.
Egg futures.
Hey, gold is holding gains as markets weigh trade war and U.S. recession.
Hey, if you could buy eggs for $1.80, can you please go get me about 10 dozen, please?
Gold held an advance. You want to talk about gold real fast?
Yeah, gold's like doing nothing. It's up a couple bucks today, but it's on its high.
Okay.
Gold is on its highs. Oil, which is near its lows, is up 94 cents. Gold is up $5 and change, flirting with 29.30, closer to its highs than its lows.
Yeah, silver is much stronger today. The gold-silver ratio's come down a lot.
Okay. Hey, here's something that's interesting, a little head scratcher. Crypto.com is suddenly one of the world's top exchanges, and its competitors can't figure out how it got there. So if you look at this chart in 2023, Crypto.com sitting in like the third space in terms of share of volume during traded U.S. hours. But last year, they surged from the middle of the pack to the top of the pack, but they're not being transparent about where that growth is coming from, because you think it would be very trackable or verifiable because everything's tied to the blockchain. But they're saying, well, they're using quant traders, they're trading in house, they're using prop firms, they're doing like all this other stuff. And so I just thought it was an interesting headline. The story goes a lot deeper, but you can read it on fortune.com. But just wanted to mention it because it seems odd.
I know those guys quite well, and I happen to like them, but I don't know where their volume comes from.
Right, and they were trying to do due diligence. They're like, who's making markets for you guys?
This is not in the U.S.
Right.
This business is somewhere else around the world. I mean, I think they're headquartered in.
No, this is part of their U.S. growth too. This is including U.S.
U.S.
growth.
They could. I know, but their growth is not in the U.S.
Okay, that's what I'm saying. It's like, this is weird. Anyway, what's Bitcoin doing today?
After getting hit under 75,000 or so, it's back up to about 84,000 and change. The futures show up 700. The cash show, which trades more like 24 hours, shows 2,200.
Little bright spot in the S&P yesterday. Again, super micro, up around 10% as AI stocks have a nice little turnaround. What did you do in SMCI?
We're fine in there. We're just short premium, and it's, we needed a rally.
Okay.
So no complaints. Good job, super micro.
SMCI, $43 and change, up another $3.
History shows that NVIDIA's conference next week could be a catalyst to turn the stock around. The industry visionaries will be unveiled at the What's Next in AI at GTC 2025. Catchy. Jensen Huang, of course, NVIDIA CEO, will be speaking. And historically, the conference, it's going to return this year, March 17th through the 21st. But historically, around when NVIDIA has its conference, their stock does perform pretty decently, I guess, kind of like a Apple kind of keynote. But what are you doing in NVIDIA?
Well, we were buying it yesterday, but we're flatted today. It's up $5 pre-market.
Okay.
Yeah, to about 113.5.
That's about the highest it's been back to.
This conference is going to have 25,000 attendees in person and 300,000 attendees virtually.
Oof.
I'm just saying that's a lot.
Ruff.
That's a lot. Microsoft is open to using natural gas to power AI data centers to keep up with demand. Chevron and Exxon recently announced they are developing natural gas solutions for data centers, and the tech sector has largely relied on renewable power, but the industry is increasingly turning to alternative power sources as data center consumption rises. Microsoft and natty gas?
Yeah, it doesn't seem like a natural pair, does it?
Yeah. What are you doing in Microsoft?
Microsoft up $2.50.
Natural gas getting killed today.
Oh, no. Do you have a natural gas position?
I do, a little bit.
Okay.
Small, but we're going to lose a little.
It's down 16 cents, which is a big move, 3.5% move to the downside. But net gas is near its highs. I mean, it's over $4. It's $4 and just under $4.30. I mean, remember, net gas is a product usually under $3.
Harumph.
Facebook owner Meta is testing its first in-house chip for training AI systems, a key milestone as it moves to design more of its own custom silicon. Meta kind of bucking the trend of the other Mag 7. I think it was the Mag 7 company that lost the least amount and maybe even finished flat to maybe up positive during the whole shellacking of the market. What are you doing in Meta currently?
No position.
Okay.
It didn't go it didn't go under its lows it made in January. If that's what I think you're trying to say.
Right. Yeah, that's what I'm trying to say. Yes.
You're right.
Thank you, Bat.
Yep. Meta 621 up another about $15-16 this morning.
Reddit.
But I mean, everything's up. Even the S&P's up 54.
Reddit rallied yesterday after a 3-day slump as an analyst called the sell-off in that stock excessive. The company's stock market upswing was likely bolstered by a Loop Capital analyst's note that was published Tuesday that reiterated a buy rating and characterized the company's shares as extremely attractive.
You know, it's so funny. No analyst would ever call the rally from $25 to $225 excessive.
Right?
But
that's how things are supposed to go.
But a $60 sell-off is excessive.
That is excessive. Things are only supposed to go up. What are you doing in Reddit?
I have no position.
Okay. What's the IV in Reddit, Bat?
Reddit up $7 or so, back over 130.
Oh, that's nice.
Almost 131.
Hey, we may be divided as a nation, but if it is one thing that can bring us all together, it is going online and calling Southwest a bunch of idiots. Southwest Airlines just pissing off people left and right yesterday, saying that they're going to charge to check bags for the first time unless you only have like the highest tier, their A+ preferred tier. You get 2 free bags. If you're just A-list, you get 1. Or if you have the Southwest credit card. There is now no differentiating factor between Southwest and the other airlines. They're like, I'm going to fly Delta. At least they have free Wi-Fi and TVs. People were real mad that Southwest doesn't have TVs. I found out yesterday online. So yeah, they're going to charge you, and they're getting rid of the change fees. They devalued their rewards program, so some want to get away from
You mean they're charging change fees?
They're charging change fees. Sorry, I misspoke. And they're devaluing their rewards. So you used to be able to earn 6 points for wanna getaway flights. Now you're only going to earn 2 points. And they're going to dynamic pricing for redemption. So say you want to redeem your miles. This all starts like May 28th. So if you have Southwest points, use them now before they get put into dynamic pricing. Like, it's just bad all around. But private equity stepped in and they're like, hey, we need to start monetizing this. But it was literally the one thing that made Southwest stand apart, and it's sad.
It's the end of an era, but I mean, they got to stay competitive, I guess. The street didn't really like it that much. I mean, the stock has been on its butt, like to around 28.5 or so. It rallied all the way up to around 32.5 or so. Closed at $30.50, where it sits right now today. $30.50, unchanged this morning.
And all the other airlines slash their earnings forecast as economic concerns grow, whether it's people just being straight up scared to fly or just having concerns about the cost and future economic uncertainty. So
I think you're right. All the airlines are lower after making new highs back in January. I guess from January to March, things changed.
What's up?
No, nothing. We would just like some air traffic controllers.
Yeah.
Back in the air.
Yeah. Get back to it. Hey, but staying in the aviation space, Boeing deliveries rose 63% in February from a year earlier. I mean, they went from like 1 plane to like 45 planes. So yeah, of course it went up. But Boeing said they delivered 44 aircraft, up from 27 in the same month a year ago. What are you doing in Boeing?
We were long yesterday, which was good. We're probably a little bit still long, I'm guessing. Boeing. Yeah, we're long.
Okay.
I don't know what the stock's doing this morning, but we're a little.
Pat, what's Boeing doing?
It's up about $2.25. Yesterday, it traded as high as $155 and change. It's going to be a little bit over that, $156 and change this morning. If it opens here.
This headline says more companies are signaling a weaker outlook for consumer spending, and downbeat forecasts are weighing on everything from airlines to retailer stocks. Kohl's, KSS, down pretty big yesterday after they announced their shares were down 20% after they gave a rough outlook for the year ahead. Dick's Sporting Goods, DKS, they also gave a rocky forecast. Target, same thing. Best Buy, same thing. Like, the hits just keep coming. What are you doing? Because I know you have a Kohl's position. So.
Yeah, and I have a covered call. It didn't work yesterday.
Verizon stock was the worst it's been since like 2002. They offered an unusual quarter warning, and that rattled telecom shares from Verizon to AT&T.
Verizon's such a scam. You know, I have Verizon. Oh no!
You have AT&T, girl.
You have AT&T.
AT&T is such a scam.
Is Comcast Verizon?
No, Comcast is Comcast. Comcast is Xfinity. Comcast is its own entity. There's an Xfinity Mobile.
Oh, I don't have Verizon. I have Comcast.
No, you have AT&T.
AT&T's for my phone.
What do you? I thought we were talking about phones.
I'm talking about my house.
Okay.
I have Comcast Xfinity.
Gotcha.
What a scam. My TVs don't even work.
Okay. Well, take it up with them. Hey, I like this for you. TikTok is going to try to lull kids to sleep to stop endless scrolling. Kids under 16 will automatically now hear calming music after 10 p.m. to get them to wind down instead of just keep scrolling. I want them to play some Fog Hat for you to get the boomers to wind down from the TikTok. A little slow ride. Take it easy.
Take it easy.
Hey, this is a hilarious story. I heard you guys talking about this at the big boy table yesterday, but this is in fact true. Gene Simmons, the iconic legend from the rock band Kiss, is embarking on tour dates with his solo band. And if you would like the privilege to be his personal assistant / roadie for the day, you can have the honor of paying him $12,500. What?
I'm going to do that for Tony.
What?
Sadnaf, I'm going to let you be my
He's going to be in
schlepper.
California when you're in California, April 3rd in Anaheim. He's going to be right there.
I'm a little bit away.
Sadnaf, it's just geographically suitable for you.
You should invite him to the wedding. You should see if if he wants to come to the wedding.
I should have him play at the wedding.
Right?
No, Saznov, call him up and charge him if he wants to come to your wedding.
Charge him to play there. But why would he want to do that?
That's right.
But do you think people still would want to pay for this, like in this economy, that people want to give Gene Simmons $13,000 to hang out with him for the day?
100%.
Really?
You don't think that people, I mean, I don't know why he's charging $12,500. I mean, it's like such an arbitrary number.
Sure.
But I do think that people, I mean, I don't know what Gene Simmons, he has a solo band or something?
Yes, he does. He has a solo band. Yes.
Okay.
Solo musical endeavor.
Okay. What's it called?
I don't know what it's called. I think it's just Gene.
Okay.
I think it's just.
So I'm not sure.
The Gene Simmons Experience. No, I don't know. I don't know what it's called.
But I do think that people would pay Gene Simmons. Yes, I do think people pay $12,500 to hang out with. I mean, there's a couple of, let's say, older rock icons that I think like people like Gene Simmons, Mick Jagger, Ozzy Osbourne, those kind of guys. I think people would pay to hang out with them for a day.
Okay. Hey, just real fast, because this
and
story...
people pay what, $5 million to hang out with Warren Buffett, to have lunch with him?
Well, sure, but that has like life-changing consequences. For
really?
Well, some of those people.
Spend 3 hours with Gene Simmons. You'll have life-changing consequences.
This is funny. MLB's new overlap hats are going viral for all the wrong reasons. Have you seen this?
No.
So they're mashing up the logos of all of the MLB franchises. The New York Yankees one looked the best, but it's a confusing mishmash. So now you get a hat for the Houston Ashhoes and the Los Angeles Anals. So there's also the Tatas Rangers, the Mashers, the Seattle Like it's just I showed Cassie, who's our lead graphic designer here, and she couldn't stop laughing. She was like, this is a nightmare. It's just like a graphic design nightmare.
I kind of like them.
You want to be an ash host?
I do too.
I don't want to be either one of those two.
Memes and stuff.
I don't want to be either one of those two, but I kind of like the hats.
You want your team anals?
I'm just saying. I kind of like the hats.
Oh, it's the Bobon Red Sox. It's just, you can go online and see all the hats.
What are the Cubbies?
It just looks weird. The Philpies. Philadelphia Philplies. It's a big old mess.
I like them.
Anyway, finally today for my viral video of the day, we are in the glorious era of free agency, and someone should sign these dudes to a contract. I love how they added sports commentary to this, but what happens when some window washers in New York City want a hot pie, want a pizza delivered? Oh, watch this.
Let's watch some tape of this New York pizza toss. First off, we get a wrong address. Pizza guy's here, construction guy's there. Not sure who botched this one, but can't have that occur on a daily basis. Luckily, we got a pizza guy that can improv. Says, how about a toss? Now, these claps right here, but the construction guy's what it's all about. Ready to make a play. Gamer. Can't teach that. Now, this toss. just pure athleticism. A little curve, pin job by the receiver. Talk about wanting more.
Ooh,
Just a great
nice.
effort. Hey, it's a big time play. Happy for the boys. They got their lunch, crowd's digging it. Check this laugh.
That's good.
All in all, it's just a great athletic play by both our quarterback and wide receiver. But guys, we got
That's
to remember
good.
the little things so we don't have to rely on pure athleticism every time. All right, let's watch some
he
tape
had
of this
the
New York
curve.
Pizza Toss.
He had the curve, the arc on there, and they got
that's good.
That was
That's good.
awesome. That's not the first time he's done that, though. Okay, that was too good for a one time.
Yeah, that's good.
That's really funny. Anyway, hey,
was
that's
great.
my time for today. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages with confirm and send.
The pizza stayed in there. It looked perfect. That's pretty impressive.
Clutch.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so
It's a math model.
raises a lot of
It scares the crap out of you.
skepticism because it makes a little too much sense.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, Mr. Sosnoff with confirm and send. But before we do, let's take a quick look at the market. Even the S&P is catching a little bit here. They were up all night. They're up 65 after being up 90 a moment ago, immediately following the number. But they settled in here up between 50 and 65. NASDAQ up 316. Russell up 22. This is all about a 1.5% move on the NASDAQ. Dow up 300. Volatility, I'm looking at the J new front month futures, down 86 cents. Bonds down 13, Sodnoff, 116.17. What do you say about bonds?
Getting close. I'm very interested in bonds right about getting very interested in them at these levels. Hopefully they'll
Very
go
good. The premium that you sold last night worked out really well from overnight, and even forgetting about the number, that spread that you put on is trading around 62 cents. 62 ticks. You closed it at 63 ticks. It really hasn't moved. Good close, I think, taking away all the risk before any of the news.
Yeah.
All stocks are higher this morning. I'll put in Tesla because that's the one that you were playing with yesterday, Tesla and NVIDIA. Tesla 243 up 13, and NVIDIA is up around 5 or so. The big question is, Sadnov, will they hold this rally?
They haven't held one yet. So
that's correct. But we haven't had volatility contracting the way we have today so far, but we'll see.
They haven't held one.
I don't think it surprises anyone if we get a little bit of a relief rally here. And I don't think it would surprise anyone if we sell off. Like we've had this kind of movement for the last 2 weeks.
Nope, I agree. All right, let's do it. I mean, we got to roll some puts up this morning just because they're up, but we'll see. Hopefully we're not doing something stupid. Wednesday, March 12th, confirm and send. Let's go to the first email, please.
Mm-hmm.
Is there a way on the positions page to see my trades based on strategy? For example, I have an iron condor and a put ratio spread in Amazon, but I sometimes get confused as to which strike is part of which strategy.
Okie dokie. I mean, you can group your trades if you're having a problem like that right on the Tasty Trade platform. I think that would help it. You can group it into different categories like iron condor and put ratio spreads and strangles and stuff. So that would help. You can go back and look at your trades that you made and see the strikes from there. I think those are the two easiest ways to do it.
Yeah, you can always go to the order chains, but you can also at the top of the page in the middle of the platform, there's a drop down that says group by, and the first thing you see is symbol, but you can hit that drop down, and if you choose order chains, then that will group it by your different spreads. It's not perfect the way we built it. We probably can improve the grouping. The grouping functionality, I think that's something that's on our to-do list, is to improve the grouping. But you can group right now by different strategies by just choosing order chains. Let's go next slide. Next slide. I was fortunate and I bought in a bunch of puts in different expirations, April, June, and September, prior to this recent move lower. My positions are profitable, but I'm trying to decide if it makes sense to roll the April positions to May. Would you ever roll a long option?
April, June, and September. I wish you closed them yesterday and you can open them again today. That's what I wish for you, so you could catch it perfectly. But let's just assume that you've had these for a few days, and this is still going to be a good, profitable trade for you. If your assumption hasn't changed, you could certainly roll them. I mean, April with 44 days is your shortest dated one. I think you're good where you are. I don't think you need to do anything if your delta assumption hasn't changed. I mean, like, where are you going? I mean, June to September. I mean, June's 100 days. I mean, September's more than that.
Yeah, this person wants to know if it makes sense to roll long. First of all, do we ever roll long positions? Sure. I mean, we don't have a lot of long option positions, but if we did, sure, we roll them. I
mean, September's 555 days away. I mean, I think you got it pretty much covered. I mean, longer than I would be.
I mean, does it make sense to roll April positions to May? If you want to, sure, you certainly can. I don't like rolling, this kind of high volatility, so I'm long high volatility in May. But I mean, if you want to, sure, go ahead. I mean, I mean, we're just guessing here, just like you would. Do you ever roll long option positions? Sure. Would we roll from April to May under certain circumstances? Yes. We probably wouldn't right now, just because of the crazy high vol. But if you want to, sure. Let's go next slide. When you make an adjustment in the strangle and you roll the calls down or you roll the puts up, do you make that adjustment based solely on delta, or is there a certain amount of credit you're looking to collect? I guess I'm asking if it's worth rolling to adjust deltas if you aren't collecting much.
Yeah, I mean, Delta's king. I mean, please remember, like when you roll something for $1, you may be rolling something that had $4 worth of premium up to something that has $5 worth of premium, and you're reducing your delta, which is the most important thing. Delta is king. Yeah, I roll up regardless of what the premium is. Now, if it's 20, 30 cents, I'm probably looking to be a lot more aggressive with my rolls, all things being equal.
Yeah, I mean, of course, we do make the adjustment solely based on delta, but we're also, I mean, you know what? It's a combination. We make the adjustment based on delta, but we actually are not going to roll something higher or lower for like to take in like 10 or 15 cents. I mean, most of the time we're looking to collect some kind of credit that's going to make a difference. So
sure.
I guess I'm asking if it's worth rolling to adjust deltas if you aren't collecting much. And if you're not collecting anything at all, no. If you're collecting like, 10, 15, 20 cents, probably not. But anything more than that, we probably roll just to adjust deltas and to collect a little something. Let's go next slide.
I mean, you have to. Delta's king.
Since the VIX is derived from SPX out of the money options, is it relevant to a futures portfolio? For example, VIX at 27, which I think where it was yesterday.
Mm-hmm.
Is it time to increase short premium even in uncorrelated futures like natural gas and silver, or just in NASDAQ or S&Ps?
I mean, I would first look to NASDAQ and S&Ps. I mean, that's the way I would do it, just because nat gas and silver don't have the correlation to the rest of the market that even the S&Ps and NASDAQ, which are the market, are going to have. So,
yeah, but hold on, Tony.
But volatility's expanded. Volatility's expanded everywhere.
Yeah. So what this person's asking is, with the VIX at 27, vol's going to be high everywhere. You're not going to get
everywhere.
No stone. Nobody's immune from higher volatility. But the opposite happens. Like this morning, when the VIX gets crushed pre-market, everything's going to get crushed, even if it's not correlated. Yeah. So if the VIX goes from 27 to 25, volatility in natural gas and silver is going to go down as well. Maybe not as much as the NASDAQ and the S&Ps, but sure, it's going to go down.
Sure.
Yeah, I mean, volatility acts, it's kind of all-encompassing. And when it goes up, everything goes up. When it goes down, everything goes down.
Right.
Let's go to the next slide. So last week and this week, I bought 1 week broken wing butterflies on Monday that expire on Friday. It worked last week, and it's working this week also. But if I look at my account, my after hours, my P&L is all over the place. And it is because I noticed the SPX options, the bid and the ask, are very active and fluctuating. Why would the option prices continue to fluctuate after hours if they can't be traded?
What's it called? Global market out GMH or something like that. I mean, even though you can't trade the SPX options, their markets are moving, and there are some professional firms that allow you to trade SPX options in after hours. The market's just extremely wide and open to phishing.
Yeah, the CBOE is trying to offer SPX options kind of around the clock. They're not quite there yet, or different hours, starting early in the morning and stuff like that. But there's none of the high frequency firms that support retail investors are making markets there yet. It's just professional to professional, and it's not really trading, but the prices change. So that's why your P&Ls get messed up, and
you'll get zero bid and offer at $25 that'll throw off your P&L. I mean, it's not.
So they're
not tradable markets.
This has always been a problem at the CME, and now it's a problem at the CBOE, because when you stream overnight and there's no market efficiency because there's no high frequency firms in there, then it becomes really questionable what some of the marks are. So,
if there's no trade in that option, it might pick up the last price, which could be above or below the bid or the offer. So an option could be, at $15 and it's getting marked at $18. It's hard.
Yeah, just be careful if you're trading in those crazy after hours, when stuff's going on. Just be careful.
Yep, totally agree.
Let's go to the next slide. Is there any one short premium strategy that is better than another?
Yes, the one that works for the for the way the stock market is moving is going to be the best one that you could possibly have. I mean, it's like 6 of one, half dozen of another. I'll use 2 examples of 2 short premium strategies. An iron condor is going to have a better return on capital than a strangle is going to have because it uses significantly less buying power than a strangle. Strangle is going to move a lot faster, and when it works, it's going to provide a better profit for you dollar-wise. So, I mean, one investor's floor is another investor's ceiling. It's very hard to determine which one's better. You have to quantify what better is.
Yeah, if you're looking for a strategy that is that has some kind of like a better edge or that does not exist. I mean, there are short premium strategies that are better than others for you, the individual, like depending on what your risk tolerance is, depending on what a certain situation looks like. So I do think that there are strategies that can be optimized in different situations that are not one size fits all. But I don't think that there's a single strategy that's actually that's theoretically better. No.
Agreed. Good job out of you, Sadnov. We did a good job with that. You know why? Because we got an option job that we want to get to. We're going to take a quick 90-second break. Give me the S&Ps up 65. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's options. Jive.
Tomas, that's right. It is time for option jive. Even the S&P is up 60. NASDAQ up just under 300. That's your leader in the clubhouse.
Yeah.
Volatility still in by 80 cents. Numbers really haven't moved too much since after the opening, where you had a big move in the numbers from around up 45 to up around 90 on the high. And they've settled back in here basically where they were for most of the night. As skosh higher.
Yeah. Bonds moved a little bit, but nothing else. They're about
bonds move lower. You are 100% correct. They were down around 8 ticks, weren't they? When the number came
7.
out? Yeah, 7. Okay, they're down 14 now. I knew I would be off by 1. That's where you come in.
That's right. I'm the 1 tick police.
You're the official 1 tick police guy. Yes, you are correct.
All right, let's do it. Let's see what we got here this morning on a little option jive. This was, it's 8:13 in the morning. We're in Chicago, so it's Central Time. And this piece we're doing based on customer requests. We received a number, it's a little heavy, so bear with us. We received a number of customer emails over the last couple of weeks because we use the term volatility and we use it loosely. And sometimes people are like, what the hell do you mean? Like, what volatility, there's so many different volatility metrics, it's confusing. So we said, okay. So I went to the research team and asked them, hey, could you just put together something to explain the different volatility metrics that we use so that it'll make things easier for people to understand. So it's a little bit of like a reference thing. You can go back to it anytime you want. The different types of volatility metrics on Tasty Trade. I won't read through all of this because it's a little heavy, but we'll try to get the gist of it.
Sure.
Next slide, John. So implied volatility is crucial for option trading, indicating expected stock price movements and affecting pricing and risk assessment. However, implied volatility alone lacks context. For example, an implied volatility of 30 could mean different things based on the historical standards of that underlying. Traders use metrics like these on the Tasty platform to contextualize volatility for certain and specific asset classes, offering deeper insights into volatility changes. So let's explore 5 different Tasty volatility metrics and their impact on trading. It's all about giving you understanding and context about the stuff we talk about. Next slide, John. So the first one, and the most popular one, and the most talked about one on Tasty is implied volatility rank. And you can see the implied volatility rank in the upper left-hand corner in the center column on Tasty, which is basically where you do all your trading. And right next to the stock symbol is an IVR. That's it. Simplest thing. We're the only platform that shows it right front and center, right next to the stock. Before you even get to a stock price, we show you the IVR.
That's how important it is to us. That's why we show it to you, right? I mean, that's
right.
That's where our eyes go to immediately when we're looking for something that has high implied volatility. It has to have high implied volatility relative to itself. Just having a number, if I told you volatility is 60, you might say that's very high, but if the average volatility for that stock is 80 or 90, it's actually low. You'd have no way to conceptualize it.
Implied volatility rank gauges the current level of implied volatility relative to the range of its implied volatilities over the past 52 weeks. So we try to sell options when the implied volatility rank is high, hoping for a contraction, and buy options when the implied volatility is low, hoping for a expansion.
Correct.
But that's kind of the gist of, how this works. And we have the formula in the upper right-hand corner. If XYZ has implied volatility between 30 and 60 over the past year, and it's currently 45, then XYZ would have an IB rank of 50. Let's go next slide. So this is implied volatility percentile. We have it on the platform, but we don't use it and we don't talk about it because we don't want to create confusion. Why do we have it? Because some people use it on the platform, so we put it on there. We do that because it's important for us to give all the information we can give to you. But we don't use implied volatility percentile because it just confuses everything with implied volatility rank. And we think it's easier to manipulate than implied volatility rank. So implied volatility percentile calculates the percentage of days in the past 52 weeks in which the implied volatility was lower than the current rate. And traders use traders use IVP to determine if the current implied volatility is high or low compared to the past range. While the IVP, I said that wrong. Traders use IVR to determine the current implied volatility if it's high or low compared to the past range. While IVP helps traders assess how often implied volatility was lower over a specific period. And you can see, so rather than kind of curve fit it or rather than cherry pick the numbers, we just stick with IVR, but this is IVP.
Sure, you pick one and you go with it, right? I mean, if you want to go with IVP, you go with IVP. I prefer IVR. I mean,
yeah. Well, we've designed the platform to be built around IVR. IVP requires a little more work. It's on the platform, it requires a little more work.
Yep.
Let's go next slide. IVR and IVP are key metrics often confused by new traders. Let's recap their differences before exploring other IV metrics. So IVR and IVP both measure current implied volatility against its historical range, providing context on its level. IVR is a frequently changing range-bound ranking, while IVP is a smoother weighted calculation. High IVR or high IVP doesn't necessarily indicate high extrinsic value. For that, you need other volatility metrics.
Mm-hmm.
That's very fair. Let's go next slide. Like I said, there's a lot here. So other volatility metrics include the implied volatility per expiration, which we use a VIX style, and it's called IVX. And next to the implied volatility, you can see there's the expected move, plus or minus. So the standard implied volatility metric is displayed for the underlying called IVX and is different depending on the expiration. It's important to know about IVX as this metric determines the expected move of the underlying at expiration. That's the really interesting part.
Mm-hmm.
Oh, could you go back for 1 second, John? Just 1 sec. So the implied volatility on the platform is calculated by using the weighted average and the volatilities of different expiration cycles. This data on the tastytrade platform is updated in real time. We take 60% of the at-the-money strikes. We take 30% of the nearest at-the-money strikes. We take 10% of the next nearest out-of-the-money strikes to calculate the implied volatility rank. To calculate the implied volatility itself, the IVX. And we do that because we think that's kind of like the most advanced formula that any platform uses in this industry. Let's go to the next slide. So then lastly, we have historical volatility and implied volatility, which is essentially, we'll look at some of the difference here. So historical volatility measures past price deviations from the mean by using a rolling standard deviation of daily returns to reflect the 30-day volatility. It offers insight into past volatility, but doesn't predict future trends. The implied volatility minus historical volatility difference is also important when they align, but the premiums are fairly valued, but large differences suggest opportunities for traders. I guess what's interesting for me here is just understanding what's happened, not because the past is indicative of what's going to happen in the future, but just understanding kind of what the boundaries are. That's about it.
Well, you're getting in the weeds a little bit here, right? Which is what we tried to avoid when we came up with IVR, right? I mean, IVR kind of takes all of this into consideration and spits you out a number that you can look at. We didn't want to get into the whole minutia of, we're going to do this because it's higher than this, it's higher than this. If IVR is high, I mean, you're going to assume that most of this is going to be in line.
It's
It's like having tight liquid markets. If the markets are tight and liquid, you can think whatever you want about an options price, whether it's expensive or not. You can't do anything about it. It is what it is.
Yeah, I mean, we have all this on the platform. It's just you rarely hear Tony and I talk about implied volatility to historical volatility. But we did a piece last week. They did a piece measuring kind of the impact of historical, against implied, talking about when's best to be short options and short premium and stuff like that. So it's part of our research. We try to simplify on air. Let's go to the next slide. And this is something that like Tony uses maybe a little bit more than me, but this is the IV index 5-day change. So the 5-day change in implied volatility is crucial for traders as it indicates short-term sentiment shifts. Spikes suggest uncertainty of upcoming events, while declines indicate stability, guiding strategy adjustments. I mean, you use this, Tony, more than I do.
I do. I use it especially when I do my option trades today, every Tuesday and Thursday, which you can get on every podcast that you watch or right here on Tasty Live. I look at it as like I've got high implied volatility. And now let's go a little bit more into it. What's it done over the last 5 days? Oh, it's as high as it's been, and volatility is up 5 or 7% the last 5 days. I feel like I'm catching that, upward spike in volatility. That's all.
Yeah. I mean, I don't use it as much as Tony, but that's fine. Let's go next slide. So some of the takeaways here. Implied volatility is a key options metric. And here's the different way we look at implied volatility. So IV rank, that's our most important, shows the current implied volatility relative to the past year range, guiding traders on when to buy or sell options. IVP, IV percentile, calculates the percentage of days in the past 52 weeks in which IV was lower than its current level. Implied volatility per expiration. Then we have historical volatility, which reflects the past price variations, but not the future projections. And then there's changes in implied volatility, change the implied volatility index and the IV index with the 5-day change, which I mentioned before that Tony likes to use. So these are the different these are the different volatility indicators on the platform. IVR, which is our default, IVP, which is in our watch list, the implied volatility per expiration series, which is on the trade page, right-hand column, the historical volatility, which is in the drop-down, and changes in implied volatility and the historical, side by side in the drop-downs in the watch list section of the platform. So the only things that are front and center are the IVR and the IVX.
Good job out of you, Sadnov. Good job out of the team. We're going to take a quick 90-second break. A lot of content there, implied volatility, but we're going to come with the opening bell. Even the S&P's up 52. We'll see if this market holds the up move. We'll be back in 90 seconds with Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Okay.
Who's the alpha in this relationship? Who is more spoiled?
Oh, yeah.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. And are you ready? You look like you're ready.
I'm ready.
You do look like you're ready. The market's going to open here in less than 2 minutes, Sadnov. Is this the moment you've been waiting for?
Not really. I'm trying to see if there's what we got going on here.
Well, even the S&Ps are up 57, Sadnov. Nasdaq's up 296. They've been sitting steady here. Volatility sitting steady too, trading 22.10, down 76 cents. That's the new future. That's the J future. And bonds are down 12 ticks. Oil's up $1, and gold is down $4.50 after being up smaller earlier today.
Yeah, I'm going to have to adjust some stocks. I'm probably going to have to roll up some puts in Tesla and Nvidia, maybe.
Tesla's up around $17 now, $247 on the bid.
Yeah, I came in long Tesla, but I think I'm long Tesla, but
you know what? If the IB rank is 80, remember it got all the way up to 104 or 114.
145. I sold the Strangle at 145.
Unbelievable volatility there. I think it's going to get crushed even more this morning. That was your opening bell, Sadnov. Let's see what's going on here in the overall market.
I know. I'm expecting.
You're expecting good things.
Well, yeah. I mean, they owe us all money. You know that, right?
Yes, sir. Yes, sir. Yes, sir. I know they owe me money.
They definitely owe me money, little bastards.
Let's see what's moving this market to the upside. There's your Tesla up only 14.5. I said 17. Sorry about that. Netflix up $24. Meta up $21. Crowd up 15. ABGO up 7. Let's see what the downside is here. Sadnov, those buckers. UNH down $3 and change, and then Baidu down $1.50. How fitting that they talk about Chinese stocks and they're lower today. Baba down 84. They really, it's like you can almost paint the tops and bottoms by these.
It's almost as if it's almost mind-boggling.
It really is. You couldn't do it if you tried. Like, if you
couldn't
really wanted
you couldn't paint that headline if you tried.
Nope.
I don't know how
Sad but true, my friend.
I don't know how they have jobs.
Apple, how much you think it's up, Sadnov?
Down, probably. I'll take it.
You're right. That's correct. Down 70, 80 cents. You are correct. Apple can't get out of its own way, even though the market's up 1% or more, 1.5%. NASDAQ is only up 1.75%. Even the S&P is up 65.
Yeah, I mean, everything should be good. It should be a good day in the neighborhood.
Yes, we'll see how volatility continues to contract. It's down almost $1, 92 cents, Sadnov.
I need it down more. It owes me more money than that.
I understand. Never happy.
Never happy. Never happy unless you're, what is it again?
Never happy unless you're unhappy.
Never happy unless you're unhappy.
you and Bride Daddy.
All right, I'm just making some very. I love the ding.
I know. I love the ding too. We should make a shirt like that.
Yeah, I think we got about 700 of them left over. I love the ding. I love Brian Piccolo.
I love Brian. I love you, Brian Piccolo.
Boy, I'm looking at my positions right now. It's way better.
It's a green screen, Sadnov. I mean, really, Apple's the only one that I could find down of the stocks that we trade here. I'll go one more time through it for everybody.
For me,
Baidu.
Baba Baidu.
Yeah.
Baba Baidu. UNH is the only stock on my board other than Baba Baidu.
Yeah, the Chinese stocks, and that's it. Everything else is a green screen, Sadnov. America.
Well, we're gonna have to roll just a little S&Ps higher. Nothing major. A couple of handles.
Mm-hmm.
Because we came in. Most of us. I don't know. I feel like we came in a little bit long.
With the volatility contraction, you're going to have a little bit of long delta too, Sadnov, right? Like your deltas.
Yeah, no, my deltas are net short, but that's mostly because of Tesla. Tesla has weird skew.
Yeah, big call skew in Tesla.
Tesla, yeah, big call skew in Tesla, so it throws off your deltas a little bit. If you have
so an out of the money call that's 20, 25 handles out of the money is going to have a delta that's going to be twice as big as maybe a put that's the same distance away.
Yeah.
320 of the 500 S&P stocks are green with 180 lower, just to give you the numbers, Sadnov.
Yeah, well, it doesn't surprise me. I wish we had.
That comes from my Taiwanese sources.
Question is, do they
give it to me?
Do they hold?
I wish I knew that answer, Sadnov. I would give it to everybody in the entire world. Even the S&Ps have not really moved. I mean, they're up around 60-ish handles. NASDAQ's caught a little bit of a bid, up 350, was up around 300. Russell's up 15 and change. The Dow's up 172, and volatility is still in by about 75 cents, although it looks like it's actually catching a little bit of a bid here. We'll see how it behaves.
Do they hold? And by the way, the Tesla volatility.
I would.
Tesla.
Yeah.
Tesla's the granddaddy of them all today. Winter wise, because the vol came in so much.
Yeah, they're killing implied volatility. It was in the mid 80s. I'm talking about IBR right now. It's in the mid 70s now, 75. And if we hold this rally up 17, this will probably go into the 60 handle this morning.
Yeah. No question about it.
I have a feeling though, Sadnov. I think we got to get them to be up like 30 or something like that, just because, right?
Get what up 30?
Even the S&Ps go from up 60 to up 30. You got to get that one little scare, at least something in there. They sell off by 30 handles.
Yeah, I'm taking just a little bit of profits in Tesla.
Good job out of you.
Yeah, that strangle from when the IB rank was whatever, crazy.
Mm-hmm.
All right. Well, I don't know. What else you got here?
That's it. All quiet on the Western Front. Pretty good, Sadno. But you know what? We got 10 assumptions from our viewers that are going to come in handy now. These prices might be a little off. So we'll see what you can come up with. But you want to take a look at that? We got what's your assumption? 10 trades. You want to do it?
Sure.
We'll be back in 90 seconds. You got Tasty Live. More after this.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. Today's Kashmir Pulaski Day. So
I know you forgot the pushkis.
I brought you cherry pie. What do you want from
sweetie?
me? Yeah, it's
You're
tomorrow.
conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. Two separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat
Tuesday.
When is it ever been
Fat Tuesday's never on Thursday.
my chili is so spicy, it'll burn your face off.
Yeah, that's not good to me. Like, I like spicy stuff, but just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it. Don't be
actually,
upset.
if we're gonna get after it, your chili does suck. We'll leave it at that.
God, I can't listen to you guys. Good, you're not getting any more. Either you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure. Yeah. I don't think it's replicable in like a general population, but I think for you specifically.
I got another one, Sadnop. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, Bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't even know the Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those two guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sadnov, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means? More Tasty Live with, what's your assumption?
Down.
I love that music.
I guess I should have taken off more of this trade now that I see this crazy market.
Tesla up 20.
I know.
Even the S&P's up 55.
I know. I should have taken off some of the some more of that Tesla trade. It would have been very nice. Could have bought.
Very nice.
I could have picked the. Could have picked them clean at the bottom.
Yeah.
Well, who knows? I'm Tom Sosnoff. He's Tony Batista. You think they sell off a little bit here, or no? Who knows?
Say again?
You think they sell off a little bit here, or who knows?
Oof. I said that they got to be up 30. That's my prediction. They got to give back about half.
Well,
so far it's all good. Even Apple caught a bit. It's up 66 cents.
So far it is all good.
Mm-hmm.
All right, let's take a look and see what we got today.
All right, let's do it.
Little, what's your assumption? Let's see what the Tasty Nation has in store for us today. Soaring.
Now you can see. Uh-oh.
We got a little soaring here action here from Bainbridge Island, Washington. I like it. I don't know exactly where that is, but
but you like it just the same.
I like it just the same. Alcoa. Man, we haven't traded Alcoa in a while. What is this?
What's this wild man want us to do in Alcoa?
Yeah, what do you want to do in Alcoa? Does this thing even trade? Stock market, tariffs? I don't know. Any trade he wants at all. Alcoa.
It's got good IV rank, 95. That's the first thing I looked at. It has earnings April 16th, which is the day before expiration, April 17th. This is going to be a directional trade, sad enough.
Yeah. And they wacky this one.
Mm-hmm.
This stock has been myrtleized. It doesn't trade that much. It has a ridiculous high IV rank.
It does.
What would you do here, Bat? This is a tough one for me.
Like I said, it's going to have to be a directional trade here, sad enough. I mean, the stock is kind of on its butt, although it's up 74 cents this morning. I mean, $5 wide strikes on a $32 stock doesn't open it up to like a Jade Lizard or anything like that. You can't do anything like that. I think it's, dare I say, a put spread. I mean, you want to do like you can only do the first strike. I mean, 30-25, you want to buy a debit spread, bullish or bearish? What do you want to do?
Hey, you wanted your up 30s. You're in the 30 handle now.
I know. I said that. Up 38, 39 right now. How does Daddy do it, sad enough? Now, the only problem I don't know about is what's going to happen after this. Dow down on the day, down 26.
Big question mark here. Big question mark here with the
big
Alcoa. This is a tough one for me because I don't really love anything I see here.
Mm-hmm.
I mean, I would do a small Jade Lizard. I know it doesn't really make sense. I'd sell the 30 puts and sell the 35-40 call spread.
That was where I was going, or I just think you sell the 30-25 put spread and call it a day at like 90 some odd cents. You can't even collect 1/3 the width of the strikes here. You have to be directional, and they're not directional here.
Yeah, and I'm just doing a little price discovery. It's not very liquid.
Mm-hmm.
We'll leave it in. We'll see if we get something. We'll see if somebody bites. Let's go to the next slide. This is a tough one, Soren. There's just not much there. Logan from Fresno, California. QQQ. He's a little bullish in there. Well, Logan, I like your, I like the thought process. If we were down this morning, I would like it even more. I think right here it's a tough one for us. Up 300, up 300 is a tough one. I'm going to stick with what we have. We kind of have a wide strangle, and I'm just going to stick with this because it's working.
Okay, you haven't done anything in Alcoa yet, right?
No, I'm still working Alcoa.
Got it.
All right, and I'm working the Qs too, just to get into just to make my strangle, just clean it up a little bit.
Okay.
Let's go to the next slide. IBIT. IBIT.
IBIT.
IBIT.
IBIT.
Haven't traded this in a while. Let's see what we got here. IBIT.
IBIT.
IBIT. What does he want to do? Bullish. 30 to 60 days. We live in a crypto country now. Bitcoin's going to recover at some point in the future. Hayden from Chicago, Illinois. Let's take a look, Hayden. We have no position in IBIT. I think Bitcoin got a little cheap. What's it doing today? Unchanged, pretty much?
Yeah. I mean, the cash shows it up more.
I mean, this stock has gotten
futures are 83.
This stock has gotten whacked, so I don't hate it. I do not hate it at all. Almost got filled in the Qs. I got a partial. How do you get a partial in the QQQ?
I know, one of the most liquid products in the entire world. That's how big you are, Sadnov.
I'm not. IBIT. All right. If you're going to be bullish in here, the only thing I think you can do, the volume here is nothing great, but it does trade. I mean, I think you sell a put at the expected move. The stock's, you got to sell the expected move is $6. Stock's 47. You sell the 41 puts right at the expected move for around $1. Let's try one-on-one. This stock drives me crazy. $1. Sold the puts at $1. All right, let's go to the next slide. JP Morgan, a little bullish, branded from Tallahassee, Florida. JPM. What's JP Morgan? It's up $1. This is
Even
another.
the S&P's up 32, Sadnov. Dow down 70.
Well, good call by the bat.
Yeah, although I can't tell you what's going to happen now. That's the problem. Volatility in by 45 cents.
Let's take a look here. JPM. It's a far cry from up 90.
Yes, sir.
JP Morgan.
Hold.
All right, what do you want to do in here? He's bullish. Bank stocks are getting crushed. JP Morgan has got crushed. We have no JP Morgan
position. Change today, but
we have no JP Morgan really position on. What?
Volatility is very high, and earnings are April 11th.
I'm going to go to the expected move, and I'm going to sell a skewed strangle. Expected move in April is almost $18. Stock's 30. Let's go down to the 210s, and we'll go up $25 to the upside, 255. Yeah, we'll do a skewed strangle in here because we need the. We don't need to.
Oh, will you?
Yeah, 522 or so. 520. And struggling today. Struggling for fills.
Yeah, well, that's volatility contracting.
Struggling for fills today. Struggling for fills across the board. We'll keep working it. Working it, boss.
Working it, boss.
I know. I'm working it. God, JP Morgan, there's you put an order in there and they just crush. They just took this thing down like 10 cents.
Yeah, you're down to 517 or something like that right now, right?
I'm working it, Brandon. I mean, they're just absolutely annihilating premium in there. Let's go to the next slide. Nobody wants to buy anything. A bill from Tom River, New Jersey. Merck. AA, top of the hour, but they all stink to trade. Merck stinks too. Trust me. Merck is a tough one.
Mm-hmm.
Stock's trading $93. It's down $1.60 today. This is another stock that, we have a Moderna position on, but as Moderna went up, as Moderna went down, Merck went up. I don't understand the relationship there. He doesn't know. Ivy rank is 97. March 7. No, that's not earnings. That's dividend. Earnings not till April. What was you doing here?
Oof. Let's take a look at Merck. I mean,
there's not great strikes.
Yeah, I mean, it's a $93 stock with a Ivy rank of 97. That's going to be perfect, right? Stock's kind of on the low end of its range, really not going anywhere. Down $1.50. Earnings after expiration. I mean, Sadnov. Wow, the problem with this is, again, because the monthly implied volatility is so low, you're going to have to basically go at the money here, Sadnov, don't you think? Like the 90, 85, 100, 105 for $1.90. Or if you're a little bit more bearish, do the 95, 100, right? You're going to have to be right there.
I filled the queues finally, but still working JP Morgan, still working Merck, nothing done yet. It's hard on days when they're crashing premium.
Yes. To put on new trades. Good for existing trades.
Yeah, it's tough. Let's go next slide. I'm working it. I don't sell in the hole. Apple bullish. Adam from Salem, Oregon. Apple's up 20 cents. We are currently
Apple can't get out of its own way, man. This is not the stock. And you got a new phone. I mean, I thought that would be a great. You got a partial in JP Morgan, by the way.
Partial. In Apple, we have the 205, 240, which is actually a little bit bullish. I'll add to that position. It's like a bullish strangle. I'm not going to put on different strikes because I kind of like that. I already have a bullish position on 205, 240. We will add to that position. It's 525. Just added to the position. So slightly bullish. I agree with you. I mean, if you're going to buy anything here, Adam, you buy Apple. JP Morgan, no, still partial. They're nickel and diming us in JP Morgan. Unbelievable. Let's go to the next slide. Trying to get filled in Merck too, and nothing done in there. Rivian. JP Morgan.
Oh, almost a JP Morgan sound up.
What are they?
Almost.
They're nickel and diming me in there.
You haven't moved the price, but they're just taking it ever so slightly, Sadnov, ever so slightly.
Rivian, we have no position. Can't stand
Talk
Elon.
about getting filled at fair price, right? I mean, if you put it in an order, you get a partial fill. I mean, it's never traded higher, never traded lower. I mean, good price. Hey, you're complete, Sadnov. JP Morgan.
All right, Rivian. I do not have a Rivian position on. I'm kind of like, I'm on board with getting a little bit long Rivian here. I would sell the 11 puts, the at the money puts. I mean, I think 85 cents, it's a good trade. I mean, it's a good price, I guess. I don't know. SPOO's only up 32, not looking that healthy. Let's go to the next slide. Hang on one second. Let's get this things in here. Tesla only up 15 now. K-Web, Chinese high-tech stocks. Ryan from Amarillo, Texas. Let's take a look, Ryan. They've killed... what do you want to do in K-Web? He's neutral. All right, let's take a little look here. Ryan the Lion, K-Web. SPOO's up 30. The bat made that call this morning. I thought
as foretold.
I thought you had a chance to see him back up 90, but they did not. It did not happen.
No, I didn't feel it. Volatility.
K-Web. He's neutral. Ivy ranks 45. We have a couple of positions in there. We have the 35-38 in April. Which one would you do in there, Bat?
Ooh, K-Web. Do I have to?
You don't have to.
There's Ivy rank huge 45 is pretty good.
Huge call skew.
Yeah.
I think the 35-38 is the play. I'm doing it. 35-38.
Yeah, here's the call skew exactly. Your put has got a 40 delta. Your call's got about a 35 delta. Your call is $2.50 out of the money. Your put is 60 cents out of the money.
This is a Merc we just got filled.
211.
Yeah. I did not think you'd see this number in the S&Ps. I guess I might have over-adjusted. Who knows? We're going to take a quick look at our SPY position. You think they go down on the day?
It certainly has that feel to it, Sadnov. Volatility basically unchanged now, only up around down around 25 or 26 cents. The Dow's been the weakest of the group, but it's down 130. Russell's only up 2 now, and Nasdaq up 200. Yeah, they got to scare the children. I don't know if they go red on the day though. I don't see that.
Oh, you know what I forgot? We sold an SPX. We sold the SPX.
Strangle. 53.95, 57.95. You just closed it at 40 cents. Good hold out of you, Sadnov.
I forgot we put that on yesterday afternoon. We don't usually do the SPX one day.
Man, it's better to be lucky than good, and you are one lucky mother.
Well, that trade worked out okay. Came in, it sold $1.75, bought it at 40. All right. Hey, for once, SPX, we'll take it. K-Web filled. Let's go next slide. Oh, Adam from Richmond, Virginia. I don't think MSTR will go up much. The downside risk is still higher than other stocks. Let's take a look. He's neutral in MSTR. We're having a good day in there today. MSTR, actually, it's down. How's Coinbase doing today?
Coinbase is sitting down $1.70, Sadnov. Coin's had a big range today. Coin traded up to 199. It's 190 now.
MSTR. I'm all in on that neutral MSTR trade. I think you go to the 25 delta, 335 calls, and let's see, where's the putties? Probably I'm going to go 205 on the puts, 335 on the calls. Take a fill. Beautiful. MSTR, we just went wide strangle in there. We'll see. I don't know, Adam. You know, we have positions on already, so we'll just see what happens. Let's go to the next slide. Costco. Bullish. 45 days. Costco's hitting the lower end of its recent trading range. If I can get filled in there, I will. Costco. Up $6 today. It's $9.37. They have pretty much myrtleized Costco. I would say I'm probably less bullish than you are, but I'll go to the expected move. $60 lower, that's $875, and we'll sell a put spread down here. How about the $875? I'm just going to the expected move and selling a put spread. $5 wide is 79 cents. $10 wide is 162. I'll go $10 wide. So what I did, Tyler, is just go from Omaha, Nebraska. Just go to the expected move, which is about $60 away, and sell a $10 wide put spread in Costco. I don't know. Your guess is as good as mine, dude. Hopefully it works.
100%.
Yeah, I'm just using the old expected move logic. That's it.
I'm just saying, hey, stock beat me, right?
Yeah. So they're not taking as much premium out as they were this morning.
No, absolutely. With this down move, they're not going to. But it's safe to get back in the water now, Sadnov. You're okay.
Well, hold on one second. So I bought, so you know, so earlier this morning I covered a strangle in Tesla, right? Just to show you how volatility works. I covered a strangle in Tesla, and I paid $6.59 for it. Stock's the same price right now. It's $7.07.
Yeah, you're right. IB ranked 79 from the low 70s. You are correct. Up to 79 now. Yep.
The strangle went up.
Price is like 7.9, 7.10 on that spread. Yep.
Yeah, the strangle went up 50 cents since I covered it this morning.
With the stock really not moving.
Yeah. I mean, I still have it on, but yeah. Exactly. All right, what else? What's next? Let's take a look what we did. I think we got a bunch more than I thought we were going to do. We never filled AA. It was just, I don't love the markets in there. In the Qs, we sold a strangle. In IBIT, we sold a naked put. JP Morgan, we sold a skewed strangle, a little bit to the upside. Merck, a strangle. Apple, a strangle. In Rivian, a naked put. In KWeb, a strangle. In Monster, a strangle. And in Costco, a put spread. So we got a little bit long on balance with these positions. That's all. A little bit long.
A little bit long. Even the S&P's up 23 now.
Yeah. I'm surprised by that.
Don't be surprised, son. The markets are dynamic.
Yeah. Well, now UAL, we talked about that this morning. Have you seen this? Stock's down $4.
No, I did not. Not by the pricing for spring break airline tickets. I can tell you that right now.
Well,
UAL is down. Love is down under 30 now, 29.73. Yep.
UAL's down. Uber's down. UNH is down. Visa's down. XLF, XLU. I mean, there's Procter & Gamble. There's some
Dow is down.
Yeah.
Bonds are down. But you know what looks gorgeous today, Tom?
What?
You do, Sadnov. That's right. I'm talking about gorgeous Tom. Let's take a quick look at this. Look at you. What a specimen you are, Sadnov. You are one handsome little filly. Oh, look at you.
Now, why would they call a filly Gorgeous Tom?
I didn't think you would know what a filly is.
Oh, my God.
Cheltenham Races, Sadnov. Check it out today. That's a beautiful looking filly right there. It's so lean and luxurious. Those legs.
It's not ham. It's hum. Cheltenham.
Whatever. Hey, listen. I'll rename it whatever we want, okay? Gulf of Mexico, Gulf of America, Cheltenham, Cheltenham. I'll do whatever I want, okay? Because we're the top of the heap, Sadnov, king of the hill. We're going to take a quick 90-second break and come back. We got more Tasty Live after this, Sadnov. Do you know why we have more Tasty Live after this? Because we got the skinny on options math with my man Jacob. We'll see if he still has that mustache. We'll be back in 90 seconds. Let's Tasty Live. It scares me a little bit. I'm not going to lie.
Why wouldn't he have the mustache?
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. That's right, but this man, yes, the skinny on options math, Jacob is in the house. How are you, brother?
Good morning, Tony. I am very well this morning. How about you, Sue?
I'm doing fantastic. Thank you so much for asking. I do appreciate it.
Mm-hmm. Yeah, it warms my heart when Costco bounces.
Yeah, I'm just happy you're here.
All right. Well, we can get into today's quickly because it's a follow-up. Yesterday, you guys did an excellent job of setting this up. You looked into break-evens in sort of the very simple case of what is the break-even price at expiration, and you correctly observed that as active traders, that's sort of not helpful, right? You're not planning on leaving the position on until expiration, so why do you care what the break-even price at expiration is? But I wanted to have that laid down as the foundation, so today we could work out the break-even prices throughout the whole length of the trade, which is going to be a much more useful thing and get you a nice, there'll be a complicated-ish formula, but then there'll be a relatively straightforward, like at 21 DTE, what is it?
Okay.
So that should hopefully be a nice, useful thing. So people can, when you put on a trade, you really know throughout the length of the trade where your profit region and where your pain region is. So, as you worked out yesterday, a break-even for an option trade is the spot price at expiration for which the trade will neither lose or make money. And then in general, I'm going to denote those with B's today, right? The break-even at time T will be B sub T. So generally for short option positions, you're going to find that by going past the short strike by the premium, right? Just take K, and then depending on if it's a put or a call, add or subtract the credit. But right, like we were saying, if you're an active trader, you don't really care about B of tau as much as you do at BT for the t's in between 0 and tau. Right, so we're going to say B of t is the collection of spot prices, because there's probably going to, for a lot of strategies, there'll be an upside one and a downside one. The collection of spot prices such that the option value at time t, if that's the spot price at time t, is the same as the option price at the beginning, right? Time 0 with the initial spot price. There's a couple of caveats that I'm doing today to simplify things. One, we're working strictly in Black-Scholes. We're not going to worry about volatility changing. In a certain sense, this is the ceteris paribus, all else being equal calculations. We're not going to handle dynamic volatility. You could probably juice this up a bit, but I wanted it to be sort of incomprehensible on some level. And the other thing is that I'm going to work in prices rather than log returns, even though Black-Scholes model says that it's log returns that are normally distributed or modeled by Brownian motions, and I'm going to use it as if the prices were. I'll say this is a forgivable simplification because if you have a 45 DTE trade and tau is measured in years, if you're substituting log for x minus 1, log x for x minus 1, the error on that is of the order x squared, and 45 over 365 squared is like 0.015. So you're like 1.5% off, which is probably less than a strike difference. So we're not going to worry about it too much, but it should be, I like to be very thorough, and I'll point out that this is a simplification assumption. In reality, everything I'm working in there should be a lot more logs running around, because we should take logs of the closing break-even prices and then work through the parabolas. Well, we'll go to the next slide and we'll see. The parabolas really exist in log return space, not in price space, but we're going to pretend that that's not a difference. So the simplest case would be just a single naked short call. Right, and on the right, I have in its full horrific glory the Black-Scholes formula for the fair option value of a short call of a call. Right, it's got the phi being the normal cumulative density function. You've got your spot price, your risk-free rate, your volatility. T minus capital T minus little t is the same as tau, is the time until expiration, and it's a big mess. And so you could take this formula, and if you were being really precise, go back into the definition from the last slide of what I was defining B of t at, and work out these things. Probably you'd want to use a computer to get good approximations, and it would be functional. But if we instead think about how the Black-Scholes model works, and ignore the difference between log returns and price changes, we can get a much more clear picture going on, which is that because of Brownian scaling, all of the arcs of constant value are these parabolas, are these parabolic arcs, right? This lower left-hand picture, right? Y squared equals x kind of shapes. And then we have 2 points that we know, because we know that the break-even at expiration, that was easy to calculate. That's just the strike plus the credit. And the break-even right at the start is also super easy to calculate, because it's the spot price, right? Of course, if you take the trade off instantly, it breaks even and the spot didn't move. And so we've just got those 2 points, and I'm going to connect them by a parabolic arc. There's only one way to do that. B sub t is the spot price plus the square root of how long you've been in the trade, right? T over t, right? How much of the trade has elapsed, times k plus c minus s0. And if you wanted to regroup the s0s together and have the k plus c on the outside, you could. I don't think that that's more clear or less clear. But so there it is. There's the full formula for the break-even prices throughout the length of the call. Of course, we don't only sell calls. We do more complicated strategies. We do two-sided trades. We do defined risk trades. Sometimes we do ratio trades. So let's go one more slide, and we'll work out. This laid the groundwork for everything that we needed, though. Little needs to be adjusted to generalize this to other strategies. The two calculations that stand are that the break-even price right at the start is the spot price. And that the break-even prices at expiration are those simple credit past or short strikes, right? Minus if it's a put, plus if it's a call. And that the parabolic arcs are still going to be connecting them. So the only complication to this, right, it's the same parabola, just now there's one going down as well if you have like a strangle going on, so you have a downside one. If you're Because if your trade is a little unbalanced, right? If your call is closer in and your put's further out, so that the break evens aren't symmetric around the spot price, then the two parabolic arcs won't have the same curvature. You just do them separately, though. Do the upside one and the downside one separately, and they'll both be accurate. And so to be sort of specific and useful, rather than looking at the full arc, right? A lot of the time we say to close trades at 21 DTE. Well, 21 DTE is, I said, you take square root of how far into the trade you are. So if you're 21 DTE, that means you're 24 days into the trade. Square root of 24 over 45 is 73%, with a tiny bit of error. And so if you look at if that's your intended management, and the platform shows you your break evens at expiration, well, your break evens at 21 DTE are just 73% of that distance from the spot. So if your break evens before were plus and minus $20 from the spot, at 21 DTE, it's going to be like 1460. And then that'll let you sort of get a more solid idea about what the range of good prices, right? When you place a strangle, you're more or less betting that the prices are going to stay within a certain parabola, or one parabolic arc up and one parabolic arc down. And this lets you see how far out that parabola is. And so you can really get an idea of like what the bet is that you're placing when you sell a short strangle or a short iron condor or anything like that, by just scaling in your break evens at close by the square root of how much of the trade is elapsed. And that's perfect. How you doing, Tom?
Very nice.
Got your emails?
It's a little tough for me.
Tony did a great job today of being the active student who smiles and nods and looks like he's getting it.
How do you think I got through high school?
I
sat in front of the class and I did this.
Parabolic arcs are very tough for me. I have to be honest with you.
That's a pro tip right there, by the way.
Thank you for the pro tip. But parabolic arcs are tough.
It's just y equals x squared, but turned on its side. So it's y squared equals x.
I was in a meeting on Monday afternoon, and they were talking about they're building a Brownian, not a Brownian motion. They're building just a graph of something, and they had built into it some Brownian scaling, and I was actually pretty comfortable with everything everybody was talking about, but I'm good with all that until you get to parabolic arcs. When you get to parabolic arcs,
arcs should be much simpler than Brownian motion, right? As I often point out, your Brownian motion is sort of out here in your probability 1 class. Sometimes we work in Greeks, which are your calculus 1 class. Your parabolic arc is like down here, and you're like algebra 1, right? This is y equals x squared is the sort of thing we have our 8th graders graphing.
Well, it's hard for me. The formulas are hard
since you had to do it, so you've forgotten by now.
Yeah, it was.
But just smiley faces. They make these smiley face curves.
Yeah, we were doing. What was it exactly? There was just a lot of Monte Carlo simulations. And they were all based off these Brownian scaling models, and I was like, you know what? I finally get this. And then
I've said Brownian scaling enough times.
I know. No, it's okay. We're cool.
It's very straightforward. You square root the time factor. It's always what you do.
I should have used that line. It would have sounded really smart.
Yeah. Next time I've set you up. All right, let's,
we need those kind of lines, like a little square root of square root of time. I always love throwing that in there.
TP had his little jingle, right? His if low volatility is getting you blue, multiply time by the square root of 2.
We try not to listen to him, though.
No, you gotta listen. If TP has made a song about it, you should really remember it.
You're right. That's a good point.
All right, let's go to the takeaways. Break-evens and expiration are not of much interest to an active option trader, but finding your break-even prices throughout a trade can seem daunting. But if you make a little bit of a simplifying assumption, it's actually pretty straightforward. You just connect it. You connect the opening spot price to the break-even at expiration by a parabola. A parabolic arc is just because the parabola to the upside and to the downside might be different parabolas, so they're each a parabolic arc, but really it's just parabolas. If you intend to close, and to make it really specific, if you're intending to close a 45 DTE trade at 21 DTE, that is essentially a bet that the underlying will stay within 73% of its expiration break-evens. And so you can always sort of scale in that, right? You're letting it run for slightly more than half, but the square root factor turns slightly more than half into 73%, which is perhaps one of the advantages of being an early managing option trader, is that you let it run for half the time, but you get almost 3/4 of the play.
How do you like that, Sadnov?
I like go back to that last slide, John, just for 1 second. I like that I like that 73% number, but that's but in reality, our number seems to come out a little higher than that.
You're thinking of the 80% winners, right?
Yeah, I said in reality, yeah.
So that's 80%. That's showing that 80 some percent of the time prices stay
you're just talking break evens.
Yeah, I'm talking about the distance, right? That's not the rate of success. That's the distance out of the money.
Yeah. So that's probably I don't think about it that way, but yeah, that makes sense.
Mm-hmm. Right.
Well, if Tom says it makes sense, then it makes sense to me too. And you know what makes sense right now? We're gonna have to take a quick 90-second break. Sad enough, even the S&P down 20, up 28 as foretold. We're gonna take a quick 90-second break. You want to?
Yeah.
Sure you do. We'll take a quick 90-second break. We'll come back. We got more Tasty Live after this. You want to say something?
No, I wanted to say, because the one thing I think that none of us ever think about is we always talk about what is the probability of expiring there or touching there, but we never put a number on the break even when you go to the expected move on the break even. So what that is, but we do talk about what are the statistical chances of success. So what's interesting about that, now that I just thought about it, put it all together, is that 73% number is kind of a number that we should probably use that we don't.
Yeah, right. It's the other way of looking at it, right? You can look at the probability of profit, or you can look at the distance out of the money, and you can Black-Scholes model between the two.
Yeah.
And whichever one is more comfortable. I think one of the best things about math is that since it's all true in every direction, whichever way makes sense to you, you can think about it that way, and then get to everything else from there.
Yeah. Okay. All right. Cool. Thank you.
Good job, Jacob. I mean, great job. See that? We found a useful use for you. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Sadnov?
You got your boy.
That's right. Your friend and mine, Mr. Scott Sheridan from the Scott Sheridan Studios in Burbank, California. We'll be back in 90 seconds. Tasty Live.
Tom Sosloff disavowing Scott Sheridan. Your boy, he says. Alrighty.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
good
on,
enough.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It gets exercise.
Tomas, we are back, my friend, and you know what that means. Time for a little more Tasty Live with this band.
Hold the ducks on the pond.
That's right, Tasty Trade World Headquarters from the Scott Sheridan Studios in Burbank, California. That's right, Mr. Scott Sheridan. Take it away.
I'll sell Scott Sheridan ever being in Burbank, California his entire life.
Wait a minute. I think I was in Burbank. I was there a long time ago. Part of the Oprah tour. For sure.
That's
I was
right. Part of the Oprah tour.
The Oprah tour. You had to drop Oprah's name.
Bachelor. That's right.
You had to say you're selling me. I had to come over the top with the Oprah comment. More importantly,
right.
why are you in a white t-shirt? You didn't do laundry?
No. Oh, you didn't get the white memo today?
No, I
got white t-shirt. There you go.
I actually have a sweatshirt I brought, but it was warm in here this morning. So
that's a Costco sweatshirt. Mikey Butler has the same one.
It's really beautiful. I tried to buy another one, and they were out.
Really?
Yeah.
I've seen that. That's Costco.
Yeah, you can't even find these nowadays. They're collector's items.
Oh yeah. Wow. Oh yeah. You can't find it. I guarantee you.
Collector's items.
Get it in 2 seconds.
Sadov, you can't find them because they come from like the misfit pile. Like like when a company like has odd sizes that they can't sell or anything else like that.
Are you telling Mikey Butler he doesn't have good taste?
100%.
No, it looks good on Mike. It looks good on Mikey.
Mikey's got the physique for it. Right. You don't have the physique.
Are you saying he's got a better physique than me?
Who is it? Tommy Bahama? Who is it? Whose brand?
It's John Varvatos.
It's a Costco collab with Supreme. A limited drop. It's a limited drop.
John Varvatos.
I got it.
Whose is it?
You got it's.
I'm waiting in line for it.
Tell me it's Andrew Mark.
It's John Varvatos.
That's John Varvatos.
No way. That's the only name he knows. It's Kirkland.
It's John Varvatos. Okay, here.
I'll sell you John Varvatos for $20 right now. Nikki, throw Nikki the shirt.
Right here, John Varvatos.
All right, no bet. You didn't take it.
Wow.
Did you
See,
guys
Tom,
hear a
you- what-
confirmation? Did you guys hear a confirmation?
I
did
can't. I
not hear
couldn't
so.
see it from here.
So Tom, why don't you buy like 2 or 3 when you know you like it, or you got to wear it first to see if you like it?
I had to
why
wear
buy,
it.
Why buy the whole cow when he can just have the milk?
I mean, Scott, it's a huge risk to buy 2 or 3. They were like, it's like $11.99. Okay.
$11.99. Yeah. I'll go to my Costco out of here. Tell me what size, what color. I'll see what they got.
No, I don't need you buying clothes for me. Okay, I'm good.
I'll be happy to.
The only time I ever asked anybody to buy anything for me at Costco was the time I ran out of dog food.
Yeah, and then you said they didn't have it, and then
They didn't
Tony
have it.
had to go get it and bring down in the pickup truck like 10 bags. And I was standing at Costco and I saw like 3 pallets full of your dog food. You're like, oh, they must have just got it in. Okay.
They don't
More
make that
importantly,
dog
where
food.
are we? Where are we on the dog journey?
We'll talk about it later. We're working on it.
We were like you and the missus, you and
No,
Who's
she
waiting?
doesn't. She doesn't want the kind of
He
dog.
doesn't need to consult with no missus.
Yeah,
You
I don't need to
kidding me?
consult, but she doesn't want the dog I want.
Okay, so she's gonna win. So what's the next? What's the next one you might? What's the next breed you might get?
Sad enough. Honest to God, if you get a Bichon Fusée or something like that, and you walk around Oak Street with it under your arm,
I'm thinking about a lap dog.
Wow.
No, you are
oh
not.
my God, no way.
There is no
So
way.
What
you are
kind?
thinking-
What?
No, but I was
What
thinking
did- what
about
did
a
R-
dog.
Wait,
I was.
what did
Go ahead.
R&D have? He had a little dog, didn't he?
I don't know.
Bichon Fusée or some
Right?
thing like
Yeah,
that.
Tom, you could pick up where he left off.
I'm thinking
Some
about a
rat
dog
like
cat. I'm thinking about a dog cat combo though.
Wow.
Yeah.
Cat dog.
Getting
Cat dog.
That was Vinny. You, Nikki, you loved that.
That's the end of me. That's the end of
cartoon.
me coming over. That's the end of me coming over if you do it. I'm
Cat
allergic.
dog. You loved cat dog, and you loved Doug. Doug funny and cat dog. You loved it.
There was no show called
What's
Cat
cat
Dog.
What is cat dog?
There's no show called
What kind of-
Cat Dog.
Yeah, that was his favorite show.
Yeah.
It's his made up cat dog.
Where were
What
you
kind of cat?
during
What
my
kind of-
childhood?
Good parenting there.
My God.
You
Do not
want
get
you want to
Tony-
bet?
Tony,
You want to bet?
as your consigliere, do not answer
Would
that
you
question.
like to bet?
Okay.
Would you
That
like
there's
to
a
bet,
show-
son?
That there's a show called Cat Dog?
Cartoon called Cat Dog. Would you like to bet?
Yeah. I don't remember a
He
show
sounds
called
pretty
Cat
serious.
How
Dog.
much would you like to bet?
$20.
You got it, son. Google search it.
Oh, you lose. Cat dog, 1998 adventure.
Oh, wow.
Yeah. Tony
Cat
was very
dog.
serious on that one.
Never heard of
He
it.
got you.
It was a dog that was half dog, half cat. Cat dog.
I thought you were talking like Ren and Stimpy.
I got to tell you, this picture is a
Wow.
little disturbing. It's really
That is
disturbing.
disturbing.
It's like no. It's bad. It's like he's doing things. To
Yeah,
the
but
other side of
that
him.
was part of the that was probably one of the
Like, what
Adult
is that?
Swim shows.
Okay. No. Like if you just look at the two faces and don't look at the body, you're going, we can't show that on air.
Yeah.
I'm a little.
Those were better days, you know. You could
Tony?
make jokes.
You're scaring me because I had kids at that time. I don't remember the show, so I'm going Nikki on this one. I think this was an Adult Swim.
No,
It was.
no,
100%. It was it was one of the shows where it was a cartoon, but it was a little naughty, you know?
Yeah.
Like Pinky and the
For
Brain,
sure.
Ren and Stimpy. Some of
No.
some of those had like some, you know, 14,
Yeah,
15,
for sure.
16-year-old jokes in them, you know?
No. Cat dog.
Anyway,
is
so
great
Cat
cartoon.
Dog, wow.
Tom, what kind of cat? And I'm allergic.
All right, I'll
so
give you that $20
that's it.
next time I ever
can't
see you in
come
the
over.
office.
Okay, Tom Jr.
Mhm.
Wow.
Oh, wait a minute.
Wow.
Hey,
Wow.
Nikki,
They say
Nikki.
blood is thicker than water unless there's $20 on the line.
Yeah, yeah.
Hey, Nikki, I'm high-fiving you right now. That was strong.
Yeah, you know.
Okay.
You know, I'll have it waiting for you.
Wow. Hey, Saz, you can watch Callie when your helper monkey is out of town for his football alumni class that he has to go to.
I could. She's a good dog. I like her, but
All right.
Might help
There's
you
an
with all the
alumni.
things like opening the fridge.
oh yeah,
You know.
well, that dog's not really a service dog.
I know that dog. That dog, like you ruined it. That dog was supposed to be like
Like a human.
yeah, human, and then you just like you started feeding it and petting it. You know, used to wear the do not pet
Put a
thing.
camera on it.
Yeah, we put a camera on it. Had it run around.
That dog didn't
What's
mind a
wrong with
camera. My next dog's getting a camera for sure.
Oh yeah,
Full time.
nice.
A camera?
Yeah, you just put a camera on your dog so that when the dog is, have you ever watched these videos of people they put cameras in
God.
their house, they put cameras on their dog?
And you make fun of us for watching TV shows?
No.
Have you
And
ever
that way
watched
when you leave
videos
your
of
house,
other people's dogs.
that way when
Yeah,
you
what
leave
do
your
you have to
house, you
say?
look on your phone, you say, and then you talk to your dog, you're like, and the dog doesn't know where you're talking from. Hey! And the dog's like, huh.
You know what? We're going to do that to you. we're going to put one on you. We'll try it. And I'll just, in the middle of the night, I'll go, hey, and you'll just turn around and go, where's Scott? Okay?
Yeah,
this is my whole point about chipping all you guys. Like if we chipped you, we could do that. Like it'd be an option.
Yeah, it'd be perfect. We could watch
Right.
Saz eat the pistachios all day. We could
Yeah, you could watch
like-
pistachios.
Yeah.
If we just
And why would we want to watch that? I have to watch that like when I'm coming in and
you don't have
in
to
the
watch
break.
it, but you have the option to watch it.
We could have one of those like little buzzers on it, so that when he like sticks his finger in the food, we can buzz him.
Yeah. If you could zap them, I'd be
Yeah,
totally
we could
in favor
zap
of
him
that.
like when he
the
does
shock.
something bad.
You
shock
guys
collar?
laugh. You guys laugh now because you're like that's just not the way you were raised. But the next generation, everybody's gonna have
Tell us how-
cameras. Everybody's gonna have cameras
how
on their
you were
kids.
raised.
They're gonna know where their kids are all the time.
No, they're not.
It's called. We already have it, Sad. It's called like Life Lock or Life Look.
Life
or
alert.
Life
alert.
Life alert. There
Yeah,
you
I got it
Cat
coming for you,
dog.
Dad. It's coming today.
Well, you also just follow somebody on their phone and you can just see where they are.
That's
Why?
what this is. That's what this is.
Why follow them on the phone when you can actually just see them and talk to them all the time?
Because it's super creepy. Okay? That's why. I want to see this. Do it to your grandson. Let's see what your daughter says.
Oh my God, Sad enough. I'm getting the emails now that people are 100% sure they're going to see you like, with a stroller and a little dog in it in a few coming years. This is going to be great.
No. I'm not a dog.
Yeah.
I'm not a dog stroller guy.
Yeah.
More of a purse.
You could become
You
one.
get the purse with its little head poking
No, the
out.
backpack.
You can-
The backpack?
Yeah.
Or the baby Bjorn. Get the baby Bjorn. Keep in the chest. They can look
Yeah,
out.
yeah.
The paws just hang like this. It's good for you. As you're shuffling,
Yeah.
I think it could topple you over though. You'd be a little top heavy. Gotta lean back. How big of a lap dog? 4 pounds? 5 pounds?
Oh my God. Now they're saying Tom doesn't need a lap dog. He's got Nick. Oh boy.
Oh, God.
Oh.
Come on, Peeps. Come on.
Get a break.
Oof. Oof. Brutal.
No, I've never
proud.
had a small
Proud.
dog. I've never had a small dog. I've only had giant dogs. So I don't even know.
Oh, you really are thinking about this.
No, I'm just kidding. Only because there was a dog. Well, you know the dog.
There's a really cute dog down the street. God, what?
Yeah. Yeah, they're fun.
Tony, I'm now on Team Batista. I'm worried about him.
Thank you. I welcome
mean,
to the show.
It used to be, we were talking about lunch, and then remember we used to talk about Vegas. We used to talk about other things. So we big dogs.
Now we're talking about little dogs, big dogs, cat,
lap dogs, pushing around, lap dog, pushing around. You will get a stroller.
Well, when Tony goes away, I'm
sure.
going to watch your dogs, Tony. When you go away, I'll take your dogs.
And
you
know
don't
what
want
you
these
could
two.
What?
John, I wouldn't do it to you. I wouldn't do it to you. I really wouldn't.
Get the dog trained as a service dog. Then when you go to Costco, you get the cart that you ride around in with the little orange flag, and you put the dog in the basket.
Yeah, you too can be a phony.
All right. Why don't we get to business? A few more seconds. Spoos might now no longer be up on the day.
No,
Yeah,
they're
we
about
blame
to
you,
lose it.
Mr. Sheridan. It's all your
Let's get
fault.
this. I accept responsibility. You
I'm
don't need to
not
be nice to me.
bearish
I'm
yet,
not gonna-
Scott. I'm not bearish yet.
Thank you. I'm
not
not going to
bearish
see you
yet.
for the next 10 days. You could be nice to me.
Hey, you know what, Scott? I defended you yesterday because my son was all over you yesterday. I mean, with the is Nikki bearish yet? I mean, he was.
I hear it. The walls have ears and eyes. I hear it. Okay, the Taiwanese sources, they're everywhere. Okay,
just let me know.
It's okay, you know.
Just so you know, I defended you.
No, you didn't. No, you didn't.
No,
It
you
was a
didn't.
3-on-1. I couldn't defend myself. It was all three of you jamokes talking, talk. Yeah, I heard. It's okay. It's all right.
Oof. Touched a little bit of a nerve
All right.
over there. All right, let's get to some business, and then you could do the real show.
Down on the day.
Johnny Trades. Not yet. Oh, now.
Oh.
Oof.
Down on the day. I just saw a red tick.
Oof.
Yeah, you're right. On the even the S&Ps, not the NASDAQ yet, but getting close.
Up 90 to down on the day is not exactly a Super Bowl.
Okay.
Exactly what Daddy ordered.
Exactly. All right. Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15, TSLL at a 76. For everybody else, Tesla at a 77, NVIDIA at a 49, PLTR at an 89, Meta at a 43, Apple at a 76, TQQQ at an 82. Amazon at a 67, AMD at a 41, SMCI at a 37, AVGO at a 64, MSTR at a 40, Microsoft at a 67, Intel at a 79, Google with an L at a 59, and number 15 for Tom, TSLL at a 76, rounding out the next 10, UAL at an 85, TLT at a 47, MU at a 75, IBIT at a 75, SoFi at a 70, GLD at a 49, Coin at a 49, Netflix at a 71, Hood at an 88, and Boeing at a 75. What say you?
Enough. What do you have to say about this list?
The list is amazing.
Beautiful list.
Oh my God, Nikki, they're all yours.
Thank you, Scott.
All right, play some music.
All right, boys. Couple two-tree trade ideas.
Couple two-tree?
Yeah, I got a couple for you.
I like it. What do you got? Let's
do it.
All right. This one, you got to put your thinking cap on.
I got it. Apple crab trade. Oof.
We're doing the crab trade. In Apple, stock's been absolutely whacked.
Well, it's whacked some more right now.
Is it? What's it down?
366.
Ooh. All right, so this will be even cheaper for you. So I'm going into Apple. I'm getting some flat/long delta here, low positive gamma. The crab trade is a calendarized ratio. Maybe you do this 1/3. Volatility is pretty high in the front, so I'm going to the 130 strike in May. I'm buying one of those calls. Selling 2 of the 240s. Maybe you do 3 of the 240s. You do this for flat.
Okay, you're buying the which one? The May?
May.
Ooh,
did that give you like a...
May the force be with you.
May 230.
Yep.
Okay.
Yeah, Sadnov, my son is quite good at this game, Sadnov. If you remember yesterday, I mentioned this to you, how May volatility is lower or equal to April volatility. Going into earnings in May, the option that he's going to be long is going to benefit from earnings. Now, you have to get the directional play right here, but any type of calendarized or diagonal spread here fits a good assumption. If you get the direction correctly, you've got everything on your side. If it works like a charm.
May 230, April
240s. You sell the 240s in April.
Okay.
So maybe you do it 1/3.
1/3.
Could be interesting for you because I got to define the risk. So I buy the wing because I'm a Johnny.
Because you're a Johnny.
But for you, you do it like 1/3. It probably trades at like a $1 or $2 debit, maybe.
224.
Okay, so that's perfect.
You do 1/4.
You do 1/4. You do flatten it out.
No.
You can do 1/40 and have short delta.
But 1/3 is still a little short delta.
Yeah, you're going to start with short delta. But if it chops around or goes slightly higher, you have a little bit of positive gamma there.
Okay. 220.
That would get you long delta.
Yes.
You need time to go by, Saznov.
I'm trying to give the kid a little break here and give him a little fill. Make his day.
Bless you, Tom. You really.
Nothing done yet.
Yeah.
Bless you, Father, is what you have to say.
227.
Heavenly Father, thank you.
227.
Yes.
Take a fill, Phil.
Beautiful.
Nobody does it better than you, Tom.
I have to go to NVIDIA. Obviously, it's gotten killed. Volatility, IV rank at 50. Volatility relatively high here. I'm going into April, doing the 190 put spread, 135, 145 call spread. Just a
you're going to April. You're doing which one, Strike?
190 put spread. I did this a little bit earlier this morning. It was trading at 115.
190. Go ahead. What's the other side?
135, 145. I did it at $2.53. I don't think it's probably moved that much, but I don't know where the stock is trading. I'm blind.
This spread is, I think you fill this spread at 257. Where'd you do it at?
I did it at 253. The stock was probably a little bit higher because I did it about an hour ago.
I think it trades 257.
Okay. It's a cookie cutter iron condor. You have a little bit of extra room to the upside because of the skew. So you got
257
$5, but it's basically delta neutral.
257.
Beautiful.
Take a fill, Phil. Smooths down on the day.
Down goes Frazier.
Down goes Frazier is right. Okay.
Have you looked at the airline stocks?
Yes, I have. I have a small position on in United.
Okay.
Oh, I actually.
It's okay. You can have. It's a good sign. You taught me so well.
That's
right. We're on the same page.
I will tell you right now, in United Airlines, I am effectively short the 70 puts. What do you want to do?
Okay. I'm starting a new position. I'm looking at the 65 puts in April. Trading at 310 is what I got filled at. Stock was at 71.80. You got an 84 IV rank. If you already have a UAL position, you could look at Delta. Delta's
What price did you sell these puts at?
310. It might be a little bit higher now if they've sold off.
Yeah, they're going to be 335, 330.
There you go. About a 25, 26 Delta. Might be higher now, 28.
Market's 330, 335.
Okay. Delta's another one you could look at if you haven't put a position on in there. Very high implied volatility. I did the 45 strike puts yesterday for the cherry picks. The other trade was a Tesla short put, but we took that off this morning.
Filled at 335.
Okay, beautiful.
Oh, did you just throw that in there? That you just took off your short put in Tesla? Good job out of you, son.
Yes.
Man, did I trade you? There's two sides to every trade here, son. You got to remember that.
I can't. Yeah, I'm trying to get filled on more. Nothing done. All right.
Stock's been moving around, so the market.
I can't believe how some of these airline stocks have.
They've been halved. I mean, some of these are down 50%.
United almost traded 120, and now it's 70. Yeah.
And it was up only for 6 months.
Yeah.
I mean, it didn't have a downtick, and now it's all the way back.
I haven't traded. Where's American Airlines now? Is it like under $12?
It doesn't move like the rest of them.
I know. I just haven't looked at it. Where is it? AAL.
$10.95, down 50 cents. It's acting, if you look at it as a chart, it looks just like UAL. Different magnitude of the move here. I mean, stock was $10. I'm sorry, stock was almost $20, $18 and change, and now it's 10.
I got to sell some 10 puts in there. Done.
There you go.
Spoos down $2, $2.50. You took me down, Batista.
Which one?
I somebody here was talking about the market, giving up at least half of it. So, I mean, I can only take you so far to the promised land, Sadnov. Don't worry.
I gotta
They're
tell
just
you,
trying to shake you out.
I got to tell you, I didn't think they would. I didn't think they'd go down in the day. Let's put it that way.
I didn't think so either. They'd have a little bit of a vol crush. It looked like we were going to get it this morning. We didn't.
We had a beautiful vol crush going, and then they just exploded vol back. Vol's only barely down.
Yeah, it's basically unchanged right now.
Yeah.
Scary.
Yeah.
Sadnov, I have an update here from the horse races. Gorgeous Tom finished out of the money, or what they call over the pond there, rubbish trade. It did not pay anything. But don't worry, the bat came in the money. It wasn't a lot of money, but it paid, Sosnoff, and that's would be
the story of that is how we define the Batistas. It worked, but it didn't work well.
Yeah, it was okay.
It was okay.
It was okay. It was fine.
I'd rather finish first or be out of the money than be average.
Oh, really? Yeah. Then give me the $200. Give me the $200. Got it. Give it to me. Got it. Give it to me. Give me the $200.
Nothing's worse than being average.
Yeah.
It was a claiming race, Sosnoff, and you can actually claim Beat the Bat if you'd like to.
Wow, you can claim the bat. You should buy it. Yeah, I mean, are these harness horses or what are these?
No, they're not harnessed. They're not trotters. They're the harness. They're regular. I can't remember what it's called right now. Yeah. No, you're all good. You're all good.
Yeah, that's a good looking horse. There you go. You should get it. You should get a horse.
There you go. Hey, Sodnup, there's another thing I just noticed. Look at you. That's gorgeous Tom, by the way, Nick, that number 4 horse. But can you put that back up for a quick second? I want to show everybody something that they might not notice, but a astute eye did catch it on Twitter, Sodnup. Look at you, being led around by a blonde again. That's right, Sodnup. Nothing changes. Nothing changes. Okay, you can take it down now.
Thank you so much.
No good? You're welcome. You're welcome. All right, Sadlov, give us words of wisdom. I told you that the down mover's over. What do you say?
Sure doesn't look like a down move. It doesn't look. I mean, I think they're going to close higher today. But
got to be a trap.
I think
got to be a trap.
It could be a little bit of a trap, but I don't know. This market looks like duty.
That's a technical term, ladies and gentlemen. That's 45 years in the business right there.
It's
on and off the floor.
It looks like duty, but if there's going to be a trap day, it could be today.
Mm-hmm.
Russell and Dow down, even the S&Ps and NASDAQ up. I blame this all on Apple. Apple's got to get its wings underneath it. Good trade by the Nick Batista to try to catch that. Apple down $3.90.
I actually think that the NASDAQ is going to save the market today.
You gotta think so. I mean, those stocks have been the leaders to the downside. Yeah. So if they get a couple percent to the upside, you gotta think that everything.
I knew you guys would finally see what the bat has been seeing all morning. I'm in the Matrix.
This is what I got to deal with all the time.
I don't know how you do it. I don't know how you do it.
I don't know how anybody does it.
It's unbelievable.
I don't know.
Sadnov, we might be dealing with it more than you expect this year coming up. We got some big announcements to make. Going to be fun.
If you think you're moving in my house again, if she threw you out, you are not moving my house. That better not be the big announcement, okay?
You said you would never tell anybody. You had to say again?
I'm just telling you. When she tosses you out because she can't take you either, I am not taking you in.
All right, son, I'm going to take a quick 90-second break. I'm going to leave it back to Liz and TP. This is going to be fun. We'll be back in 90 seconds with your man TP after these messages.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to tastylive Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caverna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Hello, everybody, and welcome to the TP and the LD show.
number 3 for this week, I believe it is, because Friday, Monday, Wednesday, we've got number 4 tomorrow on Red Shirt Thursday. TP, thank you for joining me. You look in fuego in your new blue shirt. New?
Oh, thank you. Yeah. So what I try to do, I have a whole staff here. And what they like to do is put me in something that contrasts with the background so I don't blend in too much, but then I don't pop out too much. So it's a really fine balance. One guy, he used to work for Cosmopolitan. Another, one of the young women used to be with Teen Vogue. I have a top-notch crew working with me here, Liz. So hats off to them.
You know what it makes me think of, and you've got a theater kid, so I think you'll appreciate this, where I just pictured you like Daddy Warbucks, where she's like, silk, no, satin, I think, and they put it on you.
Yeah, well, so yes. my older daughter, she's graduating college this year with double, what do you call it? Dual degrees, double major. Thank you, Liz. She's getting one in finance and in acting. And so she has a very good sense about what works for whatever reason. Either it's natural or the classes she took about pacing and timing and the way you stand. It's impressive stuff. And people say, oh, it's a stupid degree. There's no use to. All right, you tell me how much people are making doing shows for Netflix or HBO or whatever. And being able to stand up in front of a crowd or in front of a camera and not melt down, that's a skill or a talent or whatever it is. And if you're good at it,
I could not agree with you more. The fact that she can stand up and do that, because that's something that's absolutely lacking in children these days. And I think we've talked about this. I've had both of my kids in theater for a very, 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 very long time. And even my son, my 6'6" son, he's been in about 40 shows just because I thought it was so important for him to be able to get up on stage. And he actually. He's great. He gives presentations all the time, and even in basketball, that's why he wasn't nervous. But you'll appreciate this. He never wanted to do it, right? But he'd always get the lead because he's a boy. So I thought he was faking an appendectomy to get out of one show, but it was a real appendectomy, and I was like, "You've got gas. Get on stage."
Take a Tums and get up there.
Yes.
No, and it's a great way to meet girls. It really is.
True story. All right, TP, what say you about this CPI number that skyrocketed the market and then has brought it back down to earth?
Yeah, I mean, stuff's expensive, and you can blame. There are two parts to it. For me, anyway, the CPI measures what it wants to. Okay.
Oh, I like this. I like the TP take on this. I don't do, like, do I go out personally and go buy that basket of goods? I don't. My wife doesn't. And so they have to make their best guess about what a basket is. And they are at the liberty, just like with any data analysis, they're at liberty to take things out, put things in, include this, include that. I mean, what is it? And I forget what it is. They don't include fuel or something. I don't remember, but I think you're spot on accurate. I never thought about it from this perspective, like the way your brain works.
You can make it anything. Look, I've done enough data analysis so I know all the tricks, okay? And our research team puts out spot on stuff that I would not argue with at all, because I know what they do. I look at it, all that stuff. But with the CPI, if you want to show it higher, like the consumer price index is an indicator of inflation. If you want to show that inflation hasn't gone down under the current Trump administration, you can show that.
You just pull out what you want to pull out and put in what you want to put in.
Right. And you can do the same thing in 6 months or a year, whatever, let's make inflation come down. Great. Okay. So I'm not saying that it's, manipulated or they're trying to, I'm not saying that, but I kind of am. Okay. That you can make that number be what you want it to be.
Yeah, and I think the market reaction is a little bit more interesting than what the number is, right? So I don't know what the number is. I don't know what was in it. To your point, I have no idea what they were counting or not counting, but I did watch the market reaction during it. It skyrocketed, and now it's kind of coming a little bit more back to earth.
Yeah. So if you want to talk about nerves, am I nervous? Am I nervous about trading? No, I don't get nervous about trading. Do I get nervous doing a show with you? Well, a little bit with you, because you're Liz.
Good answer.
You're the LD. I get a little, but so I wake up about 5 o'clock this morning and I'm going to check the market and the app doesn't open. Ooh. And I was thinking, oh crap. And I tried, then wait a second, what am I doing wrong? So I went to a web page and it didn't work. My telecom was down. And I went to the phone. I picked up I went to it, didn't want to wake the missus up. So I went over and picked up a phone in another room and no line. Just, oh, crap. So anyway, because I know they're doing some road construction not too far from me. So my blood pressure was up a little bit with that. But now looking at the SPY, the SPY, I think, wasn't it up earlier?
Oh, after that, so at you might have missed it. So it was 7. What time are you the same time as we are, TP in Texas? Yes. Okay, yeah. So at 7:30 the number came out. I think 7:30 the number came out, and we went immediately straight up. And then since then, it's been percolating back down. Now, only because we're talking about this, and we will get back into the CPI, it doesn't really mean anything to us, but I want to show the world how rural of an area you live in, TP, because you sent me this morning Slim and Saltine. I love this.
So these are that's some work I've been doing and kind of cleaning up the yard in the last. So I took this last night, and with daylight savings, I can actually see what I'm doing in the evening now. So Saltine is the little pit bull on the right. Slim is the whatever he is on the left. And so you can't really see it from here, but Saltine will fit directly underneath his stomach without touching.
It's so
the funny. She
it.
Can run underneath him.
And so, you have 5. You have 5, right?
Yeah, and here they are. So I dumped out some charcoal from my smoker. They had a little grease in it, so there they are eating some of the old charcoal.
Oh,
and this was
is this okay that they're eating charcoal?
They haven't died yet. It's no charcoal. It's when you have an upset stomach, they give you charcoal. It absorbs poisons. So no, this is, and Liz, the reason I sent these to you is this is one of the rare times that I get them still.
Oh,
okay, not running around and attacking each other and rolling in whatever. So this was one of the few pictures I could take where they were standing kind of still, because 2 seconds later they were running up the hill.
Okay, so this is very topical because we were talking about Slimmy and Saltine. So this is very topical, and I think it's crazy, TP. So this is a real worry. This is your yard. This is how rural of an area you were. So what happened with the internet connection? How did you get back?
It just did. So about a mile away is a road, a big road, 2-lane road, and they're doing construction. I think they're widening it or something. And it's been happening a little bit more frequently these days when maybe they cut the lines or something, or, temporarily and then reconnect them. But I do have this is what I was thinking I had to do. I have my hotspot for my cell service. So I thought in a pinch, and I would talk to John, John who runs the shows, talk to him beforehand to make sure everything's working but it works pretty reliably. I've had to use it with my trading platform a couple of times. In other words, when the Wi-Fi goes down, I just flip over to the hotspot, and it works okay for the trades. So I didn't know how it would work with the Zoom, the Teams call.
I've had to do it before from my hotspot. I've done the live show and an entire live show. Don't tell anybody, from an undisclosed location from my hotspot before. I've had to do that.
Does it work?
It works.
Does it work?
Now, very much like you, I'll shut everything else down. So when I'm doing that, I'm just focusing. I don't have the platform and everything up because, I'll be the co-host at that point and let the person who's in a secure location run it. But yeah, I've done that too. So it does. It does work.
So just to make sure everybody knows how big Slimmy actually is. Slimmy is a counter height dog. So you know how you go when you're shopping for appliances and dishwashers are counter height and maybe some are a little bit smaller or whatever. His shoulders are about a little over 33 inches tall. That's so.
I think you named him Slimmy because he photographs slimmer.
Oh, he is. It is. The camera. Traditionally, cameras add 10 pounds. Not on Slim. He is so lucky. He doesn't look like a 150-pound dog. Though he made maybe 130, maybe 135.
Yeah, he does not look 150 pounds. He actually looks little, which means that this guy's big. This girl is bigger than she's letting us on.
No, Slim is a boy, but Slim. Saltine. Yeah, Saltine's a little dog. She is all muscle and teeth. So Saltine is the head of ranch security. She solves problems. That dog takes care of business.
Don't you think the little dogs are the ones that are that do take care of business? My dog is a pint-sized pillager. He's this big. His name's Will Ferrell, and everybody's like, "Wow, that's a good guard dog."
Yeah,
I mean, he is a pint-sized pillager. He's crazy.
We're careful with the dogs and make sure they're not, aggressive and stuff. But Saltine, she's not afraid of anything. And, she reports back to me and says, "Dad, here's what's going on." Anyway, but Slimmy is a counter height dog. And he is the first dog we've ever had that can actually pluck, if he wanted to, pluck things off the middle of our giant round kitchen table.
I love it. Has our Slim, meaning the former person that we used to work with, who used to work with
Steve
for a long
Miller.
time,
Yep,
has Slim ever met Slim? Have the two ever been in the same room?
They have not. And I think it's kind of like when they have the State of the Union, they have the president or the vice president, and the president somewhere else. They separate the two. So there always has to be some Slim somewhere else in case of some terrorist attack or whatever. One Slim will always be available.
I like it. Okay, TP, I have two things I want to ask you about, and we'll put them in whatever order, but I'm gonna pull this up first. We also got assigned the show account got assigned this morning on 2 deep in the money defined risk positions, and I want to talk about that. But my next question is I was kind of perusing the internet this morning. Before we were open, and I ran across this, and I want to hear what your thoughts are on it. Have you ever heard anything about the 10 a.m. stock trading rule?
No.
So I haven't either, but I loved it because our show, the Liz and the TP show, starts at 10 a.m. So the 10 a.m. stock rule suggests wait till 10 a.m. to make big trades, because it seems that the market has kind of done what it's going to do, or all erratic behavior is kind of shaken out of it by then. And I found it fascinating only because I mentioned that the last time that a lot of times when it closes or when things happen, a lot of times during 10 a.m. you'll see that pop. Now, it's not happening today, but do you think that huge up move from the CPI and everything is now kind of shaken out? Is there any validity to the 10 a.m. stock market rule?
So I think that the validity to that, and I'm going to call it a phenomenon, not a rule.
Okay, fair enough.
But I mean, the internet will call it a rule, whatever. Phenomenon is too hard to spell, uses up too many characters, and so my point is that what happens on the open is you get a bunch of, and Liz, I am all about the mechanics. Okay, just tell me how the thing is working, and then I'll worry about the why. Right. So the mechanics are, there are orders that go in on the open, people that want to execute, traders or institutions who want to execute buy and sell orders on the open. And a lot of market makers, they're not sure about what's going on. The stock traders are looking at the bond market or waiting for the CPI at 7:30 or something like that, trying to get a feel for whether they're going to be higher or lower. And they'll reduce their size a little bit. Instead of being willing to buy, let's say, 1,000 shares on the bid and sell 1,000 on the ask, they might be 200 up. In other words, that's the language. You're 1,000 up. Well, I'm only 100 up today. So things can be a little less liquid on the open, and that can carry over for the first I don't know, maybe the first half hour. Okay. And the reason I say that, Liz, really quickly, the reason I say that, that's why we don't see a settlement price for the SPX sometimes until like 9:30.
Yes.
Because they don't have all 500 stocks opened yet. So it has to do with liquidity. So it's not so much that yes, like you said, the market settles down with any information that comes out, and the market makers start stepping up with their size. They get a little bit more comfortable, but it really is a question of liquidity. I also have a question about doing big orders. Who's doing big orders? Not me. Maybe you are.
All your institutional. So TP, does that, I'm huge, but not that big. So
yeah.
But here's my question. So you know how they just, and we touched a little bit about this on Monday, and I'm sorry, we kind of go in different directions.
That's okay.
But we touched a little bit about this on Monday, that the NASDAQ and the SIBO and a bunch of the big exchanges are now going to go 24 hours. Do you think that's going to change when these big institutional orders try to put them through?
I think so. Because you get a bigger, well, maybe not, because they have these older legacy systems that, there's no trading before 8:30 or something like that. So you have, and also and I don't remember, Liz, if you can tell us, is it just the futures, just is it stocks too? Is it the 500 stocks?
So from my understanding, and like I said, very limited understanding because I just heard the headline, I believe it's stock trading, not options, but stock trading. So it might change some things if it's going to be open all the time. Now, I know Frank the Great, and I know you know him very well. He's the man on our YouTube chat. That's what we call him, Frank the Great. So he used to be a broker, right? So you were talking about big orders and how big orders used to be filled. Like you would give him an order and he would work it all day long.
Mm-hmm. Yeah. So, and now it's electronic, but
yeah.
Well, go ahead.
No, I was going to say, so a lot of times, do you think that those big orders don't move the market as much because they're still being worked, but electronically? Because you can put a limit in for a certain price, and then you're just seeing that heavy volume, right?
Yeah, and I think also the market is so much bigger than when I started, and even than when you started, Liz. Just the magnitude of things. So if I'm a money manager and I need to allocate $1 million into stocks, that $1 million, I'm buying fewer shares of $200 and $500 stocks as opposed to $20 and $50 stocks. So the rally changes your quantities. In other words, it's I don't have to buy as many or short as many S&Ps to get the exposure, the dollar exposure I'm looking for. So I don't think necessarily that the orders are getting any bigger these days. But also with the size and so many institutions, BlackRock and all that stuff, there's a lot more liquidity now. A lot of the all the people with all the pipes directly to the exchanges trading for these half ticks and stuff like that. All the high frequency traders, they can suck up a lot of that volume, and I don't think big orders necessarily move the market. I just don't. So the 10 o'clock rule, yeah, if you're buying 100,000 shares of Costco, okay.
Yeah.
If you're selling a put spread in Costco, no.
Oh, well, not put spread, do it whenever. I just want to be clear. This is not a tasty rule. It's just something that I came across. It was the first time I had heard of it, so I figured I would run it by my expert TP.
It's interesting. It's interesting.
It is interesting. Okay, I got a question for you, TP. All the airlines have been myrtleated recently.
Yeah.
If you had to myrtleized, if you had to pick an airline, I mean, I'm on you all because this was one of my biggest winners from last year. If you had to pick an airline, would you jump in front of the falling knife, or are you avoiding airlines?
Yeah, so I would trade the airlines. I don't know much about them. I would look for the one. Yeah, so AAL has a 93% IV rank. UAL has an 84% IV rank. It was. What's Love?
Oh, Love is the
84%.
That's Love is a 61.
61%, a little low. You know what, Liz? We can look at jets. I've had success trading jets.
Oh, that's the basket, right?
Yes, 90% IV rank. And the nice thing about Jets, it's a $21 stock. So the margin requirements aren't huge on this. And it's fairly tight.
Oh, that's not bad. Yeah. I mean, I just looking at how much, you're getting $1 almost and putting up $4. That's not bad at all.
It isn't.
20% return on capital.
It's very high. And so I would, if you put me on the spot, I would just pick whichever airline has the highest applied volatility. But if I had my choice, I might just say, just trade Jets.
Well, and I do like selling premium. My problem with American Airlines, even though it's got, I think, the highest IVR, there's not a lot of premium because it's only a $10 stock. So I'd rather get $1 in a $20 stock than, 40 cents in a $10 stock. That's my only, there is I like a little bit of a higher price than a $10 stock.
Yeah. I mean, although, it's AAL trading at 10 or 11, that's, collecting 39 cents for a $10 put. That's pretty good. And if you have a small account and you want to experiment with short naked options, AAL, Jets, these cheaper price stocks are a way to do it.
Take a look at this, TP. Let me ask you this. I'm only because I'm in AAL. So you can sell the out of the money put, the 10 put. You're getting 38 cents extrinsic value. It's a great return on capital. But I just kind of glanced at the 11 because I know it's trading right at 11, but it's got more extrinsic value. You can get 77 cents and only putting up 219.
Yeah.
It's a little bit more bullish. I will give you that, but not by much.
Marginally. You're doubling your your extrinsic, because what you're doing really is, think of it as selling. I don't want to confuse people, but what you're doing is you're selling the 11 call. Okay.
Yeah, you're long stock and selling the 11 call.
Yes. So the 11 put, shorting the 11 put is synthetically equivalent to buying 100 shares of AAL and selling the 11 call. So that 11 call is the extrinsic value you're collecting on that put. So compared to the 10 put, it's 2 times higher. So yeah, if you want to just, I don't think, I'm kind of indifferent between them, but if you want some extra juice,
Okay, so
sell the 11.
Yeah, I'm going to. So I'm gonna just kind of going through our mechanics. We looked for one with the highest rank. Now I do like Jets because it is a basket. I liked Jets a lot, and it's hard for me. But and then after we went through this, I like putting up $200 to make 76 instead of $400 to make 99, which was Jets.
Yeah, and so think of it this way. The way I would approach this trade is I have a 74% probability of making 50% of its max profit. The max profit is about 32, 33 cents. That's probably going to happen statistically in the first 15 or 18 days from now. So about halfway to expiration. If I can make let's make it $30, putting up $217 of capital for 20 days, that's a huge return on capital. I'm not saying you're going to make that. I'm not saying there's not a lot of risk in this trade. I get it. AAL could continue to go down. Yeah, but this is how you get rewarded.
It's only a $10 stock. So the only thing that it can hurt you is 2-0, right? So that's it. So, I mean, when you're looking at, the S&P 500, that's got a lot to go down. TP, let me ask, while we're here. So the P50 number, which you kind of touched on, I think you calculated this one too, didn't you? Aren't you the one who made these numbers up? The P50? Yes. So the P50 is a 72, and the probability of making 1 penny is a 61. Can you please, because I was on a Zoom call yesterday and I was talking about both of these numbers. Can you please clarify for me why the P50, why the chance of making 50% is higher than the chance of making 1 penny?
All right. So just really quickly, there's a 61%, like you just said, is the chance of making 1 penny on this trade. So the break-even point is what, 10.25 on this short put. So that's the probability that it's going to be up 10.25, and that's
is this at expiration?
Thank you. At expiration. So that's been around. I created that about 20 years ago, 25 years ago. So actually longer than that. So long time ago, and it's based on the normal distribution. It's a very nice, clean formula. The probability of making 50%, I created about 10 years ago. That's a different type of calculation. And what it is saying what's the probability between now and 36 days, between now and expiration, that option will decay enough so that I can buy it back for half its max value. So the max value right now is 77, max profit 77. Half of that's about what, 38 cents?
Yep.
So it looks over 1,000 potential stock paths for AAL. In other words, AAL is a random normal variable. I'm sorry if you love AAL. I'm sorry if you work there and you think it's the best company ever and that the financials are awesome and whatever. To me, it's just a standard normal variable. And for over 1,000 potential price paths going out 36 days to expiration, of those 1,000 price paths where AAL goes up, down, up, down, up, down, up, down, I price the 11 put at each one of them, and I see which of those 1,000 price paths give me half of the max profit. 74% of them do. That's the difference. And why is it higher? Because it's easier to make it, because you're doing it over a shorter amount of time. You're not holding it to 36 days. There's fewer bad things that can happen.
That's very well said. So do you like the P50 over the POP as a trader?
Yes. I trade P50 more than yes. Yeah. Yeah. P50 is my number. So what I do is I scan through my positions every morning and I see what's close, what's at P50 or getting close to P50. And that's how I manage the trades. I don't look as whether they're up or down or just P50, take it off.
I love it. We're filled.
Take a fill.
Take a fill. You know what I'm going to do? You know what I'm going to do right now? We're very notorious for doing this. I'm going to take this and put a GTC in for 50%.
Yeah.
And then it's in. If it hits, great. Then I never have to think about it again.
And this is why this platform is the only one that has this number. Because the other places haven't figured it out yet.
Really? I love it. The P50 is pretty good. Okay, so we got the P50 in there. Now, my next question I want to talk to you about, TP, I'm going to pop this out. This morning, when I opened up my you were saying yours didn't work. Number one, I looked at my platform this morning on my phone and it didn't recognize my face. That's how crazy my hair was. So then I had to use the code. And I looked at, so I have all the accounts linked. Now I can't make any trades on there. I can just look at the show account through there, which is good because it stops me from entering into trades. But our buying power on the day was negative this morning because we got assigned on a net here and in Tesla. And Tesla's a big stock for this account. So what happened was, and you can see on the open at 8:32, I tried earlier. I closed the defined risk portion as a package. So I went in and I sold out my stock, which I was put, so I was long, and with the accompanying put with it, so 340. So I knew I had to pay, or I would get a little over 340. So I got 340 and 5 cents. But so I wasn't panicked about me losing or gaining anymore because it's still defined risk and I still had time in it. But my buying power was through the freaking roof, negative.
Yes. So this is the whole point about early exercise and why, if I were in charge of everything, I would get rid of American exercise. I would get rid of, there's no need for it. Okay. I don't think somebody can put it up in Twitter why anyone would actually, of our customers or our viewers, would want to exercise an option early. It just doesn't. Why do you need to do that? There's no financial reason. And you say, well, I'm going to capture the dividend. Well, your call already reflects that. So here's okay, go ahead. Question, comment.
Wasn't there a reason? Like, why is the reason that there's American exercise?
Because back in the 70s, when they were cooking up the CBOE, oh yeah, people should be able to buy the stock. People should be able to own the stock, not just trade the options. And this is what it does, Liz. Okay, you ran smack dab into it. The stocks, and remember we were talking about on Monday or Friday when we talked about the margin requirements. And the margin requirements on stocks, if you're not in a portfolio margin account, they were written back in the 1930s. So it's 50% of the value of the stock. And like we were talking a few minutes ago, now that stock prices are God knows how much higher than they were 90 years ago. But the point is $244, that's $12,000 of margin requirement for 100 shares.
Yes.
Yeah. Okay. Can I buy $12,000 worth? Of course. Yeah, I can do it. But there's no need to do it. And all it does is you got hit on a short put?
A $5 wide put spread. So I was very looking into the margin on it. Maybe it might have been $10 wide. Nonetheless, it was a very defined risk put spread. And Tesla, and it was so high, it was the 340s. So we had nothing else left to lose in it. So that's why it was still sitting there.
Yeah. So we can talk about the mechanics of this really quickly. Can you go into the options that you got hit on?
Sure.
I want to go
back and show you exactly what it was. So we're talking apples to apples. So it was I got hit on, it was the 340, 350 put spread in Tesla in 9 days. So when you're leaving it, so it was the 340, 350 put spread.
Yeah. So here's what was happening. So you were short to 340, right?
Yep.
Okay. So early exercise.
I'm sorry. I think it was the 330, 340, just to call apples to apples. That's okay.
So whoever is long the option determines the exercise. Okay. If you're long the option, you exercise. If you're short the option, you wait to be assigned. Long is active, short is passive. So when I look at those, if I'm long that 330 put, okay, and I exercise it, I see it's in the money right now about $75.
Yes.
Okay. So if I sell that, I can do two things. I can either exercise it, or I can exercise the put and be short the stock, or I could just sell the put. I can exercise the stock. I can exercise the put and sell the stock, or I can sell the put. This is what's surprising. And did Tesla pay a dividend?
I don't think so.
Can we look in the little arrow?
Yeah, but isn't it only calls that are affected by the dividend TP?
Generally, yes.
Wait, let me go overview. No. So why did somebody do this? I have no idea, because if it were my position, I would have sold the put. All right. And don't I immediately get, so by being assigned on this 330, I'm not saying this is a good thing. This is not a good thing, right? I immediately get all this extrinsic value by being assigned.
Yes, you took advantage of that 29 cents.
Yes.
And I'm sorry, I said it was 70. It's $85. So it's that put it's in the money by about $85, and it's wrapped around 85, the value. Maybe the person couldn't trade out of it, didn't know how to close that long put. I don't know. Maybe they're.
So it also happened, and that's why I find it odd when things get so far away from you. This kind of stuff can happen. It also happened in a net, and here I was. It's another one where it was it was so far away. It was an earnings trade. It was also in the 9-day, I believe. Yes, the 9-day. It was an earnings trade. We had so here we were the 92.90. So I was short the 92, long this.
And you got hit on the 90s.
Yes.
This is the way I want people to think about this. When you exercise that long 90 put, and Liz, you were short the 90 put, I get that. But if you are long and you exercise it, you are giving up that 40 cents of extrinsic value that put has. So the 90. Let me step back for a second. An option, the call and put at a given strike generally have the same extrinsic value. Okay. And interest rates, dividend can be a little bit different, but generally speaking, they have the same extrinsic value theoretically. So if you say TP, what's the extrinsic value of that 90 put? Well, I could look at the value of the put, subtract out the intrinsic value, or I'll just look at the 90 call.
Yes.
And when I exercise that 90 put, I am closing it out for its intrinsic value. I'm giving up any extrinsic value it has. That's why I wouldn't do it.
It's interesting though, because it's when things get so far in the money is when a lot of times they get I get assigned.
Yeah, and somebody's out there thinking that it's a good idea to somebody. Maybe somebody has that long put against long stock and they want to exercise the put and close out the stock. Okay.
Yeah.
Okay.
Yeah.
Maybe there are a lot of reasons to do it. I'm not sure, but for retail traders like me, I don't see any reason to exercise a long option unless I really cannot close it out.
But it does happen. So this is what I was going to say. It does happen. And we were talking about fear earlier this morning. Some people, if you're new and you're trading it, like I think about my son, if he was doing it, and a $5 wide iron condor in Tesla, which I think he has had on, and all of a sudden he's got a $5,000 account. His buying power goes down to negative 14,000. He might have a heart attack. Like
right.
When you're looking at that, it looks scary. But if you sit back and break it down, you still have the protective option with it. All I had to do was wait for the open and closed as a package. Now, you can close the stock. You can close the stock in the extended trading hours, but I wanted to wait and close it as a package.
Yeah, no, that's smart because when there's no point in taking the risk of that naked long call.
Yeah.
Right? Or put. That's right. So you have another long put, the deep in the money put in ANET. And the point is, if you sold the stock out, now you're just short the stock because that put has 100 deltas.
Correct.
I don't necessarily want that exposure. ANET to me, Liz, maybe you're an expert in ANET.
Nope.
But it is a standard normal variable. Why do I want that much risk in a standard normal variable? That's not my game. I don't do that.
This was an earnings trade gone wrong, but I thought it was I like showing this live on air because it is talking about fear. When something happens like this to you, you just kind of got to break it down. You still had the protection with it. Okay.
And I mentioned too before, Liz, I remember there were a couple of things that I got assigned that I thought, why did somebody do that? It didn't make any sense.
No. Yeah. But
I look at it as a trader and I said, would I have exercised that option? No. So maybe there's a reason, but not from my option trading perspective.
I agree wholeheartedly. Okay, TP, I'm going to go back here. I'm going to go into Twitter and I'm going to go top down just to see, because I know we've, I have no idea what that is. I love it. Okay, Mike,
thank you, Mike.
Okay, because I know everybody's been asking you questions on Twitter and I haven't been getting to them, so I apologize. So here we go.
Yeah, and then Twitter got whacked on Monday.
I know it was hacked while we were on when I couldn't get to it on any device.
Yeah.
That was crazy. I thought I was just blocked. I was like, oh, great. Now I'm blocked. Okay, but here we go. At the show last night, Trader Nikki Bat, did he say it was a meeting? Wait, well, hold on. At the show last night, Nikki Bat did say it was a meeting of Trader Anonymous. Oh.
Yeah, Trading Anonymous. Yeah.
Traders Anonymous. I do like that. Okay.
Yeah, it's, sometimes am I ever embarrassed to say that I'm a trader? Not necessarily, but down here in Austin, it's not like growing up in Chicago. We had the Marquette Mafia, and everybody that went to Marquette up in Wisconsin graduated and went down to get a job at the Board of Trade or the CBOE. So
we tried to.
Everybody at the South Side got jobs at the exchange. They knew what trading was. Down here, not so much. So it's like, yeah, I'm a trader. What's that? So anyway. So Mike's question.
I do have a funny story for you about saying you're a trader. So I was at the Apple Genius Bar. I might have told you this before, but I was at the Apple Genius Bar. And so the guy's just making conversation because I was having a problem with my iPhone. He's like, what do you do for a living? I said, I'm a trader. And he leans in and he goes, I don't think you're supposed to say that out loud. And I said, I'm a derivatives trader, not a traitor to my country. Like he thought I said I'm a traitor. Like
Liz, theater kid, it's all about enunciation.
I know, dictation.
Sorry, Liz, come on. Traitor, not trader. See, your son.
I'm a traitor, not a traitor to my country.
That's right. Your son and daughter would not have that problem.
They would not. No, they would not. And then this is the second one. Last week when I was talking about my broken wing butterflies on down days, I was doing it to the put side. Okay, perfect. Because we were looking at it from the call side and would roll up the long legs on an up move to get a free shot.
Yes. All right. So to what Mike is doing, and he's absolutely right. So the broken wing put butterfly is a further out of the money put butterfly and a closer to the money short put vertical. They combine to create the put broken wing butterfly. So what Mike is doing is he's basically rolling up that embedded, whether he thinks about it in these terms or not. The reason what he's doing is closing or rolling up the winning short vertical. Okay.
I popped in one just for an example purposes. So I did an IWM because it's got dollar right strikes. I did the 195, 190, 170. So it's broken by broken. So I just want it just so you can.
So what he has is a regular butterfly working from high strikes down would be the 95, 90, 85.
Yes.
That would be a regular standard butterfly. What Liz and Mike are doing is, and it's hard to see it with this platform, but they're adding in a short 85, 75 put spread, short. Okay.
Oh, so that's funny. It's so funny. I love the way your brain thinks. So I'll put it in together. So this would basically be buying two of these. Watch. Right?
Yeah.
Okay, There we go. So you've got a symmetrical butterfly, and then you've got this long debit spread.
Liz, you don't know the fights I would get into 20 years ago with the clearing firms. And all these experts with the options. Oh, they know everything about options. No, TP, no, Tom, you're wrong. There's no this has more risk than you think it does. And I would scream. And then they'd say, and then like Tom would say, hey, TP, we got a complaint. You can't scream at them anymore. This is one of the most, so this is like Trader 2.0 stuff a little bit. So what Mike is doing is the broken wing butterfly. The reason it's broken wing is you have the regular butterfly and then an extra short put spread on the downside, further out of the money. Market rallies up. What's Mike doing? He's buying back that embedded short put spread. And if he's paying a debit less than the initial credit for the broken wing butterfly, he is left with a free butterfly. He's left with a free 95, 90, 85 butterfly.
Yeah, so basically, I'm going to delete this leg.
Actually, you know what's good, Liz? Turn it into the 85, 90, 95, 90, 85 butterfly. Okay, drag that up. So that's 41 cents, and then clear that out.
Okay, clear it out.
Remember, 41 cents, and then click into the 85, 75 put spread. So sell the 85s and flip that or swap that around. There you go. So I'm collecting $1.13 credit. Yes. So I'm paying 41 for the butterfly, and I'm getting $1.13. So I'm getting about a 70-cent credit. And if you actually click in now to the broken wing butterfly, it's going to be about a 70-cent credit.
It's going to be a 70-cent credit. Now, it's hard to click in because you're erasing this. You'd be erasing the one that's right here. But TP, how many people, I can't say general pop because we know none of them. How many people do you think understand these complex synthetics where you understand it's embedded call spread and a butterfly?
Well, more now. People watching the show. And so people, oh, it's too complicated. I don't like the way TP is making this complicated. What happens is Mike, the Polish Warrior, has been doing this a long time. So he's kind of talking in the shorthand, right? You and I understand what he's saying, but a lot of people don't. Okay. And so he's great. Listen to Mike, the Polish Warrior on Twitter. He's great, smart guy, super smart guy, great trader, et cetera, et cetera. But if you don't understand what he's talking about, and he's restricted to 140 characters, this is what he's talking about. He's buying back the embedded short put spread. And these embedded options, these embedded spreads, are what people at the clearing firms could never understand.
Well, I think it's pretty crazy, too, because the clearing firms and also the regulators don't really understand a lot of this.
Oh, my God. Liz, the battles we had to get these margined properly. Because this is the Tom Preston rule. This is the TP rule on margining. My brain is in the margin rules at the CBOE. Okay.
Talk to me about this. So you guys, because this is technically defined risk, were they trying to margin it differently?
They did not see it as, they saw it as they would margin it essentially as two separate spreads. They didn't see that you were synthetically long and short that 85 put.
Oh, they did.
So they would have the margin. You know what they would have the margin on? The margin on this is presumably like $10. The way they would margin that broken wing butterfly is $15. They would margin it from 175 to 190, not 175 to 185.
Really?
Yes.
Do you know what? I got to get on my high horse right now, too, because you got to watch this. Okay, so I'm going to show you that you can take a look at, I'm going to do an egregious example. So let's sell the 195 put. The 195 put holds up $3,400, okay? And and you're collecting $4 for it. This is the Jade Lizard. I'm making it a very wide one because they can't grasp the concept that if there's no risk to the upside, they don't need to add the margin. But if I add I'm going to go 10, let me see. I'm going to go $5 wide. So you can see the margining go up from where it was. Look at this. So now I've got no risk. Wait, hold on. Let me delete that.
I don't like, that's.
No risk to the upside. Or do they fix it? Okay. So I've got the 205.
Maybe they did.
I got the 205, 212. I'm going to delete these legs. And so, no, here we go. So here's 3,400. It's going to hold up an additional $400 without having any risk to the upside.
I think you got to flip that around.
Oh, yeah, I got to flip
it. Or the Jade Lizard, I thought you were, short.
Yeah, so, and then it adds on another $400 because it holds up the width of the call spread, even though there's no risk to the upside.
Yeah, this is... Again, I'm only one person, right? And the trying to get the people, if you're not a trader, if you don't actually make and lose money every day in trades and see what happens, I pay my bills with trading. If I lose money on a trade, I have to figure out to the penny why it happened. And I've been doing this for 30 years, okay? And if you don't do that, and here's the deal. Look, Liz, it's when I was trading at the Board of Trade, and you go down, because I was a new trader, I had to figure out my own out trades in the morning. So good to go down the first stop table and say, hey, am I out on anything? And they'd say, yeah, you're, this and that. And those clerks had been there for 20 years. And I had just started trading 2 weeks ago, 3 weeks, And I knew more about options than they did. If you're not trading, and most of the people at clearing firms don't trade. At the NASDAQ and the SEC and all this stuff and the exchange employees don't necessarily trade. The compliance people don't necessarily trade.
It is fascinating to me that a lot of people don't trade. It's just flabbergasting to me because it's something that is so exciting and so fun. And I feel like everybody should be doing it. And there's a lot of people that just don't, that are very close to the industry.
It's kind of like an operating room nurse not understanding blood type.
There you go.
It's like or blood oxygen levels. Oh my God, there's an emergency. I got to step in and help. Okay. Hopefully I don't. There are doctors all over the place. But if I have to step in, I understand what is happening pretty darn well. Maybe not as well as a thoracic surgeon, but pretty darn well. And I think when I talk to anybody in these organizations that doesn't trade, it's like, come on, understand what our customers are going through. Understand why this stuff is important to them. Okay? It frustrates me to no end.
My favorite thing when people tell me is I don't have time. And I was like, okay, when somebody says I don't have time, and that's true of anything. Like I tell this to my daughter, if you're dating and a guy says he doesn't have time for you, he's just not that into you or he's scared. If somebody says I don't have time, that means they're scared or don't want to.
Yep. Yeah, well, right. And I understand trading the way we do isn't for everybody. I get it. But if you're not aware of it, if you're long stock and you're not selling a call against it, come on.
I know. It's pretty funny. Okay, just because we only have about 9 minutes left. TP, in this wildest of the West markets, hold on. SPOOs are up 24. We saved the market during our show. SPOOs are now up 24. They were down. TP and I once again saved the market. Are you doing any earnings trades in this crazy market? Or so Bob on Fire, love him, wonderful trader, super
Adobe.
good friends with the Polish Warrior. Today you've got Adobe, I don't know what that is, American Eagle, Dollar General, and Futu. Like, these to me are fringe plays, and in a market where we just looked at American Airlines and all the airlines and almost all the stocks have a higher implied volatility, I'm kind of taking a step back on earnings.
Yeah, I'm not necessarily an earnings trader. I don't seek out earnings trades. And one of the reasons that they'll do it on the shows is for content. Yeah. In other words, if you have to talk, there's only so much airtime you can fill out with, short premium, high probability positive theta.
Well, and when implied volatility is very low, earnings trades give us something with some implied volatility.
Yes, that is exactly right. And so when you're looking to play, but right now, I think the market is giving us, for option sellers, an embarrassment of riches. There's all sorts of places to trade outside of earnings. And earnings for me are it's really a 50-50 trade for me. When I look at my earnings trades, and I'll do them just to understand what's going on, I'll do them. But really, as I go down my P&L, they're really 50-50 for me.
Yeah.
They make them lose. There's no edge for me in earnings trades. But I will maybe trade Adobe, maybe Dollar General. I've traded those before. I don't know what's S? S used to be Sears, right?
It used to be Sears. Hold on, I gotta type it slowly.
Now it's Sentinel One.
Oh, clearly it's Sentinel One, of course.
Come on, Liz. It's painfully obvious. Actually, Sears. Sears
doesn't exist anymore, does it? Sears Roebuck.
No, I think it's gone. So Sentinel One, it's a $19 stock. It's got decent bid-ask spreads. Let's look at the open interest in it.
So have you seen all the
no, none.
While you're looking at that, I was going to show you, like, a lot of the other retailers, you're looking at Dollar General. This got myrtleated on earnings. This was a $12 stock. So a lot of the brick and mortar stores have been going down. So and I know Jenny loves American Eagle. So I wonder if look at this. Whew.
Yeah, did the earnings come out for American Eagle, or are they waiting till this afternoon?
They're today. So today is American Eagle. It'll be today after the close. And it's got 170% implied volatility in the 2-day, and it's got $1 expected move.
Let's just open the 36 days just for the sake of argument, Liz, because right now 1140 is arguably right in the middle between 11 and 12. Let's take a look at the skew. So if I go down 1 point from the 11s down to the 10 strike and look at, let's say 40 cents.
Yep.
42 cents. And then up to the 12 strike at 66. The skew is pointed to the upside in AEO. So if you're a contrarian trader and you thought American Eagle might rally up here and that, you think you think risk is to the upside, which the skew suggests it is, you could sell the 10 put, you could sell the 11 put.
So I'm getting with earnings, though, I have a tendency to go, I know we were talking about the return on capital. I know we were talking about return on capital in, what did we just do, American Airlines. And I like to get a lot more extrinsic value to the 11 put. With earnings, I'll have a tendency to push it out a bit. Oh, but TP, look at this market. Shame on them. 41 cents and 68 cents. Come on, market makers.
Tighten those up. The kids want to play. So you could go into the 2 days. I just pull the 36 days just for argument.
Well, I don't think you're going to get a lot of premium. Take a look at this. I mean, what are you going to get for the 10, 16 cents? Well, if you want to, you can go to the 10 and a half.
I mean, 26 cents for a day.
Yeah. And the return on, you're the one who taught me this, TP, and I really think of you every time I look at this, because somebody's like, oh, I don't need 26 cents that way, but it's 10%.
Yeah. Yes. Let's see your CD give you that.
In a day.
I don't want to be snarky, but I'll be snarky.
10% 2 days.
And people wonder, gee, how do you get, 30%, 35% a year? And I do not make that all the time. This is not guaranteed money. There is risk in doing this. You are taking risk to make, $26. Okay. You could lose a lot more than $26. But the point is, you will not make money. You will not get outsized returns if you don't take risk. And that's okay. If you're not comfortable with this kind of risk, don't do it. You don't have to.
That is 100% correct. TP, I am so glad we ended on this because we have a minute. And I really wanted to ask you this because we were pinning our hopes on the P50 number. And I said this on air, but I don't know. You're the creator, so I would love to get it from your mouth. This was about a month ago. I said, I don't think the P50 really works when you have 2 days left till expiration.
Yeah, it's a little sketchy. And it really doesn't work that well when you have 175% volatility. Okay, because what they're saying is that AEO just theoretically could go below zero. When you have it's like has a massive range. So that's part of the downside, and that's why all these numbers are just data points. Okay, with 2 days, P50 isn't that useful. Maybe I'll look at the pop instead. Maybe I'll look at the max profit versus my buying power effect. I don't look at one number to do a trade. I look at a bunch of numbers to do a trade.
But it is pretty interesting, too, because we know that. And so I understood this when I'm trading, because we were looking at the P50 and I had opened up something a while ago for earnings. And I said, I don't think it works in the short term because these numbers are these numbers and they're great, but they were based on something else, probably closer to 45 days till expiration or 37 days till expiration or something of that nature. They have to put a parameter in when you're putting in a calculation.
Right. Is that in 2 days with 175% volatility, those 1,000 paths are basically all binary. The stock is either 0 or 30, and it doesn't go back. Right? The path is all one way, all up or all down. There's no up, down, up, down, up, down that you get with 45 days or 30 days or 360 days. So the number is what it is. Okay. The math and the algorithm is correct. It's just when you feed 175% volatility into 2 days, that's what you get.
That does skew it quite a bit. All right, TP, another fastest hour of the day done and dusted. We could do this all day long. Okay, TP, go take care of those beautiful dogs.
I will. All right. Thanks, Liz.
Thank you for joining me. I will see you again tomorrow.
Yep.
All right, I love it. Everybody, thank you for watching. And remember to trade small, trade often, laugh with us, learn with us. Watch the TP and the LD show. We will see you tomorrow.
Mwah.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy, Mikey Butler. How are you, sir?
Doing good, doing good.
Yeah?
Nice to see the market has the ability to be a little green.
Don't jinx it.
Just a little bit.
Don't jinx it.
Still a big range today, though.
Yeah, oh yeah.
We are chopping around as foretold by the VIX, but yeah, I was able to make some adjustments this morning, which feels good.
Yeah.
But still need some more.
Yes, today was, this morning we were up about, I think after the CPI came out, which came in a little bit lighter than expected, they were up like 90, I want to say, was like kind of the high of the session. They were up about 30 to 40 minutes before CPI came out, which was 7:30 Central Time. And then they rallied another 50-ish handles from there. It has been a pretty steady grind lower since then. Seems like a little bit of a chop fest, a little bit of digestion here. We've obviously had quite the move lower in the market as a whole over the last month or so. So I think we talked about it the other day of kind of, does the move higher, is it a V-bottom type move or is it a grind higher? I think I'm more in the camp of kind of a grind. I don't know if we're looking at that V-bottom type thing that we've had before. But, yeah, it is nice to have a little bit of a green day, a little bit of a vol contraction. E-minis right now are up 20. The high was 56.75. We've been chopping around 5,600 for the better part of the opening session since the open of the market. NASDAQ up 190. It's the strongest of the group. Getting a couple little dead cat bounces, as some would say. Nvidia up $6 and change. Amazon was much stronger this morning. It's only up $1 and change now. Google was getting a move higher. Meta was up $12, $13. It was up 20-ish at one point. Netflix was up 20 or 30 at one point today. It's only up 17. Really, the laggard has been Apple, which has gotten killed over the last week or so. It's down $3 and change here. Getting absolutely murdered today and over the last month or so. Dow down 139. You got the Russell down 6. So the Russell and the Dow, the weakest of the group. Oil catching a little bit of a bid, /CL up $1.40, 67.65. Nice little scoopy in that MCL from yesterday. Thank you to Thomas Tuesdays. Get your trade ideas every single week. Volatility futures, as we were alluding to, coming off a little bit of the highs yesterday. We got into the 24 handle. We're sitting at 22.30 right now. The low of the session was 21.85. It definitely seems like vol is coming out today. Backwardation still in effect here, so definitely not out of the woods, or at least the market is telling you we're not out of the woods here. Bonds down 14 ticks. They've been getting kind of hit over the last week or so. Gold and silver both higher. Gold's up $14, silver up 47 cents. And Bitcoin, it looked like it was going to have a nice little rally this morning. The futures down 1,200, spots basically unchanged. So having a little bit of two-sided action across the market. It seems like it's a trader's market, a trader's dream. At least that's what it felt like for me.
Yeah. Lots of chop. Two-sided movement.
It's great.
Especially in some of these single name stocks, like Tesla's up almost $20 today.
Yes.
So you're getting some movement, but I personally need some continued upside movement if I'm going to be saved here.
Definitely, but I think we've talked about it before, and you mentioned it too when we were starting the session. Of today was kind of a day where you got a little bailed out on some positions. If you took advantage earlier this morning, it was obviously at better prices, but even now, you're getting a little bit of a bounce, which is nice, and certainly a vol contraction, which has helped a lot of positions. I've been very, very active this morning. I closed out of the Tesla short put spread that we had in the cherry picks yesterday. Nice little $100 overnight. It doesn't get much better than that. I had a couple trades for the Johnny Trader portfolio. I added an Nvidia position, so I sold an iron condor there. Volatility remaining high. You had a nice little bounce. This was a delta neutral iron condor. If you don't have a Nvidia position, it's probably an interesting time to start looking at one. Whether you want to be directional or non-directional, that's up to you. But volatility is high, and you're definitely getting paid to put on some risk here. I did the 190 put spread, the 135, 145 call spread. You have an extra $5 of room to the upside because you do have call skew here. So it's a delta neutral position, but your call spread is further out of the money, and that's because of that skew here. AVGO was a stock that had a big move this morning. It's given up a little bit of that, but still having a nice little up day. I had a put spread on the 198. 198, 188 short put spread. I rolled that out to April to the 195, 185 put spread. You have $5 wide strikes in April, and that's because of liquidity and just what the market makers are offering, obviously. But once this March expiration falls off, you'll have more strikes available to you. They usually open up $1 wide strikes in here. Oh, I'm looking at Apple, AVGO. Same thing in AVGO. You'll have $1 wide strikes once the March expiration rolls off the table. I took advantage of the move today, rolled it, sold the new call spread against it, so I got like kind of an iron fly type position there. I got some long delta in Apple because it's been just whacked, and then I sold a put in UAL, which if you've looked at any of the airline stocks, they are just getting murdered. UAL is 71 right now. It's dropped from the mid hundreds, as well as Delta Airlines. I put on a position there for the cherry picks yesterday. Rough timing on that one, but you can't win them all. All the other trades I did were kind of just like cleaning up some stuff. In Hood, I closed out of the short premium part of the crab trade. SoFi, I did a small roll down. This is actually 2 contracts because I'm long the stock and short and a 15 strike put. This is the trade I'm going to be in for the whole year. So just managing this, rolled down the calls a little bit. 22 cents, very, very cheap, but I have 2 contracts, so it is a decent amount relative to the stock trading at 11, couple percentage points. Month over month will help, but I am very much long because I have 100 shares and a short put that's basically stock. So I have 200 shares of stock at a basis somewhere around 14-ish with all the premium. So definitely still want the up move here in SoFi. In Apple, I rolled down a call spread. I have an in-the-money short put spread here. I actually got a little bit wider here, so I did the roll down, added a little bit more upside risk here, made it 15 points wide, scalped out of the micro crude, which was a great trade. In Microsoft, cleaned up again, just taking some risk off the table in terms of short premium that has basically decayed to nothing. I closed out of the 435 upside call that I have as part of a diagonal spread, so I'm leaning long there. In NVIDIA, I closed out a very far out of the money call that I had as part of a call diagonal spread. I have one on already, so I'm still leaning long, just cleaning up the just tail junk that I have on that's gone from 70 cents to $1 and change, just taking the money and running there. Sold a call spread against SMH. I have an in-the-money short put spread. SMH up $6, $7 today. Nice move there. And then I bought in some risk on my IBIT position to free up some capital. I bought some wings on the 48.53 strangle that I have on. I bought the 33.68 strangle to define the risk to 15 points wide. Frees up about $1,000 in buying power.
Love it.
Maintenance day.
Yeah.
You get a vol crush. Short premium comes in significantly. You get a little bit of a bounce and stuff that's been, kind of thorn in your side for the past month or so, and you clean up the junk.
Yep. Yeah, that was the name of the game this morning because we haven't had a market opening up 60-day in a little bit.
Yes.
So I did similar stuff. So SMH, I had a call calendar spread at 240. So I bought back the 9-day 240 call and rolled it out to April and up to the 250 strike to re-diagonalize that spread, and I collected $1.02 for doing that.
Okay.
So made that adjustment, basically reduced cost basis, but got more bullish into this rally in SMH. And then UAL, I had a strangle, a 90-100 strangle. I rolled down the call from 100 to 90 for $1 into this smaller sell-off today, but the 90 strike is still outside of the expected move.
You did it at good prices.
Yeah.
And you did it when the stock was at 74 and change, so that helped.
Yeah. So just reducing basis, picking up more credit. The net credit overall in that position now is $8.80 on the 90 straddle, so as long as we come back towards that level, that trade will be fine. Taking some heat today, or overall though. But just making as many adjustments as I can that make sense. Loving the crude oil rally today. That's nice to see. But I need some more days like this, and we'll be getting out of the woods in some of these positions.
Yeah, I was debating because I took off the micro crude that we scalped as part of the trade from yesterday. I was thinking maybe I put on like a short put spread in the oil futures, just as a way to kind of, because we caught the $1 and change up move. Still want to lean long because it's still basically at lows here, but rolling to an out of the money short put spread, it's a little bit less risk given that, you have an out of the money position. You scalp the $100 or so out of the micro crude. That's a positive for you. I'm thinking I might do something like that. Like maybe a 1.5 wide. So it's a $1,500 spread at 34 cents, 64, 62 and a half. What I'm looking at, or maybe like the 64 and a half, 63, do it for like 38 cents, which is $380.
I dig it.
I think I'm going to do that. Why not?
I like it. We've got the poll in the YouTube chat. Which Johnny trade would you put on? 46% out of 250 votes. 46% said NVIDIA, then Apple, then UAL.
Yeah, I mean, NVIDIA has been a great trade in terms of volatility and price action. I mean, I just got filled on my crude for 37 cents. In terms of price action and volatility, it's been a great trade. It is super, super liquid. I think if you've been hesitant to put on a position, it's probably an interesting time right now, especially with volatility at 22 and change here, volatility futures. It's actually at the, they just started smashing vol a little bit today. I think it's an interesting trade to just be delta neutral. You'll play into the up move, get a little bit of short delta if we continue higher. A little long delta at 100. I mean, come on. Got to play the game.
Yeah. Yeah.
If you got the capital, you can do it naked. And the toolbox is open.
Yeah. Adobe has earnings after the close today. Interestingly enough, I wrote an earnings preview on Adobe. I put it in the YouTube chat if you want to check that out. I also have the Cherry Picks link pinned to the top of the YouTube chat. Get that free newsletter.
Yes.
But yeah, Adobe up today. What's interesting about Adobe is it's pretty much flat. Like it had that huge hemorrhage after the earnings last quarter. But if you look at its stock price performance from January 2nd to today, it's basically flat through this huge sell-off we've seen in a lot of other tech stocks. So I think that's kind of interesting. The problem with Adobe is that it's a $400 stock with 50% IV. So like I can't even, it's hard to like get into this from a calendar or diagonal standpoint, and I don't really want to sell, a put spread here with 30 cent, 40 cent wide markets per dollar. So I'm probably out on Adobe earnings. I'll keep an eye on it, see what's going on after the close today. But yeah, I was shocked to see that it's basically trading flat through the year.
Yeah, not very enticing to me. I think, and just given the market as a whole, it's been a tough trade for some, long. I know I lean mostly long. I have some short delta positions that have hedged, which have been nice. I have some neutral positions that are now longer delta, but into a tougher, month or two of trade, the fringe earnings trades kind of become less interesting. There's not much of a point to force it, in my opinion.
Yeah. Especially, in markets like this. In boring markets, maybe we'll dabble, but markets like this, when you can just trade ETFs and get your volatility there, like that's...
Or you use that capital, like I'd rather use that capital in NVIDIA.
Yeah.
If you're going to do a $1,000 call diagonal into earnings in Adobe, I would lean towards an NVIDIA wide iron condor, something like that.
Yeah.
I can even do something because I have this call diagonal spread. I might just add basically the same thing I did in my Johnny Trader account and play into this vol a little bit.
That could work.
190, 135, 145. I mean, if we drift higher, I'll probably take the money and run on my call diagonal spread and then keep this on. Yeah, let's do that. Let's add a little position here.
That could work. Seeing Natty Gas crumble a little bit, a lot of it, down 6%.
I needed another point to the downside.
Yeah. Don't we all? I'm at 3635, so I need more.
A lot.
Yeah.
There we go. Why did that get canceled?
While you do that, there you go.
247. And I was thinking about some other positions, like I have this Micron strangle that I was looking at. This one's basically a scratch. I had the Marvell trade that is a 60 or 70 cent winner. I'm debating if I take that money and run AMD as well.
Yeah. SMH definitely feeling the boost from all three of those.
Oh, yeah.
SMH almost 4% today, which is a big move.
Yes.
all things considered. But yeah, we are streaming live on YouTube. If you want to join us, just head over to Tasty Live's YouTube channel. You'll see this video streaming live. You can pop in your trade ideas and questions along the right-hand side chat. Again, I've got the Cherry Picks newsletter pinned to the top of the YouTube chat, so you can get that for free. And I think we can kick it off with some questions now. See if we got some trade ideas for the market we're seeing today. Steve, looking at a strangle in Adobe as an earnings trade, but not sure where to put the put and call. When looking at past charts, it's had some wild swings. Yes, it has. It dropped 100 points after the last earnings announcement. So I personally would not be doing a strangle in here, especially considering we're not in a calm market. And I think that is only going to emphasize the potential volatility of some of these earnings moves. But if I were to sell a strangle in Adobe, I would first of all be accounting for at least 1 times the expected move in what is the expected move in the 2-day cycle, which is 33 points. So if I were to be selling a strangle, I'd probably go to April, where you still see a decent volatility crush, but you're collecting a decent amount of premium. And if you just look at like the 380, 500, 60 points out of the money on either side, picking up $1,000 at $4,000 buying power. Like, this is the kind of strategy I would be doing, where you're accounting for multiples of the expected move. And if you're tested on one of these sides, you may want to be leaning short or long anyways at those strikes. But that's where I'd be going. But I prefer to do an iron condor for these types of stocks.
Yeah, use about 4,400 in buying power for the strangle in April. Obviously, if you wanted to do something in the weeklies, you're going to have much more instant pain or instant gain. Too big of a position for me, so it's not something that I will dabble with. I agree with Mike. I think if it was me, I would be defining the risk. But yeah, IV rank 85, premium is high. The weekly expiration, 126% implied volatility. You do have the 5 or 6 points of vol difference between April and May, so there is certainly juice there if you do want to play in that, but not my cup of tea, unfortunately.
My theta on 0-day positions was 6% of the account this morning. Now it's 3.8%. Any past info on best profit-taking percentage in relation to theta? I would just simplify it even further. Just look at your extrinsic value. If it's short premium stuff, how much extrinsic value can you make relative to where your strikes are? Going forward. That number's got to be lower now, especially considering we've rallied up closer to where we opened. So if you had like an iron condor on or something like that, but I would just weigh how much can I make relative to the risk and where are my strikes relative to the current market price. But if you're at like 50% with almost 4 hours to go, I would be taking that off for sure.
Yeah, theta is not something that is on a 0-day position. It's not theta decay, because theta decay is a day's worth of time value passing, and your positions are going to be over at the end of the day, which is in 3-4 hours. So I think Mike talking about extrinsic value is really the key here. Is that if your theta number has dropped by half, it means that your position is probably a 50% winner or close to it. And that's the trigger for management. I'm not looking for my theta number to get to some X, amount. I'm looking at that and saying, you know what? You probably sold, maybe you did iron condors when we were a little bit higher, and the vol contraction is helping you, as well as a little bit of a bounce that we're having now. Or you bought the dip and sold put spreads, and now the market's up $40, 40 points. You got it as good as you could get it, is I think the key here. And now you have to look at the risk reward of the position moving forward. That's how I would look at managing.
Yep.
Not the theta, because the theta, that's why it's so hard to look at if you're trading those sort of trades. It's so hard to look at your overall theta number, because you're probably going to have a significant, if not, the majority of your theta decay
in a daily option position. Your wide put spread 30 days out in time might have $10, $20, $30 worth of theta if you're trading wide SPX spreads. Your weekly stuff is going to have 300. So it's a totally different risk perspective there.
Yep. Athlete X. I read that as Athleen X.
I know, right? That's
You know that guy?
Yeah,
Remember
I know that guy. Yeah,
from back in the day?
Yeah, he's good.
Pumping fake weights. You hear about that scandal?
No.
Yeah.
Really?
There was some scandal of like the dumbbells he was using were not actual dumbbells. Like they looked bigger than they actually were, which is a marketing ploy. But it doesn't change the
Yeah, but you don't. Doesn't it say the weight on it?
Yeah, but I guess that was fake.
Oh.
Yeah.
So he was pumping like 40s and they were
like
25s.
20s. Yeah. That was the alleged scandal.
That's really bad.
Yeah.
Damn.
But I don't know if that's true or not. But
Brutal.
it's funny either way. Would you guys hold stock that you're assigned and sell calls against it or sell it at a loss? Got assigned on HUT today. HUT has dropped dramatically, went from 30 to 12 in short order. So I guess it depends on, number one, where is your cost basis on your short put? So if you got assigned on a short put, if your short put's at like 14, then sure, you could take the shares and sell a 14 strike call, collect $1, call it a day. If you get called away, you're going to be net profitable. But if your basis is at like 20, there's nothing to sell against it. Like I don't want to sell a call below my basis here unless you're willing to accept a loss that's better than what you're seeing now. Otherwise, you just hold the shares, wait for hopefully you get a bounce, and then you can sell a premium against it closer to your cost basis.
Yeah.
But it's tough. I mean, a $12 stock isn't like I have. What's mine? I have Under Armour shares.
Oh God.
I've had 100 Under Armour shares for like 4 years. So
I think I've tried to get you out of this multiple times.
You got me out of Ford.
Yeah, I know.
That was the other one.
But
yeah, like HUT, 100 shares in HUT. What worst case scenario, it goes out of business and you lose $1,200, but it can recover. So it's another one of those things. Like I would rather just have the shares and not have to watch it rebound after I closed it at the bottom.
Yeah, I mean it's the question we always get as markets go down is like, my basis is at 15 and the stock's at 12. What do I do now? And it's like you have to make the decision. There's a couple things that go into it. Okay, first is how much capital you're using in that trade, and are you fine with holding that capital? So that's the first question. It always comes down to position sizing and opportunity costs. $1,000 in this can be used in the Iron Condor I did in NVIDIA. So you have to kind of weigh that risk reward in terms of opportunity costs. The second thing is, do you want, is this a position that you're holding long term? If you're holding long term, this is a time where you want to lean long. The price is lower, maybe you add sort of positions to it. Sell some puts at the money or put spreads. And this is a tough stock to do it in because it's a $12 stock. But I mean this across everything. I get emails about Apple and Amazon and NVIDIA and all these other things. You bought the stock at 130, the stock's at 115. You should be bullish. I know the market changes all of our sentiments, but you should think about that. Am I bullish? Am I going to keep this for a year? You are probably bullish a year from now.
Yeah.
And so, you should take that into account. And with selling calls, obviously, if your basis is much higher and you're selling calls in the hole, meaning it's a lower strike than where your break even is and where your cost basis is, of course you miss out on the tail event. But if the stock chops around, that premium is going to hedge you and continue to further reduce your basis. Like in NVIDIA, if you had sold yesterday into this move, let's just look at the change in value here. So if you had sold the 125 strike call, this call, you lost out on $180 on this move in terms of value. That's extrinsic value that has gone against you. But you've made $7 on the stock. So you're net up $500 on your 100 shares of stock. It's still a positive for your position. If the stock were to go to 125 tomorrow, you're still in a better spot than you are today. You're going to make another, $700-800. Yes, you give up a little bit of that value because you're selling that call and you're capping your upside, but it's still a positive. Like, it's a high class problem, and you can continue rolling these trades out, or maybe you just say, you know what, I made back my money. I close the position and sell a put, and if we go back down, I'll take shares at that price. You got to kind of be a little bit more flexible with your trades. You can't just think of it as just a binary outcome. Like, this, selling this call against shares is not, if your base is at 130, you're going to make back a lot of money to 125.
Yeah. And in terms of HUT, and this always goes back to trading small. Like, if you had, let's say your max risk is a couple $1,000s and you have 100 shares at 12 and your basis is at 20, selling a call against anything is not going to help you. But maybe you sell a 11 strike put for $1 and you have another 100 shares of cost basis at 10. And if you get assigned on that, now you've just cut your cost basis in half down to 15. And now you could sell 2 calls at 15 for 70 cents, and that makes a lot more sense. So it just depends on where your cost basis is and whether you're willing to dollar cost average down. And if you're not, then it's a situation where the higher your cost basis is at like 20 or 19 or 18, the more I'm just going to sit on the shares and hope for a rebound here. But if your base is at like 14 or 15, then yeah, you take the shares, you sell the call, and you have a much higher probability of getting called away for a net profit. Going back to the Garrison 0-day question, when during the day does delta risk take over from theta protection? Again, it's extrinsic value. Just look at it. How much extrinsic value can I make? Your delta risk is real in this kind of market. Yeah. So I don't care what the probabilities are, honestly. We could see the E-minis go from down 40 or up 40 to down 40, or up 40 to up 100. Like, this is the market we're in. So I'm not holding risk for, if I'm at like 70%, 80% of max profit, I'm taking that off and calling it a day. Like, I'm not playing around with this kind of market.
Yeah, I just pulled up the 1 day 55.50 put in SPX. It's 65 points out of the money. It's had a range from, it's at its lows right now, so it's trading at like $3. It got as high as $26. I mean, that's your risk. Like, theta is not protecting you. Decay is happening, and that's a good thing, but your risk is all binary. It's not time decay.
Yeah.
Like, it's all directional risk. And if you sold puts or put spreads into this move, you're a rock star.
Yeah.
I mean, you sold these at 26, they're at 3.
Mm-hmm.
That's amazing.
Mm-hmm.
You can't get every last drop out of it. It's all, and think about that too, is when you put a trade on, your risk at that entry is, let's say, $1,000. If you are up $200, your risk now is $1,200.
Yeah.
So you have more risk as profits come on the table, and it's hence why we look to manage positions, and we're never holding, for that last 5 cents or 10 cents or whatever. We're always managing positions, managing winners.
Mm-hmm. Cal has a long NVIDIA call.
Okay.
Nice. April 25th, 107.
Nice.
Thoughts on profit taking? Close it, roll it up, roll it out. Currently at a 70 delta.
It's a great trade.
Yeah.
It's hard to, not take the money and run. I mean, legging into a poor man's covered call type position, you can even do it short term.
Yeah.
Go into the March 9-day. You sell
the 2-day.
Yeah, if you want that, like if you want to just hold it through the end of the week and say, you know what, I want a little bit of a hedge, sell the 120 at $1.
Yeah.
You go out to the March monthly, you could sell the 125 for $1 and change, even the 120. I mean, you go right at the money and you say, you know what, I'm going to take $4 more to the upside, and that's my out. But it's, you got a lot of risk. You're up 800. You've doubled. So
yeah,
that's a lot.
Yeah,
double's a good trade.
Yeah, if you're, I don't really like rolling out here. or rolling it up. I mean, you could roll it up to take in some cash, but you're adding more extrinsic value that decays against you, et cetera,
Yeah.
reducing your delta if it continues to the upside. So I kind of like the 2-day, just like create a binary event where like, okay, you sell the 120. If it's above 120 by Friday, you make another $100 and you make another $400 in your long call.
Yeah.
Something like that. Or you just take it off. And these markets are still volatile. Like, you could take this off, and then tomorrow, if Nvidia is down $7, you could re-enter, and you're going to be in a great spot. Where this dollar in premium only hedges you by $1.
Yeah.
This option has increased by $400 today.
Yeah.
So.
Well, you could close it, take that. It's basically a 70, 80, 90 delta option. You close it out, you could roll into a call diagonal spread like I just pulled up here, closing the 107 in April. You roll to a May 120 and sell the 135 in the April monthly. You do it all the package for $7 and change credit, which is probably right around where your basis is on the long call that you bought. And it basically rolls your profits forward and gives you a shot at, much, much more with a lot less risk on the table. That's another thing that you could consider.
Mm-hmm. High VIX in uncertain times. How about selling leap puts 300 days out on many stocks and hedging the resulting long portfolio delta by shorting SPY?
Oh, God.
So selling put premium on equities and shorting SPY.
Want a little bit of everything with that.
Yeah. Yeah.
I mean, your short premium, like if you're selling 300-day put options, you can even see in NVIDIA, if you were at the money yesterday and you sold this put, you made $200 today. Your short SPY position, lost you 500. So it's just a tough.
Yeah.
That's not. There's too much of a variable there. But
yeah, and the problem is like if your underlyings are the Mag 7 stocks, like your Google, Apple, Amazon, and you're shorting SPY, we're seeing big moves in the NASDAQ relative to SPY. So you could, like if the NASDAQ drops and SPY kind of flutters, you're not really hedging because you're not getting the same kind of ratio. Mm-hmm. With that said, these are the times where I kind of like to consider the Super Bowl if you want to get like let's say you want to see SPY recover over time, but you want to reduce your cost basis, like selling the 500 strike in January and buying the 620 strike in January for a scratch. Something like that, where like you have the ability to, flip that. Yeah, selling the 500 put, buying the 620 for 70-cent credit, where you have 70-cent neutral profitability. If SPY goes down, maybe you want to get long at 500, but if it goes up, your short put depreciates, your long call appreciates, and it turns into a gamma play.
Yeah.
That's a much cleaner way of getting to the same result, I would say.
Yeah,
with no upside risk.
It's a convexity trade.
Yeah. So like when the market's dropping like this in SPY, these are the trades that kind of come to light if you are willing to take undefined risk in something like SPY.
Yeah.
And the nice thing about this is it's 300 days out. You're kind of out of that implied volatility range. You're collecting a lot of premium that's time-based, but this is a delta trade at the end of the day. Like your short put offsets the cost of your long call. That's it. But you're still collecting your credit where you have no risk in a neutral range. So this, I would probably lean towards this versus getting more complex with different underlyings and then shorting SPY directly, which is going to use a lot more buying power too.
Yeah.
For sure. Let's see. I just got zapped to the bottom of the chat.
E-mini's up 47, 56.24. Volatility 22 and change. Near the low of the day. Was it a trap, Mikey? Was the down move a trap?
Is this reversing now where the sell-offs are traps and now they're getting bought up, getting gobbled up?
I mean, unless we're going to zero, at some point you got to get a little bit of a bounce, right?
If history is going to repeat itself where the market's recovered, then yes. How do you feel about short stock in PG, WEN, MDLZ, and BG?
I mean, Procter, half those names I know, PG, and what was the other? Mondelez, MDLZ.
Mm-hmm.
I mean, these are stocks that have 20% implied volatility. It's pretty much the last stocks that I would look at getting positions on in right now. I mean, when you're talking about a volatile market and these stocks in the height of volatility that we've seen in the last couple years are trading at a 20 or 30% implied volatility, that tells you all you need to know about it. It's just not there. The volatility is representative of the potential reward for risk, and there isn't a lot of reward here for risk. I would have rather go into an Nvidia, an Apple, a Tesla. I mean, those are where you can trade volatility. Those stocks, no.
Speaking of volatility, what 0-day E-mini futures contract would you do today? If you were to put on one right now.
Well, like option trade? I mean, there's only one. ES is, there's no other 0-day for ES. But, I mean, I don't really trade the 0-day stuff, so that's not my wheelhouse. I think iron condors, I think I would rather go into SPX because it's cash settled and you don't have to worry about any of the other movement after the close. It's PM settled, so that's what I would go to. But yeah, I mean, if you're trading 0-day stuff, just it's moving. Markets are moving, so keep your size in check.
Mm-hmm. Yeah, Adobe Info. I might pass on it. Look for another trade. Yeah.
For Adobe?
For Adobe. I mean, if you want to do a neutral trade in Adobe, I think an iron condor is okay. But the markets aren't that liquid, so it's a tough sell.
Mm-hmm.
How about an earnings trade in DocuSign? Call diagonal spread?
Ooh, that's a Sosnoff favorite.
Why is that?
I don't know. Remember he used to say it's the most innovative that and Uber. PDF. I agree with Uber. I think Uber is amazing, but DocuSign, I'm not sure.
The PDF signing?
Yeah. It did. I mean, it was a big thing.
Yeah. Imagine buying a house or condo.
Anything and having a
physically sign the papers.
Yeah. Fax it.
Can't do it.
So what do they want to do? They want to get long?
Yeah, call diagonal spread. So $9 expected move on a $80 stock. So that's a big expected move, over 10%. Anything over 10% of the notional value of the stock, I would consider high for implied volatility for earnings.
Mm-hmm.
Then you look at the April cycle and you have an 11-point expected move. So a lot of implied volatility being priced into the 2-day relative to April. Could you go to June for a call diagonal? I guess, but
just gonna be expensive. I pulled up the 85.90 April March.
Yeah,
$3 and change.
Yeah.
Again, this is a fringe trade.
Mm-hmm.
I'm ready to throw a couple bucks at it, and if it goes to zero, I'll survive. But I'm not totally. There we go. What I get filled at? 322. I don't want to have a ton of risk on in DocuSign. Just not my thing. But I'll play it to the upside. I mean, it's come down from 100 and change. We can look at the P&L analysis here. So if we go to the end of the week, there we go. You got a big wide range to hit. Got about $3 or $4 of downside risk protection, down to 70 and change, 77 and change. That's basically your break even. You got a couple $100 of upside potential.
There you go. Yeah, $300. Call it a day. If it rallies at all,
yeah,
it's a nice winner.
Or stays flat.
Yeah. Sticking with the same topic, considering poor man's cover call in CRM, Thoughts? CRM.
Stock got whacked on earnings. I think it had a little bit of a rally back.
Yeah. I still have the May 3:30 call with the March 9th or the March 21st 3:30 call against it.
So you're dead.
I'm dead. Can I even roll this? No. Yeah, the April 3:30 is only trading for 80 cents. I'd rather just not have that. But yeah, if you're considering a new one in CRM, I like long May, short April at the current price of 290, 280. Like a 290 long May and a short 300 in April, or even a short 310 in April.
Yeah, $7, $10.
Yeah, $7 or $10 for a 10 or 20 point wide, I think is a fair cost for the long delta.
You better think it's fair because that's what the market is.
I do actually.
So that is what the price is.
I do agree.
Okay, if you don't think it's fair, you do the opposite side.
Yeah, you're right.
The beauty of markets.
Yeah. Salesforce is, if you're looking for playing for a bounce, anything that has 30% IV or lower and allows you to get into a diagonal spread where you're paying for half the width or around there, like that's what we're looking for.
Mm-hmm.
It's a solid return on capital if you're right. Smack Lovin' in an Adobe Iron Condor, April, 375, 510 shorts, 15 points wide. $375, 510, 15 points wide.
$3 and change.
Yeah, $3 and change. Yeah.
One standard deviation, basically, a little bit past. Yeah.
Yeah, it's fine. Markets are just a little wide.
Yeah. 20, 30 cents wide, some of them.
Aaron with a spicy question. Would you guys ever consider taking off the long put in a put credit spread and decide to go naked with just a short put? If so, what's your thought process, assuming you're okay with the assignment? Well, the literal thing that you're doing is you're saying, okay, I sold this put spread. It's not working. It's a loser. But the stock has sold off so much, I want 100 shares at my strike price. And
I want to lean long.
Yeah, I want to lean long. I want to convert this to a covered call position.
Yeah.
That's it. The caveat is I would just double check if you do something like this that your short put has extrinsic value. If your short put doesn't have extrinsic value or has very little extrinsic value, you might as well just buy the shares. Because if you get the reversal to the upside and your short put has 10 cents of extrinsic value, you're going to make less back than if you just have the static delta on the shares. So that would be the only thing.
Yeah.
So if you give us the exact trade, we can look at it. But yeah, I don't have a problem with it if you're comfortable with 100 shares of risk.
I think people get too spicy with defined risk trades. Like if you sell a put spread and it's fully in the money, you're defined risk and the trade was wrong and it stinks. There's not a ton, you're totally flipping how much risk you have on. You're going from a defined risk position that might have $500 or $600 or $700 in risk to something that is going to use a couple $1,000s in buying power. You have unlimited risk. It's just such a different change. If you're comfortable being long the stock, I might as well just close the put spread and buy the stock, or sell an at the money put, or sell a wider at the money put spread. I mean, I agree with Mike. It would help to know the spread and the strikes, but sometimes you just got to kind of move on from trades if it's that far gone.
Yeah. Drone and special. Micron 75 115 strangle for $4.
Yeah. I have the 75 110. I did it at 432. I'm out about 40 cents. I mean, this is an example of a vol crush because I did this we look at the market snapshots, stock was at 90. I mean, this was 6 days ago. So the stock's rallied $7, and this is another point to make of the covered call situation. You know, this isn't a covered call, but, you know, a $7 up move you expect to lose on a short delta position, and this call, you know, I'm out 40 cents on this position because volatility has come in, and that's the other benefit of selling calls now, because volatility is super high if you are long stock.
Yeah. How about a strangle in Hood? Sell the April 32 and 47 call for 267.
32.47. Yeah. $1,000 in buying power. I actually might just close out of this 50 call. This basically makes it a 40-cent loser, my crab trade into this move. Let's see when we look at this option. So it was trading yesterday like 148. It's at $2 and change. I think I take this and run. There we go. 203.
Just took off a UAL short put, $40 profit. Thanks, Nick.
Nice. Is it having a bounce right now? I still have this junky. Might as well actually just take this off because this will probably free up. No. I'm going to leg out of this call. There we go.
Lovely. Mr. Premium, hello. Do I still have a year-long MES trade on, and did I do it with MNQ also? I do not. I had that MES year-long trade on, and then I went to DraftKings, I believe, the year after that, and now I'm in IBIT. So IBIT's the year-long trade.
I have my SoFi position.
Yep.
The futures are hard because they don't, you know, stocks trade to spot. All the options on the option chain trade to whatever the stock is trading at right now. Futures have, you know, contango or backwardation to them. I know E-minis, there really isn't much other than the carry costs and dividends, but they're all different contracts, so it's a weird, you know, it's a tough one to do.
Yeah.
And those options stink, the micros.
Yeah. How are we managing the IBIT strangle? So I have the...
I put you in the call diagonal, or the call ratio. Yeah.
So I have the 55 short put in April, and then I have the 50-55 call ratio on top of that. So I basically have a straddle at 55 with a long call spread from 50 to 55. But I've collected so much premium through the year already. I have $1,000 in credit. So Bitcoin's at 82K. My break even on IBIT is at 45. And I have a 5-point wide vertical spread that can fill up and offset my risk. My upside risk is at 70.
You know what you do now?
What do I do now?
You buy the 60 call.
Oh, yeah. Just really just free up that.
Well, if you get a, you know, $2 or $3 move in IBIT, which is a couple $1,000s in Bitcoin,
yeah,
then you can sell out another call again. I mean, that's what I did with my position into higher price. I mean, we're at basically lows. So, you know, my adjustment was not the best timing, but I have the 50, 55, 60 butterfly. I'm also short the 48, 53 strangle. So
you're creating a Mount Olympus in IBIT.
Yeah, I mean, it's 65% implied volatility. It moves. It's cheap underlying.
Yeah, it's beautiful.
I mean, I'm just trading it.
Yeah.
And for you, you know, that has a ton of credit here, you pay the 40 cents, you know, if something crazy happens and we go higher, you can now sell a juicy call against it. You know, you could even sell the 55 strike call into a $3 or $4 up move.
Just spreading off everything.
Yeah.
Yeah. But yeah, I feel really good about this position, even though we're close to the break even to the downside, just because even if these strikes are still down here or the stock is still down here, if you look at the credit roll, if I buy back April, it's just the straddle, buy back the April straddle and roll it to May right now at the 55 strike, I'm picking up another $2 almost. So as long as IBIT doesn't crash, we're going to be just fine with this trade.
Yeah.
But yeah, that's the key with this high IV product is you know that it's a $46 stock, but rolling month to month, you're picking up almost $2 every single time. At the end of the year, I'll have over $2,000 in extrinsic value premium. And
you want to be long.
Yeah, exactly. So lots to consider there, but high IV always helps flexibility.
Yes.
Dave, I've been setting up more 45-day iron condors lately, and my question is, at what profit point should I close out one side? 50%? I like to try and get more. Like if your defensive mechanic is to close out the untested side and roll the tested side out in time before it goes in the money.
What stock was this? Do we know?
Just general.
Oh.
I would be looking for like 60, 70, 80% profit. Because if you get 50% and you buy back that spread, you're adding risk to your tested side. So, and it's not going to really hurt you if you get the reversal back up. So you can close it at 50%, but if my defensive mechanic is to close the untested side, I would rather buy it back and secure 60, 70, 80% of profit.
Yeah.
And that also helps you kind of lean a little directional.
Yeah. Yeah. Agreed.
Check VST's run today. Went for a short strangle at 121. Opinions?
Do we know the
expiration? I'm not sure. Maybe April?
It's having a nice little bounce today. Yeah, the stock's been in play. It flies around. I mean, I think if you're an April position, you got an 81 IV rank. Doesn't look like there's earnings coming up.
Yeah, it's got to be one of these. It's got to be one of the weekly Aprils or the March monthly, because the April monthly does not have a 121.
Mm-hmm. But yeah, I'm not.
Either way, big premium, big IV.
Yeah.
Big swings.
9 days.
9 days.
The April. So do you have it on like that? Let's see.
Yes. Went for a short strangle at 121, so I assume it's on.
Yeah, I would take this and roll it to April. I mean, the 9 day stuff, it's just a little too hairy.
But yeah, either way, it is a high IV premium for a stock that moves.
Yes.
But yeah, so if you're comfortable with the risk, then so be it. But yeah, big move today.
Mm-hmm.
I think that is it. We're at the bottom of the chat. Again, if you want to check out the Adobe earnings preview, I've got that in the YouTube chat. I'll throw it in there again, but that is on the Tasty Live News and Insights tab. Get your Cherry Picks newsletter, full show.
Yes.
That's at the top of the YouTube chat, but we got plenty more content coming your way on tastylive.com as well as YouTube, of course. So stay tuned. But if you want to reach out to us on Twitter, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We've got 3 trade ideas for you tomorrow. We got the Players Championship. Golf is in full swing. Full swing.
Who do we got? We got Michael Kim.
Michael Kim's very scary because he's going to be chalk. But he's playing amazing. Doug Gim, Arlington Heights guy.
Yeah, local boy.
He sets up well. But I think Colin Morikawa is going to pull it off.
Okay.
He's just playing so well, and it's just... I'm actually fading Scotty. So that's my hot take. Fade Scotty.
The famous last words.
Yeah. All right. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
We are back. It is Wednesday, March 12th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, a CPI relief valve kind of day.
Came in a little soft, so I think it alleviated, a few concerns, but we're seeing some dip buying, especially in technology, so that's good. The question is the bottom in? So that's harder to say.
Is the bottom in? That is definitely the question, but we are finding some relief on the other side of this CPI report here on this Wednesday. The market reaction initially produced higher stock prices, and then we come back in only to rally again. We know that a lot of 2A vol has basically been the defining characteristic of this market recently. But where does this leave Fed cut odds after all is said and done? Because as you know, the CPI report does come in a little bit softer than anticipated, which is good news, both at the headline and on the core, both month over month and year over year. It's not an alarming drop off in inflation. Quite frankly, 0.2% month over month is basically where you need it to get to the Fed's long-term or medium-term target of 2% year over year. So where does that leave us? Well, we're not going to see an emergency rate cut in March. Those odds have dropped from 3% to 1%. Will we see the rate cut come in May? Unlikely. That's down from about 40% to about, 60%. I'm losing my numbers here. We are down from about a 40% chance of a cut to a 30% chance of a cut today. There we go. Landed on it. For June, though, we've calcified there at 98%. If we are going to see 3 cuts this year, the odds of a third one in December have backed down from about 94 to 83%. So net, the market is seeing this as a sign that yes, inflation is calming down, but it's not deteriorating in a manner that screams immediate economic fall off. And I think that is one of the contours of this report today, where if the Atlanta Fed GDP Now growth tracker was as true as it was claiming to be, then you would see a dramatic pullback in inflation alongside that deterioration in growth. And because we don't have that happening here, maybe, just maybe, the growth fall off isn't going to be that severe. Thomas, I ham-fisted that phrasing as we started this off. But when you look at the CME FedWatch tool, or you look at the cut odds today, do you find yourself seeing a market that's a little less scared after the inflation data?
Yeah, I think, there's two things for Fed cut odds, growth and inflation primarily. Growth is a concern that's coming down. If there was higher inflation, that complicates the Fed's path, even if growth is coming down. So lower inflation, lower growth, it gives them a little more room to maneuver in the future. And that is good for equity markets, especially those high beta names, technology stocks, which we're seeing a bounce today. Kind of the Mag 7, which has been really leading the decline. So it makes sense if we do, have a supposed bottom here, that the money comes back into the Mag 7 first. You can quickly see a FOMO trade play out, but I don't think we're at that point yet, and I don't think that would happen over one day.
No, and I don't think we're there quite yet either. Where the market turns around today in stocks before initially rallying back, I think, is a worthy discussion point. We see here in ES, the rally today brings us up to that 1-week moving average. We hit a high of 56.75 today. We're currently trading in, if we were to close here, 56.06. So this is not something that we should dismiss. Yes, the market's green today. Yes, we traded above yesterday's high. However, the defining characteristic of this downtrend since the close on February 20th has been that we have not been able to move back above the 1-week average on a closing basis. And I think today it goes to show how this has been that resistance line in the sand. So yeah, nice bounce here after CPI. It's faded off some. We're gyrating between gains and losses. The NASDAQ is up by 1.07% still, but you have your Dow and your Russell, which are still in the red. This isn't exactly the type of V-shaped bottoming reaction that one would hope for if the market was really finding its footing post-CPI.
No, it's not. There's also, if we stop the selling and get some consolidation here, you get volatility gradually coming down. Then this is something you could do where you sell iron condors, something like that. Try to capture a price range where you're getting a volatility contraction if you're not betting on, the upside. And after a sell-off like this, you're going to get a lot of people, trying to place their chips and catch the bottom. That's not really my recipe for trading this. I'd rather, do something like an iron condor, expect some consolidation. But again, just one day's price move on one inflation print isn't exactly the catalyst I'm looking for.
As it were, this market still looks like it has room to fall technically, ES. It is a 54.9 IVR, so volatility is coming in. That is noteworthy. The IVRs were in the 60s yesterday. But the double top target in ES still calls for a downside measured move near 53.75. How do we arrive there? 61.75 highs, 57.75 neckline. Take the difference, 400 points. 53.75. That coincides in an area where the lows in August were initially found. It's an area similarly in NASDAQ where if this is a double top, the lows in September are likewise found here, and we still have yet to move back to them so far. Could this be a bit of a morning star candlestick pattern? That's a 3 candlestick pattern where you have a big red bar, some sort of hammer or doji, and then a big green up bar. No, it's not there yet. You want to see at least a gain of half the loss of that first candle, and you're not there. And again, there's that 1 week moving average, Thomas. Right now that comes in at 19,792. The high for today is 19,788. So we really couldn't scale it, even with today's move to the upside. I think just goes to show, just like if this were a bull market with strong upside momentum, is this a bear market yet? Because there's a lot of downside momentum here that the market's behaving as if it is a bear market. I guess that's an important point to raise. If we look at the average or median stock in the S&P 500 right now, we're getting into the territory where the average and median stock decline has been around 20%. And from a technician's perspective, corrections are 10%, bear markets are 20% from the high, and a lot of individual names are already there.
Yeah, I mean, the individual names have been hammered a little bit more than the broader market. Tech stocks, some of the big names. I was looking at Amazon, Tesla, looking to see, I could take advantage of some of the volatility, sell some put spreads. I was looking at, didn't pull the trigger yet. I think a lot of this is going to have to do with, is this tariff uncertainty going to at least cool down over the short term? We're seeing that there's conversations that are happening, and yet you get these conflicting headlines day to day, sometimes hour to hour. And that's a lot to digest for the market. It's confusing for one, which creates uncertainty, and that's why we've seen the volatility expand so high, is because traders don't know what to expect. These prices are coming down. It's not really a fundamental shift that has occurred just from one CPI report, right? It does give the Fed a little more room to maneuver, but we'll have to see if this is just a short-term relief rally for a day or two, or if we're going to continue to stair step down. The 1 week moving average you pointed out, I think that's a great level to watch. I can still see some more downside to that August swing low.
The problem here, trying to pick a low right now, is that, yeah, you mentioned the news flow and the tariff headlines. Right now, we need to consider the fact that this market thinks that there's more to come, right? I'm just wrapping my head around the volatility here. 33 points that are changed, or at least on the board, plus or minus through the end of the session, right? Tomorrow, through the end of the day, 77 points. Through the end of the week, 94 points. The market thinks that this is still very touch and go. So at 94 points in the S&P 500, you're pricing in, just under 2% move, possibly through the end of the week. We have to be careful down here about picking that bottom. Like, as a momentum guy, I'm gonna miss the move unless we hit this, 53.75 level, at which point it just exhaustion occurs, and I have a reason to look for a bounce. The market needs to decide whether or not the Fed having the ability to back away from stagflation fears is the most important thing, right? Because I think there's a window there where it's like, oh, growth is coming down, but inflation's sticky and the Fed has to stay on hold, so help can arrive. But at least if inflation's coming and if growth concerns are percolating, the market can say, well, yeah, if the growth concerns do materialize, at least the Fed doesn't have to worry with a trade-off. Because cutting rates in the face of sticky inflation is going to lead to more inflation, as the conventional thinking goes. And so that's not a bind that you want your policymakers to be in, where they have to effectively sacrifice one of their policy goals to achieve the other. And it leads to a worse outcome for some segment of the economy. Today is a day where that's less of a likelihood, but it's one print, as you point out. And the market's not holding here. But again, 33 33 points to the end of the day today. We could be trading at 56.50. We could be back down 55.80 or so, and that's what the market's expecting. So let's not get too. I don't think it's worthwhile to get too strung up on this being the exact low when the momentum profile has kicked into place and pushed it lower off that 1 week moving average once more.
Yeah, and this is where if you want to take some bets, that's fine, but this is where you do it with a more strategic approach, lower risk, diversify across products, even diversify if you're trading only equities across sectors. We're seeing a lot of rotation now in the sectors. Consumer staples are they're down big. Those are usually more, they hold up a little better when recession fears are coming in. On the other side, you have technology up the most. You have energy leading with a bounce in oil. You have financials up. We saw the first downgrade from a big bank on the equity forecast. So Goldman Sachs downgrading their forecast. Some people in the market see that as, they're trying to, they've reached a sentiment low, and now Goldman is going to start buying equities. So they say to sell. That's one theory about why they do that. But it's all about how you take that. When have big banks flipped their forecast in the past? You've typically seen that near lows, right? So there's a lag to these forecasts. It's not like, they came out with the forecast just in the past 24 hours. They didn't all of a sudden do that. They've been, considering that for the past week or two and putting that together. And then, in the meantime, you sell off another 5%. So what does that mean?
I don't have a good answer. I've been staying delta neutral. Flat, right? I guess no short or long deltas here in stocks now. I've only taken 2 trades. I am thinking about what it would look like if a bottom comes together, though. Let's just say that we're not going to reach below 19K. We're not going to get to 53.75. In the NASDAQ today, Thomas, I'm pinning that level at 19,800. The open, the close yesterday, it's about 700 points wide. Half of that is 350. If you had 350 points from that closing level, that gets you to, we'll call it 19,800. Why is that important? That brings you back above the 1 week moving average. So if you were to close above 19,800 today, right, I certainly will have missed today's move. But then you have 2 pieces of technical evidence in front of you, a valid Morningstar candlestick bottoming pattern and a break of that downside momentum that's been in place since February 20th, where perhaps you could see a quick snap higher. You get another 300 points, and let's see what happens there. Maybe we can get another 300 points on top of that. We start to go into former range lows, and is that a place to then sell the rip, right? But there's something to do here, potentially, on the long side. It's not at this level. I want to be a little bit more conservative. I like a little bit more confirmation. Bridge hasn't been crossed. The Russell still seems like it's reaching for its namesake, Thomas, the 2000 level. It's a joke we're going to beat into the ground here on Futures Power Hour. High of 2079 today, now back down to 2028. For an index that's, leveled where it is, that's nearly a 30% move off the high. What do you make of small caps down here?
I think I said last week I'm not touching them. There's a couple reasons. Number one, if the tariffs are ongoing, smaller companies, smaller margins, less ability to diversify their supply chains. So naturally, they're less insulated from the impact of tariffs, right? And they're certainly reflecting the sentiment around trade conflicts and things like that. With the Fed bets easing up a little bit today, I would have expected to see a little more strength in the Russell, given that heavily weighted towards financials, especially smaller banks, credit unions, things like that, where they're more sensitive to the consumer rather than big banks that are making money on trading, mergers, acquisitions, IPOs, things like that. So, I think the Russell is reflecting a little more of the fundamental picture in the market, whereas more of the speculating is going to be happening in NQ.
Russell here is at lows that we have in place from June, from August. It's bounding around down here. This is the continuous contract. And RTY H5, we have already pushed down through those lows. So is this a place where we could potentially bottom out? Sure, perhaps. But we need to see something more to work with. Volatility is coming off the board here today, though. A high IVR of 71.1. We're now down to 51.8. And I think that distinction is important to note, because if we are going to see a bottom come into play, we probably want to see volatility come off the board a little bit. Again, that 1 week moving average here in the Russell, it's been in play since the 20th of February. It's just like everything else at this juncture. If you start to see it close above there, we have definable lows to work with right around 2K, which is nice. And you could start to look to sell a put spread with some at least technical basis behind it. You're not going to catch the exact highs in vol, but you have a little bit more confidence then that this at least initial thrust is lower. How long the bounce lasts, who knows? Is this a bottom temporarily? Is it the bottom? Well, we have no idea until, in hindsight. And, well, I'm going to be patient still.
Yeah, I mean, picking lows, picking highs, it's a hard game, right? If you're trend trading, you have something at least working in your favor. Potentially less reward from picking highs and bottoms, but more consistency over your trading.
Thomas, this is a shortened edition of Futures Power Hour today because we have truth or skepticism at the top of the hour. So we're going to do our duty and keep moving forward here and turn our attention to bonds, which they certainly had lost their rally earlier, though given this market, is that a valid headline still? It is. Bonds still a little bit weaker on today's session. We're hugging that 1 month moving average right now here in ZB. We did pop higher earlier, and we did even move higher earlier yesterday up above 118. We're now sitting back in the 116 figure. Vol is coming off here too. IVR low today of 43, high of 57, currently 46.8. Ultimately, I'm still holding my short put spread. Again, I like this market where we're holding up against that 1 month and against former swing levels where we had thin contract. But in November, this pivot that we have in the middle of December, we can see highs here at the start of February. And so right now, this is a position I'm comfortable holding. Same thing for ZN. If the market is really thinking that recession is possible, I'm going back to the longer term research. What we see is that since 1980, the long end of the curve has been the best place to hide out if recession is actually making its way through the market. Now, there is a question of the relationship between stocks and bonds here, because stocks and bonds for the better part of the last 3 weeks have effectively had a perfect positive correlation. It's been in the neighborhood of 0.93. That's to say, as the stock market's yields in stocks have had a perfect positive correlation. So as to say, as stock market's going down, yields are following in lockstep. Oil can be thrown into that mix too. The correlation between oil and yields has been about 0.9 on a rolling 1 month basis. So Thomas, the point I'm getting at is if we are thinking about a potential bottom coming together in stocks, then one also then has to surmise that it is possible, if those relationships remain in place, that yields drip back higher because growth concerns are fading.
Yeah, it makes perfect sense. The move is all about growth concerns over the past few weeks, especially with relation to tariffs. So higher stocks, higher yields. You probably want to structure your trading around that. Don't get too overweighted in a couple of correlated assets. Same thing with oil. Why you've seen it sell off. Growth concerns in the economy, less demand for oil. Prices have went lower. Oil up today with a little rebound in stocks. Oil is, of course, trending around 2% higher, doing a little more lifting than stocks are. I don't know if that says more about the growth story or if, that's more about the fundamental independent relationships between the two. Of course, you also got OPEC and things like that influencing oil. So there's different stories at play, but the overarching theme is growth here. So you have to surmise that, the stock rally is really going to take off when these growth concerns come off or at least ease. Avoiding a recession, that would, of course, do a lot for stocks, a lot for oil. But again, I don't think we're necessarily at that point to make a call there off just one CPI print.
We've seen that so many times last year, right? Where the market, because it was a bull market and you got a piece of data that didn't necessarily confirm the narrative, you had one day of action and then immediately, well, like inflation's a little bit warmer. I guess that means the economy's not falling apart from all these rate hikes, huh? That's not necessarily a bad thing. And you could kind of talk yourself into, okay, this is going to keep going on. It's just one day. And I think that's an appropriate approach to have right now too, right? Sure, inflation's a little bit softer than anticipated. Today, that seems to be a good thing. Tomorrow, we could wake up and say, it just doesn't sit right now overnight. We're worried about growth. We shouldn't want to see inflation weaker than we anticipated, right? The narrative can adjust. So yes, yields are bouncing up here a little bit today. There is a relationship right now between stocks and bonds. There's a relationship between bonds and oil. And so if stocks are able to bounce from these levels, one would surmise that bonds could perhaps see a little bit more weakness. So if yields do bounce up from here, Thomas, we see 4.15 back in the early part of December. That produces a swing up. If this downtrend is to remain, we probably shouldn't cross 4.4% in the 10-year. And if we start crossing 4.4% of the 10-year, then it begins to look a little bit different. It looks more like, okay, maybe yields are backing off of there. The market is getting fearful about growth. Is this a full-fledged growth crisis? No, the 10-year yield would be at 4.3% if the market was fully freaking out about growth. But it certainly has taken that perspective a little bit more seriously. Stocks have taken that more seriously. Again, one CPI print is not enough to cross that bridge for me, myself, and I don't think it is for you, as you've repeatedly said here, so I take you at your word, Thomas.
Yeah, and I mean, if you look at some recession indicators, you see the 10-2 spread. That's actually risen a good bit over the past 2 weeks. We were trending down there from January when kind of the sell-off in stocks started. Mid-January, we came off that high, traded lower in the 210 spread for, all the way until the end of February. Now we're getting a good little bounce up there. So, that's a closely watched indicator by a lot of people, especially when it gets towards that inversion level. About 32 basis points above it right now. So you're right. It's not a full-fledged crisis over, an imminent recession, but the fear is that these tariffs, trade wars will slow down the economy enough to where you're not getting these P ratios lifting in stocks, and you're getting a lot of money coming out there. Where else do you put it? Like you said, ZB, the best place to hide out. We've seen that come off a little bit. ZB coming down over the past week a bit. I think it continues to go up. This is actually a good place to buy ZB here, in my opinion, at that February swing high. So I was actually looking at selling a put spread, and I'll probably do that later today. But yeah, you have to be watching the headlines. Recession fears are going to be the biggest thing hanging over this market for quite a while. Do tech stocks rally? If those fears don't come off, that's what I'm concerned about. So I'd like to see more clarity on not even if tariffs are going to come off, but more clarity on just what the actual plan is.
Clarity would help. I think that's the big thing, right? We just need a direction. So what's the trade here right now? I'm with you. I'm holding my long delta exposure in the long end of the curve still. I need to see a little bit more to get me off my shtick that this is a bad place to hide out. I trust the data and what it's saying, and the data tells us that it looks like we're going into a growth slowdown. So long end of the curve remains appropriate. Short put spreads in ZB, long call spreads in ZN. ZN, of course, is the more approachable product for your average retail trader. It's about half the size of ZB. So if you're just into futures for the first time, make sure you check out those product requirements. And of course, if ZB is too big for you, but you really want to trade the long end, you can always go over to TLT, which is probably more manageable for the everyman, as it were, Thomas. And quite frankly, it's more manageable for me too, you too. So it's not just as trading professionals that we look at the futures, but depending upon where the volatility is and what we're trying to accomplish, this may not be the best place to articulate that view in this asset class. I digress, though. Let's turn our attention. We're going to go over to, we're going to fix this first real quick. Now that's fixed. Before we go over to metals, let's talk about the WASI report. That was yesterday, if I recall correctly. Last week we were discussing how when you came on here, and this still keeps wanting to do that. Last week when you came on here, we were talking about how the WASD report would come in between episodes. So Thomas, WASD yesterday, we're seeing some weakness here in the soft ags today. What's going on in the grain belt?
Yeah, the WASD, it wasn't a huge one. The U.S. soybean supply and use projections are unchanged. They lowered the average season average soybean price 15 cents, so a little lower there. They're seeing lower use for biofuels. So, soybeans used to make those biofuels. Not too much change. It just came out at the top of the hour, so I still have to go through a lot of the numbers. Corn, really no change there. Wheat, they're saying there's a larger supplies, unchanged domestic use, lower exports, and higher ending stocks. So higher ending stocks, ultimately, you take all those variables, exports, consumption, production, everything. Stocks are going to be higher at the end of the 24-25 season. So that puts a little pressure down on wheat. Soybeans, definitely selling off a little bit here. But we have a support level coming up. It's, do you buy into this rally yet? I'm not sure about that. Tariffs can be not put on by the U.S. because we export a lot of soybeans, but they can be retaliated. China's already done that, but they can do it more, right? They only added, I believe, a 10% to the current tariff level. So they've left more room to play with if they need to increase these tariffs more.
ZW up, ZS off, ZC all off today. ZC had a big pullback here in the middle of February once the tariffs became clear. It does set up a short-term situation where there could be oversupply in domestic markets initially. Thomas, I do want to make a quick note of here, the 10-year note auction. We were completely remiss if we don't mention it. Yesterday's 3-year auction wasn't great. Today's was, pretty good, all things considered. The bid to cover ratio is up to 2.58 from 2.47. That's great. That's just above the 6-month average of 2.57. So demand for treasuries here. That's good. Also, we stopped through. So higher bid to cover ratio stopping through. Check. Good auction for treasuries at the top of the most recent hour. But Thomas, we do want to turn our attentions actually here to metals now. Bonds and metals have been the two places where I've been hiding out for the past few weeks. So it's where I'm most interested in having a discussion. It's a good day for gold and silver, which is one of the reasons why I'm so interested in talking about them, believe it or not. Gold here potentially breaking the downtrend that we've seen from the initial February and March swing highs. We are punching up to a new monthly high here in gold prices. This could be a triangle breakout that's gathering place. Silver as well. We're seeing a little bit of a breakout attempt once more. Maybe we should be altering this a little bit higher to account for the fact that we did have some other highs. Nevertheless, metals are on the march. And with vol starting to come back in here a little bit, we can see that they're turning higher in silver, turning higher in gold now once again. That's something that we want to see.
Yeah, I'm still long gold. Probably getting long silver too. Silver's doing good on the China stimulus or the the economic targets that they put out. Gold, it's if you believe in the dollar going down more, gold is a really good play here. I think we break higher above 3,000. I think it's only a matter of time. If you look going all the way back to December, so for all of 2025, we've only had one down week in gold, and that was for the February 24th weekend. So that was a big down move. It was 3.5%. So a lot of the selling has only been concentrated in 1 week, really. The rest of the weeks are positive for gold. So it does look like the distribution is more to the upside. It's just about breaking that recent swing high from February that we need to get above. Then I think we run higher.
I think it's pretty miraculous for both gold and silver that over the course of the past 3 weeks where the market has been in an extreme raising capital mode, while they have endured a bit of a downside move, they have effectively been able to stay afloat, right? Stocks are down. S&P's off 10% from its high a few weeks ago. Gold is 1%. This was a market where people were selling everything, right? Bitcoin, Ethereum, gold, silver, oil, anything growth related. It was looking sticky out there, but gold and silver held their ground. So now on the other side of this, okay, maybe it's not going to be an immediate recession. Inflation's not falling off a cliff. The Fed could be cutting again, but does the structural threat of higher inflation remain at least upfront thanks to the tariffs? Yes. So gold now on the other side of it, seeing vol come back in. I'm still holding the 2950 3,000 call spread, the one that Jamal got out of at the midpoint of February here. He was out of this on February 24th before the pullback, and I have just held on and watched it go from winner to even to winner again. So I would like to see a few more dollars, Thomas, to get above my long strike. That way I can officially roll this out. That's not a problem I have in silver, though. There's 42 days to expiration. So this one will not be touched this week. I'm curious if you are looking at both of these with fresh eyes, which one is the more appealing setup to you right now?
You know, a week ago I would have said gold. I think silver being on the cusp of breaking this support right here is a little more enticing to me. I sold a put spread in gold. I probably should have bought a call spread, seeing as how volatility expands usually when gold's going up. But I do really like silver here. If it breaks above that previous resistance level, I'll probably be buying some so we can attack that October high. But precious metals, I'm bullish on both.
I just saw the most, well, not the most interesting headline. I just saw an interesting headline that I think is worth bringing up here, unrelated to gold or silver. Senator Rand Paul is going to vote against the GOP spending bill, which raises shutdown odds. We'll share the data tomorrow on what happens for equity markets during the shutdown. I didn't think this was even worth discussing this go around because Republicans run the board. Why would they want to shut down the government? But in the event that it does shut down, it's one of those things where as a trader, you really don't need to worry about it, despite the news headlines. It's not that kind of set of news headlines that typically yields, extreme market reactions. In fact, I believe if we go back to 1976, the average government shutdown has lasted 9 days, and the S&P 500 has added 0.3% during that time. So among all the headlines to almost ignore and avoid, that's the one. But if it does come about, we just want to review why it is worth ignoring. Historically, markets don't really react to it. And so you really shouldn't react to any of the headlines either in that particular regard. So we'll share, we have the seasonality that we're finishing up today for overtime. We have this, we'll bring up the shutdown market performance as well. So some interesting things here coming out over today and tomorrow's programming with Futures Power Hour and Overtime, Thomas. But let's turn our attention back to silver and back to gold. SIK 5 here up to 1.88%, copper up 1.94%, and testing the top side now of its consolidation over the past few weeks. Somewhat noteworthy, we see here that we did touch a new yearly high here today. A few weeks back, Thomas, last week, took new long entry. I guess it was the 4th. So yeah, last Monday, took a new long entry against that 1 week or 1 month moving average. And that has been the cadence of this trade this year so far. We rallied through it in January. We pulled back to it, hang out there for a few days. New highs, pull back to it for a few days. This may be a new high. So if there is another opportunity where we can get a pullback to the 1 month, the technical setup here still looks supportive, still looks constructive, looks like a longer-term downtrend's broke, looks like former swing highs that we have in November and January have served very robustly as support. This looks like a bull flag. So long delta exposure here in copper is the appropriate play as far as I'm concerned.
Yeah, I mean, there's a threat of copper tariffs, which is kind of creating an arbitrage into the U.S. right now. If you look at the spread between LME copper and COMEX copper, U.S. copper is trading at a 10% premium to London. So, that incentivizes people in the U.S. to bring physical copper into the country in anticipation that these tariffs are going to go on. You front load that supply. So I think that's working into some of the upside right now in the price.
There are 43 days to expiration here. It is a short put spread, so it does not have the convexity of the previous long call spread. Nevertheless, gain is a gain, and it's going up at a time when the temptations, the siren songs of buying the dip in equities are calling me louder than ever, Thomas. I'd rather have this short put spread on right now and keep some capital tied away in something that's working than just jumping with 2 feet and try to buy a dip, which, I've been good about not doing so far. And until the conditions are met to do so, I will be there. But otherwise, I still see a line going up. Copper hit a new yearly high today. That's nice. Do you think that there's a compelling China story to all this? I know, we've skirted around it, but is stimulus real this time?
Yeah, I think it's realer than it has been in the past. Since the past 5 years, COVID, we've gotten these stories that says China is going to do massive stimulus, actually geared towards boosting domestic demand, things like that. It could play out that way again, but it looks more and more likely that, deflation in China is happening, economic stagnation, especially in things like real estate and stuff like that. So if they come out with stimulus, especially if it's geared towards, propping up those ailing industries, that is really good for copper because China is already the largest consumer of copper. Stimulus measures targeting real estate, domestic demand, that's going to naturally increase that need for copper more. So I think that's a bullish story right there with copper that's going to help it quite a lot. At the same time, technically, the chart looks pretty good. This is about as good of a chart as you could ask for in copper over the past few years. And I think we continue to go to new highs above 5.
Hopefully you are right, Mr. Westwater. Hopefully you are right, at least for my sake right now. And when I'm out of the position, if you're right or wrong, it doesn't matter to me. But then we turn our attention to oil, which is bouncing here today. We talk about the relationship between oil and natural gas, or rather oil and equity markets and bonds. Oil is up 2.28% as stocks are beginning to get some legs underneath them here, now all green across the board. This would be the first move back above the 1-week moving average on a closing basis this month, which I think is noteworthy. But it's coming at a place where we've seen some lows carved out historically, at least going back to late September, and vol starting to come off the board again. The IVR was above 30 for a second day in a row briefly. Thomas, I guess my question is there enough to work with here to sell a put, or would you rather wait to get a rally and look to take a short position?
So I'm long copper right now, long oil right now. Got long a couple days ago earlier this week, so this move is helping me a lot. Yesterday, we actually talked about this on OTCL. We looked at the prompt spread and how the prompt spread influences the crude oil price. Now, there's a codependency there because the prompt spread, the front month contract, which is the crude oil price, is also influencing that prompt spread. But, what you see is if the prompt spread is at 38 or 39, wherever it's at right now around there, the crude oil price actually should be around 77, if you exclude the other factors that influence oil. And the prompt spread at that R squared value is about 68%, meaning that about 35% of other things do influence the price of crude, but a large portion is that prompt spread, which is indicative of physical demand, you could say, in the oil market complex. So that is good, seeing as the prompt spread hasn't fallen as much as you would expect given this sell-off in oil. But, it's still, technically it's in a really vulnerable spot, dripping below, those support levels you have outlined on the chart, which you could get a lot more downside there, especially if those economic recession fears increase. So today, the CPI influencing it a bit. The EIA numbers, we showed a build in stocks, but not as much as analysts were expecting. So that's also helping a little bit right here. Ultimately, I'm going to stay long oil for a bit here. I think we could move a little bit more to the upside, perhaps 69, maybe even 70. I'd take my position off if we did get up there. I don't see a huge run going back up to the levels we were at earlier in 2025, around 77, 78. I don't think we get up there, but OPEC saying they're going to bring more output onto the market in April. Then you have some people within OPEC, Russia particularly, saying that they're going to consider other things like bringing overall production down later in the year. So that would be a positive for crude oil. But again, it all comes back to these tariffs and how they're going to impact growth in the economy.
Yeah, crude still.
It's a tough one.
Natural gas, I don't have any position on right now, but I know there is someone who's loving today, and that is one Jamal Chandler. 2 days ago, Thomas, we got that 10% pullback off the highs. Yesterday, doji candle. Today, we are off by 6.7%. So hopefully our Tuesday and Thursday co-host can get out of this position that he was trying to manage. And he said he thought that it could get down to like 4.1, perhaps even today. So good luck there. That 1 month moving average, though, right? We bounced off of it very neatly as we coincide with that high in January. I couldn't get in there. First pipe. So I missed my trade. However, this feels like a second opportunity coming up if I want to get some long deltas in natural gas. Is that chasing at this point, Thomas? Did I miss my trade? Is the trade over?
This is a really hard one. Natural gas, especially at the beginning of the week, it made that huge jump up, got near 5, pinged it, tons of selling there. Came off right away. LNG flows are still strong. Production in the U.S. trending around 107 billion cubic feet per day. That's on the higher side relative to where we've been over the past year. I don't know. I sold a call spread 4.3, 4.35. I'm doing good on it today. I'm still at a small loss for the position, about $30. So I'm hoping for a little bit more downside. If I get positive, I'm going to take the position off and just wait it out a little bit. This trend is higher. I don't think we get back near 2.8 trading around there. I think we come back around 3.8, 3.7 maybe, and then we kind of stay there for a little bit going into the summer. We're coming out of withdrawal season, April 1st. You typically start building stocks. Europe has a lot of work to do this summer on building up their inventory. They had a cold winter. U.S. had a relatively cold winter. U.S. stocks are trending below the 5-year average. So, constructively, this is a bullish market for natural gas. I think you do buy the dips here. I'm going to get out of my short position, and then I'll perhaps look at getting long, especially if we drop around somewhere 3.4, either, under 4, 3.8, I'd maybe look at getting long again. But there's a lot of moving parts here. You got to be watching the weather, production figures, LNG flows, the arbitrage to Europe, which is signaled in that spread between the U.S. futures and those Dutch TTF futures. But this is a bullish market, so you got to be careful if you're selling, and buying the dips is probably the thing to do here.
Natural gas storage in Europe right now, it is bouncing up a little bit. I mean, the inventories, the drawdown continues, but it's not like we're about to overtake the places where we were in 2021 or 2022. They are still talking about potentially changing how European countries are allowed to refill their natural gas over the coming months, and that could potentially have some bigger supply concerns. But again, the tariffs that go into effect last night, steel and aluminum, we've seen reactions in this market over the past few weeks because of some of these tariff headlines, and natural gas has been front and center of that, right? Just as much as any individual equity that's tied to a specific sector, like the steel companies have been doing very well during this market downturn because they're going to be able to charge more for steel, right? It's not like we're seeing more plants open up. Companies are just raising their prices right now because there's a global market here. So any event, we turn our attention to FX markets, Mr. Westwater. De-dollarization, is it continuing? I got Ilya's take on this yesterday, so for the sake of queuing up a conversation with me, you, and him on overtime later today, Do you see this as a market that is questioning the dollar's role in the financial system now, given the way our new policy is set upon?
Yeah, so I'm looking at getting long the euro. I wanted a bigger pullback around 1.08 on the euro. The yen, I think, is a good long too. BOJ is going to be increasing the rates. Europe looking at cutting, but now it looks like, you get this German defense infrastructure package. So that kind of complicates the ECB a little bit there. I don't know. I do want to get long non-dollars, but I'm waiting for a little bit more of a pullback here after this run-up. But again, I could miss this move, and that's okay. The price action is certainly telling us that dollar has found a top. These kind of moves are pretty big in the FX market. When you look over the past week or two, you don't really see this too often. So that's telling you something, right? It's telling you that there's a shift in, the global trade, global economy, way things work, de-dollarization. So I do think we get a weaker dollar through this year, but I'm not getting long non-dollars right now.
The yen is pulling back here today a little bit. We ran into the highs that we had back in early December, 2 sessions ago and yesterday. Does this mean that the uptrend is over? I think far from not. This 1 month moving average catch point in January, in February, thus far in March. It's been the backbone of this very orderly advance, stair-stepping up. I would point out here that this is a market where former swing highs are being respected as support on the way up. And we're seeing that here once more again today to a certain extent. Now, to that point, JGB yields at the long end of the Japanese yield curve last night hit their highest level since 2006 in Japanese trading. U.S. yields, yes, while they are a little bit higher here today, we now have weaker inflation data. And the market's been in the throes of a growth scare. Chances are interest rate differentials continue to move favorably for the yen. So I see this as a great opportunity. Volatility has come in. In fact, I've been trying to look for the right way to structure a trade here in that same sense of a 007 call spread. So long the 007, short the 071, risking 1 to make a little bit more, well, almost 4, Thomas. That's, I think, what the appropriate way to have some yen exposure in your pocket is right now. I don't think we should ignore what's happening in Japan, because while everything is focused on the US and Ukraine and Russia, the fact of the matter is that JGB yields are at their highest since 2006, and that's not nothing.
Yeah, it's all about the yield differential for currencies ultimately. I called a long Japanese yen forecast last year. Turned out to be really long. This year is looking like it is going to happen, where you get the higher rates in Japan, lower rates in the U.S. That's constructive for the dollar to weaken, the yen to go up. So I think you're right. I think a call spread is probably the way to play it here.
The Canadian dollar is a laggard in today's session. Worth noting that Canada has been in the crosshair for the tariffs. The tariff reaction at the start of February was much more severe than where we are now, and even with tariffs being implemented, we're not even able to find those new lows. It's a 92.4 IVR, Thomas. How much worse can this get? Right? Are we closer to the stages of escalation, or do we think that we're closer to de-escalation? Tomorrow, there's a meeting between the Ontario Premier and the U.S. Commerce Secretary in Washington, D.C. We've already heard how there's some angling to get the early groundwork of the USMCA in place, a renegotiation in place. That's set to expire next year. A statement to that end, like the U.S. and Canada have agreed to withhold any further tariff increases while a renegotiation of the USMCA is ongoing. Uncertainty gone for a little while. Okay, now this looks like that 4D chess that we've all been promised. It looks like this was all a tool to get to a better trade deal, and it actually happens. But if that's not the case, right, this is just capricious and arbitrary, the Canadian dollar has a lot to be worried about. So small gain off of 69. We can point here, Thomas, we'll go to 58 days out. Recent swing lows would put selling a put spread down here. I think we could go 68, 69. You're risking a little bit, not 1 to 3. Point is, you have to be careful. You're going to be trading the Canadian dollar. It feels like the market is doing what it did in January, where you go, let's see what Trump really does, even though some of the tariffs are now in play. But if there's going to be a reversal off of all this, Canadian dollar is going to be the place to look. Forget the euro, forget the British pound, forget the Japanese yen. The loonie is going to price out this extreme tail risk moving forward if we know that a renegotiation of a trade deal is actually transpiring.
Yeah, and who knows if that's going to happen or not. You just have to watch the news flow.
Just got to watch the news flow, Mr. Westwater. Yeah, that's it. We have Truth or Skepticism coming up here today, folks. So what's next on the calendar? Tomorrow, PPI, initial jobless claims. Both of those could be important. CPI today, is it having staying power? One could argue not. The market could be reacting to the headlines otherwise. But another day, another dollar. Binary events. That's what we end with on an education note here, this episode of Futures Power Hour. We are running into our ceiling because we have to make way for Sosnoff and Radigan. So I would encourage everyone, go to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. Or you can click the link here on the bottom of the slide. It will take you there directly. That's the point. Josh, we're done. Let's call it a end to this Future Power Hour episode. Thomas, I'll see you later. Hopefully, perhaps. But I'll be back on Overtime with Ilya and Radigan, so be sure to tune in. But before we get there, there's so much Tasty Live programming coming on the way. Up next, after a brief break, it's Wednesday, Truth or Skepticism time with Radigan and Sosnoff.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on one second. My last day, early in the morning, I'm washing my hands in this place, like this communal shower, bathroom area. And the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. I'm listening to what he's listening to, and I hear your voice.
Why didn't you go knock on the door and say,
he's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here?
What do you want me to do? Hey.
Right, autograph session happening right now.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Today's Kashmir Pulaski Day. So
I know you forgot the pushkis. I brought you cherry pie. What do you want from me? Yeah, it's tomorrow.
You're conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. 2 separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat Tuesday. When is it ever
Fat Tuesday? Fat Tuesday's never on Thursday.
My chili is so spicy, it'll burn your face off. Yeah, that's not good to me. Like, I like spicy stuff, right. But just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it.
Actually, if we're going to get after it, your chili does suck. We'll leave it at that.
Oh, my God. I can't listen to you guys. Good. You're not getting any more. Either you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure.
I think it has.
Yeah. I don't think it's replicable and like a general population, but I think for you specifically.
I got another one, Sadnov. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, Bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank, so I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't even know the Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those two guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sadnov, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
A major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Hello, everybody. We are back. It's time for Truth or Skepticism. I'm Tom Sosnoff. He is Dylan Radigan. And y'all ready, Dylan?
Listen, like I told you, yes, these have just been my first few days in the great United States that are America under the new executive leadership. I was outside of the borders of our nation state prior to the inauguration. So this is my first time as an American passport holder and a land-born American to participate in this fine new administrative state that we find ourselves with.
Well, as long as you don't protest anything, you're okay. We'll let you stay.
Look, we don't even know. I mean, I read the paperwork on that kid out of Colombia, and it was like the Secretary of State doesn't like you, basically. So, I mean, that was the sort of reason. I feel like they could say that about just about anything. They might just decide they don't like my glasses. I mean, you can't know. You can't know.
They have to like your glasses because they're iconic. They're Harry Carey approved. So we're good.
So there's a Harry Carey grandfather clause.
I don't think you can get away with that in Chicago because I think in Chicago it's
too literal.
Yeah.
It's too close.
It's too close. It's too close. It's too early. It's only been a decade and a half. It's too early. Harry's kind of in this city. Harry's kind of like he's like in that top 10 godlike status.
Like, how does he relate to Ditka? Like, if Ditka is
no. It starts with Jordan, and after Jordan,
it's probably goes Jordan, Walter Payton, and then Ditka. You know, Ditka's,
Okay, what about the Pope?
No, the Pope's further down in Chicago. It always starts. It's Jordan and Payton.
Jordan.
It's Jordan and Payton 1 and 2 because Walter Payton is just, you know, Sweetness is a Chicago icon, and but Jordan is Jordan because he's got 6 championships, and then they go to Ditka because Ditka's just kind of epitomizes Chicago, and then I think Harry's in the, you know, he's in the top 10 somewhere.
But is Harry in the top 5? Would you put him at 4 or 5?
Probably not, because in my world he doesn't jump ahead of, like, you know, some of the, you know, some of the
Jim McMahon.
Yeah, Jonathan Taves, you know, like there's certain Chicago athletes that, you know, Pippen has 6 rings.
So Harry Carey's like between 5 and 10. He's right up there. The point is, I'm as a Chicago field lieutenant, be it in Milan or New York or wherever, it's perfect.
Yeah. So anyway, so we got lots of topics today. I'm open to going all over the place.
Okay.
And because I think there's just so much crazy stuff going on and so much stuff going on in the markets. And I don't really want to talk about the markets because I think, you know, on this network, we talk about the markets all day long. So we kind of beat that to death, you know, just it is what it is. But I was looking, you know, through lots of different topic ideas and on one of the publications that I read, they talked about kind of this post fact-checking era that we've kind of entered, like, you know, and I found that to be a really fascinating conversation because it was mostly geared towards, this wasn't like a executive office thing. This was more of like a, you know, meta starts off with a, you know, with a meta backbone and then what works its way down through, you know, through everything else, whether it's, you know, Twitter, just a variety of different
the community notes, where no one checks anything, but the fact checking mechanism is the
fact checking mechanism is
notes?
the community, like on Twitter, you know, is that work? It doesn't work, but then, you know, where's the obligation to fact checking? Is there an obligation to fact checking? And then, you know, where do we draw the line with various social media platforms, the streaming platforms? You know, I mean,
I think that ship has sailed. I mean, the only 2 places that I can think of where facts exist anymore is in financial reports and sports scores. You can't claim the Knicks won when the Knicks lost, and you can't claim Tesla sold cars when they didn't. But if it's not a financial report and it's not a sports score, you can literally say anything you want. And I think that's I believe that ship has sailed. I mean, you could try to reinstitute it with the section, whatever I forget the name of the law. It's like section 259 or something. There's some.
No. I'm not even referring to reinstituting it. I agree with you. That ship has sailed. That ship has sailed, and for whatever reason, you know, I think a lot of it is, a lot of it started on a political level, but that ship has sailed. The question is, what does it mean? Like, how is that going to impact our lives going forward? And how much does that mean when it comes to when we start to talk about the integrity of different platforms, of different markets, of market structure, of everything else that we do? At what point, you know, there needs to be, I come from a world, in the world of finance, I come from a world where everything that we did in the open outcry world was all basically an honor system. As soon as one person didn't honor their trades out of hundreds of thousands and millions of trades, then the whole system falls apart. It can't be that much different for every other work and business environment. And it can't be that healthy culturally if facts don't matter. And so,
and I think that what's yeah, okay, I'll let you finish your thought.
Well, no, so all I'm saying is that if we don't check it, if we don't stop it early on, okay, there will be no stopping it. There'll be no way to stop it. You can't have a community oversee everything. It just doesn't work that way. And so then at what point, how does that impact business? It just can't be that way. How does it impact business? How does it impact everything we say? How does it impact how we promise? How does it impact what we teach? And that's what's the scary part. I'm not suggesting, we're already there. Now what?
And so now I would say that first, the things that are still reside in the world of fact become more valuable because facts are harder to come by in general. And so whether they're financial agreements or whether they are employment agreements or whether they are athletic results, they take on more value. Obviously, the political domain is the one that is the most vulnerable to a factless universe because leadership emerges without any factual basis of any kind. Like I can't, like I said, I can't become the captain of the Chicago Bears by telling you that I'm the greatest quarterback ever. Like I actually have to go play quarterback in the NFL and be better than other quarterbacks as a matter of fact. But I can spin up a colossus of lies about my qualifications in social media and become the next president of the United States without any foundation in anything that happens. So the short answer is the risk is entirely political, that the biggest risk is political. The value is in financial and athletic insofar as it's seen as more trustworthy, and that the ultimate result is that the cost of building new relationships and creating new agreements and new partnerships goes up, and the value of historical partnerships and historical relationships also goes up. Because if you have someone that you know that you have as a vendor or a business partner or an investor or whatever from the past, that becomes very valuable because you don't have to deal with a new person who lives in the world without facts. And if you want to move into a new relationship, new agreement, new vendor, new reality, that the cost of the due diligence done correctly has gone up substantially. It used to be that the keeper of facts and information was a combination of the large newspapers, the large news organizations, shall we say, and parts of the government agencies, the government data, like the government, the Treasury Department or whoever issues the data. Basically, the news industry has lost all credibility for fact, which has been a function of its own doing and a function of, I believe, an organized effort to diminish the perceived reliability of it. Because I believe it has political benefits to those who have diminished the credibility of the government and the news organizations, is it allows them to acquire more power without being held accountable. The beautiful thing about a no-fact world is there's no accountability. Because even if whatever you may have said or not, and so that in a world without accountability, fraud and corruption go up and the cost of new relationships is higher. But also the value of existing things that have integrity, whether it's relationships or business relationships or anything else, also is much higher.
I don't disagree with any of that, but I think that the fraud piece goes much further. It goes into, worlds where if you combine the absence of facts with the absence of regulation, in a world we're clearly downsizing regulation on so many different levels. So if you lose the facts and you lose the regulation, then who's to stop the Sam Bankman-Frieds of the world? So it does.
No one.
I understand. So it's not just politics. It gets into things like business where you start to explain, I thought this was my money. I mean, I'm simplifying it, but it goes, it's much deeper. It's much more extensive than simply just talking about politics, because the Sam Bankman-Frieds of the world, in a world of no regulation or much less regulation or downsizing regulation, combined with the absence of facts, or alternative facts, you end up with it becomes. I'm not sure how, as a consumer, who to believe or what to believe, and so it does become challenging in that sense. You are susceptible,
which is more similar to Russia or Italy, where you only do business with the people that are in your family, because people outside of your family can't be trusted.
Okay, so now you're getting to the crux of what I wanted to start with. If we go in the direction of Italy and we go in the direction of Russia, there's a reason why those economies have no value. There's a reason why those economies are dead. I mean, Russia more so than Italy, but there's a reason.
No, it's a progression. It's a progression.
It's a progression, and there's a reason why.
Extreme.
There's a reason why all over the world, including many of the corrupt political systems in Africa, including many of the corrupt political systems in Asia and South America, they don't have the monetary structure, the financial infrastructure that we have, and the giant pool of liquidity. What we're doing right now, in the absence of fact checking, is, and this was my whole kind of the reason for bringing up this topic, was we are putting at risk way more than our political system. We are putting at risk a lot of stuff that we built up, a lot of the goodwill, it's not even just goodwill. It's goodwill, and it's strong, a fundamental foundation of the structures that we've put in place that make this country so valuable. That's the dangerous thing. And then, when you get, there's another side to it too. There's also the massive concentration of wealth, which you're able to accelerate, but the absence of fact checking allows the wealthiest few to actually accelerate their growth, their own net worth, at a pace that they can't do in the world of fact checking. So, because it gives them a lot more velocity to the way that they acquire wealth. So what you're doing essentially is you're taking the wealthiest people in the world and you're giving them almost a free pass. And at the same time, you're essentially like eating away at the foundation of everything that we've built for so long. That's the problem with fact checking. It's not some idiot politician makes it to become a congressperson or a congresswoman, or a senator or whatever it is. That's a little tiny piece of it, or even the presidency. But it's the fact that it starts at the top and it works its way down and it filters through all the different business cycles, and you do end up in a situation where nobody can trust anybody because of the rampant fraud. And then you end up like Russia, you end up like Italy or any other country like that. I'm not just picking on Italy, but anybody. And that is the problem. It's not just isolated to the president. He might start things, but it's not isolated to him. It's everybody.
No, it means that the culture of every business transaction between strangers is now either not viable or really expensive to consummate because of the underlying lack of trust that anything that you mean that you will do or say, anything you say means anything.
Everything moves to cash. It's a disaster. It's the
Do
whole.
you really own that building? Are you really qualified?
Yeah, the whole thing.
I don't know.
What drives America, and what drives our economy is the fact that we've built this market structure that works around very efficient pricing and very effective leveraging. And as soon as the trust goes away, there's no efficient pricing, there's no leverage. And then you just become essentially a cash-based society where, it's everything is peer-to-peer, everything is, nothing is centralized. Everything goes peer-to-peer. Everything is just done for cash. That's the way it works in places like Germany, places like Italy, just countries like that, and lots of places. Just because there is nothing centralized to make sure it all
I don't
works.
trust you is the underlying principle of all transactions.
Yes.
And you cannot be trusted. And so I agree with everything that you're saying, and that basically that's a huge sort of economic regression or move into the past. But for the following, the future, if you believe in the decentralized blockchain, Bitcoin super world, is the future and the past come back together, where everything goes from peer-to-peer cash-based. You know, if you're married to my cousin, I can trust you. If you're not part of my family, I can't do business with you. You know, from the past or from these non-American environments to a future world that actually that the collapse of all trust forces the blockchain adoption mechanism faster and the blockchain adoption and implementation becomes more rapidly it's more rapidly accomplished because of the absence of all fact. Otherwise, it would be the silver lining version of this, which is that okay. I mean, it's a stretch to call it a silver lining, but it's catastrophic. I mean, for my generation, for your generation, for whatever 2 or 3 generations of Americans, to forfeit the integrity and trustworthiness of the American culture and information marketplace, where it used to be if someone says they're selling a car, I believe that Tom is selling his car. Like, I don't think to myself, is Tom really selling his car?
It's catastrophic to my generation because we've never had to deal with this before. It's probably catastrophic to your generation, because you never had to deal with this before.
It's adjacent.
But
exactly.
there are younger generations that have never known anything different. So it seems normal to them. And hence the reason why a community, essentially community fact checking, or seems more normal. But what's not understood is that life is not a social media platform. You're not going to, YouTube is not going to run the world. YouTube's not going to run the world. Twitch is not going to run the world. I mean, talk about streaming platforms. It's YouTube, Twitch, and then everybody else. And then these platforms are, Facebook or whatever you want to say, fits somewhere in there. Another social media platform or Twitter and everything else. That's not how you want the world to run. I don't like that. I mean, I don't think anybody does.
No, well, not only that, but I mean, it's like, if you consider growth, the reason Wall Street was invented in the first place was to allow people with money to invest in other people's ideas to create, these companies to do things, right? It was a way for third-party money. And so think about what a chilling effect third-party investment takes on in a world where lying is the default location for all information exchange. Lying is seen as like the standard business practice.
I mean, part of it's lying, part of it's the anonymity of it all. So you can create information, news, rumors, whatever, by being completely anonymous. And so there's a lot of risk in that regard. Now, here's the thing: none of that's going to change anytime soon. So what we have to be careful about is that we at least understand it and we bring it out so that it's a discussion topic, so that there's two-sided, there's two-sided chatter, there's discourse, that at least it's on the table so people understand the risks. So it's not like, oh, I didn't even realize this was a risk. Like I think it needs to be out there, because one of the things that one of the areas that politicians are most ineffective in is understanding how markets work and how capital's raised and all that kind of stuff. The whole financial system is something that most of finance is truly illiterate. Most of politics is truly illiterate about. And so we have to be careful that all these correlated risks don't end up, coming back to bite us in the ass, because it's not just a one-dimensional topic. That's, I guess, what I want to say. None of this
is. The financial markets are affected right now by the cultural migration to a world of factlessness.
Of course, absolutely. I mean, it's probably the biggest drawdown right now is the fact that, since we've gotten away from facts, people are just making up whatever they want to make up about the current economic situation. Oh, tariffs are good. Oh, tariffs are bad. Oh, tariffs are going to be okay. Tariffs will have no long-term negative effect. Tariffs will have a huge long-term, everything's just made up. And it just starts with that, but it's 1,000 other topics. And that's just on.
Right, but if everything is made up, does that basically just means that the multiple on all stocks is less?
Well, it just means that you take stocks lower in an effort to take some of the risk off the table. And that's essentially what it is.
Mm-hmm.
So by taking, the market sold off, let's just say, I don't know, let's say it sold off 10%. It probably is not quite 10%, but let's just say the market sold off 10%. So what you're doing when the market sells off 10% is you're taking a significant amount of risk premium off the table. That's all it is.
Mm-hmm.
So the market's making an adjustment for everything that's going on. And the market has to determine what is a reasonable adjustment. I mean, ultimately, it will come back to some kind of, foundational number, and they'll figure out, some multiple of this and that, earnings and everything else. But the reality in the short term is it's all emotional. So the market just makes these emotional adjustments to what they see going on, which they think is a discount for whatever kind of, for however you have to degrade based on integrity. So you're basically degrading integrity, and then you're making a marketplace adjustment, and you're factoring in.
Do you think that do you think incidents of fraud go up in a world where
100%
less integrity?
100%.
Even smaller incidences where it's like the broken windows theory in reverse.
Yeah, I mean,
it's one thing for.
Yeah, you're always going to have the Bernie Madoff criminals out there because that's something that you're cooking the books or something like that. But I think Bernie Madoff is kind of like one situation, but then the Sam Bankman-Fried thing and some of the crypto exchanges is a whole nother thing, because that was more fraud of disinformation. That was eyes wide open, and they did it in broad daylight, and that's a different situation. Bernie Madoff didn't go down kicking and screaming saying I didn't do anything wrong. He's like, crap, I got caught.
Mm-hmm.
Sam Bankman-Fried said, oh, I didn't do anything wrong. I mean, basically all the way to the end, I did nothing wrong. Everybody made money, blah, blah, blah.
Mm-hmm.
I sold $10 billion, but I didn't do anything wrong. And that's the difference. That's the alternative facts.
And is that because you think there's like is this a psychological phenomenon that do you think that's like where people actually start to believe? Like Bernie Madoff, to your point, when it came down to it, knew what he did was morally wrong and legally criminal. He turned him. That's why he's like, he turned himself in. He didn't. He pled. I mean, he was very clear about the fact that he was self-aware enough to understand that what he'd done the previous 3 decades was legally not allowed.
Yeah, of course.
And was morally not looked well upon by society.
I mean,
you get the sense that, whether it's some of the Trump things or whether it's this Sam Bankman-Fried things, or even what's her name, the biotech girl, the fake blood test girl, that they've actually are so deep in whatever their mental condition is.
This past weekend, I wrote about the fact that all the goodwill that we've worked up has gone, but that's only the tip of the iceberg. One of the real challenges for us as a nation is, and this is the area that this all leads into, is one of the things that makes America really special is that we're a very trusting people. And one of the reasons that our economy grows the way it does is because we believe in other people, where the rest of the world doesn't necessarily think like that, but we do. So we're willing to make a deal. It's the whole concept of a handshake, right? It's a trust.
And my predisposition is that I trust you until you prove to me I can't trust you.
That's right.
As opposed to I don't trust you until you prove to me I can trust
That's
you.
exactly right. But the reason that we have the kind of growth that we have is because people, we are trusting. Our society is one of trust. We built this country, and we grow on the concept of trust. Once that goes, that's the engine. That's the backbone, is trust. Once there's no more trust because you can't believe the facts or what anybody's saying, then everything is, nothing goes punished, nobody gets in trouble, there's no regulations, whatever it is, then we have problems. That's what I'm nervous about. That's what makes me most nervous. I mean, on the one hand, I don't like destroying, a century of goodwill. But on the other hand, this trust thing, this is something that, let's not discount this. Let's not say that this is all bullshit or, this doesn't matter, because it matters. We built all our businesses on trust. Trust between this company and our customers. The trust between this company and you and everybody else. Everything's based on trust.
And if I want to refund something that I buy a handbag, I can get a refund for that handbag, whatever. Like, there's just basic expectations of an experience that is rapidly declining from everybody's availability. I think it's reason to reduce growth expectations, to take it back to the, and I think that the market is right to be lower.
Hence the market is lower. I mean, that's what it is. And I think that's something that nobody factored in when we changed administrations, is that, granted, I know a lot of people didn't like Joe Biden and whatever, thought he was, senile and wasn't even there anymore and all this stuff. But there was never a trust factor. The challenge we have now is a trust factor. And the question is, how much is the market going to discount on that level of trust? That's really all it comes down to. At what point do you say, okay, now here it's worth the risk? And maybe we're there. Maybe it was a 10% haircut.
I don't know, because I feel like counterparty integrity. It's one thing for me to price inflation or probable or employment or all the things that sort of normally get priced on a micro or macroeconomic basis. But when I'm pricing counterparty integrity risk.
But you'll never do it. You don't do it. I don't do it. The market as a whole does it. So it's everybody together. It's the totality of all that money.
But I'm saying when the market is pricing counterparty integrity, that's the crash of '87. Yeah. That's 2000. Like, all that is counterparty integrity at the end of the day.
Yeah. So
whether it's '87, whether it's '08.
Yeah, totally. And the best example we have recently is China. When the Chinese government essentially decided to wage a very similar war, how much equity did they take out of their, of their markets, and
at least half, right?
Pretty close, maybe even more in some cases, And that's not just the stock market. That's the real estate markets. That's everything. They almost cut everything in half. Now they realized, oh, this was a huge mistake. Trust and integrity is way more valuable. They realized trust and integrity. That's why they say now, oh, we're going to focus on growth again. And because in order to grow, you have to have trust, integrity, everything else. So now everything matters again, because they recognize it. But it took them 4 or 5 years. I hope we don't make that same mistake and we don't give up 50%. And I hope that this is like markets go, okay, we gave you your 10% because we're not China. And maybe it's 10%, maybe it's 15%. I don't know. Maybe we're done. Who knows? But the point is, there is a value to what we're talking about.
Massive. I think it's the most significant. It's like it's an order of magnitude different than every other variable.
Yeah, because we haven't had to. This is a new variable. We haven't had to deal with this. Like we were able to, a pandemic type thing was weird because nobody really understood it. We didn't know the how long it would last. We didn't understand the duration, things like that. But we figured it out relatively quick. I think we'll figure this out relatively quick because things happen, at breakneck speed now. But it's real.
I mean, I think that the question that you have to ask is, the question I've been asking myself is there a point at which the Republican leadership in the Congress, I have no expectation of truth or integrity from the president. His brand name is lies and betrayal. Like that is his basic, that's his marketing slogan. Very openly brazen lies and betrayal is like his organizational principle. And which leaves only the Republican Congress as a brake pedal on that culture. And it's sort of like how far does the stock market, how screwed up do the markets have to get before there's more than Thomas Massey in the Congress objecting to the president's agenda and or culture?
I mean, most of the time, at some point, personal greed will, when you realize that it's backfiring, you'll usually, everything is cyclical. So at first you get full of the power, but then you realize that, that certain things matter. And I'm not too concerned that long term that's a real risk. I'm just not, because our society is one that does a really good job of self-policing. We're a little different than other places, and it is very hard in our world. It is very hard. This is as long as we have free speech and as long as the democracy is intact. But we are able to self-police, and it is very difficult for a single person or ideology to damage our democracy or the way we do business or the way we go through life. So I'm not actually that long-term worried at all.
Does that affect? Last week when we talked about the market, you said, listen, the only thing I'm really doing is looking to sell some vol and enjoy the ride. Are you in the same basic place relative to all this, or do you have a point of view? Same thing. You have no, you're not buying a dip. You're not long a sell-off. You're not directional. You're just opportunistic on expanded volatility and sort of.
Yeah, that's fair. That's where I'm at right now. And
reversal of fortune in Tesla. Can I get you into a Tesla put spread? Collect some vol and set a floor, and get interested in a little White House. They're selling Teslas from the front of the White House, brother. They got a White House special.
My biggest position right now is in Tesla, but it's not necessarily directional. It's just my biggest position. I sold a lot of premium, but I didn't want to talk about markets that much. But I mean,
I know
we're on the same page.
All right.
Yeah. No.
Do you think that there's a level of self-awareness in the White House and in Musk's executive office and in Trump's executive office? Do you think there's any self-awareness even of the risks that are being taken, or do you think that the egotism and sort of self-congratulation is so overwhelming that they're oblivious to the risk of compromised integrity?
I don't. No, I do not think they're oblivious to the risk. I think that Elon specifically, I think Elon specifically knows that, he basically half his stock value was wiped out in 2 weeks. I think that when you think about when you think about Trump, and I think it's a little different because he's not as tied to stock value as as Elon is. But when you think about even his own, media company, the stock's down, almost 40%. So I think that, when Trump was elected, his stock was $35. His stock is $20 right now. I'm sure it doesn't matter because in his world, he's got plenty of money. This is not an issue this doesn't change his life one bit, but the stock has dropped 40%. I do think that regardless of who you are, your stock price does impact, your stock price has a very profound impact on you emotionally and personally. And you don't want, to take people down. You don't want to take investors down. You don't want to take, friends down. You don't want to take, your family down. And I think that it is very personal. And I do think that those guys, feel the pain. And so it's impossible for them to be oblivious to, what's happened here. Impossible.
Do you think it creates a change? Because I've been saying this with Chris and Ilya on Overtime, that there's an opportunity here for an extremely coherent economic statement to be made that is, be like the equivalent of like the J.D. Vance speech at the Munich Defense Security Conference, where it's like, America no longer is an ally of Europe. America now is an ally of Russia, and deal with it. And everyone's like, okay. And the Germans are like, we're going to raise $1 trillion and we'll build an army. And everybody wants to make all their nuclear weapons now in France and Germany. And they can plan. Europe can plan that America is no longer an ally, and it's a reliable piece of information. The bond market can fund it.
It's incredibly.
I'm not saying that's good or bad, but it's reliable. And whereas like right now, the economic policy relative to trade, like I just feel like there's an opportunity for Lutnick and Bessent, I guess his name is, the Treasury Secretary, along with obviously the president, to say this is the American economic policy.
I mean, you're relying on two people that have the social awareness, of an ant in Lutnick and the other guy. I mean, it's actually scary how both those guys scare me. But listen, I don't, there's nothing I can do.
In other words, you're not holding your breath.
No, they're not.
For more coherent rhetoric.
They weren't hired because they're going to roll over and no, they're not. They're not going to say what you think they're going to say. I don't.
So you think the correction comes in terms of the risk to integrity through a reduction of the momentum of the current executive team? Not meaning that there's
Probably.
Two ways. One, the current executive team either gets slowed down somehow.
Everybody gets humbled.
Or they change their behavior.
Everybody gets humbled. So they either change their behavior or they will slow down. I mean, it's one or the other. I don't know which one, but everybody gets humbled. There's no, from Tiger Woods to Michael Jordan to Muhammad Ali, whatever you want to talk about, to every major company, everybody gets humbled. It's not, that's what life is. There's some cyclicality to everything. And at some point, everybody gets humbled. Everything gets humbled. Everybody gets humbled. So it'll happen. It's not,
And but your point, and which I agree with, which is my point, which is what I've been carrying on about it myself, which is it's a new thing for the leadership of America to play fast and loose with integrity and trust. It's one thing to play with policy or even with war. It's another thing to compromise the very reliability of America as a counterparty, particularly when America is the most important counterparty on earth.
Exactly. It's never been done before. This is the first time. So that's the scary part. I am Tom Sosnoff. He is Dylan Radigan. Dylan, fun discussion today. Heavy, but fun.
Always a pleasure.
Thank you so much, man. Talk to you soon.
We'll see you later. All right. See you in a bit.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
What is going on, everybody, and welcome back to today's assignment. Another week in the market, another CPI day. Of course, everybody needs to have Dr. Jim's post notifications on Twitter. If you don't, do that right now or after the show. But we're back with Dr. Jim. We got some stuff to talk about. Puts at all-time highs. We'll get into that a little bit. We always need Dr. Jim's thoughts on these positions we have in the portfolio. But before we do that, Dr. Jim, we survived. How are we doing? Good to see you.
Man, did we survive? Like, is this?
I mean, barely.
Like, come on, man. Like, I don't know what to believe anymore.
This is a dream right now.
We had jolts yesterday. We had CPI this morning, allegedly, and then tomorrow morning we got PPI. Man,
allegedly, yeah.
I don't know, man. Like, it's so funny though to watch this market. Like, the whole day today, it's really felt like, and even starting like last night, it really wants to rally. Like, it wants to get its legs underneath it, but it just can't do it.
Well, what is that?
Do it. Like, where's ES right now?
We got SPY right here, but let's look at the S&P 500.
Is it 50? Okay, 5630. Okay, so you got a little something now. It had a hard time getting past 5620 there for a while. So it's going to be curious, man. If they can tack on another 20, 30 points into the close, then it's like, all right, maybe the interim lows are in, but I'm not so sure, man.
Nah, I hear you completely. I mean, to your point, I mean, what do you make of that? I mean, we've seen these rallies, even whenever we have, extended directional moves to the downside, like we've seen over the last couple of weeks, we typically get some type of relief rally. But I mean, this market cannot get its legs under it. And I know that's been tough with some of my positions. But what do you make of a couple of weeks like this, Dr. Jim? Like, where I'm at is I want to put on even more long delta. It makes me want to put on even more long delta, but there's a clear shift in market sentiment. So what do you make of it? You just sticking to the process, being patient, taking advantage of the high volatility. But what do you do when you're in my position, right? We're down on some positions. We can actually jump right into that. We're down on some positions. We want to get on more long delta. It's tough to get short into the lows after the last couple of weeks. So it's just an awkward spot. That's how it feels right now, Dr. Jim.
No, it's very hard. It's very hard to sell them into the hole. Now, I will say this though.
Yeah.
5630, 5640, like where we are right now, that's an easier short. I still think I'm leaning long right now for sure, but that's an easier short than obviously yesterday when it was 5535, 5550. It was like, man, you can't get short down here. Now, the irony of that, of course, is, I mean, I was saying that at 5800. I was saying that at 5,700. I said that at 5,700. And now it's like, at a certain point, it's like, well, you're probably wrong. And that's 100% right, of course. But it's as far as I'm concerned, like right now, the volatility being so high, I mean, this is what you want as a premium seller. Like, right. You got the VIX right at like that, 23, 24, 25 level. That's kind of a sweet spot, man. Like, I don't know how you feel, but VIX at 30, 35, 40, 45 plus, things are like too crazy. Things are like too chaotic. But this is like a nice sweet spot. You get nice high credits on pretty much anything you want to do. And it's just a good spot to live, man. But as far as like directional trading, I really feel like, both sides of the market are open up again. I still lean long, I guess I would say. But I wouldn't necessarily be opposed to establishing some shorts at this level either.
No, I hear you. It is kind of a sweet spot. I know with vol expanding over the last couple of days, it was one of those things where I was like, once the market finally settles a little bit, we should be sitting in a good standing with the VIX. So I was looking forward to that. I was just waiting for us to stop putting in new intraday lows every single day. So we'll check out some of these positions, Dr. Jim, and then we also have a slide. I have a little visual. Just want to show you the puts being at all-time highs. I think it indicates a pretty strong change in overall market sentiment. But we got a couple positions right here. We took a little bit of futures today. I don't know why those aren't popping up, but we traded a little bit of futures, just a little scalp here and there. And then we have Meta. This one was
whoa, hold on. Don't
go ahead.
Gloss over that. Wait.
What's that?
Where was the moneymaker now?
It really wasn't anything too crazy. Today we got short at around 151 ET, so that's about 1250 Central Standard Time. We shorted about.
Man, look at that.
No, nothing. No, I mean,
you got yourself 45 points.
No.
Minutes.
It was honestly one of those where it was just like dipping my toes into the. It's like, okay, kind of a decent opportunity. Let me just dip my toes into the water, start building that confidence back, and just getting involved and kind of, So that was nice for today. I will admit, but I mean, Meta taking a hit, Dr. Jim. Also, Dr. Jim, there's one contract on the micros, just one contract, nothing too crazy. We're not selling 5, 10 micros, but no, we're in the Meta as well. We've been in this one for a few days now. Sold an out of the money put spread on Meta. Again, this one was taking more of a hit yesterday, more of a hit on Monday. I did not expect the market to be going lower into Monday. I thought we would have gotten the pop last Friday, Monday, maybe Tuesday, but we weren't really getting that. So got that on Meta, got a lot of time on those. That's what makes me feel a little bit more comfortable about those positions, especially with vol expanding and especially with, trying to refrain from catching a falling knife. That can be tough. So that's why by default, going back to the 45 days to expiration on these ones, I'm going to manage this one in a couple weeks, hopefully sooner. If we get that pop, maybe I take it off a little sooner. Vol really comes in on these. And then QQQ, sold another out of the money put spread on those. Same exact expiration. These ones are in the money right now, so let's just check that out. We sold the 490s. We collected about $1.69, so just above a third of the width. 490s, where are we at right here on QQQ? And I mean, we have a lot of ground to make up, but what's nice is we still have a couple weeks at least before we manage this one. But that's where I'm at on this, Dr. Jim. I mean, no relief pops along, on the way down over the last couple weeks. So, I mean, it's been pretty brutal, depending on what you're doing in the market or depending on how directional you've kind of been. But we got those two main ones on and would like to get a little bit more long delta on before the close here too. I don't know what your thoughts are about that, but do you have any thoughts on the positions that we have on right now, Dr. Jim?
Yeah, I mean, QQQ's been, that's tough, man. When did you put that trade on? It's been, can you check like the change or the activity tab?
Yeah.
How long has it been?
Let me see. We have had this one on 35, April 17th, expiration, April 17th. We put this on, maybe I've had this one on for a little while. I don't think I've had it on for too long. We still have 36 days left to we put this one on March 3rd. So what is that? About 9 days ago?
March 3rd. Yeah. So, and obviously when you put that on, it was out of the money. Wow, that's crazy. And
right. It's about a week ago.
Yeah, I know. You're looking at the Qs, and I mean, they're up $7 today, and you're still $12 in the money. Like that's right. It's the market's crazy. Like it's crazy. No, I mean, obviously, at this point, there's not much you can do with either of those trades. I mean, the meta's obviously looking a little bit better, but you still have a lot of time to go in both, especially with the QQQ trade. I mean, this is a sit and stew situation. Like, there's not much to do. You just, you've controlled your risk on order entry. Like, if it doesn't come back, it's not going to, completely, destroy your account or anything like that. It's just going to be another kind of blip on the radar screen, and you just kind of keep going along business as usual. And so that's, arguably that's the most important thing. We talk about this. I mean, I think we bring this up every week now at this point,
right.
With size and position sizing and risk management. I mean, that's just so critical. It's so critical. And yeah, I mean, as far as, I like the positions. I mean, getting long some more delta into the close. I mean, sure. I mean, yeah. I mean, you want to do that with premium or you want to do that with direction?
I'm thinking with premium. Sell some premium.
Yep.
Sell something out of the money, especially with VIX being where it's at right now. Take advantage of that a little bit. Not a level we've really seen too often over the last few months. But I am curious, Dr. Jim, you sell a lot of undefined risk strategies when vol is expanding like this, right? I'm pretty cautious, especially on the credit that I'm receiving, where I'm positioning myself, my position sizing when vol is increasing. But when you're using those undefined risk strategies, you're trying to sell a strangle, and we have clear, increase in volatility. How do you manage that? Is that something that you manage sooner? You have more of an eye on it. I'm comfortable doing it again because my risk is defined. But we're in such a new market environment. It's like, does that cross your mind at all?
It does, and It really it reminds me of how powerful it can be to wait for volatility to expand before you sell an undefined risk strategy. Now, let me be very clear. That doesn't mean that I'm able to top tick volatility and get in at the perfect time. It doesn't mean that at all. There's plenty of situations where, you sell volatility and then volatility expands even more and you have to absorb those losses. That's just trading. That's part of the game. That's what you're signing up for. But it is a reminder that, especially since it does kind of feel like, all right, this may not be a VIX 14, 15, 16 type of year. This might be a VIX, 18 might become low. Like, I don't know. I mean,
the way things are looking, it looks like that might be the case. So
that's what I'm saying. Right. That's what I'm saying. So it's like, all right, if that's the case, then you want to be a bit more patient with when you're going to be deploying capital, and you're just going to want to be a little bit more prudent and diligent on order entry. That's really the only thing you can do. I mean, if I have a short put on or a short strangle on and volatility starts expanding in my face, it's like, if I'm in a situation where I sell a put or I sell a strangle or I do a ratio spread, some other undefined risk strategy, volatility expands, the VIX shoots up 20%, and I feel the need to take that trade off simply because of the volatility expansion, then I did something very wrong. I did something very wrong on order entry. I did something very wrong with just my overall perspective of how I'm viewing these things, because you should not be in that situation. It's going to hurt. There's going to be some pain that you're going to have to, make your way through. Don't get me wrong. But you shouldn't be in a situation where, when the market starts to make some serious moves, you have to head for the exits, at the first kind of glance of that.
No, I hear you completely. It's kind of sounds like you're saying, adjust your expectations appropriately. Again, I know once VIX started popping off again, I'm trading with one micro, and I even noticed, man, if you're not careful, if you're not putting in your stop losses, you're not managing your risk. We'll shoot down 50 points. In the snap of a finger, with the increase in volatility that we've seen. So that's a good antidote that you add. Just really adjust expectations, because the market environment's changing a little bit, and this is why I wanted to bring this up today too, Dr. Jim. This is a U.S. total option put volume. And we can see over here, we're already starting to see all-time highs on some of these puts being open. And it's what does that even mean? I don't know, maybe a change in sentiment. I know we trade a lot of these options. And I know originally a lot of people were using options, right? They can be designed to hedge your positions in the market. And, with the change in sentiment, maybe a lot of uncertainty in the market, maybe a lot of people are hedging right now. And maybe not so maybe. It looks like that's what the case is with the data that we have right here, because puts, again, are going towards all-time highs. So we'll never be able to see exactly why Dr. Jim is putting on all these puts and pushing up these put data.
Hey, I'm not buying those puts.
But
I'm not buying those puts.
Hey, hey, this is up for speculation. We don't know, but it sounds like somebody that would be buying the puts would say. That's all I got to say.
No, it looks like Gus is buying. I think Gus bought it. Those are Gus.
It might be. No. It might be, but what does this tell me? I'm curious to see what it tells you. What does it tell me? It seems that, traders and investors, the sentiment is a little bit of a shift, maybe more uncertainty, and I think uncertainty breeds fear. So maybe that's what it is, just in case we might have more downside. But with the puts being at all-time highs, maybe we get a little bit of a bounce now. But before we switch gears here, Dr. Jim, what does this data tell you? What do you get from it? How do you decipher it?
Well, I'll tell you what. I think the research team has looked at this before in some capacity. Right. I can't think of the segment specifically, but I know they've looked at this in some capacity. If you were to take this graph and overlay it onto an S&P 500 graph, I think you would see something that's very, very telling. And it's something to the effect of, when you see huge spikes in put volume like this, the market has a tendency to rally pretty hard. Okay. Which, again, is not to say it's going to happen. I don't know. Maybe, 5,600 is going to be the high for a while, and we're going down to 5,000. I have no idea. But generally speaking, investors kind of writ large, across the board, are just not very good at when they buy puts. They're just not very good. They typically buy puts at the worst possible time, which is when the fear kicks up, which is when it feels like, oh my goodness, the bottom's going to fall out. I've got to protect all my assets. All good things, of course. Their mind is in the right spot, but the implementation of how they want to execute on that is just usually kind of riddled with problems. And so they end up buying and loading up on puts at the worst possible time. The market rips back. And so obviously their long shares and long stocks benefit, but they lose a ton of capital on the puts that they bought because they're not worth anything anymore. And so generally speaking, when it comes to buying puts, you don't want to buy puts now. Now is not the time to buy puts. The time to buy puts is when it's super quiet. It looks like the market can do no wrong.
All is low.
All is well. That's when you buy puts. Now, of course, that's not exactly the magic elixir either, because the market can stay in that environment for a very long time, years and years and years. And so this is why, and tell your boy Gus, since these are all his puts.
I'll let him know.
That's why it's not a great idea to buy puts. It's just generally not a great strategy.
No, I hear you completely. I just wanted to bring this to your attention. I'm sure you knew, and we're kind of feeling that sentiment in the overall market. But I know I don't have the fear and greed meter pulled up right now, but that's definitely ticking a little bit more to the left. So again, I'm not complaining. I think premium sellers are going to have a field day once the market starts to settle a little bit. Maybe we temporarily stop putting in some new lows, but I'm not complaining. If this is what we had to do to get vol above 20 and trade near 25, I guess I'll take it. But with that being said, Dr.
It was almost 30. It was almost 30.
Right. We were close.
We were right there. We were
sitting at,
I think it was 29.50 on the high.
On the dot. 29.50 on the dot. Yeah.
Yeah.
But no, before we do, find some other underlines to get into, maybe put some, sell some premium, get some long delta on. You made a really good point about VIX trading around 30, 40, 50. I know we always kind of favor a high volatility index, especially for selling premium, but things can get pretty shaky whenever we're trading at those levels. So I think this is a pretty nice, little sweet spot the way you said it. So I'm gonna have to piggyback on that a little bit. So we'll see what we get here.
I mean, just for context, right?
Yeah.
In 2020, when we had that 7 to 10, like 7 to 14 trading day window, I think it was maybe in late March or early April, or maybe into April. I mean, the market was limit up, limit down, like day to day. Like for like a week to 2 weeks, it was like, I mean, we're talking like, 7% daily swings every day, back and forth. I mean, the VIX hit 80 at one point. I mean, the VIX was 80 at one point. I mean, at that point, it's like, man, there's, it's a difficult environment to try to say that. Similar thing in 2008. Like in 2008, during the great financial crisis, I mean, I think the VIX was at 60 or 65. And you had similar type of deal for like a week straight. There was like 6, 7, 8% daily moves. And so it's like, man.
This is when you were doing the dissertation, right?
Yeah, that actually was when it was so crazy, man. Like, October 2008, right? I'll never forget it, because not only did we have the great financial crisis, stocks in free fall, whatever, I was actually at a conference in Dallas, and I was interviewing with different universities for my faculty job when I graduated next summer. And so it was so crazy to be there at the conference. I mean, we're all there for finance. We're looking up at the screens, and we're like, is the stock market still going to be here? Like, going to zero.
Well,
like, it was crazy. I actually interviewed with the Federal Reserve. Like, I interviewed
no way.
a bunch of people. Yeah.
Why did you never let us know this? I'm curious. So, with what we've seen, because there's a lot of fear, going around. What are some similarities you see from 2008? Is there any similarities you see, into
not yet? No.
What does that mean, Dr. Jim? That's so eerie.
I know. I mean, 2008 and 2020 are the closest to each other that I can think of. It's just like, I mean, we're talking like real chaos. Like, for example, you just did that NASDAQ trade, right? That MNQ trade where you got 45 points in 3 minutes.
Right.
And I mean, that's, the NASDAQ is a mover. That's not that surprising to me. But I mean, we're talking NASDAQ's moving 100 points within a minute. Within a minute.
Right.
Yeah, I mean, now obviously in 2008 the NASDAQ was much lower, so it was a much smaller scale. But using today's prices for a similar environment, I mean, we'd be having ES moving 5-10 points a tick.
Yeah.
Every tick. Right. And so it'd be pretty wild.
Man, you didn't know if you guys were going to be able to turn this dissertation in. That's
yeah, I hadn't finished it, man. It was close.
Yeah.
It was like 40 delta at one point.
That's crazy. No, that's crazy. No, let's check out some of this list, Dr. Jim. See if we can find something to get some long delta on. I know one I was looking at. Look, this is on Gus's no trade list, and it's almost on my no trade list as well. But it's Tesla. Tesla's one of those underlyings that, I mean, you want to trade volatility. I mean, you come to Tesla. When VIX is low and you want some action, you want some volatility, you come to Tesla. Now we're trading Tesla with volatility elevated at the same time. So this might be a little bit of a crazy one, but we were talking last night. I mean, if we were thinking more long-term, I'm not mad at Tesla at 200. I think it's a lot more attractive than Tesla at 300, 400, whatever the case might be. But long story short, this is one that's on my radar too. Premiums aren't looking too bad. We have earnings after the April 17th cycle, so that's not something that would get in the way. This is a candidate. As we go into Apple, do you have any thoughts on Tesla yourself, Dr. Jim, as we look at Apple now?
Yeah, I mean, well, go back to the option chain for Tesla. I mean, if you look at that, well, actually, close up April, close that up. Go to the front week. If you look at the 2-day cycle,
right,
with 100% IV, I mean, that is like, I mean, that suggests that there is a very real, tangible risk that Tesla goes to zero. Like, that's what that number suggests. And that's crazy to me. Like, when you see 100% IV, like, these are annual numbers, so it's not just in the next 2 days.
Right.
That's the IV for the 2-day cycle, but the percentages that you see are always annualized. So the thinking is that over the course of the next 12 months, right, there's there's a chance that Tesla could double, and there's a chance that Tesla could go to zero. Right. And I'm just like, do you really think Tesla's going bankrupt? Like, I mean, depending on how you might line up politically, a lot of people are very upset at Elon. A lot of people love what Elon's doing, like whatever. You can get really clearly on one side of that fence. But leave all that aside. Forget about all that for a second. Right. Just look at Tesla as a company. Just look at Tesla and the products and product that they have in terms of their cars. It's not going to zero. Like, are you kidding me? Like, that's crazy. That's just crazy to me that, like.
Right. So what does that look like? What does that look like? Opportunity then? Whenever
I mean, I think so. No, it's not going to zero. In my opinion, it's not going to zero.
Right.
Now, that doesn't mean it's not going to 180 or 170 like that. Oh, sure. I mean, yeah, of course. But I just looked at those numbers and I'm like, that's crazy that Tesla's got 100% IV. I mean, like 100% IV, that's what you expect for stocks that, like, are just like don't have a track record. Yeah. They don't have a track record, like they don't have a business model. They're still kind of finding themselves out, whatever. Yeah. But I'm shocked that it's that high for Tesla.
I mean, not only that, Tesla's the leader in the EV space. So
that's what I'm saying.
So at the same time, when we think about it from sector to sector, industry to industry, it's like, will the leader in the EV space really go down? Because then what does that mean for Rivian? What does that mean for all these other EV companies and what they're doing over there too? But that's a really good point that you bring out, Dr. Jim. That's what the implied volatility would suggest. Mm-hmm. But then when we think about it logically, it's like, would that be possible? And the way that Elon is really tying himself up with this administration and the way that we bail out a lot of other industries, I just don't see that being too realistic, in my opinion, or that really happening, Tesla going to zero. But then again, there's an argument to be made that is Tesla even making a profit yet? Is Tesla even where are they at with all those things? So we'll see. I don't have a Tesla, so it doesn't matter to me, I guess. But we have Tesla on the map. Tesla's one of those. I want to look at Apple as well, Dr. Jim. And if you have any other underlines, what are you guys looking at right now, Dr. Jim?
I mean, right now I've just been. I mean, the market itself has been so wild that most index stuff, mostly just getting in with some index. Yeah. We can get you in some. Man, have we done any options on futures yet?
We have.
You in like an M?
Yeah. We have. Well, we could do an MES. We could.
Well, it's up to you, man. We only have a few minutes to go, so it's your call.
Okay, for now, we'll do the underlying since we have something in an indice right here. And Apple's looking really attractive here, too. I mean, everything is looking attractive for the most
I know.
So we'll see what we get see what we can get on these premiums. We got 202, 205, really not that much in this 36-day cycle. Nothing too attractive. You're not buying anything, right? Volatility is so high.
You mean buying spreads?
Yeah, you're not.
No.
Yeah, you're not buying anything, right?
No.
Yeah, I didn't think so.
Definitely not. No, I mean, you got to be selling options at this point. There's no reason to be buying. If you want to do something directional, this is where I think you get in there with, you do some scalps, you do some different things with an MSU or MES or whatever.
When you say directional, Dr. Jim, you're talking anything other than a neutral strangle or a neutral iron condor.
Not in this context. You could certainly interpret it that way. What I meant, and that's why I tried to clarify, when I meant in this context, I'm talking about like futures trades where you're kind of playing that one for.
Oh, right.
I'm not talking about buying a call spread or buying a put spread. I was talking specifically about a purely directional play because obviously, you get in there with an MNQ, MES, MCL, whatever. There is no theta. There is no Vega. It's just delta. It's all
we need something that is a little smaller than a micro because in this environment for me at least.
Yeah, sure.
I mean, even half of a micro would be sufficient for me. So I'm gonna stay away a little bit from those contracts, but we'll go a little directional, but I guess we'll sell it out of the money call spread, out of the money put spread. Just get some long delta on.
Mm-hmm.
Again, I'm leaning.
NVIDIA's looking good today. Yeah,
NVIDIA's looking good.
So weak today. Do you have any?
Yeah, I have no idea. They're getting hammered though, so it's brutal over there. I mean, they're not even bouncing with the market at all.
Yeah, that's pretty surprising.
You see, this is another. I mean, again, we know the volatility. We know a lot of uncertainty breeds a lot of volatility. But man, trading Tesla is just a different breed. It always was, but now with the endorsements Elon is getting and how relevant he is in the media, it's like you got to pay attention to that. But let's see how far out we can go. We could go
closer. No, you can't do $1.38, man.
We could do that. We could do $1.75. 58% pop it's
you
the
could,
most attractive.
Let's go up a little bit. Let's go a little closer. See if we can get 2 weeks.
All right, let me see if I could sell something over here. See if we can.
No, don't do that.
$1.91.
No. If you want to be bullish, stay bullish. Well, look,
this is bullish.
Look, no, we found it. We got it.
Right.
You got a 55% pop. You got $1.90. You're picking up a little bit more. I mean, you've still got your short strike is 235. You've got almost 15 points of downside.
Yeah.
I mean, that gets you half a day. That gets you one Elon tweet.
That gets
your one Elon tweet away.
That gets me one tweet. That gets me one tweet.
That gets you one tweet in his drafts. Not even a real tweet.
In the drafts. Let me see. Let's get filled on this.
You got to get filled on that Apple trade too, I think, right?
No, we'll just go with the Tesla for here.
Okay. Look at the market back to 56.18. It just cannot stick.
No.
It just can't stick.
There we go. Got filled here.
There you go. $1.89.
PI came in under expectations, right? 2.8, something along those lines. Yep. I forget what it was, but it doesn't look like the market had a big response to it. I mean, I know we rallied in the morning, we had sold off, and then we rallied all the way back up. So I mean, we'll see.
No, it was very quiet. It was very quiet. I was shocked.
Even Joel,
it went up on the number. It went up, but then it just sat there.
Yeah,
I was like, did the number come out yet?
Right.
It was crazy. Yeah.
No, I'm interested for these next cycles. I know, again, we have a lot of news on tariffs. I think tariffs are probably one of the biggest headlines, I think, over the last couple of weeks. So I'll be interested to see some of these, data numbers into the next few months, really. So we'll see how things pan out. But before we head out of here, anything else to add, Dr. Jim?
No, it's good. I mean, it's not over yet because, I mean, tomorrow morning's PPI. Man, I don't know, dude.
If you do not have your notifications on for Dr. Jim, go on Twitter right now, put them on. I mean, you will know when an economic report is going to drop. So, and you won't be fearful at all.
No, not at all.
Either way. That's going to wrap it up for today. Dr. Jim, we always appreciate you and having you here and getting your thoughts and insights on everything we got going on in the portfolio. That's going to wrap it up for today. Be sure to stay tuned for Tim Knight coming on next, and we'll catch you guys next time. Peace.
Hello, everybody. Tim Knight here, and we are past the CPI. And it was a very interesting item because I actually slept through it, which is really unusual for me. But it was odd because when I woke up at 5:45 a.m., which is 15 minutes after it comes out, and everything was up because inflation came in cool. But the interesting thing, the thing that jumped out at me is that the RTY in particular just blasted higher, and it was up, but a large amount of the blast was gone already. It's like people got out at really rotten prices or something. So we're green at the moment. At one point today, we were actually in the red again, which is astonishing considering. And it just shows kind of how the nature of the market has changed, because it wasn't that long ago where news like this would have had the ES up like 100 points right now. Inflation coming in at 0.2% for the month, 2.8% for the year. That would be heralded as great news. And people kind of stopped talking about Jerome Powell because I think they realized that he can't do anything about what's going on anymore. But yeah, it would have been heralded as amazing news, and we'd be at lifetime highs now across the board. Today, instead, it's just been like, well, it's good, I guess, and people bought for a few moments, and then it sort of slumped. So as of now, the ES and the RTY are up about 2/3 of 1%, and the NQ is up about 1.2% because tech stocks have been particularly badly battered. But we are getting our bounce that I've been wringing my hands about. I feel a lot better now, actually, and in a way, the more we bounce, the better I'll feel because it relieves this oversold state that we're in. So anyway, I've got a lot of charts to look at with you, so let's get going. We're still kind of oversold. I mean, to be sure, it's not like, okay, we're done with that bounce now. We could bounce plenty more from here. Here's the spider. It's a little hard to say just, where will this terminate? We'll lay that down for the moment as a guess. But ultimately, I think we're heading much lower. But as it is now, playing these little bounces, which we had to deal with, here, and this was kind of over in a day and a half, and here, which also was over in about a day and a half, you just kind of have to grit your teeth a little bit. But they haven't been long-lived. We could well have a great entry points tomorrow morning. And it's also kind of following the playbook of this year because there's this funny phenomenon going on whereby it's almost like a curve. Wednesday's the strong day, and it's playing that role nicely. And then as you get closer to the weekend, be it Monday or Friday, the market's quite weak. I think people are scared of weekends now. So this is true to form, the fact that Wednesday's so strong. The diamonds are down a little bit. And you can see we've had these sort of stages of ranges, 1 and then 2 and then 3. And now we're in a 4th one down here. We're sort of like building stair steps on the way down. And the cubes, as I said, are particularly strong. Very much needed rally on this, up over 1%. And here again, as far as how high will this go, I don't know. I'll just sort of leave that line there for now because it could be anywhere in here. It's already kind of accomplished the tag the trend line shtick. So I don't think we have to do that again. But we will soon see. This will all play out, I think, in the next day or two. And then amongst there, and I tried to be emphatic about this, if there's one area that's going to be strong, I think I was pretty clear about this, semiconductors. Because stock after stock after stock was just so blasted that not only were they not going down anymore, but when there is any buying, they're going to go up a lot, relatively speaking, whether you're talking about NVIDIA or Avgo or AMD. So SMH is up strong. It's up 3.25%. Yesterday was the low for this cycle. And I hate to keep throwing will sees at you, but that is the case. This is the firm resistance right here. But this will take some of that pressure off. EFA, worldwide equities outside North America, this is up. But importantly, we've got, and I don't know if I mentioned this, we've got this island reversal gap right here is what it's called. It's made of 3 days. This right here, island reversal gap. And provided we don't push past, 83.5, that'll be intact. So that could be another nice setup if we get close to that level. Oops, hello, that was quick. XHB, the home builders, get my puts on this. This is, been a little weak today. Nothing to write home about. These are September puts, got lots of time on them, lots of room to fall here. And so I'm just kind of, what I did yesterday and this morning and through the day, I just look at chart to chart to chart of all the positions, like, are any of these like unacceptable? Because nervous as I was about this bounce, there weren't any of my charts I looked at and said like, oh my God, what are you doing in this? Because as I said, there's a world of difference between, say, NVIDIA, which I would have never been shorted in this environment, versus the example I use is like United Healthcare, which still to me looks very vulnerable, even at these depressed levels, relatively depressed. A lot of big moves lately. It's fun to thumb through these just to see how much action has taken place over the past few weeks. This one, RCL, I kind of gave up trading on, but of course now it's starting to get cool. This channel's been in place for a couple of years, and it had a very nice tumble here. We peaked on this lifetime right here, up at 276.12 back on the last day of January. And it fell and fell and fell and fell, and just about perfectly touched the trend line yesterday. So that was a pretty obvious safe buy point. So had a hammer there, and then it's up today, although not much. You can see by way of the red bar that it opened strong and is trading weak right now. Abercrombie and Fitch just keeps falling. This topped out way over here, and it's down, about 60%. Carvana, this is another real drama queen. This peaked on the 19th at almost 300. It's about half that now, not quite half. It was about half yesterday. But as I said, the semiconductors I am staying far, far away from. They were enticing at these levels. Down here, they're just buying opportunities. AMD bought it yesterday. It's up almost 5% right now. Broadcom, AVGO, this one sealed its gap beautifully. And 4 or 5 days went by that it just kept affirming that gap closure. And this has been bouncing higher. And so, well, are you ever going to short it again? Maybe. If we got kind of into this middle area, perhaps. Very interesting opportunity there, but not yet. And then ON, this one strangely is very, very weak. It's up a little, but considering how depressed it is, it's not much of a move. But as you can see, for the moment, the big move is over. Longer term, it's far from over. This was just kind of not a victory lap because I'm not in it, but at least an affirmation of the power of patterns. Here's Jack in the Box, something most of us know. Back in the day, I talked about this head and shoulders. It's a perfect one. Shoulder, head, shoulder, right shoulder is lower than the left. Very well formed. Nice clean neckline. Broke, retraced. So this, if we can get our time machine, in August, early August, that was the perfect time to get bearish on this, because the risk reward is very appealing. The pattern is complete, the retrace is done, and if it keeps going up, fine, just get out, take your loss. But it didn't drop. It didn't do poorly, it did great. We went from 60 down to almost half that now. So you can see, even from here, just how far this has fallen, following that well-formed head and shoulders top. And another one that's very much in the news right now is iRobot. You remember the Isaac Asimov classic from decades ago. This is a much cruder head and shoulders pattern, but it did mark the peak. This was about $130, $140 stock. Now it's $4. I think they had a news today about one of those going concern letters, like, will this company even exist for much longer? On Tesla, makes perfect sense. It's bouncing, and our old friendly fibs are hard at work. Look at that. Remember our conversation about this yesterday? I offered that if it were to bounce, that it would be held back by that pair of fibs, and that seems to be what's going on. This one here, 250.17. What was today's high? 251.81. Not bad. Not even $1 higher. So those fibs are still potent. And this is, of course, on the heels of the president and Elon on the White House lawn saying that anybody who protests against Tesla will be considered domestic terrorists. So maybe that's part of the cause of the rally, but it was deeply oversold. Could it keep going higher? Sure it could. And if it does, this pair right here will be the next blockade against any price ascension. This one is just another example of maybe a good opportunity in the near future. Reddit, RDDT, we've got a beautiful price gap right there. We have unwound a lot of the big drop. The closer we get to this 150.53 level, the more appealing it gets as a prospective short setup. I mentioned in passing the airlines yesterday. I hadn't really looked at them, but I took a peek at them. I'm not sure what news came out, but it's been a big, fast turnaround because airlines have never been an amazing business. But a couple of months ago, for whatever reason, they were doing amazing. They were just blasting higher, to lifetime highs, and that unwound in a big hurry. Here's Delta in no particular order. So Delta took months and months and months to climb up here and a few weeks to erase it all. That's DAL. Here's American Airlines, a much worse performing carrier. But here again, it had, for whatever reason, this astonishing lift. It went from a single-digit stock all the way up to almost 20, and then down the elevator shaft. And one other example, United, which here again, this goes back for decades, lifetime high, never higher, just in January, not even 2 months ago, at 116, less than half that now. This is not some weird biotech startup. This is like United Airlines. These are giant, very old companies losing 15, 60% of their value in a few weeks. Kind of shocking. On a more positive note, precious metals continue to shine. Here's GLD getting close to a lifetime high. And I like the fact they're kind of getting a mind of their own. They used to be sort of slavishly following equities wherever they went. Now they're sort of like, no, we're a different thing. And so gold doing well. PSLV, one of the kind of, well, SLV is the huge silver ETF. PSLP is sort of an alternate, but an interesting one. And it's up nicely, 1.71%. But in particular, look at the volume. Look at that. Let's make it big so you can see it more clearly. Look how much volume has increased lately with PSLP. A lot of growing interest in silver. And more broadly, commodities, DBC, I pointed this out. This base pattern is still nicely intact. We've broken out of the channel. This could spell good things for commodities in the months ahead, including precious metals. Okay, let's just wrap up with a few last items here. Going back to our industrial thing, XLI. We have completed this pattern yesterday, made some more progress on it today. Even with this good inflation news, we bested yesterday's lows. So this is a very interesting setup, much more so than DIA. As far as XOP, getting a little perturbed at this one. It's stronger than I would like to see. We are penetrating into the this pattern. So I got out of XOP itself earlier today. I'm still in COP and DVN, but they're not doing great. And so if this keeps going strong, maybe the strength in crude oil is going to wreck it. Who knows? But so far, kind of a blemish on this one. But in terms of looking for major support and resistance, I think you could do worse than the RTY futures. The fibs here are essential. Here was the top. And I think that what we can do here is basically say that very strong resistance can be had up here at this fib, right below that big pattern, and very strong support will be right down here. And when you know it, we're right in the middle. Total uncertainty. So kind of risky. All right. Anyway, it's always a relief to get past these inflation numbers. That was a big one, but doing okay. So I will see you tomorrow post PPI. Thank you. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap. Today's Kashmir Pulaski Day. So
I know you forgot the pushkis.
I brought you cherry pie. What do you want from me? Yeah, it's tomorrow.
You're conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. Two separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat Tuesday. When is it ever
Fat Tuesday? Fat Tuesday's never on Thursday.
My chili is so spicy.
But that's not good to me. Like, I like spicy stuff, right. But just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it.
Actually, if we're going to get after it, your chili does suck. We'll leave it at that.
Oh, my God. I can't listen to you guys. Good. You're not getting any more. Either you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure. I think it has. Yeah. don't think it's replicable and like a general population, but I think for you specifically.
I got another one, Sadnov. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't even know it. The Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those two guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sadnov, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live at the last call. We can sum this day up with one word, Sadnov. Are you ready for it?
Give it to me.
Volatility. That's right, my friend. For the first time in what seems like the first time in recent history, volatility in by about 5%, 4.5% or $1 on the J futures. That's /VX. With the high for the recent move lower in volatility. Even the S&Ps up 24. You know how I kind of put a word on them, Sadnov? Inside day. What do you think about that?
I mean, if 120 points is an inside day, so be it.
125 points inside day. 124.75. Yes, inside day. Yes.
Yeah.
I mean, to be fair, that 675 print that we had came right after the number. It was pretty quick. We were up 50 for most of the day, and then we were down about 30 or so. So we had some market movement on both sides, and all on the heel of Apple never really catching a bid, Sadnov. Tesla's up $17. That's been bid most of the day. SMCI was one that Vanetta talked about, but Apple earlier down $5.40, trading near its lows, never got out of its own way today, and the Dow is actually down.
I sold a lot of premium in Tesla 2 days ago when the IV rank was 145, 147 in that range. Covered it all today.
It's been cut in half.
Covered
Still
it today.
Has a good IV rank 71. Yeah.
Covered it today with the IV rank dropped to 70 because that's about as good as I can do. I don't have any more skill.
That's better than you can do. You couldn't ask for that.
I don't have any more skill than that. That's all the skill I have. And turned around and just sold almost an equal amount of premium in IBM. I'm sorry, in Apple. I said IBM. I meant Apple. In Apple.
Mm-hmm.
IB rank in Apple is higher than Tesla right now. It's 77. And I feel like Apple's maybe feels like a little more price extreme, don't you think?
Yeah, Apple can't buy itself.
I mean, I feel like
uptick.
For the first time, Apple has a little more price extreme than Tesla.
And when you factor in that it has a monthly implied volatility of only around 35, and Tesla has a multiple of that, probably 80, 85 in multiple implied volatility.
Yeah, and actually it just went up. Just went up a little in Apple, so it's a little higher than it was before. So that's kind of cool. And
yeah, I'll give you that. That's a good find from a volatility standpoint. Do you lean any direction with it, or are you just going purely delta neutral?
Well, I went delta neutral, but there's actually a lot of put skew. I'm not sure the last time you saw put skew in Apple, but there's a lot of put skew.
Yeah, the dividend's only 25 cents. That's not gonna skew the puts that much. It's funny. Apple has not. I mean, it really hasn't had an uptick. It really hasn't.
Yeah, I just felt like the risk reward, if I'm going to put it kind of like an oversized position on, the risk reward in Apple is probably just. I mean, the risk reward in Tesla I felt was the best on the board 2 days ago at 148, whatever it was, at 77 or 78 right now in Apple. I feel like that's a pretty big number for Apple. Monthly volatility in Apple in April right now is about 36. It gets occasionally into the low 40s, in some really violent times, but that's about it.
You're right, Sadnaf. That 40 handle was like before it even paid a dividend. Remember when it started to pay a dividend, the volatility was been in the 20, 25 handle in Apple. It's really elevated right now. You got a good one.
So I think I'm going to stay in there. And then I'm pretty flat. I mean, today's one of those days where, the VIX is down about 10%, but like you said, the futures are only down, let's say 5%, a little bit more. But
futures are down 5%?
No, the VIX futures.
Oh, I got you. Yeah, 4.5%, 5%. Sure.
But this is one of those days where they crushed vol everywhere, from bonds before the opening to to just about every stock. I don't think, we've had 2 days in a row with no losers. So let's see what happens tomorrow. Maybe they'll bring back, worst stock for us today is MU. It just went a little outside the range. But other than that, SPY, Tesla.
MU consistently goes outside the range, but doesn't go anywhere. You just got to hang on like for dear life. MU up almost $7, $6.77 and change.
I know. I think I'm going to have to get a little bit more directional in MU, and some of these stocks are. Some of these stocks came back a little bit today. MU, Marvell.
Buckers today. I said Apple down 5, but Target down 5 also. Dick's down 3 and change. UAL down $3 or $4. All the airlines and some of the Chinese stocks like Baidu and Baba down just about 2.5 and $2.
And they still killed premium in there.
Yeah.
UAL actually is off its lows, but still very ugly. I don't know. It was a good day for the good kids, so we'll take it. I mean, it's one of those first 3 days of the week where you don't really want to deal with this too often. Like, you don't want to be tortured to the downside and then bust your butt to make it all back on the up move, and then at the end of it all, you're really
now what do you do?
you're right back where you started 3 days ago. I mean, it's better. It's better than the alternative, but it's let's just say it's better than the alternative.
Upside, you got Netflix up $24 and change. I'm sorry, Netflix up $24 and change. Crowd also up around 15. Tesla up 15 or 16. Meta up around 13. Nvidia up $6 and change. Oracle up $6. Palantir, which hasn't had an uptick in a while, up around 5 and change. So they came for some of the stocks today, Saz. Even though you only have even the S&Ps up 23, Nasdaq up 171.
Yeah. Yeah, man, I worked my butt off the last couple of days just to get to get back to where we are now, but we'll see.
Remember I said to you yesterday, maybe the euro has to go lower and some of the currencies have to go lower so we can get a rally in the market. Yeah. As foretold, Southnuff, there's the euro down just about 4 cents, and we're higher today. I don't know how Daddy does it, but he does it.
They still killed premium in the euro today. That was a good thing. I would think that, how much time we got left? 17 minutes before the cash market closes.
Adobe and DG, if you're interested.
Oh, I forgot about that. Adobe, I have a position on in there.
That's why I'm here, Sadno.
And may I tell you that they myrtleized premium in Adobe today. Myrtleized it.
Yeah, still elevated 83, but they certainly did. It was in the 90s.
I have the 385 puts and the 510 calls. That's short strangle, and it came in $2 today.
Really, on a $4 up move, that's a lot of premium being taken out. Let's see the net change here.
I know.
Yeah, your calls are in by 80 cents. Yeah, and your puts are in by $1.15 or so, $1.12. You're 100% correct. So enough $2 on a delta neutral strangle here. Really.
What do you think here on Adobe? 55. They got
expected move $33. Oh, sit there, big boy. You're fine.
What?
Oh, sit there, big boy. You're fine.
I
mean, you got the 17 and 13 delta. I mean, how far out are you going to go? 5 and 6?
Don't be telling me.
Show a little intestinal fortitude for once. I mean.
Don't be telling me how to trade earnings, okay? I'm the earnings.
Oh, boy.
What did we used to call Tony Vitale? The earnings what?
Slayer.
Oh, the earnings slayer, yes.
you're the 2025 earnings slayer.
No, this has been my earnings cycle to slay.
Uh-huh.
Yeah, Adobe. We just widened our strikes a little bit, added to our contracts. So we just went wider, added more contracts.
And that's why you'll see a double diagonal coming through the platform there on the follow page, right?
That is right. So anyway, that's where. Let's see if there's anything else here that's jumping off my screen at me. I don't really see any jumpers. We have a jumper. No. Don't really see any jumpers. We're good. Let's just close them here, take them to the cage, and start all over again tomorrow. And by the way,
no kidding.
By the way, interesting stuff today. Jacob did a really tough piece. If you feel like being challenged on break evens, Jacob did a piece on break evens. But I can get you right to the punchline. The punchline was that your break even is at a one standard deviation. It's going to work about 73% of the time.
That is correct.
73% of the time.
But he did do a good piece with that.
Yes, but your that's going to be your break even. A lot of talk about Brownian scaling, but we're still at the break even 73% of the time. That's the takeaway. We did a piece at 8:00 this morning that talked about all the different types of volatility on the platform: IVR, IVP, IVX. And then IV versus HV, which is implied versus historical. Historical is what's happened. Implied is what is expected to happen. So all that was explained in detail this morning at 8:00. And then we did a what's your assumption. We did a what's your assumption where we did 9 out of 10 trades. We were kind of all over the place. So we'll see what happens with those. So far, so good because they killed some premium today. And then I did a truth or skepticism with Dylan Radigan at 1:00, and then Tony and I are wrapping up here at at 2:30, and we'll be back with bells on.
Were you guys pretty tame? My Taiwanese sources weren't going bonkers or anything like that.
Yeah, we didn't stir up the we didn't stir the crowd. We just talked about today's discussion was on well, I guess the easiest way to explain it is we just talked about, are we in a new era when facts don't matter? But
oh boy.
But we used it in a way that not politics, but for business. Does this let fraudsters, if integrity mattered, where would Sam Bankman, would he have been able to run wild in the crypto world type of thing? I mean, you can't stop fraud like Bernie Madoff. You can't stop that because that was just, pure old school fraud. But
yeah, thief's a thief, man. It doesn't matter where it is, whether it's financial or someplace else.
Right. The Bernie Madoffs of the world are going to exist no matter what, and you've got to just hopefully you catch them at some point. But the Sam
they're
Bankman,
under every rock.
But the Sam Bankman-Frieds, who in their own demented mind really kind of thought, "Oh, this is cool,"
Yeah, yeah.
Because they live in a world of alternative fact. That's what scares me. And the integrity of our whole financial system, really depends on the fact that those are contained. The Sam Bankman-Frieds of the world. So anyway, good discussion. And then
good.
I guess that's for the most part. After the close today, we have Ilya, Chris, and Dylan, and then don't forget about Victor Jones wrapping up the whole evening tonight. And tomorrow I
can never forget about Victor.
Tomorrow we got a packed day too, so it's all out there. All right, what else do you see here, Bat? I mean, obviously the big story of the day, you're right, was all about volatility. For the first time in a while, we had what we would call a more normal day when volatility, instead of expanding like it's done every single day, it finally contracted for about the first day.
Yeah.
But don't anyone forget yet that volatility is still in the low to mid 20s. That is not.
You've got two-sided action. You've had $10 pullbacks and rallies, all day long. I mean, volatility at 20 is pretty good. I mean, the volume was lighter today than it's been, but it's still been good overall for sure.
Yeah, I mean, when you get volatility in the low 20s like it is now, you are still going to see. You saw a 90-point sell-off this morning. You saw an 80-point rally after that. Volatility where it is right now, nothing's off the table for the next 2 days. You're still going to see, 30, 40, 50 handle moves. No doubt about it.
Over 1 million Apple options have traded. Almost 3.5 million NVIDIA options have traded. 3.5 million SPX options have traded. 1 million plus SPY options. 5 million in the Qs. That's the big boy, Sadnov. That's your Qs. Qs with a lot of volume today.
There was a single tick today because I was watching, had my hand on the trigger. I was going to buy NASDAQ futures if they went down in the day. They had literally one tick where they went from unchanged to down 2, back to up 7. I counted in like less than 3 seconds. Like you had 3 seconds. You had to have an order resting. There was no chance to buy them. But I thought they could go down like a lot more. I thought they would be down maybe like 20 or 30. And then you had to buy the NASDAQ because the NASDAQ futures were so strong. Before they had a down tick after that, they were up 300. Then now they're only up 150. Yeah, S&P's just sold off a little bit on the close here.
Yeah, and I said 1.1. I meant 11 million SPY options. Sorry about that.
Yeah, I think today you're going to see some decent option volume and some little bit lighter futures volume, a little bit lighter stock volume. And the reason I say that is because the stocks kind of gap upped. They gap opened higher. And so you had stocks like NVIDIA that, although it's up $6, it sat there all day. And you had stocks like Tesla, although it's up $16, it sat there all day. I mean, it had a little bit of movement, but it sat there pretty much all day. Apple's been pretty much down all day. So the big stocks had their gap opening kind of on overnight move, and that was it. Some of the commodities had big moves today, which I don't think are that important, but gold had a big reversal to the upside. And and natural gas had sold off all day, and it's this first really ugly day down 37 cents.
Gold, you can't buy a downtick in there. I know you got this little blip here, but gold has been hanging pretty good here at this 2,900 and change level.
Yeah, and bonds are back to 116.5, and if you wanted to the premium did not come in there all day, so if you wanted to do anything in the bond market, it's wide open for you right here, because 116.5 is this is the area where I think is really fair value for them. So I'm hoping for a little bit lower so we can scoopy, but I don't know. All I did was cover the bonds on pre-market, so I didn't do anything else in there this morning. And then looking at the rest of the stocks.
That spread moved an additional 5 ticks. That's about it.
That's not bad. That's a lot. Yeah, looking at the rest of the market on my screen today, not much. We bought a little United Airlines. We sold out some Intel, and I think that's kind of about it. Oh, it's another big day. Another big day for Boeing. Up $6 yesterday, up $5 today. Let's take a look at our Boeing position. Well,
I missed that one. I wanted to buy Boeing on Tuesday. Yesterday, it was down. It was actually down small or up $1, and I was not aggressive with my pricing, and I never got filled. And I'm annoyed on the Boeing one. I did IWM instead with a little bullish diagonal. Worked out very nicely. So that's my podcast trade. Every Tuesday and Thursday, you should check it out. I'm getting hot again.
Of course. The podcast trade.
I was cold. I will admit I was cold for about a week or so. No lie.
Let's see what I do.
But I'm back now, baby. Okay, while you're staring at your screen, you want to bring in my friends?
No, I was looking. I was trying to do a Boeing trade, and I.
You can't do anything by yourself. I mean, you need me to help you. You can't do it. You can't find something by yourself.
I guess not. I thought I was doing a trade, and I did something.
Markets aren't the best in Boeing. They're good. They're okay. They're not great.
I did something wrong. I guess not. There it is.
Par for the course.
Yeah. All right. Let's see what else you got here. Yeah, bring in the boys.
Let's bring them in, my friend Chris, my friend Ilya, and my friend Dylan. How are you, gentlemen?
Yeah, could be better. I am confused and perplexed and mildly disturbed.
What now, Dylan? I feel like your mom. Did your mom used to say that to you? What now, Dylan?
Well, when Sosnoff is talking about buying United Airlines, like this is what the world has come to.
Sad, right?
I got Sosnoff in a United Airlines position.
It's not the world, Dylan. It's just Tom. He used to be a flinger. Remember back in the day, flinging futures? It doesn't matter. There are 40 handles against me. I'll sell more. It doesn't matter. Now, I'm going to nibble on United Airlines.
I used to be somebody.
Is United Airlines even liquid in any way? I mean, I feel like United Airlines trades like 3 shares a day, $1 wide.
Dylan, I mean, it's okay for me to pick on him, maybe, but you're gonna pick on him now too. This is piling on, Dylan.
I'll let it go, but I'm just saying,
I mean, it trades.
All right.
Hey, my macro boys, what do you think here? Volatility spiked up yesterday. It's significantly lower today. We have a small little rally here. You still got one index, the Dow lower. It's been lower all day long. What do you make of this market? Out of the woods, not out of the woods? Give me something.
I kind of liked that I got out of my my stuff yesterday. I was hoping that it was going to rally more today so I could sell into it. But to your point, I like that the vol is down. I'm trying to wait for the puts to get a little cheaper, for the vol to come in a little bit in the pricing to get better, to reload. But I was hoping that it would be at higher levels, and it couldn't even do that for me.
Mm-hmm. I'll give you that. We were up 90 on the E-mini S&Ps. I know that was just a quick little blip after the news. Not too much you could do.
I wish it would keep going. I need some new verticals in SPY. I need some new verticals in the Qs. This vol is too expensive.
Mm-hmm. Makes sense. Christopher, your words?
Anthony, the S&P and the NASDAQ are still both below their 1 week moving average, which they've closed below every single session since February 20th. And today in both ES and NQ, we ran right into that 1 week moving average and then sold off. So I want to see that broken first. That has to change. The momentum profile remains negative. There's no reason for me to get long yet.
Wow. Okay.
And that's from America's most bullish trader, straight out of the fine baked goods operators of Bedford, New York. You can find him with a bullish point of view and a fine muffin.
I'm bringing you to like a 7-Eleven next time you come through town.
Any fair weather day, I'll get you.
Forget coffee and crumpets. Okay.
A gourmet coffee and a fine crumpet and a bullish point of view leaves me as the bull. I'm the one out here selling Tesla put spreads. I tried to finagle Sosnoff into it with me earlier on Truth or Skepticism. He would have none of it. He's like, listen, I'm selling volatility any which way I can get it. But he wouldn't go directional with me. I'm a firm believer in the in Crazy Donnie's Tesla dealership down there in D.C. I think he'll do anything to make a deal. And I think that down 50% or whatever it is, like if you're not selling put spreads in Tesla today,
why even wake up in the morning?
Why turn on your computer, my friends? Why turn on your computer?
I agree, Dylan. You've learned well, and you are morphing into the old Tom Sosnoff of yesteryear, finding opportunity wherever it is. I mean, kind of like a moment ago where he said the conversation with you was non-political and it wasn't really, try not to get into anything and stir it up, from the man who needs to sell his Tesla because he loves the car but hates the person whose name is on it. It's a little. It's a little bit of an.
I don't know. This feels like a little backhanded action from you here in the group setting.
Johnny, don't be stepping up. Don't be
questionable.
Don't get out. Don't go outside of your little territory. Okay.
Like I'm happy to gang up on Tom, but this feels inappropriate.
I think it's very inappropriate, Dylan. I think he's using.
I'm happy to make your market.
I tell you what, I was driving in a Polestar this weekend, and it was kind of nice.
I've been in a Polestar once.
I'm just trying to get some puts sold 45 days out, 1 standard deviation lower. Send me the money and calm down.
Tesla's
Dylan,
my best trade of the week.
I'll ask you, because we have a similar sense of humor, I believe. Isn't it ironic how it used to be that everybody that was blue loved Tesla and all the granolas loved Tesla, loved the EV
You calling me a granola? You're calling me a granola?
We've come full circle. Now you got every red wanting to get themselves a Tesla. EVs are the best. I mean, it
just goes to show that nobody believes anything.
It don't mean shit anymore.
Nobody believes anything.
It's whatever fits your narrative. Price is king. Dylan is right. If you can't buy a stock when it's down 50% that you like and you think is going to go higher, well, you shouldn't be sitting in that seat like Tom Sosnoff. I'm 100% with you, Dylan.
Thank you. And again,
all right, good. We got
muffin.
More. You're welcome.
I know.
We got more overtime. Sosnoff, you want the last word?
No. Let's go. I mean, got a little down ticked him here about 7-8 handles on the close, but other than that, I'm going to agree.
Go get your panties in a knot. You'll be fine. We're going to take a quick.
I'm just going to agree with. I was just going to say I was going to agree with Vecchio that not the most bullish close I've ever seen, but we'll see what happens tomorrow.
No, definitely not the most bullish close after everything's happened. But volatility is really pointing to its over the downside. I mean, at least the downside. The lows are in for the time being. Sosnoff. I mean, you can take that to the bank, but. That's what you got to say things sometimes on the show that, give somebody something to do. Like when we were up 60, I said we got to go only up 30 to really kind of rally, and that's what we do. You got to give people something.
Oh, I'm going to give you something, all right.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime crew. Peace.
If you missed the live show, here's our cherry on top yearly recap.
We're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
days. 48 hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
Oh, and then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
It was beautiful.
on Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch muskies.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Inflation Wednesday and stocks rally. It is Wednesday, March 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Here to take you through the next hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're joining us on YouTube, why don't you come over to the platform? Come over to tastylive.com, see what we're all about. If you're already over there, come back to YouTube, join the chat, tell us what you're trading today. Has the market bottomed is the question on people's minds. We have the NASDAQ up by 0.86%, S&P up by 0.35%. On the other side of an inflation report that shows inflation isn't running away from the Fed's target. In fact, it's a touch softer than what the market was expecting. Nevertheless, the month-over-month run rates are in line with where the Fed's 2% inflation would ultimately end up, or the target would end up at 2% over the next year. So all's well that's ending well, I suppose. Stocks whipsaw over the course of today, though. They like the news, then they don't like the news, then they kind of like the news again. Ultimately, it's a modest gain. Bond yields are down across the curve. Well, bond prices are down across the curve, as it would appear that perhaps we don't need to be so worried about an immediate economic fall off, right? So there is a bit of a growth premium being pumped back in today. But now that the dust is settling and that the reach for cash is over, metals have had a chance to rebound. Gold closing at a fresh monthly high. Silver, likewise. Copper surging to the upside, hitting a new yearly high. We make our way over to the world of currencies, and it's a mixed bag for the dollar, but usual culprits there. JGB yields at their highest level since 2006. There's a lot of important things that are going on right now. And so, Dylan, you as the Bulls bull right now among us, why do you feel like now is the time to be looking to buy the dip?
I mean, just because the biggest, most powerful, most interesting, most compelling names in the financial markets are on sale. The Mag 7 is on sale, and Tesla is the obvious one, way on sale. But pick them. I mean, if you've ever looked at these stocks and wanted to own them, how can you not at least synthetically sell the put spread? Something. That for me, it's just the fact that the CPI number came in with the, of a clearance, like a permissive vibe. The fact that the selling stopped for the first day in many days, really, you look, the market's basically been in a free fall ever since Donald Trump announced that he was friends with Vladimir Putin on February 12th. And so you go from February 12th until today. You get the Trump Putin sell-off, but I say it stopped today, and I don't see how you don't at least nibble on a long Tesla position here, one way or the other.
Ilya, it does feel like the stagflation fear came out of the market today a little bit, right? Oil bounces back up a little bit, like positive growth. Stocks bounce back a little bit. Bond yields are a little bit higher. You don't seem to think that we're out of the woods, though. Forget the technicals. What does this CPI report tell you about the state of the economy?
I mean, if you look at what happened here and you kind of break this data down, it was a touch better than expected, but really these are rounding errors. So for the core inflation rate month on month, you came in a little, basically in line with expectations. You're a little bit lighter at the headline, and that's really the sort of upshot here. 2.8 versus 2.9 expected. The core month on month 0.2%, so a little bit less than expected. 0.3 was expected. Year on year 3.1. So these are generally numbers consistent with what the Fed might tell you and with what Jay Powell would have been sort of well positioned to say, as he did on Friday last week, which was, look, we have the luxury of time. There's a lot of uncertainty around everything that's going on with fiscal policy, but look at inflation is not running away from our target, and the economy is generally not falling off a cliff. We just got labor market figures that were softish, but not terribly soft. Inflation numbers that were broadly on course, if not sort of dramatic. And I think this is really what gave the markets a little bit of relief today. So let's say these numbers gave us inflation of 2.6, 2.7. The markets would go, oh my God, demand is completely falling apart. This is way weaker than expected. The economy is in some sort of serious bad way. And let's say that the numbers instead of the expected 2.9 came in at 3.1. And the markets would go, oh my God, the economy is in a bad way and the Fed will never cut again. This is a disaster. we're not going to get any monetary policy support, even as the economy struggles. This was magically Goldilocks, these numbers. They were a little bit light to keep the Fed in an easing stance, but only just a little. No growth scare, nothing to set your hair on fire about. And so the market said, okay, well, we've had a lot of selling. This doesn't change anything, but at least it doesn't make things worse. And so I think as you look at the stock indexes, they don't really run away on this. I mean, they pop, but they ultimately don't go very far. But if you look at vol does come in. And so at least there seems to be a level of kind of exhaling in the markets. PPI is due tomorrow. We're going to have consumer confidence numbers that are up on Friday. We'll see how shocking those are. But on the whole, we're probably looking at next week's Fed meeting now as the next thing. And to the extent that the markets have been kind of nudged away from the ledge here, maybe there's room for a bit of a bounce, just as sentiment normalizes away from panic mode. But ultimately, I suspect anything like that is about as long-lived as it takes to get to next week's Fed meeting, where the Fed will not give markets what they want, which is more policy support. That was not taken out of the markets today with any kind of vigor. The markets are still on the dovish end of where the Fed said things would be in December. If they don't get a meaningful revision in the SCP that endorses the market's view, you get a bounce into the FOMC. Then the FOMC takes everybody's knees out from under them, and back to the downtrend we go.
We do have that FOMC meeting next week. According to the CME FedWatch tool, there is a 1% chance that the Fed cuts rates. And so all attention will be on the summary of economic projections. That obviously is the Fed's set of forecasts moving forward. And will they adjust their rate cut expectations because of the tariff uncertainty? That is certainly something that the market's going to be watching out for. But if we've learned anything today, if we see that inflation is pulling back in, it probably gives the Fed a little bit more leeway to act sooner if it's so necessary, rather than being pigeonholed into a stagflationary corner where if they cut rates, they risk exacerbating price pressures, which will then inevitably hurt growth even more, undercut growth in real terms. I have a problem with this market on a technical basis. I said as much on last call, guys. Since the 20th of February, right? We break down below that 1 week moving average. Tests of it, we've traded above it intraday sometimes, but we haven't been able to close through it. And today, almost to the number, the 5-day moving average, the 1 week is 19,779. The high is 19,788.75. So a 10-point overshoot in the NASDAQ is nothing. That seems like a pretty clean hold thus far. Same thing for the S&P 500, where you see that we do overshoot a little bit, as we have done during the down move, but we still can't hold on to that gain through that key momentum level. So I'm looking at this market right now thinking that this is still something that's not too great. I mean, could this be the low? Sure. Could tomorrow we're back up at 5670 or 19,800 in the NASDAQ, and okay, we've crossed the thresholds by which this is appropriate then to start nibbling on the long side, at least technically, sure. But today does not give us that. And now we're going into the second half of the week, which has not been great this year. I mean, Thursdays have been okay enough, but Fridays and their horrible returns have given nothing to anyone. And I think that's a problem that we're going to have to contend with now as we go into another weekend where really anything can happen. I just wonder if there's a bit of cognitive dissonance being set up for the market. You know, like today to try to help growth or smooth growth fears. The Kevin Hassett, the chief advisor for Donald Trump on the Council of Economic Advisors, he said that he's tracking growth between 2 and 2.5% for the first quarter, Ilya. Now, we obviously don't take all these indicators seriously right now because we were still too far away out. But the fact of the matter is both the New York Fed Nowcast and the Atlanta Fed GDP Now have shown negative impulses, where either growth is slowing or it's outright contracting. Are we being set up in a way where it's almost the reverse Jack Welch? If we're being told that the economy is fine from policymakers, and then when we get the actual data, it's actually bad. it sets off a whole new round of panic. I mean, doesn't that feel like the game that's now being established here? And those data come out in about 5 weeks. So if the administration is telling us 2.5% growth and then it's flat, that means the market is totally off base and earnings are going to be weaker and yada, yada, yada. So I don't know. Maybe it feels like if there's a rally, it's a little bit of a trap given the current context.
I mean, clearly, I think the market is more so attuned to what the nowcasts are showing, not necessarily in terms of absolute values. Those values are way too early to take as gospel, but that's not what's important. When you look at the direction of travel, let's say of the Atlanta Fed GDP model, what are you looking at? All you're saying is we're taking incoming economic data and we're throwing it in the bucket. Now, as you throw more data in the bucket, which way does the direction point? How unmistakable do you need for this to be? I mean, as we can see very clearly on the screen here, the incoming data is taking the model in a direction. Now, don't get married to the idea that we're going to have growth between a 3 and 2% annualized contraction. Maybe it's not a contraction. Maybe it's closer to zero ultimately. Maybe it's a more modest contraction or not a contraction at all. The important part here is what the direction of the model tells you about the tone of the data. It's awful. And when you take that and say, okay, well, obviously the trajectory of the data has had to have been terrible in order for the model to be doing that. So obviously there is a clear sense that everything is not the same, okay, just fine. Okay, so that's already not what we're being told from officialdom. But then on the flip side, we have people like Scott Bessent saying the economy needs to detox from what? I don't know. Low unemployment and fast economic growth, maybe. But the messaging from the president, the messaging from the Treasury Secretary is, we're going to have some pain here near term. That's fine. It's all part of the plan. But if it is all part of the plan, then why are we just finding out about this now?
Oh no, they told us on day one they're going to bring down egg prices, Ilya. They just didn't tell us that they were nest egg prices.
So it seems.
Wise guy. We got a wise guy. It's a wise guy.
No, but the Trump put
just
is
in the
yields.
president's speech in front of Congress. The messaging was interest rates are going down and growth is ramping up.
The messaging was, I am a brazen liar, thief, and con man, and anything is better than these weasel Democrats. In fact, these weasel Democrats are so horrifying that you would rather elect a lying, brazen con man because at least you know what I am. I think that's the messaging.
I mean, maybe so, but the markets certainly don't seem to know where we are because the uncertainty,
clearly,
the direction of travel on that Atlanta Fed GDP Now tracker and the direction of travel on the S&P 500 sure looks about the same. And so that is to say from the upper left to the lower right. And so when I look at this, to me, it's like, well, okay, about the middle of this week, the market said, fine, we're not going to get clarity on the fiscal side. Throw in a bunch more easing in the Fed's rate cut forecast. Once again, what's going to happen is the Fed is going to have to come and bail everybody out with cheap money. But the Fed doesn't seem to want to do that. And now there's a little window here until the Fed reminds everybody that the answer is no next week. And so maybe there is now a little bit of room for some relief. But to me, that's not a reason to be a buyer. To me, that's a reason to have a good amount of dry powder on hand. I'm happy I got out of my shorts yesterday. And I'm certainly following the idea that what I want is money ready to deploy for when volatility is lower and you can sell again, because the trend is still very much down and nothing has changed.
Dylan, obviously, you have strong opinions on our commander-in-chief, but I wonder if, are we being hysterical here? And I ask that through the lens of this particular graph. This is the Economic Policy Uncertain Index. It's used to measure certainty based on news headlines and sentiment within news headlines. The global scale hit a high of 168 in September 2011. It hit a new high back in September, October 2009 at 204. Donald Trump's first election brought it to 275. COVID brought it to a high of 436, and now we're at a new all-time high here at 460.
This is an indication of uncertainty?
Uncertainty in news headlines around the world about the global economy.
Meaning that we don't believe the news, or that the news is expressing uncertainty?
I think that the news is expressing uncertain sentiment and fear. Is this an overreaction? Should we be more fearful about the state of the world than we were in September 2011, in October 2009, in March 2020?
No, I think that's for my money, by my arbitrary internal sentiment indicator, I would say that those are good equivalencies.
Do you think
that's a fair representation of a comparable level of uncertainty?
It's clearly not the case for other countries. We can go through here in Japan, the UK, they're all falling off. Japan's actually heading towards lows. China is staying elevated, right? India is staying elevated. But global economic policy and the big spike, it's coming from the United States here. This is the most fearful, dare I say, that the news flow has been around the economy since the pandemic. And prior to that, you're not going to see anything until the government shutdowns and the AAA bond rating being lost from S&P in August 2011. So with the volatility behaving the way that it is, right, were these also very good times to buy is also the other point. September 2011, of course, there's a recession that occurs thereafter. With the global financial crisis, was October 2008 a great time to buy? If you held for 5 months and you could ride it out, sure. And certainly if you held on for long, it's been good. But in the short term, I think that we need to be aware of the fact that this fear and uncertainty, even with a one-day drop in the VIX, still speaks to an overall environment. That means wipeout risk and another big red candle tomorrow are just as high as seeing a market that tries to pull together a bottom. I don't know how this caters to anything other than something what would be good for gold and silver still at these levels. Stagflation risk is not good for gold or silver. Right? If you're in a liquidation environment, you're getting rid of everything not nailed down to the floor. It's not good for gold and silver. At the start of the pandemic, gold and silver both fell. It's only once the easing comes in, it looks like, okay, the apocalypse isn't arriving, that these assets start to perform. And so I would then posit today, we see gold and silver on the back of this back away from stagflation fear, but fears are persisting nevertheless. Gold closes at a fresh monthly high. We also see that silver prices here are closing in at a fresh monthly high. I feel so much better about gold and silver right now than I do about ES or NQ, Ilya.
I'm certainly looking at gold here very closely. I don't really love silver just because it has that sensitivity to risk sentiment, more so than gold. And so I think any kind of renewed risk-off activity, or in fact any kind of belief in that the bias is still ultimately risk-off, I think that demands being a little bit circumspect on silver. But I do like gold, and it's getting into a place where you're starting to have maybe the opportunity to layer on the next leg if you haven't been long so far. And I had a piece of this rally from late December. I held it essentially through most of January and then missed the final maybe 50% of it. I'm looking now to basically find a way to get long. the risk reward is getting a little dicey. You're getting near that high. So we'll see what this looks like. If there's, let's say, a pause and hold here tomorrow, maybe the volatilities line up to where you can be a buyer of call verticals here. There's not a whole lot of desire to want to sell premium here, because if you wanted to go higher, it's probably not the direction that you're thinking for vol. So my preference would be a long call vertical, and maybe what has to happen is it has to break that high to really get the risk reward math lined up. I'm hoping not. I'm hoping it sort of settles and scrapes in the lower half of the range again to give a buying opportunity. So it's not a question of, do I want to be long? The answer is yes. The question is where.
Yeah, Dylan, can I talk you into getting some precious metals exposure as you try to play this Tesla rally?
I mean, silver is always a friend. Gold, gold, I'll never make a penny or I'll never lose. But it's hard for me. The day I buy gold, I'll have a different brain part. But silver for sure.
Okay.
For silver for sure.
Right now, the position that I hold, I rolled up the call spreads last week, 33.5, 34. I'm beginning to get to a place where, assuming you can almost see like this horizontal line that comes through on the chart. It's not perfect, but you get a close over there, and after this close, nothing else is closed up there, right? You have this clustering for a few days in October, but then once that happens on October 31st, the sell-off, this level right around 34 has been a line in the sand on a closing basis. We've tested it, haven't made our way through it. I would posit that if by the end of this month, we see some sustained action up here where we're trading, it could be tomorrow, for trading, we got to close above 34. This becomes a market where getting back to last year's highs and then continuing that longer term advance, as we've discussed for how long, potentially silver going back to $43 an ounce, it becomes a little bit more feasible looking within this particular calendar year. And we need to go. The weekly chart doesn't even cover this properly, right? We talk about a monthly chart here on silver going all the way back to 2011, breakout of a downtrend, multiple downtrends, if you will, but then you have left shoulder, head, right shoulder. A simple continuation effort calls for 40, an inverse head and shoulders calls for 43. This is behaving technically very sound along those lines. And so a punch through 34 after what's been several months of consolidation now, realistically, we haven't gone anywhere since late October. It may be the time. It may be the time. And Dylan, I think this actually echoes with our thesis on what happens to the Russian money once it's unfrozen. The UK, the EU, they're not going to unfreeze the Russian funding, but the US might, and they might allow the sanctions to resume, to end, while to be lifted, right? Normal trading resumes. We can have debates about whether or not that's appropriate, but from the additional capital that's coming into Russia's balance sheets, onto their bank account, do we think that they're going to recirculate those monies back into treasuries if they start trading again with the US? Do we think that they're going to start circulating them back into US dollars if they start trading with the US? I mean, again, the whole reason why we have a big trade balance with most of the world is that we buy stuff from people and we give them our paper in return. And with that paper, they buy our bonds. So do we think that Russia wants to hold our bonds or our paper? No, they probably convert it. All these countries are probably converting it. What reason do you have to hold the US dollar right now for it to be an unreliable trading partner? I know this is like the drill tweet, like you never got to hand it to ISIS, but when
you're sort of building up a metals bull case and also a Dubai bull case.
Right, and you're seeing the pieces all come together, and like I'm not a fan of the Ayatollah. He still has not responded to my direct messages from last year asking if they were going to attack Israel again. Okay, so like I'm clearly not a fan. I don't like when people ignore me. But he did say that why even bother negotiating with the Trump administration? They're not going to hold themselves to a deal. And if that's the prevalent attitude among other economies, Iran is a unique basket case. But if that's an attitude, you know what? Let's have a little bit less U.S. exposure incrementally. We don't want the euro, so what are we going to go into? Do we trust the yuan? No, we probably want more metals in our pocket. So I still these two have been the best things that have helped me out this year so far. I think in the Tasty Live account, we're still up around 10% year to date, not quite from where we were a few weeks ago, but weathering the storm because the metals and the bonds are protecting us during this time. And I feel great with today's price action. As good as stocks look off the lows here, gold and silver look that much better.
I mean, I agree with you on the direction, if not necessarily on the makings of the argument. I think if sort of the dystopian world that you're painting, which I actually agree is a very meaningful risk, I think if that transpires, you get a flight to liquidity, and that's very good for the U.S. dollar, which doesn't help gold and precious metals case. I think, though, that in that I agree with you. I think it's just a yields thing. I think before you hit real kind of left side of the dollar smile, fever pitch, sell everything that's not nailed down kind of a panic, I think there's a transition period. And that's where the dollar weakens, just because the markets basically say, right, there's chaos fiscally, so the Fed will come save us with lower rates. The relief valve will again be cheaper money. And now the markets have to basically decide, will the money be cheap enough, fast enough for that to work? And as we are learning in China, cheap money is an inducement, not demand creation. And if people don't believe you, well, then it's not much of an inducement. This is what's going on in China now. Notice we've just had the National People's Congress from the 4th through yesterday. Nothing is rallying. Everything is standing still. Because these deficit targets that they promised and the extra spending, it's not there. They certainly added to things, but the increase amounts to less than 2% increase overall of GDP in the deficit next year. That's not enough. And so if whatever you do isn't credible, then you can tell people you're doing all kinds of things. They're not going to buy it. So to your point, it is certainly something to look downwind and say, well, you can say all kinds of things, but ultimately, if the people don't believe, the whole thing is going to crater. And then really it is the Fed that's the only game in town. And if the Fed is slow, the markets won't like it. So I think there's a transitional period here where yields go down a lot more, and that will be supportive for metals all by itself, because the dollar should get squeezed right alongside, on the basic idea that the markets do believe the Fed. They do think the Fed is credible. They do think the Fed has been good at these types of things heretofore. Just look at what happened with COVID. All the Fed had to do was say unlimited QE, and the sell-off was over. They just had to say those words. So we have a situation where now I think it's just a yields thing for probably a few months. The first rate cut is expected in June, July, realistically. And so we have some room here for the markets to hope their hopes and for the Fed to let them down over the next several FOMC meetings to keep the sell-off going. And that's, of course, good for metals. I wonder, though, if confidence in the U.S. as a counterparty really starts to ebb geopolitically, if that doesn't actually prove supportive for the dollar. Because in that environment, everybody just runs away into cash, and no matter what's going on at the fiscal policy end, unless it's something really generational, let's say, like trying to take away the Fed's independence or some such thing, then I would suspect the safety is still in dollars. much like it was when the mortgage crisis and collapse was in the U.S., but the safety was still in dollars all the same. And volume.
Sorry, the sector rotation today with metals doing well. XME is up by 0.42%, but your leader and your winner is SMH. Hey, here's some nice signs of rotation. SMH is up 2.95%. XLK is up 1.58. Regional banks are up 1.17. The bank index ETF is up 1.04. XLY up 0.59. On the downside today, there are 9 that are red, 1 that's unchanged, 15 that are in the green. Of the 9 that are red, the worst performer, consumer staples. Hey, that's good. Healthcare. Hey, that's good. Wait a second. Why is the second worst performing ETF today retail still? This has been the canary in the coal mine for the market sell-off. It started weakening back in early December. It never recovered after the Fed meeting like the rest of the market did. It enters this year on weak footing and again never recovers like the rest of the market did. It breaks its uptrend from multi-year lows before anything else does. And today it's still falling. So we may look at the CPI report and as a collective group have a first blush, not a big deal. Good reason to bounce. I see this as the exact opposite side of the coin of my attitude for points over the past 2 years, where you get a little bit warmer of a CPI report. And I would mockingly say, you're really selling this when it means the economy is not falling apart and people are afraid that all the Fed's hikes are going to cause the economy to fall apart. If anything, a 0.1% beat in inflation means that things are fine, big picture. And the stock market would pick itself up the next day. I think it's the opposite right now, where we had a decent day today, but beneath the surface, still just not everything in order. And if everything was in order, then gold and silver wouldn't have outperformed the broader stock market today. Silver outperforms the NASDAQ, right? So people were deploying capital, but they're not jumping back in with 2 feet. They're picking up the pieces in areas where if the dollar continues to erode or the economy continues to stumble and face self-inflicted wounds, right? Then, well, XRT here, it's a 90.3 IVR, not a falling knife I would catch. The other sectors aside, this is the wart that stands out on what would be an otherwise decent day from a rotation basis. But Dylan, you mentioned that your favorite companies in the world, are in the tech sector, and you can get them at a discount. So let's go shopping here on Overtime today. What do you think about Apple at $216.98 right now? It's a fresh closing low for the year. Is this simply an opportunity to buy?
I mean, Apple I like less. I like Meta, Amazon, Tesla. Just because at least I can come up with a reason for Meta, Amazon, Tesla. With Apple, I don't have a reason that's particularly compelling for me. But I think Meta is, one of they're the dominant data vampire, Satan sort of overlord of the tech companies. And they really have figured out how to extract the most value from all the data. So anytime you can get Meta on sale, I think it's probably a good investment. Amazon, I think, is almost self-explanatory. The ultimate logistics and global supply company on sale. I mean, I guess you could argue global growth probably hurts Amazon more than your average tech company because Amazon is sort of long global consumption on some level. NVIDIA, you got it up here. If you liked NVIDIA, 20% ago, I mean, I guess, is it a growth? What's your reason? If why is NVIDIA down so much the last month?
Reasons aside, I think if you want to do some bottom fishing in the individual names, like in the Mag 7, I think that's a lot more appealing than trying to scoop up the index. Given the price action,
I agree. I mean, why not sell put spreads in NVIDIA, in Tesla, in Amazon, in Meta?
Just as a function of the breakdown here, NVIDIA closes back above its 1 week moving average today. Amazon closes back, well, not quite. It tried to. Meta, where are we? back above its 1 week moving average today. Just as quickly as it went up, it comes down. But we're effectively sitting at the breakout point right now before the market lifted up. So maybe too far, too fast. We recalibrate. Time for another leg higher. Some of the individual names are actually starting to show some signs that maybe there is footing for them to turn. Even Tesla today, back above its 1 week moving average. That's a nice little bounce at some levels that look familiar pre-election. I don't feel great about incur or ES, but I totally see the rationale where if I'm going to play the small in a name like Meta, I have a level to work with. There's decent vol. It's not over the top. We can go over the top. We can go to something like Amazon. We can go out to an NVIDIA with its 46. Actually, that's smaller than I thought it would be. Tesla's still only 66. But you have to have some technical basis to do that. I see them on the individual side still. Ilya?
But you wouldn't play it no matter you're not going near any of this.
I am not.
Because you think technically it's weak.
No, it's more of a function of when I trade single shares, I prefer to do it on a long-term time horizon connected to some thematic idea. And looking for a retracement bounce in a handful of names while appealing, I guess my mindset is if I'm looking at these names right now, I wouldn't be trading them. I would be buying and holding them.
Mm-hmm.
Right? Like I'd feel much better about buying Mag 7 20% off the highs and say, you know what? I think that Facebook is still going to make a lot of money in the future no matter what. I'm pretty sure that Amazon's going to make a lot of money in the future no matter what. Right? Like this is maybe the valuations are too high, but I'm going to buy this and this will go into an account where I'm literally not planning on touching it. 10 years, 20 years.
And if you didn't want to pick the companies, you could just buy the MAGS ETF. It looks almost identical to all of these things. I mean, there you go. There's a nice big spill. If you had a 10-year time horizon, even a 5-year time horizon, and you want it to be unleveraged, why not? Buy some here. If it falls another 10%, 5%, whatever, if it gets back to August lows, let's say, as a next step, buy a little more. Sure.
This is a great place to scale in, though, Elio. You get that move back above the 1 week in some of these names, and you could see that pivot through the August swing highs, lows that you have here in September. I mean, 46 in the MAGS ETF. This is a very difficult thing to do through options. I mean, look, 2.9 million shares traded today. It's nothing. That's less than, by the way, Dylan, that's less than UAL. You say 2 shares traded in UAL. UAL had 12.7 million today, so MAGs are.
Which, by the way, there you go. Like this is why this is a long-term idea. I mean, you've hit the nail right on the head. This is buy unlevered, scale in. If you get a chance at lower levels, I'll see you in 5 to 7 years' time. But if you're using options, so you're leveraged in a 45, let's call it typical DTE tasty world. Do you know that this is the end of the panic and this is the low? I don't think you know that at all. I don't think you know that at all. And so from a scaling in to own these companies, which are obviously not going to go anywhere longer term, yeah, I totally get that. But to be the kind of tactical opportunist that we are here, and to speculate that within the next month this is the low, I'm not ready to do all that.
Small caps are down pretty big. And I say that because we are looking at names down in the neighborhood of 25% when you look at the average Russell 2000 stock. The average S&P 500 stock at the lows in the market today was down 23.8% from the metric I was tracking. So while the Mag 7 names are off big and the index itself is only off 10%, there is this barbell type of situation going on right now where it's the very top of the market getting hollowed out and it's the very bottom rung of the market getting hollowed out. I think that's a really fascinating dynamic now that we now have the average S&P 500 stock down more than 20% from its 52-week highs. Ilya, what does it take for you to declare that we're in a bear market?
I mean, I've been short since early December. I don't.
So we've been in
really-
the bear market since early December. Got it.
Yeah, I mean, I don't really care whether you want to call it a bear market. I think it's kind of arbitrary when people go, "Oh, the market is down 20% or whatever it is. It must be in a bear market." What does that mean? Is that an actionable thing where you go down that amount and everybody goes, "Hey, everybody, we're in a bear market. Hear ye, hear ye." Send out the notice across the Bloomberg terminals of the world. We're in a bear market.
Now you can start selling.
Yeah, tell everybody to pull the ripcord, break the glass. Now it's on. No, it's basically a journalistic artifice. And so when I look at this and I go, okay, well, has the market been going down? Yes. If you waited to sell, waiting for to get into quote unquote bear market territory, you've missed a lot of selling that you could have been doing if that was your disposition. If you are going to try to chase it here now because a bear market has been declared, does that mean that something is going to continue to go down necessarily, or did you just walk yourself into terrible risk reward? Well, who knows? But certainly nothing has to go down automatically, and you could be buying the at least near-term lows for now. We just heard on last call, Tony was saying the lows are definitely in because vol is in. I get that. That may very well be. The VIX is down a good bit off that spike high today, despite the lackluster progress that you actually make on the price action itself. So I don't really care about declaring a bear market. I look at the trend. The trend is lower lows and lower highs. It is therefore, by definition, a trend down. Until you violate that, let's say by getting back north of 5,800 here, so back into the big range that we cracked before the move began, essentially undoing this kind of headless horseman head and shoulders or double top or whatever that mutant thing is there. Unless you undo that, the trend is down. And so I'm selling rallies. I would just very much love for the market to have a rally for me to sell.
I'm still waiting for the markets in turmoil special, guys. Someone sent me a link last night.
The Chiron.
This doesn't count. I'm pulling this up because we're trying I want to know what we're looking for, right? This is NBC News. It's nightly news. It's market turmoil. This is not it. Okay.
This is not.
We're looking.
No.
We need a special report.
Wait, it's got to be a CNBC special. It's got to come from a finance network.
Has to be a special report.
Yeah, just because
from a finance network, CNBC. I'll accept Bloomberg, but really it's got to be CNBC.
It needs to be CNBC. So yes, NBC. You get your peacock. You're almost there. It's a peacock. It's not CNBC. So someone tagged me in this today. Oh, I saw markets turmoil headline on CNBC. They sent me this link. This is NBC News. This is nightly news. This doesn't count. Right, the 100% hit rate with your 40% average return comes after you see this on your TV screen, okay? And that's just history, 100% hit rate since 2010. May not like it, maybe that's
we did get an economist cover.
We got an economist cover.
We got an economist cover last week, screaming recession and setting dollars on fire. Now, did that stop the market from selling off more this week? No. So, these are not absolute indicators, but we did get an economist cover. Maybe I'll get a rally to sell.
A rally to sell. Yeah. I mean, if this thing does rip, you're not in the clear until you get back to like 5780. And even then, like maybe more.
Is like, if you tell me where the S&P closes today, and if it's not above 5,800, I don't buy it.
Okay. I think that's a fairly simple rule. Guys, crude oil here does have a bounce today. That relationship between oil and bonds and stocks stays in place. They've all been moving together. When oil's up, stocks are up, bond yields are up, and then vice versa. When stocks have been down, oil's been trending lower. We have bond yields trending lower. I suppose there's a contemporaneous indicator then, the fact that oil is up today, the fact that you have treasuries at the long end of the curve, they're about half a point weaker, and stocks have shown some tendency of bottoming. I guess the question here is, before I go over to you, Dylan, how should traders approach equities if they already have existing oil and bond positions? And any combination of that. I mean, are you saying I don't want to be, in theory, long oil because I'm already short bonds and long stocks? Or do you not put too much stock into, play on words, too much stock into the fact that these correlations are so tight right now after a period of market stress?
I'm open-minded now and forever to market relationships waxing and waning. I think when you start to convince yourself that certain correlations must hold, you get yourself in trouble. Let's look at the makeup of the situation. The market has been worried about growth, and the market seems to be entertaining the idea that conflict might be on the way out. The efforts that the administration is going through to strong arm, both in the Israel-Hamas theater and in the Russia-Ukraine theater, all the parties to get to some kind of a stoppage point is unmistakable. You can debate the tactics, this, that, the other. They are clearly very, very committed to stopping the fighting. And you can argue with what they're ready to give up to do that, or who they're willing to yell at and who they're cozying up to. I mean, certainly the message out of Secretary of State Marco Rubio after that Ukraine-U.S. meeting in quote-unquote neutral ground of Saudi Arabia, which is just hilarious.
Aren't those the guys who financed the 9/11 attacks? Never mind. Go on.
And most importantly, these are the U.S. allies that are not Western Europe, and so it's a neutral-ish place to meet within the sphere of influence, let's say. And the message out of Marco Rubio is, well, Ukraine's on board. Moscow, your move. If you don't want to accept these terms, which, by the way, Moscow has opposed, if you don't want to accept them, well, we know who the problem is, was basically the direct quote. Okay.
The problem's Ukraine, obviously. That's the answer, right?
And the Ukrainians were saying, listen, if it took Zelensky getting yelled at the White House to demonstrate who the problem is, we'll take it. Intelligence sharing has resumed. Military aid has ostensibly resumed. All of this starts looking like arm twisting. So if you get rid of the immediacy of the threat and you get to some kind of slow-walked ceasefire in both of these conflicts and things settle, is that good for oil? No. That takes a risk premium out of it. The growth situation, is that good for oil? No. So what are the implications for the bonds? Well, less inflation maybe, but not for good reasons. And the market is already pining for the Fed to ease, which they seemingly don't want to do in any kind of hurry. So you have to, I think, look at what the connective tissue between these things looks like now and whether you think that's going to keep holding. If there is some kind of an outsized jump in oil for some sort of strange reasons, of course that's going to knock back on bonds and knock back on stocks to some extent, especially if there's a growth scare and all of a sudden markets go, wait, the Fed's not going to be able to cut because oil, holy moly. Okay, but that's not where we are. And I don't think you can assume that that's necessarily the case. The market is already yelling at the Fed to ease. If oil were to come down, they would yell even louder. But the tenor of the conversation would be the same, and stocks would look the weaker for it as the Fed resists. So the overall narrative, I think, is very much intact and is consistent. To want to be short oil on a bounce, to want to be short stocks on a bounce, to want to be long bonds unless the uptrend breaks, which it hasn't, and to look for basically a few months of, much like as we saw last year from mid-April to about mid-August. The markets yell at the Fed to cut rates next year as the Fed resists.
Dylan, we're heading into the final day of overtime tomorrow. So we have a back half of the week coming up. What are you most interested in? What's the most interesting news story right now for you to follow? And please don't say tariffs.
No. I mean, I think for sure it is the tension between the central bank and the setup for next week and whatever happens in Fed funds, and the sort of as people digest the inflation data, you know, for the obvious reason, which is that there's all this pressure to bring rates down. Mortgage applications have come up, which is something that is very, you know, that Trump for sure wants lower rates, market rates, regardless of central bank rates. And to the degree to which the CPI number is legitimately indicative of inflation being in retreat or in calming down, whatever that means, and to the degree to which that actually empowers the Fed to be more of a stick in the mud as it relates to further rate cuts, you know, that you're setting up for a potential that the weakness in the CPI increases the probability of a conflict between the Fed chairman and the president. I guess I would put it that would be the simplest. Not that we're there, I mean, and I think that's interesting that the Federal Reserve has been almost ignored by the president in lieu of all the other things that we know have been going on. But to the degree to which the economic data and the rhetoric from the Federal Reserve is fewer cuts later, not more cuts sooner, which to pick up on Ilya's point from last year, and to the greater degree it's fewer cuts later, that this is a different president who will for sure directly engage and may even blame the Federal Reserve for the market sell-off, because obviously the president would never assume responsibility for any negative outcomes of any kind for anything ever.
I think it's really fascinating that the strategy here is ultimately like, oh, if they can engineer a slowdown and they get lower rates and they get the tax cuts and they get their deregulation, and everything will be good after that. You know, I joked before about bringing down the nest egg price, but like the path to getting lower rates and all that stuff matters. If the path to lower rates is a housing market collapse, an economy that goes in the tank, 7% unemployment, you're just creating new problems. Yeah, we got rates down. Good. Oh, but we now have a 7% unemployment rate. Shucks. What will the future hold? I don't know. None of us do. As Lloyd Blankfein once said, can't see the future more than 4 inches in front of me. So with that, we'll see everyone tomorrow as we try to figure this all out again. Overtime is done for today. Same time, same place. As always, Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York, alongside Dylan Radigan in New York. Dylan, you can have, I'm telling you, we're going to 7-Eleven next time. No more coffee and crumpets for you.
We'll love those crumpets.
We'll be back tomorrow, same time, same place. See you then. Good luck trading. After this, Ilya Spivak with Macro Money. I'm on with Vic Jones tonight. The Price of Truth. See you there.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
So you're an active trader.
Looking to increase your return, decrease your risk, or quite possibly both? Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, turn, shuffle, rock, shuffle, rock, shimmy.
I took 5 lessons for cases where all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down. Right together, spin. Left together, spin. Hitch, cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
Perfect, and you got the bed. You got everything.
That is not even close.
That bitch stole my. Oh, it's flawless.
Oh, look, it's beautiful.
Flawless.
No. You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not being traders here.
Do not engage.
Wait a
minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year. and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Markets are left wondering what to do after CPI data in the U.S. seems to come in just about in the perfect Goldilocks window, a little bit softer to keep Fed rate cut hopes alive, but not so soft as to spook anybody anymore about oncoming recession. And so we get a little bit of a break in the U.S. story to look over to the world's second largest economy, China, where we have had for the past just about week or so the annual National People's Congress and hopes that it would finally do enough to revive economic growth. That's what we're going to focus on here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We are looking now at this National People's Congress meeting wrapping up. The last day was yesterday, and everything that we needed to hear seemingly is already out there. So now the question that we are going to be asking ourselves is, did it achieve what policymakers wanted? Did the message that come from this gathering imbue anybody with any kind of optimism that the world's number 2 economy will become a potent counterweight to the headwinds that we see to global growth from the slowdown in the U.S., which of course is the reason why stock markets have been in such a bad way since late February. So let's first do a bit to diagnose what the issue is here and then see if perhaps we have enough that's going to get done here to change things and what that might mean for markets overall and, of course, for our trades. So this is the issue in a nutshell. In the red is Chinese real GDP growth. In the yellow is nominal GDP growth. The difference there, of course, implied inflation. Real GDP takes away the impact of prices on the growth of the value of the economy's total output of goods and services. Nominal GDP leaves it in. So when you take the difference, you are left with that inflation adjustment. And of course, if real GDP, that is growth minus inflation, is running faster than nominal GDP, that is growth plus inflation, well, then inflation must be negative. That's exactly what you see right here. For 7 consecutive quarters now, inflation in China has been negative to the tune of nearly a full percentage point of GDP growth on average. That is, of course, an absolute indictment of the state of the economy. and indeed why policymakers in China have scrambled so significantly with such apparent energy to get the economy moving again. What this basically means is that at the economy-wide level, China is on discount. Typically, if there were robust demand, then would-be buyers of things and investors in things would be competing on price. That is to say, if I wanted to buy housing or certain consumer goods or construction equipment or anything else I might spend money on, and demand for these things were healthy because the economy were growing, other people would want to buy them too. And since output can only move so fast to satisfy everybody's demand, that increased level of activity would mean that people would compete on price, that is to say, be willing to pay more to get the thing now rather than wait for whoever makes the thing to make more of it. And so you'd get a positive inflation rate as a function of demand. If the economy is in this way, now for 7 consecutive quarters in deflation, what that means is that there isn't that pull on demand to get prices moving higher. There is instead a discounting because of an absence of demand to try to clear inventories, to try to get things that have been unsold to be bought. Now, if we look past the sort of slower moving GDP numbers to higher frequency inflation readings from CPI and PPI, the Consumer and Producer Price Index, we get the same story. CPI has dipped back into negative territory in the most recent readings. PPI has been in negative territory going back to 2022. So whether you look at GDP or you look at the headline inflation readings themselves, the implication is an absence of demand. Look at official PMI numbers. These are measures of the pace of economic activity growth. China releases 2 of them. There's the S&P Global version and the official version. This here is the official. This is the S&P Global. Perhaps the most interesting thing here is that the official numbers actually look worse than do the private sector estimates, which for China is a bit unusual given their at least alleged penchant to rose tint the data a bit. So now, when we look at these numbers, of course, as ever, 50 is neutral in the logic of PMIs. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. In this case, we can see both manufacturing and service sector indexes, the official ones from the National Bureau of Statistics alongside CFLP, the Chinese Federation for Logistics and Purchasing, which is a government entity. You're basically hugging 50. That is to say, the economy is at a standstill. And you've been hugging it now for quite some time. This was the reopening from COVID, where you had a bit of a jump in manufacturing, a more potent jump in services, which lasted basically into the middle of 2023 and promptly gave up the ghost. Here again are those official or those S&P Global numbers, the private sector numbers. You can see they're actually a little bit more positive here, a little bit further above 50 than are these official numbers, but nevertheless, hugging 50 and stuck in a narrow range after a bit of an upswell, in particular in services, at the beginning of reopening. A slight bump in the first quarter of 2023 and then fizzle. You can see the absence of demand across the board. If you look at consumers, in the yellow here are household time and other longer-term deposits, that is to say, savings accounts and the like. money that isn't on demand immediately as a checking account would be, which is the red line here, demand deposits. These are immediately liquid, there to be spent checking type household bank deposits. You can see here going all the way back from the global financial crisis in '08 to the start of COVID, there is something of a range here that holds. And then after COVID, clearly there has been a change in pace. In the blue line here is the ratio of time deposits to demand deposits, and we can see savers are tucking money away. Whatever measures we might see that officialdom has tried to get them to spend, consumers are not moved. They are putting more and more money into longer-term time deposits. That is to say, they are saving more and more relative to how much they have on the ready for consumption. You can see very clearly here, after COVID, the wedge between these deposits is widening significantly. Foreign money is also pouring out of China. In fact, the year-on-year rate of decline for foreign direct investment has only recently become slightly better than 30% year-on-year, which is an absolute catastrophe. Money is practically pouring spigot-like out of China. Foreign direct investment exiting, going all the way back to 2023, as though the ending of the lockdown somehow gave permission for an outflow. We can see here with the reopening a slight pop, and then very quickly by the middle of 2023, as it becomes apparent that the economy is not rebooting, you get to net outflow, and since then the pace has only become worse. Moreover, it seems like the stock market has in some ways become an outlet for capital to flee. We've been looking at the outperformance of Hong Kong markets relative to mainland markets by looking at the Stock Connect flow volumes, which is essentially a way for people who have access to mainland stocks to trade directly in Hong Kong, and for people in Hong Kong to trade directly on bourses on the mainland. And we can see here at the top in the green here, this is the volume of southbound capital flows across the Stock Connect. That is to say, money going away from mainland bourses. And we can see that thanks to that, the Hong Kong stock index is looking relatively chipper since the start of the year. Note that mainland stocks, the CSI 300 Shanghai Shenzhen index, is listless here in a range because northbound flows, that is to say capital going into mainland markets, has been going the other way, narrowing. And so it doesn't look like what we're seeing here is outperformance by Hong Kong for very much of a reason other than money is trying to leave the mainland, and with capital controls and other barriers, doing so through this Stock Connect release valve seems to be increasingly something that is occurring. So what does all this mean for officialdom? Well, they've tried to stem the bleeding. So far, all of it has mainly focused on using monetary incentives and otherwise creating inducements to free up more money for other people to spend. So boosting the stock market by direct cash injection, lowering mortgage rates, lowering bank reserve requirements, reducing overall interest rates, buying up unused land and unused housing. All of that seemingly aimed at freeing up money, making money cheaper to borrow, and in a whole host of ways, giving an incentive for there to be demand because more money has become available to businesses and consumers to do that. However, it hasn't worked, largely because confidence isn't there. As we just saw from that chart of deposits in microcosm, you can make the money cheaper. But that doesn't mean people are going to borrow, and it doesn't mean that they're going to spend. That cheaper money seems to be getting tucked into savings rather than actually going toward economic activity. This is the Bloomberg Credit Impulse Index for China. It measures the share of new loans in GDP. We can see here the share has been falling. This index coming down since, again, the middle of 2023. Here's the reopening bump here, and that has since fizzled. Moreover, the rate at which the share of new loans in GDP is falling is in the double digits, shockingly. Not too far off 20% year on year, which is, again, a scary number. So not surprisingly, the markets were very interested to see what the National People's Congress would do to finally kickstart some stimulus. And what the markets wanted was a Western-style fiscal largesse effort, where the government says, you know what, we're not going to worry about inducements. People don't want to spend. We can't convince them by making money cheaper. Somebody needs to make some demand in this economy. We're just going to go and do it ourselves. This is, of course, what we saw during COVID in much of the Western world, where governments opened up their borrowing and said, all right, we're going to take on a bunch of debt. We're going to spend a bunch of money, but the economy will not stop. And, of course, that's paid dividends, in particular in the U.S., where the spending was most generous. U.S., until the latest confidence-driven misstep in growth in January and February of this year, was easily the best performing major economy and the fastest growing of the major engines of global demand by a long mile over the past year, certainly over the course of 2024 and certainly over the second half especially. So in the case of China, this is what the markets wanted. A big dose of government spending to kickstart demand. And after the NPC was all said and done, this is what we ended up with. This is a chart from The Economist that summarizes how much extra we are getting. Now, China is, as ever, an interesting case in terms of reporting its deficit. It gives a target for the headline deficit as a share of GDP, and it duly increased that target from 3%, where you can see it's been hovering for the past several years, up to 4%, which is a record high, as if to signal we are prepared to spend a bunch more money. Now, on top of this, there is special bonds, that is to say, off budget, not in the headline deficit calculation borrowing, that is nevertheless approved by the Politburo and the MPC, that can be done by local governments. Then there is more borrowing by the central government. And indeed, we can see here that the borrowing by central government sources is increasing. Borrowing by local governments is increasing. To do a quick rundown here of what officials had on offer, as we said, the official deficit target up from 3 to 4%. Target inflation rate lowered from 3 to 2%, as if to sort of tacitly admit that inflation has been undershooting and China is struggling to do anything about it. The growth target left at around 5%, so same as last year. As far as the stimulus provision, beyond that 4% versus 3% rise in the deficit target, which amounts to about 1.6 trillion in additional spending, you also have these special purpose local bonds. That issuance goes from 3.9 to 4.4 trillion, so a bit of an increase there. And then the The federal government, the central government's borrowing, also sees a slight pickup in special bonds issuance. All in, that's about 1.8 trillion yuan, so a little bit higher than it was last year. But as we can see from this chart, the increase in the deficit amounts to a bit less than 2% of GDP. So if right here you were sitting at, let's call it maybe about 7, then here you're just over 8, not quite 9% of GDP overall. And the markets really wanted a spending boost of 2% of GDP at minimum just to stop deflation, then more to really get the economy going. So this was something of an underwhelming outcome. Now, you might say, well, who says it has to be 2% or more? That's just somebody's forecast. Well, that's true, but the response from the markets has clearly been circumspect enough to suggest this underwhelmed. Here's the days of the NPC right here. We can see the market rallied into it and then stalled. This is the ASHR ETF that tracks that CSI 300 index. It's not much better for the high-flying Hang Seng index and the big names there. This is FXI, the China large cap ETF, but of course all these names are listed in Hong Kong. And this outperformance here, as we just saw earlier, is the same as what you see here. This is around this apparent outflow of capital through the stock connect from the mainland southbound and ostensibly then to other markets. So what we see here then is outperformance that isn't necessarily good news. And of course, through the MPC itself, we can see not really new optimism here, stuck and not going very far. So the markets clearly looked at this effort and said, this is not enough. This will not do it. Over the coming days, we're going to get a bunch of economic data that is going to put all of this in still more stark relief. New loans expected to come in significantly. They spiked to 5.1 trillion yuan in the previous set of these numbers, as though to signal that growth targets being met by the end of the year got papered over. But we have a significant decline to just 1.3 trillion for February. Money supply growth seen holding unchanged, but outstanding loan growth seen slowing from 7.5 to 7.4%. Total financing seen down from a whopping 7 trillion to just 2.5. So the markets are not expecting for all of this excitement to boost borrowing activity. And then all the measures of economic activity, industrial production seen slowing, retail sales seen slowing. A little bit more perhaps on capital investment, but the trend for Chinese economic data is to underperform relative to forecasts recently. And so even that might turn out to be a miss, all of which might crystallize the market's attention to, we've seen U.S. stocks fall, we've seen other stocks fall, but the one place people haven't been paying attention to and where there has been relative standstill is China. And perhaps this inability to rally, even as the government tries to sell people on a potent stimulus effort, this may be finally the trigger to get a sense of capitulation and perhaps to offer investors an opportunity to sell a market that hasn't fallen yet around these global recession fears, but which may be primed to do so. That is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
Do I want to play me? I don't know her name.
For Liz?
Margot Robbie.
Robbie, however you
Oh,
decide it, right?
accept. Thank you.
Yeah. And to play me?
Oh, Gal Gadot. You want
Wonder Woman.
Gal Gadot. I said Marissa Tomei in the 90s for you.
Okay.
And I said Kristen Bell for me. And that's what she goes, she's
Kristen
5
Bell
foot
is
tall.
little. And so is Marissa Tomei. We're both like a foot taller than
Hey, we're short stacks. That's why I had to have somebody here.
I think we're better off with Margot Robbie and Wonder Woman.
What'd you say for me?
George Clooney.
Ooh!
You like that? You like that?
I
You like that?
put Robert
Put
De
me up
Niro
there.
for me, but I put Ryan Gosling for Mikey as well. So we got that. We got that in there. That was an easy
Yeah,
one. I
simple.
mean, you're
big Gosling boy.
It's almost a clone. Like you're just a slightly buffer clone of Ryan Gosling. If I could say so myself.
My ego might pop right now.
Yeah.
I'm just so filled.
I don't know who's gonna play me. I look at
Pick something.
Who'd you write?
Throw Mama from the Train actor. I don't know her name.
Who'd you write for yourself?
George Clooney.
That's what your son put for him.
Oh, see? See, we think
Who
alike.
did you write? Who did you write for that?
John Travolta.
I really like that George Clooney.
George Clooney's a good one, right?
Yeah. I mean, in passing, I've been told that I've heard things that I look as though I am, a George Clooney-esque look to myself.
Little Sally Pimienta.
I've been told a couple times, just here and there.
We got
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and today, well, I'm flying solo. We're giving Shelly, Katie, Dan a little bit of time off. I'm going to do a demo instead here on a new update, giant update, I should say, to the Tasty Crypto app. We've got a lot of new features that I'll walk through here in just a second. But before I do, if you're not streaming this on YouTube, the chat is open. Get over here. Keep me some company. Type something crazy in the chat as well. And go over to the Tasty Crypto YouTube and subscribe to the channel there so that you can get all the content after the fact. We will be uploading this on demand. So obviously, it doesn't apply if you miss it now, as I say this, but this will be up there if you want to review it. And as we go through some of these features, sometimes it's always good to go back. But that said, let's just take a quick look at our slides, the contents of today's demo, take a peek at what's happening in the market, some updated trading ranges as well. We sent out our markets update email this morning. So if you didn't get that, also head over to tastycrypto.com and sign up for the newsletter. We send an email midweek on Wednesdays, a little markets update email, and then also on Saturday morning next to Orange. That said, today we're holding a demo. What's new in Tasty Crypto? We've got a big update to the markets dashboard. We've added a watch list now. There's a news stories. I know it doesn't sound that exciting, but we've got a fun way to kind of go through and peruse the news that we'll talk about. We've added a couple more blockchain networks. So additional Ethereum layer 2s. You've got Optimism and Arbitrum, support in there. And then one of the features I'm probably most excited about, the ability to buy crypto from Tasty Trade in your Tasty Trade account right here in the Tasty Crypto wallet app. So we'll get into that in just a second, but I want to take a quick peek at some updated prices here. A little bit of a bounce in the market. Post CPI came in slightly below where I think expectations were. So maybe you get some whipsaw in terms of interest rate expectations for what the Fed does next. Regardless, probably due for a bounce given the selling pressure that we've seen in here. It's been pretty ugly. As you can see, down double digits in most cases outside of Bitcoin. And it's been a ugly couple of months, to say the least. No real change in terms of some of the price momentum signals that we see, though I will call out Bitcoin for now has gone from bullish to neutral on the weekly. Not a good sign. ETH bearish on the weekly, as it has been for some time. And now from bullish to neutral in terms of how we track those moving average crossovers on a monthly basis. So continuing to break down there. Not a good sign, but it is crypto. It can change in an instant. We shall see. That said, let's take a quick look at volatility. Implied vols still where they've been for Bitcoin. Hasn't moved too much. 58% in IV terms. ETH 76%. A little bit of a discount in there too, given the realized vol that we've seen. But in terms of expected moves on a 1 week forward basis here at the current spot price of right around 83,000 for Bitcoin and an implied volatility of 58%, you're looking at a $6,700 move roughly. So your range is 76.4, 89.8 ETH, about $200 there. That's come down a bit as the price has really just been cut in half over the last couple of months. Solana, $24 move, range is 101 to 149 there, and you've got Doge and XRP on the screen. Let's see who's in the chat before we get started. Justin, what's up? Crazy House, how you doing? Good to see you guys in here. If anybody else is on the show, well, send us a note in the chat. That said, let's jump into the demo. We have a fantastic way of pulling up the apps here. We talked about the Tasty Trade product and the Tasty Trade interface update last time that we did a demo. Today, we're going to go through the wallet app. So what we're looking at here is the Tasty Crypto mobile app. This is available right now. This version of it is available in both the iOS and Android app stores. The iOS app update came out on Friday. We just pushed the Android or Google Play Store update here today. And what this app gives you the ability to do is not only just track your balances on chain and really be the custodian or the owner, really the true owner of your crypto, and that you're in control of your private key. It also gives you access to DeFi, what I like to call on-chain opportunities. We'll talk about our DeFi dashboard in just a second. But we've started to add some more content, in a sense, our markets dashboard. So you have this concept of markets, market awareness. You have the ability to create a watch list. Let's go through that to start with. So this is one of the biggest new features that we've added, and you'll now see that there's a markets tab in the navigation. When you get there, there are a couple of data points at the top. So one of the things that we talk about quite a bit here on the show is Bitcoin market cap dominance. You can see that here, 61%. It's been stuck at these levels for really some time now, and this is about a 3-year high. We've got a fear and greed index that's pulled in from CoinMarketCap. So clearly, sentiment is pretty bearish out there with fear and greed at 15. And then you can see trading volume as well over the last 24 hours across the space and the total crypto market cap of the assets that are tracked by CoinMarketCap. So you've got 2.69 trillion, up slightly here as you would expect with the bounce. That said, this is an easy way to keep track of crypto prices across the market, whether it's Bitcoin or any alt or meme coin that you're interested in. You can also add coins to your favorites. So I'll show you how to do that here in just a second. Let's say that you're looking at Solana. In the upper right corner, you've got this little star. Tap that, and that will add that to your watch list. So if that worked correctly, we should now see Solana on the favorites there. Also have a couple of lists that will just sort on a daily basis by percentage change. So if we look at the biggest gainers over the last 24 hours, you can see those here. You can also see those top losers. I don't know if that's a good thing, but the biggest losers here, largest downside moves, you can see those over the last 24 hours as well. But I like the ability to just start to add different tokens as I'm interested in them or I'm starting to trade them. I can add those right there to the favorites. But if we go back to our markets dashboard, the next thing that I want to point out, if we could throw the app back up on the screen here, the next thing that I want to point out is the news stories. So this is something that we've added recently, and I think I maybe previewed this on an earlier show. But let's say that you want to see what's going on with Solana or Ethereum. If you just tap on this for a second, it's going to bring up the different news stories, and you'll be able to scroll through this. And we might be going through a little bit of technical difficulty, so bear with me for just a second. We'll get the app back here on the screen. But what you'll see is that when you tap on those different symbols for the tokens, they're highlighted, as you would notice as well in an app like TikTok or Instagram. You'll be able to then go through the news by tapping through it and kind of reading each one of these as a story, which is pretty cool. So one of the features that I like a lot that we've added here keeps me coming back to the app. Easy to see what's going on, and that news feed you're going to be able to navigate pretty easily. So a couple big updates there as we're trying to just work through some of the technical difficulties. If anybody has any questions for us or has any feedback on the app, if you're a user, anything that you'd like to see, feature requests, anything at all, type it in the chat if you're over here on YouTube, and we can talk through that. Additionally, we've added new support for Optimism and Arbitrum. So this is a wallet that will give you multi-network support. Right now, or initially, it was on Bitcoin when we launched. On Ethereum, we added Polygon shortly thereafter. Then we added Solana, Base, the list goes on. Optimism, Arbitrum support. So if you have tokens or you're trading on any of these networks, you'll be able to see all of that here in the Tasty Crypto app. So I think we might have worked through some of the issues that we were having. I think a little bit of a connection with the device that we use.
Yeah, I think there's still an issue. I have to come back in.
Yeah, no problem. All good. We're keeping you on your toes here. In the meantime, let me jump back over to some of the slides that we have. So I was just talking about the bloodbath in markets that has continued, maybe a little bit of a reprieve here today. But we've added a lot of new tokens to the Tasty Trade platform. Going to continue to add more. So you'll see hopefully this week or at the latest early next week, we'll make an announcement, another 6 tokens or so. But recently we've added Cardano, Chainlink, Aave. Avalanche is coming next week, but we've got the price performance up here. It hasn't been doing very well anyways on the screen. And then Shiba Inu, another meme. So these are some of the additional tokens that we've added. Coming next, we've got Aptos, Sui, or Sui, however you want to pronounce it. We do have Avalanche coming. I'm trying to think what the other couple are. Stellar Lumen and Tezos. So a few more tokens that you'll be able to purchase in the Tasty Trade brokerage platforms. So if you don't have a crypto account and you're interested in trading crypto at Tasty Trade, we talked about this a week ago or so. All you have to do if you have a cash or margin account is enable crypto. And I think we're back. So here we go. All right, back to the Tasty Crypto app. This is what I was talking about. This is the news feature that I like a lot. You can scroll through this back and forth, and then any of these that you want to read, just swipe up, and that'll take you to the actual news article. So we've got this feature in here. It feels a lot like some of the social media apps that I think people are familiar with, but that's one of the new additions that we've added, and then you can just close out of this, take you back to the markets dashboard. And it looks like we do have a question from Eric, so let me just jump into the questions here so I don't miss too many of these. Eric's question, I got a really stupid question. No stupid questions, Eric. You're all good. Is the Tasty Trade desktop application connected to exchanges so I can just trade? Yeah, so the way that crypto works, through Tasty Trade is that there's a third party, Zero Hash, which is the custodian of the assets. They manage the wallets, and they also facilitate the trading functionality. So you can think of it almost as crypto as a service. And in some ways, in terms of the securities trading, now the order routing isn't the same, but you have a custodian of the assets or the securities. In Tasty Trade's case, that's Apex Clearing Corporation. You can think of Zero Hash as the clearing firm or the custodian, and additionally, the firm or service that's going to facilitate the trading and the exchange, right there, powering these features and this offering in the Tasty Trade platform. So that's how it works. And then one more question here, Justin. Not a crypto user, but you mentioned a bullish or bearish sentiment. Is this based on trends? So what we look at in terms of our performance dashboard is just trying to get a sense of what the trend is over multiple time frames in terms of price momentum by measuring moving average crossovers. We're going to drive different signals from those depending on where the price is in relation to them. Have to get some more detail around the fear and greed index here that we pull in from CoinMarketCap. I think if you go to the CoinMarketCap website, they probably have a definition for this. There's no way to click on it in the app today, but we can provide some more context there. I don't know exactly how that's calculated. So that is one of the bigger updates that we've added to the Tasty Crypto app here, this markets dashboard and then this news feature. I also hit on some of the new blockchain networks that you can trade on. As you look at what we have set up here, we've got Base, Bitcoin, Ethereum, Solana, and you can see which network these tokens are on given the little logo for those chains that appears next to the bigger logo for the token itself. So if we look at SPX 6900, hell of a token. Performance hasn't been that good, but love the token. That's on Solana. And you click into any one of these, if you haven't used this before, you get a similar experience to what you might find in a lot of different trading apps where you can get some more information about the token that you're looking at. So if you want to see a price chart over, and these are nasty, by the way, you want to see a price chart over different time frames, look at a 3-month, yearly, look at the lifespan of it. You can do that. You can also get some news here, and you can see activity in that chain. So we've swapped in and out of this. This was part of the bag battles we were doing earlier. But if you scroll up and down here, you can get some more information. So you'll see that price range too, and kind of where the current price is in relation to the time period that you're looking at. You can see how this has performed, or any token has performed against Ethereum, against Bitcoin. You can see where the volatility has been over a certain period of time. So if we wanted to look at this over the last year, what is that volatility? Well, you're annualizing at 109% in volatility terms. So that's going to be a realized vol. Get your market cap, et cetera, et cetera. And again, you can see some more details for each one of these tokens. And as long as the data is available, we'll be able to pull it in here and show that for each one. So I like this a lot because it also kind of functions as a watch list. It functions as a way to learn a little bit more about some of the tokens that you're trading. And you can see all of your balances here for this address. All of these exist on chain, but you can see them all here. You can control the token. You can swap it. You can send it to another address directly on chain, all from the wallet app. So that's the next thing that I want to talk about is how to swap tokens in the app. This utilizes decentralized exchange. So this is going to happen directly on the blockchain network that the token is on or that you hold it on. So if we look at USDC, we have a US dollar stablecoin. If I click on this, I can see the token details for it as well. I can send it, or I can generate the address that I can send it to, or I could receive, I should say, it at. If I click on swap, though, I now have the ability to trade any token for another. In this case, it's pretty straightforward. I'm going to buy something with the USDC stablecoin, the dollars that I hold. So I can see the balance that I have. If I click on max, it's going to allow me to trade the whole thing. But if I want to go back, and let's just say that we want to buy $20 worth of ETH, and we want to do this on the Base network, all I have to do is select the token that I want to swap it into. There's going to be a small fee, and at times, depending on the order size, you'll have a little bit of slippage as you would experience on a decentralized exchange. But that's all going to happen in the background. You don't have to go to Uniswap. You don't have to go to another decentralized exchange and connect to it and set up your trade. You can do this directly in the app. So it'll pull the quote in. It's going to aggregate liquidity from different decentralized exchanges, and then you can conduct the swap. So here, I'm going to buy $20 worth of ETH. I'm going to do this directly on chain in the wallet. Full custody right here within my own control. So similar to a confirm and send order review screen, I hit swap now. It's going to take a second to load. But what this is going to do is swap my $20 in USDC stablecoin for roughly $19 worth, or almost $20 worth of ETH. And then that'll update in a second on the activity. And you can see that there we go. We just swapped USDC for ETH. And this is one way that you can trade directly in the wallet, again, directly on chain. So when you go to tastytrade, you can acquire ETH, Bitcoin, eventually stablecoins such as USDC. There are many other tokens that we're continuing to add to the offering, but there certainly aren't thousands of tokens that are available. Not everything that's on chain. If there's something that you want to trade on chain, maybe it's a meme coin, it's something else that just launched, or it's a DeFi token, something that we might not offer today at tastytrade, all you have to do is send that crypto, ETH, USDC eventually, to the wallet address that you control through the Tasty Crypto app, and then you can use the swap functionality to trade it for anything else. You can see the charts in there, you can see the details for those tokens. Then you hit the swap button, queue up your order, and within a few seconds, you're good to go. So that's a bit on the swapping functionality. We've talked about the markets dashboard. Want to take a look now at the DeFi dashboard that's in here. So in addition to just trading tokens, being in control of your wallet address and being your own custodian here across all these different blockchain networks, you can also access on-chain opportunities, participate in DeFi protocols directly in the wallet by going to the DeFi dashboard. And so you can see that there's a couple of protocols that we've been at recently or recently viewed. You can get different categories here. So if you're interested in decentralized exchange, there's a list of different DEXs that exist. If you're interested in yield generating opportunities, so maybe you want to stake your ETH on Lido, you want to borrow or lend on Aave, you want to participate in any of these protocols, you can do that. And that's not just on Ethereum or on Ethereum layer 2s, that's also going to be on Solana. And you can see that here in the app. But let's say that we want to go to Uniswap. We want to set up a liquidity pool, and we'll show you how to do this on a future show. I've covered this a little bit in the past, but let's say that we want to go to Uniswap. Just tap that Uniswap logo. You're going to have to connect the wallet, and so we are working on improving some of this functionality so that it's just one tap, two taps, and boom, you're good to go. But once you click on connect, you'll see that the Tasty Crypto button pops up, and then you do have to click it again. But now I've connected this wallet. I've signed a transaction to establish a connection with the wallet address and the protocol. So now, if I want to swap here, I can, or I can use the liquidity pool functionality. I just have to click on the menu, click on pool, and you can see that I previously had a virtual and wrapped ETH pool set up. Click on this. Can see the details of that pool. If this was something that was in range, we'd have that in range indication, and we'd see what's going on in terms of the fees and the underlying pool size. Obviously, virtual has gone down quite a bit, so this was a lot higher earlier. But what we'll do on a future show is remove liquidity from this pool. We'll swap around a little bit, and then we'll set up a new, let's say, ETH USDC pool, and start to track that, because the fees are pretty attractive, or they can be at times. It's obviously not without risk. You do have that underlying volatility risk, but when you're doing something with, let's say, a stable pair and ETH, it's a little bit less volatility because you don't have two cryptos in there at the same time. But that is the DeFi dashboard. Any of the activity then that you partake in, the trade history, the swap history, doing something on a DeFi protocol such as Uniswap, you're going to be able to see all of that here, as well as just send and receive right here on the activity page. So if we go back to the $20 in USDC that we just swapped, I click on that, I can see some transaction details. And then if I want to go directly to the block explorer, just click on completed there, and that'll take me to Etherscan, base scan, you name it, and you'll be able to see the actual transaction details or more details around that transaction. The next thing that I want to show here, and we'll take a couple questions as I see there's a couple of you typing in the chat, so thank you. The last thing that I want to show is just the ability to buy crypto or transfer crypto from tastytrade. We've made it super easy to do this. You have to log into your tastytrade account, assuming you have a tastytrade account. If not, you can go and open one up at tastytrade. But let's say that you've done that. You have crypto transfers turned on. You have crypto trading enabled, obviously. If that's the case, you can log in, and I've previously logged in here. You can see the accounts that you might have, and this one I know is connected to or enabled for crypto trading. And when I do that, it's going to give me two options. The ability to withdraw that crypto, and that's just a transfer. Let's say that I have some ETH. I want to move it to this address, and I want to create a liquidity pool on Uniswap. I would withdraw my crypto. I would be prompted, and I can just show you here, prompted to withdraw the ETH. You're going to see how much then is there. So just a little bit over 1 ETH. You can move the whole thing over to this wallet address if you want to do that. Additionally, it's really easy to buy crypto using this interface. Now, this is in your tastytrade account. When you've logged into the tastytrade account, it's going to use the tastytrade API, and you'll be able to purchase crypto with any cash that's available in the account. So if I click on buy crypto, I have the ability to then purchase any of the tokens or cryptocurrencies that are available through tastytrade. Once I do that, in this case, let's buy $5 worth of ETH. I can buy it in cryptocurrency terms, so a tenth of an ETH, a hundredth of an ETH, whatever it might be, or we make it really simple. You can do a dollar amount, and this is just going to route a straightforward market order, dollar amount market order, review buy, place that order, and you'll see how quickly this will fill the order. And this is, again, going in the tastytrade account. So there we go. We've got the notification that we successfully purchased a small amount of ETH, $5 worth here at the time that we've purchased it. So again, you can log into your tastytrade account directly in the Tasty Crypto app. And once you've done that, you've established the connection, you can transfer crypto that you hold, or you can buy crypto with the cash that's available in your account. That said, the crypto that you buy, it does stay in your account unless you withdraw it. So those are some of the big updates that I was excited to show off here in the Tasty Crypto app. New version that, again, just went out on Friday, and the Android version was just released today. If you don't have the most recent update, make sure to update your app. If you're interested in checking out the Tasty Crypto app, again, you can get it in those mobile app stores. So let me just take a quick look at some of the questions that we have. If I don't get to it, I apologize. Definitely join in our Discord or hit us up on Twitter at Tasty Crypto. We have a Discord community as well. Can provide support in there, answer questions, feedback, suggestions. We want it all. But let me see. We'll just go from the bottom here. Jose, thanks for the feedback there. Eric is asking, considering the nature of DeFi swaps, Tasty does not take a fee, right? No, so we do take a fee here. It is the only revenue generating mechanism that we have in the wallet app. So there is a 75 basis point fee on the trade as part of the swap here in the wallet. But we have some additional features coming to that as well that I think you'll like. We might make some adjustments as a result. But right now, similar to MetaMask, similar to Coinbase Wallet and many others out there, we do charge a fee for the swap on a per trade basis. Rick is asking, does it exchange coins across different networks, for example, ETH versus Avalanche? We do not have cross-chain swaps natively in the application. I will do another show where we break down Uniswap a little bit more. You're not going to be able to swap from, let's say, Ethereum to Solana or to Avalanche today through Uniswap, but you can do a cross-chain swap between Ethereum and other layer 2s. So maybe you have ETH and you want to move it to Base and create a liquidity pool there, or swap for other tokens on Base. You can do that very easily using the Uniswap interface. So we will we'll show that here on a future show. But we are working on cross-chain swaps, and I'm thinking, from what I've heard, it's going to be around Q3. But we'll have the ability to eventually swap from one chain to another. That's not just EVM. So looking forward to that. But great question. Great questions all around. Let me see what else we've got here. And also, shout out to Lone Sophos. What's up? Actually, now that I look at the clock, we are running out of time. So if you have additional questions for us, a couple places where you can reach us, support@tastycrypto.com. Join the Tasty Crypto Discord community. It's becoming pretty active. We've brought that back. Super excited about that. Or hit us up on Twitter @tastycrypto. And to Lone Sophos' point here, if you missed the show, you're just joining in, we will post this video on the Tasty Crypto YouTube channel. Whole separate channel, separate network. Dan and Shelly have a show on there that's live on Mondays and Fridays called Beans. So check that out as well. But get over to the Tasty Crypto YouTube channel and subscribe to that. So thank you all for showing up here today. Apologies for some of the technical issues that we experienced. We'll iron that out going forward. But we appreciate the support. Appreciate you showing up. And again, if you have any feedback, suggestions for us on the app, feature requests, or any bugs to report, send it to support@tastycrypto.com. But that's going to do it from my show. Victor Jones is up next with The Price of Truth. I'll be back on Monday with Katie McGarrigle. Until then, I'm Ryan. Peace.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
It was beautiful.
on Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay. I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this. You need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because
Thanks for that. Oh, yeah, it is Wednesday, March 12th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast called The Price of Truth. I don't know the rest of it. Chris, it's Wacky Wednesday, so we have with us another big brain, perhaps the biggest we've got with us, Chris Vecchio. Chris, how you doing, my friend?
Doing well, Mr. Jones. I'm doing well. How are you?
I'm all right. Your, and I do mean your daylight savings time is, it's kicking my ass a little bit. I'm good.
Our daylight savings time is kicking your ass a little bit? Not apostrophe R-E. Okay, sorry.
Didn't Little Rubio submit something to get rid of daylight savings time? Whatever happened to that?
Little Marco has definitely submitted.
I thought he did, though, during the Biden administration. What happened with that?
You know how much of a disaster this would be? We tried this in the 1970s, right? And we did it, and people hated it. And so Congress flipped it back. They go, okay, we'll reverse it.
Why would they hate it? Just they don't. What was the deal? Just getting dark too early?
Do you want to send your kids in certain parts of the country? Do you want to send your kids to school in the dark?
I don't care.
Well, that's you. Most people don't want to send their kids to school in the dark. So
I mean, if you get up early enough, you're sending them to school in the dark anyway. So I think the real answer is everyone get up earlier. Or here's the other answer. Let's get rid of the concept of time and go on pure circadian rhythm.
Yeah, in that case,
that's a real problem.
I'm still like 25 at that, if that's the case.
Chris Vecchio, my friend, we got a lot to talk about. But before we do it, we should probably say what's up with the people. Shout out to everybody watching on tastylive.com, as well as all of you watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of the conversation that you are going to see on your screen somewhere over here, there's only one place to do it, and that's on the evil Google YouTube. So head on over there. Find the Tasty Live YouTube channel. Start bashing your face and your wrist and your fingers into the keyboard. Doesn't matter what you say. Type in random mass characters if you want to, just as long as you spoof the Google algorithm into putting us in front of as many people as possible. Let's reprogram the world one view at a time. Chris Vecchio, what say you about price action? Super open-ended question. A little vol crush, a little relief rally, and I do say little, not much doing to the upside, but I suppose anyone who's looking for an upside and risk will take it. What do you think?
Still garbage. Last week we talked about the momentum structure where the market had been unable to close back above the 1 week moving average in either the S&P or the NASDAQ going back to February 20th. And that remains the case. In fact, if you look at both ES and NQ, and you were to, on the Tasty Trade platform, you can go to the indicators tab and add an EMA and click 5 in there. If you were to do so, you would have find that, well, both ES and NQ failed at their 1 week moving average today on the rally. So the momentum profile remains weak. There are signs, there are indications that perhaps we are getting close to a bottom. Oil rebounding, treasury yields moving a little bit higher, those are good signs. We're moving away from stagflation, recession mindset, if you will. But the actual price action has not turned the corner. Some things have individually. You can look at Tesla back above its 1 week. You could look at SMH back above its 1 week, XLK. So there's a smattering of some hope that's starting to green shoot up if you look on a sector by sector basis. But by no means am I comfortable laying out new capital for long deltas and equities, which is why I haven't. And I've been sitting on the sidelines waiting patiently. I still think technically this is a market that can still fall. That could be below 19K for the NASDAQ. It could be to 53.75 for the S&P. So either momentum breaks to the downside or we keep going to those double top targets. I'm happy to see what the market gives me on either end before I make a decision.
I don't think I'm jumping in with both feet, but I think Friday I got short vol and built the position up at the beginning of this week, and then I've been nibbling on Newmont Mining, Freeport, Tesla, if you can believe that. Nvidia at 108 got interesting, but I think I'm a little different. I think the way that I do this is when assets start to get cheap, you can start to buy into those assets and still run short, like S&P futures over the top of your portfolio. So then what happens is you're not really changing your portfolio delta if you want to stay neutral or slightly positive. You're not changing the portfolio risk theoretically, but you are starting to accumulate stuff that's getting cheaper without sort of being, terrified that, am I picking the bottom or am I concerned about my portfolio risk? So that's kind of like what I tend to do when this stuff starts getting ugly. I probably agree with you. I don't know that we're at the bottom, but I think when vol, like when the VIX is 28, nearly 30, when front month futures, like we were in pretty decent backwardation, and the world's scared of everything right now. So like, what additional fear can we hit? It was an interesting pocket, but I do agree with you. A 1% rally, all of that, you get a vol crush of like 10%, and that's good for 1% in the S&P. Not exactly a shining signal of strength today, for sure. I would agree with that.
No, and it feels like we're still waiting for the next shoe to drop. Tomorrow,
which is what?
Who knows?
I thought you meant like PPI or like Canada retaliation or a Trump tweet.
Well, no, it is a Trump tweet that we're waiting for, a Trump truth, whatever we call it these days. It's the fact of the matter is this is a market that's hanging on his words, hook, line, and sinker. And I think tomorrow is actually a pretty important day. So we have a shoe to drop. That would be when the Ontario Prime Minister, comes down to D.C. to meet with Howard Lutnick, the U.S. Commerce Secretary. Because we just heard this week there was, for the first time ever, you could track tariff rates globally on an intraday basis when we temporarily had a planned 50% tariff rate on Canadian steel and aluminum yesterday for a few hours to then it ultimately being lifted. And in response, my electricity prices won't be going up as a result of the trade war. So that's good. I think it's only about $12 a month it would work out to. But still, Victor, I could do lots of things with $12. I could buy some really deep out of the money calls in the S&P for $12. Maybe. So with that, that actually becomes something where, Premier Ford has a great deal of power and sway within the Canadian political ecosystem. If there is some sort of understanding or memorandum of understanding that's reached, that helps lift the veil of uncertainty. That more or less becomes a green light for equity traders. And, Ilya and I have both been, I think, beating from the same drum, which has been this all feels like big picture posturing for the USMCA. It's ham-fisted. It's not the way that I would be going about it, but you can kind of look through all the noise and see that Doug Ford himself talked about the USMCA as why he was coming down to discuss things with Howard Lutnick this Thursday. So if you find that there's a reason, like let's say we just get an announcement that there's a preliminary agreement for some sort of freeze, right? We've agreed to begin the negotiations for a revitalized, renewed, a renegotiated USMCA. And during the renegotiation period, the threat of tariffs will be lifted. No one's going to levy them. No one's going to threaten to levy them. We're just going to let the negotiations play out. Like if a memorandum of understanding came out between the U.S. and Canada, or at least something that points to that occurring in the next few weeks as a result of tomorrow's meeting, you can start to do some planning, right? Businesses all of a sudden say, okay, there is a light at the end of this tunnel. There is a grand strategy here. I'm trying to make sense of it all. Is there a grand strategy? Part of my brain says absolutely not. It's just chaos, but hoping to find some signal through this noise. If that's where we end up in pointing in that direction, then okay, this has just been a negotiating tool. Vol's really high. Let's get a turn from the bottom here, and maybe we get a snapback.
I thought about this today. I want to ask you this question because I keep hearing from really, really smart people, not on this network, but I hear from like this presentation that this is complete chaos. People are shooting from the hip and there is no strategy. And I had this thought, like if you mess with people's money, if you mess with, there's no worse crime in America than messing with rich people's money. And if you're messing with rich people's money, you're going to hear about it. And I wonder, Chris, like, why don't, if we are just being, there's no strategy behind this, there's no deeper potential for upside gain, why aren't the most powerful rich people or wealthy people in America speaking up or saying anything about what's happening right now? Do you think it's because that there's sort of an acknowledgement that there is a strategy? You might not like it, you might not like the way we're going about it, and I think that's total fair criticism. But this idea that we're just playing bumper cars, to me, it's like it's not like intellectually honest, No,
but I feel like it is honest to suggest we're playing bumper cars here because we had a day last week where you had Kevin Hassett come out in the morning, right, and say that the tariffs weren't happening, and then you have Donald Trump come out literally 8 minutes later. But that's the bumper.
He always undercuts those people.
What's the point though, right? Like the only thing that you're doing is undercutting confidence in your administration because you send out these surrogates to speak on your behalf, and it's like, well, what they say doesn't matter. And so, yeah, maybe everyone only then pays attention to Trump, and that's great for him personally. But then all these other vectors of information that we as market participants are supposed to take seriously, we just downgrade. And like, oh, yeah, Kevin Hassett said that. Well, we know that Trump's going to pull the rug on his point of view in a few minutes, so who cares what he has to say? And you look at the market today, Kevin Hassett saying we're going to have 2 to 2.5% growth in the first quarter. That should be big news. But that should be big news.
He's always done that. But he's always done that.
Not necessarily.
I'm just saying that.
Has he done it with Elon yet? Has he done it with Elon yet?
I'm saying that's not evidence that there isn't a strategy. What you're presenting isn't evidence that there isn't a strategy.
Sure. Then let's go to the reporting that's come out from various outlets in recent days where senior White House aides have gone on record saying we don't know what the deal with the tariffs are. He seems really committed to them, even though we think the markets are reacting to them.
White House aides? No. I've seen Bessent communicate very clearly about the strategy. I've seen Lutnick communicate very clearly about what the strategy is around tariffs.
Bessent's been very clear about it. Lutnick's been. I think he's going to be the first administration official to leave.
I think he's a goofball. I think he shouldn't be there.
He's a little out there.
But in a way, I feel you're arguing both sides because you started out the program and you're saying that this is sort of step one. And what I've said is this is step one of renegotiating the North America economic bloc in order then to go renegotiate with China. And I think you're saying that on one side, but then you're also advocating that this is pure sort of non-strategic chaos. So it's either one of the two. It's I understand the strategy and I don't agree with the tactics, nor do you agree with the strategy, or there is no strategy. We're just doing random shit on a day-to-day basis and hoping for the best.
I think there is a fine line between the two, and I think yesterday's White House press conference with the press secretary explains it perfectly. She was questioned as to why the tariffs were increasing on Canada and Canada only, and the response was that Donald Trump didn't like the way that the Ontario premier was speaking about him. But conducting policy based on the arbitrary and capricious nature of what offends the president is
don't
just
do it
like
how you feel. Don't judge. But here's the point.
We levy tariffs against Canada for what are completely arbitrary and capricious reasons already.
Wrong.
42 pounds of fentanyl out of 13,000 come from Canada. Fentanyl is not a Canadian problem. This is a Mexican border problem, right? If we really want to get
you and I already agree that's a false premise.
So it's a false premise.
It's not the reason for the negotiation.
But in the world of
no serious person believes that.
In the world of real politics,
Trudeau,
every country is going to stick up for their
and all those
national
people don't believe
interest.
that.
But every country is going to stick up for their national interest. And when this guy's saying, "I'm going to make you the 51st state," right? Like, I'm going to take over your national interest. Your national interest no longer exists because it's subordinate to mine. It changes the outcome. We may think it's negotiating posture here in America, but in the world of real politics,
I do agree with that.
Every country looks out for their own interest.
I do think what you're saying is true. It changes the outcome. I think you've seen a national rallying cry. I think it's inspired this sense of sort of nationalism within Canada itself. I do think it's having adverse effects to whatever the U.S. administration's goals are. I think it's working against them. So I would agree with that. My only point, Chris, is either, for instance, to your point on the 50% tariff. The 50% tariff to me was if somebody, if you're in a negotiation, right, and somebody on the other side says, okay, you know what I'm going to do? I'm going to be the tough guy. I'm going to slap these tariffs on electricity, and I'm just going to stop sending electricity down to New York, this state and that state. And I'm going to leave 1.5 million homes without electricity. You can do one of two things. You can either back up and now you appease this other person in the negotiation, or you go scorched earth, and let's see if this guy has the cards. And I think what Trump did is he goes, F this guy, I'm going to go all in. And then you got to see the other guy play his hand. And what we found out, the dude had a 7-deuce offsuit, and he talked tough, and he was not willing to go through with. He didn't have the fucking cards, man. And that's what it wasn't capricious or arbitrary. We saw somebody go, okay, I see your raise. Call and then some. What do you got?
Victor, this wasn't Mark Carney. This wasn't Mark Carney, right? This was this is like if the governor of Wyoming said something about the Canadian prime minister and was like, "Oh, you know what? I don't like what that Wyoming governor said about me."
That's not what it was. He had to. It's
play an Ontario premier.
He had to play cards. You either back down. And then this guy would have done the same thing, but you've given this guy the upper hand. That's not the way Trump plays. And I'm not saying this is right, dude. I'm not saying this is the right way to go about this. Okay? So if I'm going to give you that olive branch and say, I'm not saying it's right. I'm just saying
I think this is the right way to go about this. Oh, we're so going past each other.
I know. I'm just saying we're playing cards. And that, if you want to see that action as just arbitrary and capricious and whatever, we're playing cards, man. And the dude pressed. And we can either lay our hand down or you bet over the top. And we bet over the top, and he worked. He laid his hand down. So what if you argue with the results? The results were electricity's flowing from Canada, and this dude's coming in to have a conversation with the president. That's the result. If you don't like the tactic, just admit that the tactic worked.
I don't think they needed to do that for the president of the United States to hold court with the premier of some Canadian province.
I agree with that.
You're the president of the United States. You call people into the Oval.
I agree with that. I'm not saying they're the best tactics, and I think you catch more flies with catch more flies with honey or whatever.
Catch more bees with honey than vinegar, but
yeah. Is that it? I always mess that one up.
Yeah.
Anyways, I think there's room in between for us to meet. This is wild, and if you want to form a strong North American economic bloc, there's probably a better way to go about it, because even if we renegotiate the USMCA, right? And we become this strong North American economic bloc. How pissed off are the Canadians right now? You know what I mean? What does it take to repair this relationship? Because they're pissed, bro. And they probably have every right to be.
Piss off Canada. Come on. The nicest people.
That's very true. So what do you do with, you don't believe in the rally, but you do have pretty high vol, man. We went from nearly 30 vol yesterday down to 24. You already have a crush, but you're still at historically elevated levels. You're still in backwardation in the VIX term structure. So it's not like that vol crush took everything out and there's no fear left in the market. So what do you do?
No, nothing. I mean, a week ago.
You like selling vol here, selling neutral vol, or you're sitting on your hands? Like, what do you do?
I'm just completely, for equities, I'm completely hand sitting right now.
Oh,
yeah. I know. I am the worst in many regards.
I hate you.
But like a week ago, like part of the reason you taught me, like the banana zone, the gray zone, whatever you want to call it, for VIX is like 18. If you're at 18, you're just as likely to go to 20 as you are to go to 16. So kind of just chill, right? Yeah, S&P may be near support, but momentum's negative and we're in that gray area. That was enough for me to say, I'll just be patient. And that was 600 points ago. So I'm just being patient right now. And I think that suits, just given my trading style, I know I'm never going to catch the top or the bottom. That's not who I am. That's not momentum. I will always miss the turn. The last trade in the chain will be a mess, guaranteed, right?
I don't see you as I would give yourself more credit. You're not a pure momentum guy. Momentum guys are idiots. Momentum guys are idiots. You're not a momentum guy.
You see how smooth this brain is, Victor?
I would give yourself way more credit than that. Momos are like my worst enemy. You're not in that camp.
No, but like if the momentum turn won't happen on like a daily time frame. But if the way that I'm looking at this, ideally 53.75 washout, that'd be great. And then I could go in there and say I have a reason to be down there, regardless of the vol environment. But right now here, I'd like to see a little bit of a turn first, and then it's still more of a sell the rip than buy the dip environment. And I think what one of the big tells today, and what has been one of the tells for the past few weeks, has been XRT, the retail ETF. That was the first
ever invented, by the way.
One of the worst. And yet, when you look back at the data, historically, it's the one that's most sensitive to recession fears in markets. Mm-hmm. So what happens today? New yearly lows. There are green shoots, XLK, SMH, they all look really good right now. But you have XRT, the one that topped in early December, the one that fell after the Fed and couldn't rebound like everything else after the Fed, the one that's was closely tied to U.S. consumers, finding new lows today. And so this was the canary in the coal mine, right? You think about sector rotation. XOY had a nice bounce, SMH had a bounce, KRE had a bounce, but not retail. Consumers still look in trouble. Yeah, there are construction problems. You say it's the worst ETF ever created. Fine, that's fair. But, I'd like to see some of these warning signs stop flashing red. Give me a rally here first to show me that there's better breadth. And moreover, coming into today and even at today's lows, like close to the average S&P and median return of the S&P 500 stock was close to negative 23% in 2025, or at least from their 52-week highs. There are flavors of a bear market floating around in the air right now. And I just don't like how it smells. So patience is a virtue more than ever.
Don't like how that smells. I agree. XRT isn't as bad as it once was, I guess. I'm looking at the holdings right now. But I've also been watching. The XRT is something it seems you like to watch. We've been watching the home builders, which are equally on their ass, which I find even more telling, quite honestly, Chris, because mortgages were at their peak, were like 7% or something like this, and they've backed off their highs. I don't know exactly where they're at right now. I'm not in the market, but I think we're at like 6.6% or something like that. Mortgages have dropped by like 40 basis points, which makes sense. I think we're off 40 basis points in the 10 and 30, something in that ballpark. And it doesn't matter. Like, And in 2022, if you go back to the previous point where we had pretty decent volatility, housing stocks led. They were on their ass first, and everything else started to come with it. So I'm with you. We're probably not out of the woods. And the way I think about things is a really funny, probably a bad way to think about it. But we're 6,000 plus or minus 200, and I think we've broken into what looks like new market structure below our previous range. So I just go, okay, if we were plus minus 200 before, what's a wider volatility range? If you use something 50% greater, so 300 points, then we are 5,800 is your upside, 5,500 is your fair value, and then 5,200 becomes your low. So your 5,300 washout makes a lot of sense to me but it also means that where we are currently, it's probably close to fair value once you go and you scare the shit out, you scare the shit out of the children and everyone pukes. We're probably close to something like a fair value. I could be totally wrong. I'm just guessing, finger in the wind, and this is not a scientific approach, but that's why I'm okay maybe taking some stabs at long deltas on decent collateral here, because that's my view of the world.
Listen, now you look at where we are in the charts, at least in the S&P ESH 5 contract, you could make a case that from the lows we are in this contract's life to where the highs are, you're just a bit below the midpoint. If you want to play the high-low range there isn't short iron condor position that you could put on. I don't like playing stocks, sideways chop. I'll play other assets directionally neutral, but for stocks, I like to be I'm a bull's bull. I'm either buying or I'm doing nothing. And maybe that's a bias that I shouldn't hold, but we're learning here still. In any event, I'd rather wait for a washout because then riding the wall of worry is, particularly when it comes to my relationship with Ilya, will be that much sweeter.
Well, I don't know what that means.
He's the bear, I'm the bull. It's like,
are you having knockout, drag out fights on your show or something like that?
Totally respectful. It's like a Hannity and Combs situation. And like when the market goes down, people tweet at me like, you owe Ilya an apology. And then when the market goes up, people will comment on his YouTube videos like, you better talk to your boy Chris. He knows what's up. And it's so funny. It's like, what are you guys doing? Him and I've known Ilya for half my life. I've worked with him since I was 18, right? Like him and I are boys.
That's unfair for him a little bit because you get to ride positive drift.
No, hey, that was his choice. I did it. He worked there first. I just filled the gap. So
wild. All right. So what do you think about bonds here? I want to talk about some of the juicy headlines that have come out in the last couple of days. But for now, We'll stick with price action. Awesome. Bonds 116.5. It's to me, this has been a bit of a dead trade. People keep asking me, you long bonds? I'm like, no. Once we started sniffing 120, I'm flat. It also seems like everyone that I talk to wants to be long bonds, which is always sort of the first yellow flag. What is your thought about bonds, and then the setup that going into next week's meeting, that if the market is right, and that's a big if the market is right, we're about to continue or start a new cutting cycle with at least 3 cuts. The last time we saw something like this, the long end lifted. Why shouldn't I think that we're going to get the same thing again?
I don't know if the cuts are really all what that matters here for the long end of the curve right now. I mean, and they should, but there are clearly greater forces at play. Fiscal dominance is a theme that's dominated macro conversation in recent years. How if the government refuses to do austerity, if it's spending too much money, it forces the central bank into taking a position that it would otherwise not want to take. And I think that's kind of the story here right now. The Trump administration has been very clear that they want lower yields. I tend to think that it's not the end destination that matters. I think the journey is pretty important too. I'm not a full Machiavellian, as it were, Victor. So if we get to a 2% 10-year yield, but the economy contracts by 10%, I'm not going to consider that a win. But nevertheless, you have to just take some of the comments that we've heard from these administration officials at face value, where they say things like, we're not looking at the stock market, or we're ready for a detox, or We're ready for a transition period. That's all fancy talk for recession. And what serves you best during recession? Long bonds and gold. So where am I playing right now? I've been playing in the long end of the curve, and I've been playing in the metals. And for the past 2 weeks, one of the reasons why I haven't taken a bath here and I've been so patient is because I don't feel like I need to revenge trade. And I don't feel like I need to revenge trade because whatever equity losses I've had have been offset by the rally in gold in 2025 and this lift in bonds. So I have short put spreads on in ZP. I have long call spreads on in ZN. And I am totally comfortable holding on to them until we get at least something pointing in the direction of negotiations for a new USMCA. And that really could be as soon as tomorrow. So that's why I think tomorrow is an important day. But bonds here, again, since 1980, top 2 performing asset classes during recession periods. And you can only know you're in a recession in hindsight, right? So it's bonds and gold. And if we think that is coming, then that would be the place to hide out. So that's kind of where I'm hiding out right now.
Interesting. A little 60-40 portfolio action from Chris Vecchio. An oldie, but a goodie.
Yeah, precious metals and treasuries. Zero equity right now.
Oh, how can you be a bull if you have zero equity exposure?
In my trading account?
Why are you at zero?
In my trading account?
At zero.
Well, I mean, I guess like I have some EXC and EPD calls, but like much smaller positions compared. I would say probably like 5-10% equity exposure compared to everything else I'm holding right now in my trading account.
And you're a long-term investor?
In my trading
what are you doing
account.
Over there?
Trading versus investing. Trading account.
I thought you didn't trade. I thought you were like...
You have to have like 5 different accounts. You need like your BS. This is a crazy lotto ticket idea. And if the money gets lost out of this, it's not going to interrupt any long-term plans, any short-term plans. Then you need your short-term trading account where you like try some things out and try to catch moves early and do some things experimental, but not too experimental because this is capital you want to hold on to. And then you have your long-term investing where you just accumulate and buy and hold and like keep stuff in cold storage and don't look at it because you're not retiring tomorrow or in the next 10 years. So why even worry about those assets?
This is how I know you have a much more organized home than I do, or at least in home office, the areas that your domain. Because
don't make me turn off the background.
I do all my strategies in one account. You have multiple accounts for each strategy, which keeps it nice and clean. I'm doing them all in one and just got it all up here. Okay, then let me. Damn! Now you made me. I was going to go somewhere with this.
So my short-term experimental stuff, like let's just throw some darts. No, but it's important. I think people should actually. This is a good mindset for traders to have. You don't put all of your capital all in on one strategy, right? And this is how you diversify and bring down the correlation of your portfolio. You're operating on different time horizons with different instruments, different directional assumptions, and that way, if something doesn't work out, it's not like. Okay, I just blew a hole in the bow of my ship. We're going under. So you can afford to be wrong. And I think actually that psychologically has been the most important thing I've learned as a trader. Just be okay with losing money. You don't like it. You're never going to like it. But just understand it's part of the job. You're going to have good trades. You're going to have bad ones. And if you can just get comfortable with losses, I ultimately think psychologically that's a really important developing skill set for newer traders.
What would it mean if the long end stays subdued? So assuming maybe May we don't get the cut, even though it's like that's like a 55% probability we get something in May. But let's just assume we go in June, which I don't think they can wait that long. But let's see. And the long end stays subdued. Do you think that says something about the market giving both the Fed and or Trump and his administration, like the fiscal authority, giving them a little bit of credit? Do you get what I'm saying? Like if the market doesn't believe that we're going to have adults in the room that are going to mitigate the longer term inflation risks or a fiscal situation, then we are going to see it as soon as we start the cutting cycle. The market's going to answer that question. They're going to tell us what type of credibility the Fed has and what type of credibility the Trump administration, Doge, and all this shit has. If the long end lifts again, all that shit is masquerade, and the market's saying you're doing the wrong thing here, or we don't trust you. They're saying one of those two things. And if it doesn't lift, then they're giving the Fed credit, that they're a little bit behind the curve, or perhaps the right timing, depending on how you're thinking about this. And they're going to give the administration credit. Do you see it as sort of through that binary lens? We're going to find out how the market thinks about these two institutions as soon as we start this cutting cycle again?
Yes. Right now, it feels like the market is of the mindset that the Fed is in, recession cut mode. And I think the market wants the Fed to be in maintenance cut mode because it means it's cutting for reasons of superlative economic performance. We've hit all three marks. We've got the full employment. We've got the right inflation. We have a growing GDP, right? It's a broad growing economy. This is the Goldilocks interest rate. And you know what? We could afford to juice the economy because a better economy with a lower unemployment rate is a good thing to have. More people have jobs, broadening out of the economic base, sustainability over the long term. But you have to consider the fiscal outcome here. And the fiscal outcome here, we have no idea where that's going right now. So will the Fed be cutting for right reasons or wrong reasons, Victor Jones? I can't answer that question here. If this all works out the way that I see that Trump surrogates are trying to tell us worked out. Is there a plan here? I don't know. I thought there was a plan called Project 2025. I was told that was fake. They happen to be doing a lot of the same things from it. And even some of the documents that are being posted on the White House's website in the metafile data have some of the authors from Project 2025 in them. So I think there might be a plan that's playing out, maybe, just maybe. But if it's not, then what's the hodgepodge of puzzle pieces we're putting together here? And I don't think the Fed knows that either. They're not a proactive institution. They are a reactive institution. They will never skate to where they think the puck is going to be. They will only do so once they see the material damage develop. And the case in point of that is what happened with the regional bank failures with Silicon Valley Bank and Signature Bank in 2023. The Fed didn't act because the credit markets never cracked. They don't need to add liquidity to the system if the plumbing isn't breaking down. And so the Fed is never going to be the person to say, you know what, we think the federal government's going to do this, so we can start cutting now in anticipation of how tariffs may lower real GDP output, right? How tariffs may reduce overall employment in the economy. So we want to provide some support now before that happens. The Federal Reserve will never do that because that means they're not independent of the fiscal authorities. And that's just not the game they play. So when the Fed starts cutting, I fear the market's initial reaction will be the Fed is cutting for the wrong reasons. They're being forced to do so on a timeline with which they don't want. And that's where I stand today on March 12th. March 19th, Victor Jones, I may have a very different opinion, but we need to hear what the Fed says next Wednesday and where they see rates going and what their new summary of economic projections hold in store, because that will tell us whether or not the Fed feels like it has the ability to operate independently or it is tethered to what the administration does moving forward.
Well said, my friend. I can't argue with any of that. I don't even think I'm smart enough to attempt it. So I will move on. The S&P 500, Chris, the top 5 movers today, I want to point this out, that the NASDAQ was the outperformer of the Russell. To me, I think that's actually a bad signal. It means this is little more than sort of like the Pavlovian response of a marketplace that's trained to buy the dip, and you start to see, is the VIX coming down, the VIX coming down, the VIX coming down, buy Tesla calls. So you get sort of this gamma squeeze in Tesla, up 7.5%. We had said that, I think it was yesterday or Monday, I can't remember. But I basically said, when you get your dead cat bounce, I asked everybody, do you get the Russell outperformance or do you think the NASDAQ outperforms? And it was interesting responses. I think we were 50-50, and I said that I thought the NASDAQ would outperform for the simple reason that as soon as people see that maybe some fears lifting, they go buy Tesla calls, they go buy Palantir calls, and they go buy Tesla, Palantir, and NVIDIA. And of the top 5 movers of the day, and the S&P 500, Tesla's number 1, Micron's number 2, Palantir's number 3, Vistra number 4, and NVIDIA number 5. To me, again, I see this as actually a negative sign. I think wider breadth would have been more interesting. Russell over the NASDAQ would have been more interesting, more sustainable sign of strength of people putting capital into more distress areas in the marketplace. To me, again, this is this isn't a great sign. Do you see it the same way, or am I splitting?
Yeah, it all looks like crap, Victor Jones. I mean, yeah, you're not like today. I feel like there are green shoots there.
Yeah.
But like the sector performance, it's still mega cap over small cap. If this really was the turn that we'd wanted to see, remember in December, was it December 23? The Russell had some days where it was like 5% to the upside. Mm-hmm. It's like, oh, that's the big catch-up trade, right? Mm-hmm. And then, but that was this like, okay, if people are willing to jump in with that kind of 2 feet attitude, then you feel pretty confident because these are the Russell 2000 stocks, like arguably 2,000 of the worst stocks in the country.
Can't say that.
We can't? Oh, sorry. No, we can. We're not getting canceled anymore, right? You guys just won the election, so.
Guys. Oh, you were down with cancel culture. You're down with that?
I think people need to. I think one of the big problems in American society today is that no one has any more shame, and there needs to be some sort of mechanism for accountability that I don't think that we're afforded. And you can see it play out, I think one side does it more than the other, and I'm sure listeners feel that same way, but maybe about a different side. But like you see people who change political affiliations because they claim like this is a witch hunt by this people, so I'm going to take flock over here, and the other side says, of course, come to us. Yes, those bad people over there on the other side, like you're now one of us. We forgive all your past sins because you're one of us now. That's not a healthy attitude, right? We need to have cohesiveness, and America is all about second chances. So admitting you're wrong isn't a bad thing, right? And as a trader, if you lose money and you close out a position, isn't that you like, oh, I admit it, I'm wrong. This wasn't the right idea. So like we're comfortable with it naturally as traders. So like we need better cohesiveness and we need accountability, and we need to look at the P&L or the results being delivered. I'll tell you, last night, you know how I spend my free time outside of work, Victor? And so like I had a confrontation with a Senate aide last night, spending my free time outside of work because I don't like weekend.
Did either of you have a cane? Were either of you shaking a cane?
No. I wasn't gonna, this isn't like Charles Sumner, Massachusetts, 1856. So, but like that, we need people who are, there are standards, right? There are American standards around here, folks. Let's stick to those unifying values.
So the original question was, you're down with the cancel culture stuff, and your response was
kind of,
sort of, yeah. You're basically saying that society has no shame, and we need a mechanism to enforce shame in our society.
Yeah, and that could be something through private industry, like if I show up to work drunk and I get
objective truth though.
But if I show up to work drunk and I get and I say some really lewd, obnoxious things on air that offend customers and again destabilize the brand. Hold on, again, right? And Tom says to me like, "You're fired," and I go out and say, "Tom only fired me because I'm a Democrat, because he's a Democrat and I'm a Republican." Like, and just I feel like I could easily find a new home somewhere that people would take me with open arms just because I say something like that. Okay. And that, like, it doesn't matter what I did or said I did, because I just made a point that I'm being politically persecuted. Then, whatever he did, it doesn't matter. It's clearly political persecution. So there must be there's another angle there. And that's a get out of jail free card. And you see it everywhere right now. Just if Democrats do something wrong, it's bad. If Republicans do something wrong, it's bad. If independents do something wrong, it's doubly bad because you're not registered in one of the two parties. But like, if it's bad, it's bad. We shouldn't just say it's good because it happened on our side, or it's not so bad because it's on our side of the table.
I don't disagree with you. I do think there's an erosion. I think what you're speaking to is the erosion of sort of a moral fabric.
Yeah.
But I think we probably just disagree on a solution. I don't think we should be colluding to enforce some sort of like subjective shame on people using the sort of collective power of the internet, half of which these users aren't even real, which creates this problem where you can just create a bunch of bots, create a bunch of fake outrage on somebody that said something that you want to attack politically. And I think that's sort of the problem. I think social shame, if somebody does something that we don't agree with, but that's sort of always a function of our society.
Isn't it though?
People back up. But my issue is it's too easy to manufacture digitally. Man, I think it can be weaponized.
No, I mean, I wouldn't want any laws on the books that say oh, this person did X, Y, Z, they're officially canceled. That's ridiculous. And I think the First Amendment stuff right now, we're seeing it in the news. I think that's actually worth discussing here. Yeah, because what the Trump administration is doing is a blatant violation of the First Amendment. What he did, I don't like a single damn thing that he said, Victor Jones.
Neither do I.
But you know what? There's due process in this country, and you can't just lock someone up with no crimes committed.
So now you're a free speech absolutist?
Victor, you know where I stand on this. You could, if charge him with a crime, lock him up, but don't just throw him into a hole and say his lawyer's I can't get in touch with him. That's not how we do. That's not how we do things here. That is your guess yesterday is better or said.
I don't agree with what he did. I don't agree with what he said. I don't agree with what the dude stand for. But I agree with you 100%. You charge somebody for a crime, and I think we're slipping into this weird ass territory where both political sides think that they can police speech, and I have a big problem with that. And I don't care if the speech aligns with my points of view or my beliefs or not. I have a problem with anybody thinking that they are the authoritarian, that they alone can police what a free thinking human being is able to express. I have a real problem with that. And I think if we as a country don't understand that is one of our fundamental values, it's one of our fundamental value propositions to the world.
That's why it's number one.
And all of a sudden that we ourselves can't even figure out if we believe that is so problematic. Everything else is downstream to this value.
Everything is downstream from that value, right? Freedom of religion is also part of the First Amendment, freedom of association. And I mean, that's part of, one of the things that bothers me a lot, because I do have a, degree in con law, is that people they're infringing upon my free speech. Well, first off, I'm a private citizen. I can't infringe upon your free speech because I'm not the government. If I want to hold you accountable for something, I too have the right in that First Amendment that's called free association. So if you want to pretend like you and I have a free speech dynamic at play, within that free speech umbrella comes free association. And I don't need to associate myself with someone who says or does certain things, right? Now, there's a reason why this is so important, because we've seen this with the Mormons. We've seen this with Catholics in our country after we try to integrate the Louisiana Purchase down in New Orleans, right? The government tries to crack down when it can on religious minorities. So we need a system that protects people. Just because you don't say the same prayers, maybe you worship a different version of the same God, but that doesn't mean that you can't live in this country. It's what the Mormons drove from 6 different states to where they ultimately end up in Utah, because of political persecution, which is, again, an affront to the First Amendment. So foundational to, America being a good country is the fact that while we do a lot of things and our tentacles of foreign policy interference may spread across the globe, we also have those good things that we do, like encourage people to stick up and have a voice and control their own destiny. And if we're not doing that here at home, and we're, again, undermining it because we don't like what someone said for the sake of whatever, the administration admitted themselves. They said they don't have a crime. They just don't like what he's saying. Charge him with the crime. Show that he's providing material support. Argue in court that him standing, on a soapbox with a loudspeaker and distributing flyers from Hamas's propaganda office is providing material support to a terrorist organization. File that claim, but don't just if you're not going to give him due process, then you're violating the First Amendment, and all of us should be offended by it. And again, sticking to true American principles. People should pick up some original, constitutional literature and read some stories about what the founders were thinking and doing, and how Hamilton and Madison and Jefferson all debated this. It's really informative, and I think it would help provide a lot of clarity for what we as people can do in this moment right now to make sure that we stick to our true American values.
The interesting thing, though, of if there is a hypocritical political action, is it draws people on both sides of the aisle it draws them towards each other. Because if let's say in the past, the left side of the aisle was sort of creeping towards this world where they were kind of okay with tinkering around with the First Amendment or silencing people. As soon as you see, you're always okay with that as long as it's in line with your ideals. As soon as you see that gun turned around and pointed at you, your family, your friends, or people who have similar beliefs, and again, we're talking theoretically. Neither Chris nor I advocate whatever this guy was doing and saying. This is more theoretical, the conversation. As soon as you get that free speech gun pointed back at you, you're going to have an issue with it. And if there's one thing that can be a positive on hypocritical political action, it's reminding people on both sides how important these principles are. That's number one. Speaking to people pivoting, can I ask you really quickly, did you get it? I sent it to you. I don't know if you've had the time. Did you get a chance to check out Newsom's podcast? He's had a few episodes that he's dropped already. And I am curious, I don't want to get into the subject matter necessarily, but Gavin Newsom is doing a wild political pivot, and he is swimming his rowboat. He's rowing his rowboat as quickly as he can to the middle, and what is an obvious repositioning to make himself the front runner in 2028. I'm curious if you have any thoughts.
Yeah, Gavin Newsom will not be the next president of the United States. That's my first thought. So we have.
Dear God.
I have a very difficult time thinking that the Democratic Party will reflexively nominate a person from one of the swing states at the top of the ticket, and it's going, that's not Gavin Newsom. So I think the problem that at the top line level that these Democrats are having is that we saw this in the last election, by the way. Most of the ads that the Trump campaign cut against Kamala Harris were things that she said in 2020. They weren't even from this cycle. They weren't even from when she was vice president. And that's what makes that bit of marketing so remarkable, that it goes to show that there's a playbook here. If you know that there are candidates out there that have given a broad range of opinions on topics that may or may not be considered couth at this particular moment in the American zeitgeist, you're just going to be able to run it out there. So someone who probably wasn't that politically active in 2018, 19, 20, 21, 22, that's probably the person who's going to be in the next wave of Democratic leadership that Gavin Newsom is trying to push away. But if you were elected in 2022 or 23 or 24 as a Democrat, you're probably not with that baggage at the national level right now, in fairness. So Newsom just has that going against him. But, I was surprised that his first episode had Charlie Kirk on it. Of all the people that the governor of California would have, maybe that makes the point. Right?
Why,
you want to talk
why
about,
did you think? Why did you think that you were surprised?
Oh, because I think that these people would surround themselves with, as most politicians do, on again both sides, they surround themselves with people who don't really challenge them. Right? They may have a difference here or there, but true. This is a PR event. I'm doing this podcast to make myself look good. But clearly, the goal here is to make Gavin Newsom look more moderate, look reasonable. Hey, I can talk to people on the other side. That's the goal. So he's trying to run for president in 2028. He's definitely trying to run for president in 2028, but he will not be president.
I thought I wasn't surprised, and I'll tell you why. This is exactly how an old person thinks. They go, I'm going to launch a podcast. Who should be my first guest? And by the way, these are all pre-recorded. So
one of those young whippersnappers.
Correct. So he goes, Charlie Kirk has a big internet presence, and I want this to make a splash. Let's go with the YouTuber, and then that way it can get lots of eyeballs on the internet, and then I'll drop. I think Steve Bannon he just did one with Steve Bannon or something like that. That's exactly how an old person would think. They don't go, I'm going to make really good content with somebody, and then that's going to draw an audience. They go, who's the YouTuber? Let's get the YouTuber in here, and that'll bring some eyeballs to my podcast. That's exactly how an old person thinks.
Yeah, I mean, the San Francisco Chronicle ran a pretty funny criticism of him, or critique of his podcast 2 days ago. That was Gavin Newsom starting a podcast. There's one problem. He's not a conservative. And it's Democrats don't consume this kind of media the way that the right-wing audience does. So maybe he's trying to make a breakthrough and get to, conservatives, but also conservatives listen to more radio. than anyone else. I mean, if you listen to Sirius XM, there are way more conservative news outlets available within the compendium of the roster they have there than there are for left-leaning ones. And people who are driving cars, like where are liberal centers, cities, public transportation, right? Dense housing, not exactly people who are sitting in the car all day long listening to the radio. So I don't know if Gavin Newsom's strategy will work. It feels like they're all trying to figure this out.
Give me your short list of who you think's at the top of the. I know it'll likely be, who knows what can happen. There's a lot of time. Like, why do I see Fetterman everywhere? Bernie seems to be making a lot of headwind, like on the sort of the grassroots level, doing all these events. But to me, I feel like fool me once, shame on you. Fool me twice, shame on me. Fool me 3 times. Like, it's not happening. There's no way there's enough Bernie support unless we just get totally roasted. The economy just gets so roasted that everyone's willing to hard pivot left and goes, okay, yeah, I do want healthcare now because I'm unemployed. So I think that's possible, but you've got.
That's what got us Obamacare. The global financial crisis was Obamacare. You do have to have the conditions for Bernie. We were not really there in 2016, but close, right? And Trump ultimately
wins. And then the
wins.
Democratic Party seems afraid of him, but I don't know. He seems a bit more compromised at this point. So maybe he's palatable to the Democratic power structure.
Yeah, I mean, there's not enough time to go into some of the issues there. I think Bernie has some really compelling ideas. He's built an amazing movement, of course. But is he going to be the case? Is he going to be the candidate?
He did. They're gone, and I'm gone. Lots of people who were there are gone.
Well, that's kind of the point. Like, this isn't 2016 anymore, and it's nice that he's doing these barn burning events across the country right now. But like, is he really going to be the nominee of the party? And I think what's most disappointing for perhaps people like yourself who find themselves having left that particular strain of the movement, where were the people that were like Bernie acolytes that were younger, a generation younger, to kind of take the baton from him? And the answer is they kind of went Republican.
I know. I think it wasn't AOC kind of the next in line for the Bernie movement, and she went so far with the culture stuff and doesn't do anything with the economic stuff that I think, then those people left. I would agree. I would say those people left. Am I wrong?
I think that's a mischaracterization of what she supports, because I think, again, one of the things I see on Twitter right now, and Twitter, how the population has shifted. It's become much less left-leaning, much more right-leaning, in part because there's been a big exodus from Twitter to Blue Sky. At least among the left-leaning population, the left-leaning political population there. So to that point, right, like, I've seen the few remaining liberals on Twitter and X complain, how come so-and-so is not doing so-and-so? It's like, well, this person actually, like, how come AOC wasn't coming out in a stronger support of the First Amendment? What a joke AOC is. There was like a tweet that had like 26,000 likes. It's like, well, she did. It just wasn't covered in your Twitter algorithm today, right? And so, like, what gets popularized, particularly if you think about how Twitter works right now, like, when it's basically libs of TikTok, right? If Democrats are doing something stupid, that is getting pushed to the top of your feed. And if AOC is making a statement on, supporting workers' rights for XYZ, that's not generating any traction. Now, what she is doing right now, working across the aisle, as I believe Bernie Sanders and Josh Hawley are too in the Senate, is to cap interest rates on credit card at 10%, which I suppose.
What do you think about that policy?
Well, as someone who would still qualify for a credit card, I'm very happy about that. For everyone else who will not have a credit score north of 800, I have really bad news for you. You're no longer going to have any credit. It is a horrible policy, Victor Jones. It's going to hurt the economy in horrible ways. People won't do business with certain individuals. Credit won't be extended. Just think of the myriad of problems, right? You and I, when we were first out of college, would not be able to get credit cards. We would be living paycheck to paycheck guaranteed, right? Even if we knew a bonus was coming down the line, like, oh, we're at the end of the year, it's time for bonus season, we wouldn't be able to afford to buy the presents before the bonuses came in because we'd have to put them on layaway or something, right? We wouldn't have a credit card. So, I mean, that's the kind of thing this will do for lower and middle income consumers. Prevailing credit card rates right now in the country are in the 20% for most people. So if you cap credit card rates at 10%, you are effectively saying, sorry, businesses, you're not going to make any money. There's too much risk for extending credit to certain income individuals. So they won't do it because, after all, they're in the business of making money. And it's just like the insurance companies with the fire, right, in California. If you're forced to insure for fire, guess what you say? I'm just not going to insure it here. It's too costly to my bottom line. Can't risk it.
I'm going to say something at risk of sounding sort of like uneducated on a topic perhaps I should be more educated on. I don't know that. I mean, if you've been listening long enough, I don't know that's much of a risk. But I get, so when Kamala was sort of flirting out the policy of price caps, she wasn't explicitly saying that, but I think there was an assumption built in that that's kind of where we were potentially headed. It might have been fear-mongering, but she never really clarified. The point is, when that idea was out there, I totally get how a scarce asset with limited resources like food, I get how if you impose some sort of price cap there, demand increases. You don't have the economic incentive to then increase production if you can't raise price, and then that's how you get the shortage. I get the mechanism. With credit, it's unlimited. There is no limit on the underlying. So credit can be extended freely in an unlimited capacity, theoretically. And limiting the price, or going down from, let's say, 30% down to 10%, it limits the margin. And there are some, like, depending on like the unsecured or the charge-offs, all that, I know that's part of the math. I just have a hard time figuring out. I do know, implement a price cap, create a shortage. You'll get a shortage of credit. But to me, like, the shortage of credit to me is like, how do you get there? Because credit is unlimited, and technically it's a low margin extension. I know you're right. I just don't get the mechanism.
I see the problem as the reduced financial flexibility for people, and if you're not extending credit even to first-time borrowers like young college kids, for example, who may be on the path to being one of those high credit profile kind of people, you're going to force them to turn to higher interest personal loans or payday loans to help finance their living, and like that's there's certainly been periods in my life where it's like, oh, geez, like I have this unexpected expense. I need to put it on a credit card, and then I have to pay it off over time, right? And removing that ability means I have to go take out a higher interest personal loan from, some loan shark. There has to be a better way. Listen, we have this problem with the interest rates. When rates go up, credit card companies, they are more than happy to jack them up, right? There's a stickiness there. And when the Fed cuts rates, credit card companies are like, well, hold on a second. Will the Fed keep cutting? We're not going to do anything just yet. And that really grinds my gears.
Yeah. Chris Vecchio, it's always a pleasure, man. I mean, the problem, it's a good problem to have, but the problem is there's so much news flow generated on a daily basis. I talk to you once a week that in the span of that 7 days, there isn't a chance in hell that you and I can cover the entirety of the news flow and all the things that have happened, and especially because I think you tend to have really highly educated and nuanced takes. But it is a pleasure to be able to chop it up with you at least once a week. If the people want more from you so they can keep up with your opinion on the incredible amount of news flow on a day-to-day basis, can you tell them where they can go?
Definitely at CVecUFX on Twitter or X. Here on Tasty Live, Monday through Friday, Futures Power Hour. 1 p.m. Eastern, 12 Central. We have Let Me Explain on Tuesday mornings, 9:40 a.m. Eastern, 8:40 a.m. Central with Tom and Tony. Here with Victor Jones, The Price of Truth, Wednesdays, 6 p.m. Eastern, 5 Central, and of course, Overtime with Radigan and Spivak, 4 Eastern, 3 Central, right after last call.
My friend, it's always an honor and a privilege to get to talk to you, as I said before, and get your point of view on all the craziness that's happening in the world. I wish the best to you, my friend. Thanks for stopping by. For all of you out there, hit the like button on your way out the door. Make sure you subscribe to the channel. Follow Mr. Vecchio on Twitter or Blue Sky or wherever he is now. Follow me on Twitter at Victor Jones. The O in Jones is a 0 because I like to be difficult. Chris, let's say theoretically you are going to get a new car. Would you consider a Tesla? Yes or no?
No. Because I need a car that can get up my driveway. I live on a hill, and I need some real horsepower and a car that can have snow tires on it.
You've never driven a Tesla. All right.
No, I have, and I've had like my wife's uncle has been here with his Tesla when it's icy, and not making it up the driveway with a healthy amount of salt and sand. So,
are you going to get an American-made car?
Yes, Victor, of course. In fact, like I've been going through all of the, as I've been talking to various dealerships, one of the first questions I ask is, where is this car made?
Good man. And I think more people are going to start doing that, and we should. When I was young, I asked my mom and my dad, like, what kind of car is this? And they would tell me what kind of car it is. I was like, how come we don't have a blah, blah, blah? And they would say, because at the time, both my parents were blue-collar union workers. And they would say, because this car is made in America, and we support people, we support people's jobs. Or we support unions, where they would try to explain whatever the hell a union was. How do you explain that to a 7-year-old? And maybe 10 years later, nobody thought like that at all. Nobody cares where their products are made. Nobody supports. You'll support something like, does this person put seed oils? Does this restaurant have seed oils or not? We've got apps to figure out whether the restaurant down the corner puts seed oils in your food. Nobody gives a shit where people make any of these products and whether or not it supports your local community or whether it supports your local citizens. And maybe that should be some part of the purchasing process. Chris Vecchio, I'll see you next week, my friend. Have a good one.
See ya.
All right.
Hello, good morning to you from Trade Live with IG, myself and Ronnie Eggnog. Welcome to the show, Ronnie.
Thank you for having me, Ange.
The myth, the legend.
Yeah, for keeping that Christmas nickname alive.